Hi guys, much awaited audit revision marathon for CA Inter new scheme. So this marathon I'm going to conduct for approximately 24 hours in 3 parts. Right now that you're watching is part 1 video which is of 11 hours. But before I discuss this, I just want to give certain instructions that you have to follow. Kindly listen to this introduction without failure, please. You already made so many mistakes. To best of my knowledge, at least when you're watching these videos, okay, do not repeat those mistakes. 1, please watch this marathon at standard speed only. Remember, this is already a revision class where we are already discussing the topics at jet speed. Again, if you are increasing the speed, there is no point. See, the objective when you're listening should be always to absorb the content. Maximum you should absorb the content. You should not speed up. You should not hurry up. Okay, then with respect to standards on auditing, do not follow summary notes. Why I recommend not to follow summary notes is, compared to old scheme and new scheme, some students are still in the same assumption. Sir, old scheme auditing and assurance, new scheme the subject name is audit and ethics. Students are thinking just the subject name alone has been changed. No, the content has been changed a lot. Even in the old scheme, we have so many standards. Of course, the same standards on auditing were there even in the new scheme. But the way each and every standard has been discussed in the new scheme is completely different from old scheme. In the new scheme, most of the standards content is copied from pronouncement book. If you recollect, in the old scheme, there is something called pronouncement book. If at all you're watching, if at all you're a direct new scheme student for the first timer, no problem. Suppose if you're a repeater, you who already gave attempts in old scheme, you know very well that there is something called pronouncement book. Now in the new scheme, it is not there. Entire that pronouncements related standard content is kept in the book itself. For example, 560, there is a standard, 260, 580, 550, 510, 505, 501, 610. For all these standards, once upon a time, there is so much of content in the pronouncement book. But now, that entire content is copied into the main book itself. But you know, in the market, many summary notes that are being circulated, what I have came across, getting it? Most of the summary notes, they were prepared from old scheme standards on auditing. The same thing they are continuing. If it is a summary notes on standards on auditing, it will not have much changes. But the main standard text content has been changed a lot now the standards, the depth of discussion, 570, 505, 501, 610, 510, 710, 550, almost all the standards, the depth of discussion is completely different in the new scheme. Please be aware of that. Then, so read from main material always. Whatever your main material is, not summary notes. If at all ICA material you're following, that's the best material in the market. If at all you don't have yet decided the material, you can download my material which I am using in this marathon, and that material can be downloaded from our websites restofuscacma.com. So there you can download our material. I'm sorry. So that's it. Now, so this marathon I'm going to cover in 3 parts consisting of 24 hours. Approximately, I am going to cover 90 marks weightage over 3 parts. 90 marks of the syllabus out of 120 marks that you have. So now part 1, right now that you are watching. In this, by the way, please watch in the same order. First watch part 1 video right now that you are watching. That too in the same order. Don't directly skip to the timestamp of audit report or timestamp of 230. Don't directly skip. Please learn from a structured way. Because initially I cover many important terminology, audit report. This and all is very important to understand. These 3 chapters are a base for the remaining entire other syllabus that we are going to discuss. Getting it? Now, first I am covering fundamentals topic. In fundamentals, I'll be discussing some fundamental terms and all. That is what you are going to watch. Then I am discussing nature, objective and scope of audit, which is drastically changed compared to old scheme. Remember, new scheme material has to be different. It is different. So if at all you are still following old scheme material, can we use the same for new scheme? No, don't use that at all. Then ethics and terms of engagement. Ethics and terms of engagement is the second topic that I am going to discuss. Audit report is the third topic I am going to discuss. Then I am going to discuss fifth chapter. In our book, it is fifth chapter. So I'm just using my book serial order only. Then in the part 2, I'm going to discuss sixth chapter as per my book. Okay, audit evidence. Within these standards I'm covering. In the same sixth chapter, we are also having SA 500, SA 530 sampling, SA 520 analytical procedure, but that I'll be discussing as part of part 3. Okay, so in the part 2 video, which is going to be 9 hours, these topics I'm going to discuss. These topics in the same order I'm going to discuss. Items of financials part 1, P&L items I'm covering. In the part 3 video, items of financials, balance sheet items I will cover, SQC1, SA 220, risk assessment and internal control, and I will also cover 6th chapter related SA 530 sampling also I will cover. So totally part 3 will be 5 hours. Totally somewhere 24 to 25 hours is the total marathon duration. So the book which I'm going to use is this. This is my auditing book. So you can see here table of contents. What is the syllabus that you are having? Remember, in my book, the order of chapter arrangement is completely different from ICA book. If you learn in the ICA book order, the order of learning is not proper. In that way, if you learn, you will not understand the subject in a master level. If you follow this order of learning, nothing but you need not even worry about that. Just to follow the marathon, the video order is there, right? So multiple videos we merged into, kept it as a 11 hours video right now that you're watching. Just in the same order, just to play and sit silently watch. Okay, and immediately as soon as you finish one topic, stop the video and revise the topic, study the topic. Immediately again come back to this video and again listen to it, finish it off, revise, and again come back. So that's how you have to make best use of this marathon. So I'm typically approximately providing 24 hours. So 11 hours in part 1, 9 hours in part 2, 5 hours in part 3. Getting it? So this is the order in which I'm going to discuss. These are the topics I'm going to discuss, and I hope I'm clear to you. So please make use of this wisely. Don't hurry up yourself. I tried my level best to give best clarity through this revision. The rest is upon you. You have to make use of this and then do well. Okay. And I know previously also many of your seniors, your friends, whoever have given attempts earlier, they have used this marathon and they got real good, very good clarity and command on the entire subject. Okay. And I assure you, you will get a tremendous command on the entire audit subject just by this marathon. Okay. Just go ahead. All the very best. Continue watching the fundamentals topic. Please do not skip. Fundamentals first you have to watch. Then the nature, objective and scope, terms of audit engagement as usual, like in the same order. Getting it? That's it. Okay. Take care. All the very best. Have a nice time. Let's begin the audit revision with fundamentals on auditing. Like as I already told you, fundamentals is an important chapter where you can understand the remaining part of the audit subject much more comfortably. So don't directly skip to the nature, objective or terms of engagement or audit report. Don't directly skip the timestamp. Please watch fundamentals on auditing carefully. So these fundamentals, whatever I'm going to talk in the next half an hour, 45 minutes is very important. So only after listening to this fundamentals terminology, then only watch the then only continue watching the remaining chapters. Don't think that you know everything. Please watch this fundamentals carefully. Okay, let's proceed. So now you see in this fundamentals, we are going to learn certain terms. What is meant by applicable financial reporting framework? What is general purpose framework? What is special purpose framework? What is fair presentation framework? What is compliance framework? What do you mean by misstatement in audit? What do you mean by fraud? What do you mean by error? So many we are going to understand. So many terms we are going to understand. First of all, what is the objective of this audit? We all know today business is happening at a global level. We from India are investing in shares of abroad, various other countries. Same way, people who are residing outside India are also investing in shares in Indian companies. We are blindly, without even evaluating their financial performance and financial position, whether they are authentic, whether they are genuine or not, without even inquiring background, by just looking at those numbers, performance numbers, position numbers, we are blindly investing. The reason they were audited. The reason why we are blindly investing is because they were all audited. Same way, even foreigners are also investing in Indian companies based on the Indian company profit numbers, asset numbers, net worth numbers, they are blindly investing because our financial statements were audited. The audited financial statements, audited information has so much relevance, has so much significance that people blindly invest without even checking their genuinity. Now, see, audit is like a certification. It is like a certification. Getting it? In case of jewelry, if you buy, if there is a Bismarck or Hallmark, you blindly buy that without even testing its purity. Any silver article, jewelry, food item, any product that you take for the matter, some certifying authority is there to certify its genuinity, purity, quality, all that. For financial information, what is the certification that is available? Nothing but audit. So what do you mean by audit? They have given a definition. I know many of you have already gone through this definition and most of you know this definition, but I will decode this definition in such a way that you realize so much depth is there in this definition. So what is an audit? An audit is an independent examination of financial information. Sorry. So an audit is an independent examination of financial information of any entity. Fine, I'll come to audit, independent examination, the independent examination term later. Financial information. What do you mean by financial information? Financial information broadly consists of books of accounts and financial statements, both put together. We can call it as financial information. Books of accounts means, journals, ledgers, trial balance, all that. Today, entirely it is completely electronic. Today, many companies are maintaining these books of accounts completely electronic. Then financial statements. Financial statements are two types. General purpose financial statements, special purpose financial statements. What are they? General purpose financial statements, special purpose financial statements. So now, what do you mean by general purpose financials or special purpose? Special purpose financials are those if the financial statements are prepared using special purpose framework. If the financial statements are prepared using special purpose framework, then we call them as special purpose financial statements. What do you mean by special purpose framework? It's a financial reporting framework. It's a financial reporting framework. Special purpose framework is a financial reporting framework which is designed keeping in mind requirement of specific user. Remember, if the financial statements are prepared using special purpose framework, then they are special purpose financials. If the financial reporting framework, understand the word used is financial reporting framework. What do you mean by financial reporting framework? Financial reporting framework means, first of all, financial reporting means preparation and presentation of financial statements. Framework means rules and regulations. Financial reporting means preparation and presentation of financials. Framework means what? Rules and regulations. Now, to prepare any entity financials like final accounts, suppose you take a partnership firm, they are also preparing balance sheet P&L. LLP is preparing balance sheet P&L. A bank is preparing balance sheet P&L. A company is preparing balance sheet P&L. A sole proprietor is preparing balance sheet P&L. Obviously, every one of them, when they are preparing final financial statements, final accounts, they follow some rules, right? That rules are called as financial reporting framework. Those rules are called as what? Financial reporting framework. Suppose by using which rules you are preparing the financials, if those rules are designed keeping in mind requirement, nothing but need requirement of specific user. Suppose for a particular person purpose, if the financial reporting framework is designed, the format of balance sheet, the format of P&L, the rules and regulations behind preparation and presentation. For example, rules and regulations is what? Accrual, FIFO, LIFO, WDV, SLM. These are all what? Principles of accounting, rules of accounting. If these rules are designed by a specific user, as per his requirement, if we prepare financial statements, then we call them as special purpose financial statements. And in CA Inter, we do not have audit of special purpose financials in our syllabus we don't have. For this, we have SA 800 series the standards, which we are going to discuss in CA final specifically. Now, this is not that required. Now look at general purpose financials. You and me we know very well. Today we are seeing so many listed entities. Every listed entity, every year they are publishing financial statements, balance sheet, P&L. Now tell me, who are using that balance sheet, P&L? Is it only by their existing shareholders? No. Like you and me, in order to invest in that company, we are looking that balance sheet, P&L. Some other companies are looking that balance sheet, P&L to purchase this company. Yes or no? Some other banks are looking at these balance sheet, P&L, whether to give loans to this company or not. Insurance companies are looking at this balance sheet, P&L in order to charge premium, in order to give claim, in order to release claim, whatever. Employees of that company are also looking at this balance sheet, P&L to know about the financial position of the company, so that they can stay within the company without worry. So every year, the companies which we discuss, Reliance, Tata, everybody, they all prepare financial statements every year, and those financial statements are being used by thousands of users. Now, why this company is preparing this balance sheet, P&L? Is there any specific purpose behind this? No. There are so many who are using. There are so many users of the financial statements, and we call those financials as general purpose financial statements. Every year we prepare. A company prepares every year. Is there any specific reason or specific person for whom these financials are prepared by this company? Definitely not. So now a company is preparing financial statements every year, generally for various users. General requirement. Now you see, tell me, what is a general purpose financials? First of all, okay, fine. Let me decode the definition and then bring a discussion on it. What is general purpose financials? General purpose financials are those if the financial statements are prepared. If the financial statements are prepared using general purpose framework. If the financial statements are prepared using general purpose framework, we call them as general purpose financial statements. Now, what is general purpose framework? This is also a financial reporting framework. This framework, first of all, framework means what? Framework means rules and regulations. Framework means what? Rules and regulations. General purpose framework is also a financial reporting. Here we are talking about financial reporting framework. See, the word framework can be used in multiple contexts. Legal framework, engineering framework, regulatory framework, medical framework, yes or no, drug related framework. The word framework can be used in any context. Framework means what? Set of rules and regulations. Suppose if it is relating to law and order, then it's a law and order related framework. Suppose if it is relating to law, an act, legal framework. Suppose if it is relating to some financial statements, then it is financial reporting framework. Now we are talking about which framework? General purpose financial reporting framework. What is a general purpose financial reporting framework? Sorry. So general purpose financial reporting framework is a financial reporting framework. This framework is designed, which is designed keeping in view, keeping in mind common, you look at this word, common financial information needs. This is a very important word. Common financial information needs of wide range of users, If a particular financial reporting framework, if particular rules and regulations are made, keeping in mind common needs of wide range of users, then that framework is called as general purpose framework. Now every year a company presents financial statements, right? Every year they present as on 31st March. They give balance sheet, they give P&L, all that, right? That is prepared using general purpose framework, and those financials are called as general purpose financial statements. Now what do you mean by common financial information needs of wide range of users? See, as an employee of our company, he wants to know whether this company is performing good or not, whether this company is having a fair, good position or not, financial position or not. They just want to know whether the company is making profits or not. They just want to know whether the company is having reserves and surplus or not. So, so that the company can comfortably continue in the future, so that the company need not worry about the future, so that I need not worry about my job. Employees want to know about the company. Same way, when this company is transacting with customers, when the company is buying goods from somebody, suppliers, they want to know whether they can give credit to this company or not. For that, suppliers will see your financial performance and your financial position. They want to know what is your turnover, what is your expenditure, what is your profit. They want to know what are your assets and what are your liabilities and how much is your net worth, reserves and surplus. Depending upon your position and performance, they may give you credit facility. They also looked at some information. See, as an employee of the company, they also want to know what is your profit, what is your net worth. Creditors also want to know generally what is your profit and what is your net worth. Even our customers also want to know whether our customers can depend on this company for long run, so that they can satisfy their own needs. Getting it? They may be looking at your position and performance. Our directors of the company, they also want to know what is the performance of this company, what is the profit of this company, what is the net worth of this company. Everybody want to know how much capital you brought, how much capital you invested, what assets you purchased, where you invested, where and all you borrowed loans, how much turnover you made, how much expenditure you incurred, how much is the profit. Tell me, whatever questions I posed, whatever questions I told right now, are these common questions that we think of generally whenever we talk about business or not? Yes, these information, this financial information, like what is the financial information everybody commonly want? Everybody want to know what is your turnover, what is your expenditure, what is your profit, what is your reserve surplus, how much is the capital invested in the business, how much fixed assets you have, how much liabilities or borrowings you have, how much current assets you have. Now everybody commonly want to know these details. Suppose if we design the balance sheet P&L in such a way that we design the rules and regulations for preparation of financials in such a way that the financial statements will give definitely all this information. Whoever, whether you are an employee, whether you are an insurance company, whether you are a tax authority, whether you are a government, all of you have some financial information needs. Everybody want to know some financial data about my company. So I will prepare my balance sheet and P&L keeping in mind all your financial information needs, which means the balance sheet and P&L which I am going to release will give you information whatever you all need. That financial statements are called as general purpose financial statements, and the framework we call it as general purpose framework. And general purpose framework is generally decided by law and regulation itself. In India, for companies, Schedule 3 is applicable, accounting standards is applicable. A company has to prepare financials as per Schedule 3 and accounting standard. And you know what? Accounting standards and Schedule 3, if you follow the financial statements preparation using the Schedule 3 and accounting standard, most of the financial information what people want, most of the people, whatever financial data they want about a particular company, you will get that data from Schedule 3 and accounting standard. So Schedule 3 and accounting standard answers financial information needs of very wide range of users, and that's a general purpose framework. Generally, for general purpose financial statement, the number of users are wide range. So many users will be there. You don't know who will be using. Our competitor might be using, the government might be using, tax authorities might be using it, our industry experts might be using it, our existing shareholders might be using it, some prospective shareholders might be using it, banks will be using it. So who are general purpose financial statement users? So many. You see, we have given here. Who are the users of financial statements? We have given here. This itself can be asked as a 4 marks question. Who are the users of the financial statements? It can be asked as a 4 marks question. Fine. Anyhow. So that's general purpose financial statements. Now tell me, now I hope you understood there are types of financial. So first we started with financial audit. Means what? Audit is an independent examination of financial information. Financial information means what? Books of accounts, financials. Financial statements are 2 types, special purpose and general purpose. And you know what? Financial statements, depending upon the type, depending upon the type, depending upon presentation, there are again two types. Fair presentation framework, there are again two types. Compliance framework, there are again two types. One is fair presentation framework, compliance framework. Okay. So first let me finish this and then go back to audit definition, and we'll finish the audit definition once again. Now, what is a fair presentation framework? What is a compliance framework? So, compliance framework is a financial reporting framework. It's a financial, of course. Compliance framework also talks about preparation and presentation of financial statements. Preparation and presentation of financial statements. So, it's a financial reporting framework where the financial statement shall be prepared and presented, exactly as per requirement of such framework without deviation. What is it? Without deviation. By the way, I have given that definition also here. You see, compliance framework means what? It refers to a framework where financial statements are prepared and presented in accordance with the requirement of such framework. You see, here I have used additionally one word, without deviation. Here also you can add one more word, exactly. This something which I highlighted in red box, the word which I have added here, exactly. These are added by me to make you understand the intensity of this definition. There is another framework. I'll show you that. Then we'll compare and discuss what is applicable for us. What is a fair presentation framework? Fair presentation framework is also a framework. It's a framework where financial statements are prepared and presented in accordance with the requirement of such a framework. You see, the definition is exactly whatever I highlighted in yellow color. You see, in compliance framework, whatever I highlighted in yellow, the same thing is copy pasted here. That's why I have used the word compliance framework in bracket. And contains disclosures beyond the requirements of such a framework. Contains disclosures beyond the requirements of such a framework. Just a minute. Contains disclosures beyond the requirements of such a framework, or may deviate from the requirement of the framework so as to achieve fair presentation. Now you see, the words true and fair view appears only in this type of framework. Most of the general purpose financials are prepared using fair presentation framework. Like, what is this? First of all, see, if you look at Companies Act, remember, this is a revision class. Okay, so I'm not going very in depth on everything. I'm just giving you a brief idea. There is a section called 129 subsection 1. What this section says, every company shall prepare its financial statements as per schedule 3, as per accounting standard, and should achieve true and fair view. This is the wordings which are there in the Companies Act 129 subsection 1. Every company financials must be prepared as per schedule 3 and accounting standard and should achieve true and fair view. Suppose if the word true and fair view is not there, let us assume. Actually, Companies Act has this word true and fair view. Suppose for the time being, true and fair view is not there, which means a company has to prepare financial statements using compliance framework. A company has to prepare financial statements using compliance framework, because true and fair is not necessary. Just a minute. Yes. So just a minute. Yeah. So every company shall prepare financials as per schedule 3 accounting standards and should achieve true and fair view. If at all the word true and fair view is not there in the section, it's called as compliance framework. Because the word true and fair view is given importance, it became fair presentation framework. In India, we prepare financial statements which are general purpose financial statements using fair presentation framework. Now, sir, what is compliance framework? What is fair presentation framework? What is the impact of true and fair view? Can you give an example? Yes. Yes. First of all, just a minute. Yeah. So, what is the difference between compliance framework and fair presentation framework? Let's discuss with an example. First of all, what is the difference between true and fair view? What is the difference between true and fair view? A simple example. Suppose I sold goods to a customer at a credit for 100 crore. To almost so many, some 20-30 customers were there for our company. We sold goods on credit for 100 crore. And out of which some 50 crore rupees we have collected already. As on balance sheet date 31st March, still 50 crore is outstanding. So in the balance sheet assets side, trade receivables 50 crore we showed. Out of this 50 crore, there is one customer who is about to become insolvent. And from this customer, we have to receive some 5 crore rupees worth of money. But this customer is about to become insolvent. But since he is about to become insolvent, there is a very much big doubt that we may not receive this money. So generally what we do, when there is a doubtful recoverable, doubtful debt, we create a provision for bad and doubtful debts for 5 crore. And we show 45 crore is only as net asset in the balance sheet. Correct or not? This is what everybody knows. This is a requirement of fair presentation. This is a requirement of fair presentation. Honestly tell me, truly speaking, the company has to receive from customers how much? Truly 50 crore is pending from the customer. But fairly speaking, logically speaking, reasonably speaking, what is the value of the company debtors right now? Sir, value wise, it is only 45 because 5 crores company may not receive. Honestly, technically 50 crore is receivable, but logically, in reality, company value of debtors is only 45. The value of debtors company can realize is only 45. This is called fair. Remember, the balance sheet should not only be true, it should also be fair. When you say this is my asset, that asset must have that much minimum value. Remember, you are showing 50 crore debtor, but 50 crore real value is not there. 45 only you can recover. So true and fair view means that's the impact of true and fair view. Suppose now what is the difference between compliance framework and fair presentation framework? Suppose a company purchased a project. Suppose the company whom you are doing audit is a very big movie theater. Suppose you are an auditor of PVR. You are auditor of PVR theaters. PVR is having across India more than 3,000 screens. So they will be having approximately 3,000 high definition projectors, 4K projectors they are having, very high costly. Each projector somewhere will be costing 10 to 15 lakh, or maybe sometimes it is 25-30 lakhs also. Getting it? So let us assume each projector is costing somewhere around 20 lakh. Now tell me 3,000 into 20 lakh. 3,000 into 20 lakh. Approximately 200 crore. Approximately 200 crore worth of projectors they have purchased. PVR has purchased 200 crore worth of projector. And what is the useful life of these projector? The projector's useful life is approximately, each projector useful life is 1500 hours. Or else 3000 hours, or maybe for computation sake 4000 hours. That is the life of each projector, 4000 hours. Now PVR some screens they will be using every day 4 shows. For some screens every day there might be some 3 shows only. For some screens on a particular day there won't be any cinema at all. Now tell me how PVR should depreciate this 200 crore worth of projector. Should they depreciate using SLM method or WDV method? Which method is correct? Suppose if you see accounting standard 10, let us assume it only says SLM or WDV. I'm telling you assumption first of all. Suppose if the accounting standard says only SLM or WDV and the life of the projector is 10 years, 200 crore divided by 10 is equal to every year 20 crore project. 20 crore is the depreciation. Whether the projector is depreciated equally or not doesn't matter. Suppose if accounting standard says like this, and you see Companies Act section 129, if at all the section says a company shall prepare financial statements using schedule 3 using accounting standard, full stop. Now tell me, I have to follow for sure SLM method right here or WDV method. But tell me, logically you tell me, PVR, no, year 1 they have used, in not 4,000 hours. Year 1 they used only 100 hours. Year 2 they are using it for 300 hours. Year 3 they are using for 200 hours. Year 4 they are using for 1000 hours. Year 5 they are using it for 50 hours. Year 6 no, complete shutdown, COVID, example 0. Year 7 some 500 hours they are using it. Now this is how the usage pattern of projector by BVR. Now tell me, if this is the usage pattern, 1 year they used only 100 hours. 1 year they didn't use at all. In year 6 technically depreciation should be 0. Whereas here only for 100 hours we should calculate depreciation. Here 300 hours only we should calculate. Which method is suitable for PVR? Honestly tell me, logically tell me. Logically you think and tell me. SLM and WDV. None of these methods. Number of hours method is suitable. Something similar to sum of units method. Something similar to sum of units method. But accounting standard says either SLM or WDV. You cannot follow number of units. Sir, but fairly, this is the right depreciation. This is how the depreciation can be calculated in a right manner. If you depreciate every year, whether we have used it or not, that is not a fair accounting principle. So this is how it should be used. But accounting standard is only saying 2, no? Only 2 methods, SLM or WDV. Sir, Companies Act says true and fair also. What does it mean? If deviation is permitted, if in order to achieve fair presentation, a company may deviate, sir, from the requirement of the framework. A company may deviate from the requirement of the framework to achieve fair presentation. For achieving fair presentation, we can deviate, sir. Actually, the requirement of the framework is SLM or WDV, sir. But we can deviate, sir, for achieving fair presentation. Actually, PVR has to depreciate either SLM or WDV. But now we are deviating. And now by deviating, we are following number of units method or number of hours method, mission hours method. We are following to depreciate to achieve fair presentation. In a fair presentation framework, you can deviate from the accounting standard. See, remember, it's not violation. You're not violating. Violating means different. Here you are violating standard, but not with the intention to violate it. To achieve fair presentation, if you follow standard recommended method, that will not give you proper depreciation figure. That's why you're deviating and then following a different method. Or, every accounting standard and every schedule 3, they will ask a company to disclose some information in the balance sheet P&L notes. If you feel some additional information you want to disclose, if it is permitted, then also it's called as, if at all the financial statements contains disclosures beyond the requirement of the framework. Beyond the requirement of the framework, you can give disclosures. And the framework and the accounting standard and the schedule 3 explicitly or silently allows it. Even the accounting standard, most of the accounting standards in India explicitly allow you. If accounting standard requirement is not possible in the scenario, you can deviate and follow some other requirement. In India, all the standards allow that. So explicitly, if the standard is allowing you to deviate for preparing the financials from the requirement of the framework, if they are allowing you to deviate, that's a fair presentation framework. In that framework only, we can use the word true and fair view. The auditor can use the word true and fair view while expressing opinion only in a case of fair presentation framework. In fair presentation framework, it refers to a framework where financials are prepared and presented in accordance with the framework. First, we try to follow the framework only. We directly don't deviate. First, we try to follow accounting standard. If accounting standard is not right in this scenario, so for example, projectors scenario, SLM, WDV is not. then you can deviate, and you may deviate from the requirement of the framework so as to achieve fair presentation. If the financial reporting framework is fair presentation framework, if the financial reporting framework is permitting you to deviate for achieving fair presentation, if the financial reporting framework is permitting you to give additional disclosures for achieving fair presentation, that framework is called as fair presentation framework. In India, a company has to prepare financial statements as per accounting standard, as per Schedule 3, and Companies Act specifically highlights the word true and fair. Since Companies Act wants true and fair, you first prepare financials as per accounting standard, as per Schedule 3. Suppose if accounting standard and Schedule 3 requirement, if any of that requirement is not suitable for that company, for true and fair, what is suitable, follow that. Companies Act itself says that. So now tell me, Companies Act, is it a compliance framework or fair presentation framework for financial statements? Fair presentation framework. What is compliance framework? It is a framework where financials are prepared in accordance with the requirements of the framework without any deviation. You don't deviate. Sir, number of hours per that, not possible. It is right, but not possible for me. Either SLM or WDV. Either SLM or WDV only I have to follow. The other method is not possible. Then that's a compliance framework. In India, compliance framework is not there. Not only in India, anywhere else in the world, compliance framework is not popular. Fair presentation framework is only popular. Understood or not? Next. Now you see. So what is a general purpose? General purpose framework is a financial reporting framework. It is designed to meet common financial information needs of wide range of users. Fundamental accounting assumptions, GAAP, accounting standards, annual preparation, everything and all generally are the characteristics of general purpose framework. What is general purpose? Special purpose financials. If the financial statements are prepared as per special, if the financial statements are prepared in accordance with special purpose framework, then it's a special purpose financials. Special purpose framework is nothing but if the financial statements are prepared as per requirement of a specific user. Suppose I took my general purpose balance sheet, general purpose P&L to a bank for getting a loan, or I took them to a private equity venture capital fund or some investor. Sir, I want funding. He told me, you prepare balance sheet P&L on cash basis and then bring, he told me. Now I went back and now prepared freshly my balance sheet and P&L using cash method of accounting. Now tell me, here I'm using cash method of accounting for preparing the financials, right? Are these financials for general public? No, they are for the investor's purpose, specific user. These financials are called as special purpose financials. Special purpose financials are mostly and most of the times are confidential in nature. They are confidential in nature. They are not something public. They are confidential. Where you prepare financials exactly as per requirement of user without deviation. Whatever user says, you have to follow that. You just have to comply with the user requirement. Whatever user rules and regulations were there, you just have to comply. It's a compliance framework. Special purpose financials are prepared exactly as per the requirement of the user. No deviations allowed. Something like a compliance framework. That's what even compliance framework says. You have to prepare financials exactly as per the requirement of the framework. Here the framework is decided by user, specific user. Specific user says cash method. You just have to prepare financials as per cash method for that user. Something like compliance framework. Able to understand. That's it. That's the difference between compliance framework, fair presentation framework, general purpose financials, special purpose financials, all that. Now you see. Now let's just will continue. So now until now what we understood is only financial information we understood. So an audit is an independent examination of financial information of any entity. It may be any entity, whether or not profit oriented. Look, whether a charitable organization is preparing a financial statements, a non-charitable trading organization, profit oriented entity prepare financial statements, doesn't matter. At the end of the day, our objective is with a view to express opinion. We just have to give our opinion on the financials. Remember, we are appointed as an auditor to just give our opinion, whether they are right or wrong. That's it. Today, somebody from a US, he's investing in an Indian Reliance company shares. Now, before he's investing, he's just looking at the balance sheet and P&L. He was wow. He felt wow. What is the wow? Like looking at the profit of the company, looking at the performance and position of the company, he felt very impressed. But he was doubtful whether these numbers are right or wrong. The company is showing 70,000 crore profit and loss account of Reliance. Tata Motors is showing 10,000 crore profit. So and so Air India is showing so and so profit. Of course, now it is not profit making. I'm just taking as an example. So Reliance company is showing thousands of crores as profit that they earned. Is it true? Below auditor signed that it is true. Auditor gave a report that it is true. Now tell me, as an auditor, what is our objective? Somebody will prepare a company, a partnership firm, an LLP. Somebody will prepare financial statements. We just have to check that financial statements and give our opinion. Opinion are two types, either positive opinion or negative opinion. What is positive opinion or negative opinion? We'll discuss as we go further. So if at all, I went to Reliance company, I verified every books, background documents, bills, vouchers, incomes, expense, assets, everything I physically verified. And everything is true. Company, whatever number they showed in the balance sheet, whatever number they showed in the P&L, everything is true. Then I will say everything is right. Suppose no, what they showed in the profit and loss account, what they showed in the balance sheet is not matching with reality. I will give negative opinion. I will tell people don't believe this balance sheet P&L. So if everything is fine, whatever they showed in the balance sheet P&L, if it is matching with the reality, when I go to the company, if it is matching everything reality. Suppose no, Reliance company in the balance sheet, some fixed asset 3 lakh crore they are showing. What is the breakup of 3 lakh crore? 10,000 missions they showed. They took me to various godowns. They took me to various factories. They took me to refinery. They showed all the missionaries, bills, vouchers, everything. Now I convinced 3 lakh crore is correct. Getting it? So then I'll come and give opinion. Same way, Tirumala Tirupati Devasthanam also appointed me as an auditor. A mosque has appointed me as an auditor. A church has appointed me as an auditor. They all have prepared balance sheet P&L. Okay, there we don't call it as P&L, we call it as income and expenditure statement. So they prepared balance sheet, income and expenditure statement. Now what is my objective there? There also my objective is to give opinion whether the number is right or wrong. Whether the balance sheet is right or wrong. That is what my objective. So whether the entity is profit oriented or not doesn't matter. Why are they doing that activity? What is their role? What is their objective of the entity? Is the entity objective is to get profits or to serve people? Doesn't matter. At the end of the day, they prepared balance sheet. It has some assets, it has some liabilities, it has some values, liabilities has some values. Whether the values are right or wrong, that's it. With a view to express an opinion. So an audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form. Even whether a company is 10 crore turnover company, 10 lakhs turnover company, 10 lakh crore turnover company, 1 lakh crore turnover company, size of the company doesn't matter. Suppose there is a small company, it has a turnover of just 1 crore. Expenditure 1.2 crore, they showed a loss of 20 lakh. The loss is how much? 20 lakh. Now they called me as an auditor. What I have to do? Whether the 20 lakhs loss is correct or not, I should comment. My objective is what? The turnover 1 crore correct, 1.2 crore expenditure correct, 20 lakhs is the ultimate loss. Is this correct number or not? That is what I have to comment. Even if a Reliance company called me as an auditor, they showed a turnover of some 9 lakh crore. Just a minute. They showed a turnover of some 8-9 lakh crore. They showed some expenses of some 7.5 lakh crore. Profit of some 50-60,000 crore. What is my duty there? I just have to comment whether those numbers are right or wrong. This company where they have 20 lakh rupee loss, there my objective is this right or wrong? Reliance company, there my objective is this right or wrong? That's it. My objective of audit is same, irrespective of size or legal form. What is legal form? Legal form means, see, we can do business. See, first of all, we can do business either alone. I myself start a business and do, or I can join some people as my partners and do a business. Now, either I will do business as a single person, we call him a sole proprietor, or I can do business with multiple persons called association of persons. If that association registers under Companies Act, it's called as a company. If the association registers under LLP Act, it's called as an LLP. If the association registers under Partnership Act, it's a partnership form. If the association registers under Societies Act, it's a society. If the association does not register anywhere, it's simply called as AOP. It is simply called as AOP. Now tell me whether our business, first of all, we are doing a restaurant, we are running a restaurant, whether the restaurant is in the name of the company, in the name of the partnership, in the name of the LLP, in the name of the society, or the restaurant is owned by a single person, doesn't matter. It's a restaurant. Sales, purchases, profit, assets, liabilities, balance sheet, P&L. Whether they're right or wrong, legal form also doesn't matter for the auditor. So legal form, see what is the objective of audit? What is audit? An audit is independent examination. We are examining, we are verifying what? Financial information. You are verifying financial information of some entity. Why are you verifying? Why are you verifying? When such an examination is conducted with a view to express an opinion. Why am I examining? The examination is to give an opinion thereon. To give an opinion. Opinion are two types, positive and negative. On what? Thereon means what? On the financial information you are giving opinion. On the financial information you are giving opinion. So what is the financial information? Balance sheet, P&L were there. On that I am giving opinion. That's it. What opinion? Whether they are right or wrong. That's it. My objective is same. Whether that's a company, legal form doesn't matter. Size doesn't matter. Profit oriented or not doesn't matter. My objective is to give opinion on the financial information. How will you give opinion? After verification, after examination. Now you see, an audit is an independent examination. Independent means what? Independent means what? Independence is of two types. Independence of mind, independence of appearance. Independence of appearance. I hope you have seen company audit. There is a chapter called appointment of auditors. In company law, right now in the new scheme, we have appointment of auditors. In the new scheme, company law has this chapter. Earlier in the old scheme, we have company audit chapter in audit subject. Now it is not there. There you might have learned disqualifications, if at all you recollect. You know, a person who has shares in this company cannot be appointed. Relative is having shares in this company more than 1 lakh, cannot be appointed. His partners have shares in this company, cannot be appointed. If they have business relationship, they cannot be appointed. If they are employee of this entity, they cannot be appointed. Why? Why these many? Because in a company audit, the auditor has to be independent. He should not have any relationship with the company. Only when such an independent person gives opinion, people will believe. Suppose if the person who is an auditor, if auditor is director's own brother, he is saying that company balance sheet P&L are right. Company showing a profit of 10,000 crore. My brother is saying that everything is right. Will you believe? Hey, is your brother? No, obviously. So why should I believe? Auditor must be independent in terms of appearance. That's what Companies Act says. That is independence in terms of appearance. Now there is another word, independence in terms of mind. What is independence of mind? The way I do audit must be independent. Sometimes people are independent. I don't have any relationship with the company, but company is bribing me and I am giving false opinions. I am giving wrong opinions. I am giving opinions in favorable to the company. I am not working with integrity. I am not working with honesty. Independence of mind is compromised. Independence of mind is important. Independence of appearance, both are important. In most of the statutory audits, independence of appearance is most important. In most of the statutory audits, independence of appearance is most important. Of course, independence of mind, nobody can prove it. Independence of mind is something that nobody can prove. We cannot hypnotize a person. We are not psychiatrists to identify whether a person is working honestly or not. Independence of mind is nothing but integrity, confidentiality, honesty. So auditor has to independently verify, independently, without any bias, with integrity, with honesty. verify the statements, give opinion. That's an audit definition. Almost we spent close to 45 minutes just to decode audit definition. So from the definition we can understand what is the objective of the auditor. Actually, objective of audit we are going to discuss in the next chapter, that is nature, objective and scope. There we are going to learn what is the objective once again in depth. But you see, what is the objective of the audit? Okay, or else I'll directly go there and then show you. What is the objective of the audit? You see here. Just a minute. So what is the objective of audit? The objective of the auditor, as per SA 200, overall objectives of an independent auditor and conduct of an audit as per standards on auditing. That is a standard heading. The objectives of the auditor are to obtain reasonable assurance whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to report on the financials and communicate as required based on auditor's findings. Now you see, whether due to fraud or error, thereby enabling the auditor to express an opinion whether the financials are prepared in accordance with the applicable financial reporting framework. So objective of auditor, whether the financial statements are free from material misstatements, whether the financial statements are prepared as per applicable framework, and then report on the financials as per the standard. We generally report as per SA 700. We have a separate chapter called Audit Report. As you continue, you will get to know Audit Report, all that. So auditor's objective is one. You see, that's what I have simplified in the beginning. In the fundamentals, no, in a simple way I defined objective. What is the objective of the auditor? The objective of the auditor is whether the financial, to express opinion. The objective is to give opinion. Whether financials are free from material misstatement, whether financial statements are prepared as per applicable financial reporting framework. Now again, two more words. Now material misstatement. Material means we'll discuss later. Whether financial statements are free from misstatements. Whether financials are prepared as per applicable financial reporting framework. What is applicable financial reporting framework? I will discuss. Now you see the word. They have used the word applicable financial reporting framework. Financial reporting means, as I already told you, preparation and presentation of financial statements. Framework means rules and regulations. Now tell me the rules and regulations for preparation and presentation of financials. The rules and regulations that are applicable for company is Schedule 3. For a bank, it is Banking Regulation Act. For an insurance company, IRDA, preparation of financial statements regulations. For NBFC, Schedule 3, Part 3. Yes or no? So the applicable financial reporting framework is different for different entities, depending upon nature of the entity, and why are they preparing financials? Objective of financials, depending upon nature of entity, objective of the financials, the financial reporting framework adopted by management, we call that as applicable financial reporting framework. You see, we have given a definition here. In view of nature of entity and objective of the financials, the framework, the rules followed by management. Generally in every organization, the concerned management only follows, right, for preparation and presentation of financials. That concept is known as applicable financial reporting framework, which can be general purpose framework or special purpose framework, which again can be compliance framework or fair presentation framework. That's it. I told you all this. Next. Now, another objective of the audit is what? To express opinion whether financials are as per applicable framework. That is one objective. Whether financials are free from material misstatements. Free from mistake means what? You need to tell whether they are right or wrong. If you say financial statements are right, they are free from mistakes, means there are no mistakes. If the financial statements are not free from material misstatements, means what? Financials are containing mistakes. You should give a negative opinion there. So what do you mean by misstatement? I will show you the definition of misstatement below. You see, this is a definition of misstatement. A misstatement is a difference between amount, classification, presentation, disclosure of a reported financial statement item, and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. Misstatements can arise either from fraud or error. Now you see. So okay, this is a separate thing. The fine we'll discuss later. So this is the first part. The first paragraph is there, right, which I highlighted with brown color. That's misstatement definition. If you read like this, you will not understand. Decode the same definition. I will decode in multiple parts. What is a misstatement? It's a difference between what and what? Amount, classification, presentation, disclosure of reported financial statement item, and difference between this and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. So difference between what is a misstatement? Misstatement is a difference between this and this. That's it. Suppose now misstatement can happen in 4 ways. It can be in the form of amount, or it can be in the form of classification, it can be in the form of presentation, or it can be in the form of disclosure. So SA 200 defines this. In SA 200, this definition is given. So the standard says in a balance sheet and P&L, mistakes can happen in 4 ways. Either it can be in the form of amount, it can be in the form of classification or presentation or disclosure. What is required as per framework, applicable financial reporting framework, what it says and what you reported, what the company reported, what the management reported, what the board of directors while preparing financial statements, they reported the item, what amount they reported, what classification they reported, what presentation they reported, what disclosure they reported, and what they are required as per framework. If both are same, no misstatement. If there is a difference between what they reported and what is required, that's a misstatement. And if that misstatement is material in the point of view of auditor, he has to give a modified opinion. Material means significant. Small mistakes and all, we don't bother. 100 rupees difference is there, mistake is there, we don't bother if it is not material. So material only we consider. Now mistakes can be in the form of amounts. Best classic example I will take. Suppose company inventory is there, raw material, their cost is 100 crore and the NRV is 85 crore. Whichever is lower, what is the amount we have to report as per framework? 85 crores. Their accounting standard says 85, but company they reported 100 only. NRV they ignored. This is a misstatement in amount. 15 crores materially misstated. Or classification. Suppose a company they purchased a land. A company purchased a land for value appreciation. Company has some surplus money. They purchased a land for value, asset appreciation purpose, not for business purpose. As per investment related standard, the land has to be classified as a long-term investment. Let us assume it's a long-term investment. It has to be classified as an investment, but company showed as fixed asset. The company classified the land as what? Fixed asset. Intention of the management is investment. Whereas company showed it as what? Balance sheet is showing it as land. Classification mistake. Presentation. How a mistake can happen in presentation? Suppose just in our example, trade receivables are 50 crore. Minus provision is how much? 5 crore. Net is 45. This is how, right? GAAP says generally accepted accounting principles. How debtors has to be shown in the balance sheet, gross minus provision net. This is what we need to show. But the company trade receivables 50, 5 crore provision they showed under liabilities side. They didn't follow presentation as per the generally accepted accounting principle. They didn't follow that presentation. This is a mistake in presentation. Able to understand. Disclosure. Disclosure. How a mistake can happen in disclosure? Disclosure mistakes can be 2 types. One, wrong disclosure or no disclosure. They didn't disclose at all. That is a misstatement. Wrong. Disclosing wrongly is also a misstatement, or disclosing partially is also a misstatement. Like under every accounting standard, under schedule 3, you need to show some extra data. If you do not show that, that's a disclosure related misstatement. Non-disclosure, if it is material, if the non-disclosure is material, auditor has to qualify that. Okay, how auditor will qualify, how auditor will give modified opinion, you will be learning in the audit report chapter. Getting it? As you go further, you will be learning there. So that is misstatement. Now tell me how this misstatement happened, why this misstatement happened in financials. Company intentionally did, that's called fraud. No, sometimes accidentally it happened, error. Amount accidentally typed wrongly, error. So it can be fraud or it can be error. So what do you mean by fraud? What do you mean by error? We have given. So error means unintentional mistakes, clerical errors, error of omission, error of commission, error of duplication, all this. From audit point of view, errors are two types: self-revealing error, non-self-revealing error. Self-revealing, non-self-revealing. This and all is not there in the ICS study material, not that required. Just for the sake of better clarity, I'm discussing. Fraud. Fraud is an intentional act by one or more individuals from management or top management, employee, third party, whoever it is. There are two types. Manipulation of accounting, like fraudulent financial reporting. It's called manipulation of records, manipulation of accounts, assets manipulation, theft of cash, all that. So that's misstatement, all that. Legal form, I told you. Yes or no? And general purpose, all this I've told. Now, what do you mean by financials? Companies act as balance sheet, P&L, cash flows, sources, statement of changes, and notes. This is financials. But auditing standard has given a definition. Financial statements are nothing but it's a structured presentation of historical financial information, past data, to communicate entities, our entities, resources, assets and incomes, obligations, liabilities and expenses at a point in time or changes therein for a period of time in accordance with a company prepares as per schedule 3 applicable financial reporting framework. Notes ordinarily comprise what? Accounting policies that are followed, explanatory information, all that. That's it. Now, books of accounts means what? Audit. Auditor means what? Auditor is nothing but the person who is conducting the audit. We call him as what? Auditor. Generally, when in reality, when we are doing audit, audit firm will be there. In that, partner will be there. Tomorrow, once you complete CA intern, you join for articleship, right? So you will be registered for as an article under some CA. That CA might be a partner in that firm or a sole proprietary firm. Getting it? So we call him as engagement partner. Audit is a engagement. Understand, audit is a type of engagement. Whatever work we do as a chartered accountant, we call them as engagements. In the next chapter, as you continue further, nature, objective and scope of audit, there I am discussing. Now there will be audit manager, paid assistant, senior article, junior article, any other. This entire people together, they will go and do the audit. We call them as engagement team. Entire engagement team. Auditor refers to person or persons conducting the audit. Usually engagement partner and other members of the team or the firm. Firm is also the auditor. Firm, engagement team, any member of the engagement team, all of them are called as auditors. But suppose if some regulatory authority is calling auditor, which one who should go? Article assistant will go. No, their engagement partner, their engagement. So when it comes to responsibility or accountability, engagement partner shall only be referred as what? Auditor. That's it. With this, the basic terminology, so that you can start learning the subject, so that you can revise the remaining portion of the subject. The basic terminology we understood now. This is what fundamentals of auditing is all about. Just to proceed to the next chapter, that is nature, objective and scope. Remember, this is very important fundamentals. If at all you have skipped, okay, please, I kindly request you to once again watch this entire fundamentals. So, take care, continue watching. So let's begin the next chapter, that is nature, objective and scope of audit. So in this, we are going to learn one important standard, that is 200. The only standard that is covered in this particular chapter is only one standard, that is 200. And one more thing that is discussed in this chapter is overview of standards that are issued by institute.
the ICI, like once we all qualify as a chartered accountant, we have two options. One, either to do practice, or we can even go for industry like employment, or you can do your family businesses, whatever. So three options technically speaking. So once you enter into practice, whatever the work that you are doing, we call it as engagement. What do we call it as? Engagement. So engagement refers to a work which is carried upon by the practitioner or the professional or the accountant. So the word practitioner or the word professional or the word accountant, any of these three can be interchangeably used. In our entire subject, at certain places, they use the word practitioner. At certain places, they use the word accountant. At some places, they use the word auditor. And all the three terms are exactly equal. Depending upon the context, they use the word practitioner. Now, whatever engagements that we provide, right, we call it as engagements, right? For these, every engagement, we have something called engagement standards. What do we have? We have engagement standards. And along with this, we are also having one standard called quality control standard. We also have quality control standard. So totally, the entire concept is referred as engagement and quality control standards. Engagement and quality control standards. Now, as per this, whatever the work that we are providing is broadly classified into two categories. Whatever the works that we are providing is classified into two categories. One, assurance engagements. So the work that we provide as a CA practitioner, whatever work that we provide, one variety is what? Assurance engagements. Another one is non-assurance engagements. Non-assurance engagements. How many of you are in articleship right now, or already completed articleship, or has worked in audit firms? Okay, some 40% of the audience almost. You know, what is a non-assurance engagement? Non-assurance engagement means there we don't give any opinions and all. We don't give any assurance and all. You know, suppose a client just want to file GST return. He just approached you because you know GST. So they just approached you. So and so company or so and so partnership firm, so and so entity is there. They have to file monthly GST or quarterly GST, whatever. Because they don't know, they approached you. You are just filing GST on their behalf. You are just doing filing services, administrative work. Now here, you are filing GST return, right? Are you including any of your name in that return? No. We are not giving any assurance to anybody here. These works are called as what? Non-assurance engagements. ROC filing, like with company law, Ministry of Company Affairs, ROC, we file certain documents. Some companies take our help while filing the ROC documents. Income tax return filing. All these works are called as administrative works. We call them as what? Administrative works. Getting it? So all these comes under non-assurance engagements. Now, for these non-assurance engagements, you have to take certain precautions. Getting it? Like, tell me, when a client comes and asks you, like, you know, some clients, you know, they'll ask you, sir, can you file income tax return? You agreed, okay, because client wants me to file income tax return. You agreed, yes, sir, I will file. But subsequently, upon when you're doing the work, the client did not prepare books of accounts itself. The client did not prepare balance sheet P&L itself. He was thinking, when I say to auditor file income tax return, auditor will prepare everything. He was in that assumption. Getting the point? So how do client know that I am only doing so and so work? You are only doing, my responsibility is this. Your responsibility is this. We should have a clarity, right? Now, there must be some formal approach between the auditor and the client. Nothing but between the practitioner and the client. There must be some formal approach. There should be some terms and conditions. There must be some documentation. All these things. Standard on related services. What is this? Standard on related services. So this standard has been given by ICI, which directs, which gives guidance to practitioner. Dear practitioner, whenever you are taking any type of engagements which do not involve assurance, be clear with the client. What you are doing, what you will not do. What are all the activities that you perform, what you will not perform as a part of the engagement. So clear cut, explain terms and conditions to the client in advance. So like that, some guidance and all is provided, so that the practitioner will not have any legal issues later on. After accepting the engagement, hey dear client, I did not tell you this. Client will complain, sir, filing means everything is included. I thought like that only. So client will not again argue with you. So standard on related services, the standards were brought. The standard for these types of works, the standards were brought to ensure to have a formal work culture. Getting the point? Then we have assurance engagements. Again, assurance on what? Assurance on historical financial information. What is it? Assurance on historical financial information. Assurance on other than historical financial information. So we provide assurance on either historical financial information or other than historical financial information. Some clients know. They will bring next 5 years balance sheet, projections, next 5 years profit and loss account, next 5 years cash flow. So some clients bring next projected financial statements, projected financial information, and they want you to provide assurance on that. They want you to provide assurance on that. Sir, you please give assurance that our financial performance is going to be like this in the next 5 years. Position is going to be like this in the next 5 years. So that your assurance report, I will show to the banker. Then banker will trust this. If I directly prepare the projected financial statement and give it to a banker, he will not trust me. But if you, any independent person like an auditor, competent person like a chartered accountant, if he give an assurance report, banker will trust. Third parties will trust. And then they will give us some loans. They will give us some investment. Able to understand. So now here, what financial information I'm talking about? Am I talking on historical or other than historical? Other than historical. That's called projected financial. For this, we have SA, standard on assurance engagements, SAE. What is it? We have SAE. We call it a standard on assurance engagements. You know, related services is 4000 series, whereas this is 3000 series standards. What is this? 3000 series standards. Now, we don't have in syllabus related services standard. We do not have even assurance engagement, but we have all these definitions. What is an assurance engagement? What is a related services? All these definitions we have in the first chapter itself. Then suppose, a client asked me, sir, it's not about future, sir. Already year is completed. So we have prepared financial statements based on the last financial year, 22-23 financial year, or quarter 1, quarter 2, quarter 3, quarter 4 of the financial year. So we have compiled the client to prepare the financial statements. You please come, check this data and give a reassurance on this. Now, when the client is asking me to give assurance on historical financial information, when the client is asking me to give assurance on historical financial, now here I need to ask him, do you want a limited assurance or do you want a reasonable assurance? By the way, absolute assurance is not possible. Not just for me, for nobody it is possible. Getting it? In fact, company itself, director who involved in preparing the financials for himself, absolute assurance is not possible. Getting the point? See, absolute assurance means what? Whatever number shown in the balance sheet, whatever number shown in the P&L is 100% correct. If you sell that asset, you will get that much. But it is not such, right? In reality, the assets, how much, if we start selling, how much they will fetch, we also don't know. So the company itself cannot provide absolute assurance. How come you expect an auditor to provide absolute assurance? Absolute assurance is impossible. And there we have a question. Anyhow, there once again I'll discuss the topic of absolute assurance, reasonable assurance. So as an auditor, either I can give a reasonable assurance or I can give a limited assurance. What is the other assurance? Limited assurance. Suppose if the client is just asking me limited assurance, if the client is asking me limited assurance, there SRE will apply. What are they? SRE, standards on review engagements. In case of limited assurance engagements on historical financial information, remember, it is only in the context of historical financial information. If you ask me to give a limited assurance, then I will provide that work, I will provide that service in accordance with SRE, standard on review engagement. So 2400, 2410, two standards we have. Suppose if the client is asking me to give reasonable assurance, if the client is asking me to give reasonable assurance, then a reasonable assurance engagement is nothing but, what is it? Audit. A reasonable assurance engagement is nothing but audit. Getting it? So reasonable assurance is audit. For this we have SAs. What is it? SA. That's it. Standards on auditing. And we have totally 38 standards on auditing. Out of this, 3 standards deal with 800 series. Remaining 35 standards deal with 200 to 700 series. Able to understand? In our syllabus, we are having only these standards. And we have one more standard called, for quality control, there is a standard called SQC, Standard on Quality Control. So we have a standard on quality control, and standards on auditing, totally we have 35. Out of this 35, some 5 standards I think so it is not there, but when I come to audit report chapter, I will tell you what are the list of standards exactly that we have. Able to understand. Now, let's look at this particular chapter in the last, first chapter. In the last it is there. These can be asked as a direct question mark. See. So what is the meaning of assurance engagement and what are the elements thereof? This is something newly added content in the new scheme audit only. Earlier we do not have this. So assurance engagement means what? Assurance engagement is an engagement in which a practitioner, I told you, we can either use the word auditor, practitioner or accountant. The third word is accountant. But remember, you know, when we are doing audit work only, we are called as auditor. Able to understand? When we are providing related services, no, suppose for client, no, we are just providing GST returns. We are just filing GST returns. There is the audit, is audit involved? Is assurance involved? So how he can refer me? He can refer me simply as a practitioner. Auditor word is more accurate when it is a reasonable assurance engagement, correct? Suppose if it is a limited assurance engagement, audit is also not required. Audit word also need not be used. Now, before I further read the definition, what is the difference between reasonable assurance and limited assurance? What exactly is the difference between reasonable assurance and limited assurance? Let me show you one Tata Motors. Suppose you see fixed asset. How much is the fixed asset value here? 11,733. Property, plant and equipment only. Property, plant and equipment means example, for example, one of the item is plant and machinery, furniture, whatever. Getting it? So it's a property, plant and equipment. So let us assume this entire value is represented by plant and machinery. Now in audit, what we have to check? In audit, what we will have to check is, first, what is the breakup for 11,733 crores? First I will ask breakup. How many assets were there? What is the original cost of these assets? What is the accumulated depreciation? What is the revaluation number? What is the impairment clause? What is the net book value? Whatever shown in the balance sheet is net book value, right? Correct, huh? Net book value, gross book value, I hope you are aware of it. So this is shown in the net book value. So for this, breakup is what? So the gross book value might be somewhere around 20,000 crore. Minus revaluation is some 2,000 crore. Yes or no? Minus depreciation is some 7,000 crore. So finally, 11,000 crore is the net book value. Now, I need to ask, for 20,000 crore, what is the breakup? The company showed me fixed asset register. The company gave me fixed asset register. I opened the fixed asset register. Approximately 10,000 units of plant and machinery were there. How many units? 10,000 units of plant and machinery. Number of plant and machinery, 10,000 machineries. All those machineries put together, net book value is right now 11,000 crore. Now, I will ask management, show me physically. I will not verify all the 10,000 machineries, but I will randomly select some items. I will physically go there. Give me bills. Whatever physical machinery I saw, related bill also you give me. Now I will see in the bill whether the company name is there or somebody else's name is there. Whether the 11,000 crore entirely owned by this company or some leased machinery also they are showing here. I have to ensure this, yes or no. Whether company is owner for this entire 11,000. Whether the company is having right on this or not. Whether the 11,000 crore assets really physically present or not. Yes or no. Whether all the fixed assets accounted properly or not. I need to check so many. So I will inspect ownership document. I will talk to the people, management. I will inquire them what are all the issues involved in this. I will recalculate depreciation amount. I will recalculate revenue, revaluation things, all that. I recompute everything. I do check the controls. So much I do in audit. By doing all this, can I get an assurance? Okay, 11,000 crores are there. 11,000 crore worth of, see, how I verified? I went backward. I didn't came from the I didn't take fixed asset register and then verified 11,000 crore. I took 11,000 crore as benchmark. Then I asked them the breakup. They showed the breakup. Randomly, I selected some 150 number of assets and I asked them to show me physically, take me there, show me physically, and I related invoice. Then and there I verified. Whatever asset I showed and I picked, they are giving me invoice document. And they are showing me valuation, computations, all that. Now by verifying 150 items of invoices, physical verification, all that, computations I checked, recalculation, I got confidence. Okay, fine. Out of 11,000 crore, though 10,000 were there, 150 assets I physically verified. Which 150? Not company selected. I selected those 150 items. Randomly I selected. By verifying these 150, I got confidence that yes, whatever the value they showed is correct. I know I have not verified 10,000 assets. But reasonably, can I get an assurance here? Can I give a reasonable assurance? Yeah, based on this sample I verified, everything is matching. So this is a reasonable assurance engagement. Whereas in limited assurance, no, I will not look for physical verification. I will not go for, documents inspection and all. Only two procedures I will do in audit. Enquiry, analytical procedure. What? Enquiry, analytical procedure. In a limited assurance engagement, we only do two procedures. Enquiry and analytical procedure. Like I will talk people, sir, what is the breakup for this? What is the gross book value? All that I'll just briefly check. I will not go physically there. I will not ask ownership documents. I will not do recalculations and all. Nothing. Whereas in audit, we do various procedures. We do enquiry, we do inspection, we do analytical procedure, we do observe, we do recalculate. So many things we do in audit. But in limited assurance, I will be doing only two works. One, enquiry. Two, analytical procedure. What is analytical procedure? I'll come back later. Getting it? Analytical procedure means logical. I will see, is this value correct or not? Or last year, how much value? 10,000 crore is there. Current year, how much value? 11,000 crore is there. 10% increase is there. Business also increased 10% as a whole. Even turnover also increased by 30-40%. Sales also increased, purchases also increased by 30-40%. Employee cost also increased by 10%. Same way, fixed assets also, investment is increased by 10-15%. Everything logically appears fine. Logically, we analyze the financial data. We call it as data analytics. What is it called? That's actually data analytics. Analytical procedure is nothing but data analytics. And that's a limited assurance engagement. So in a limited assurance engagement, we get assurance very limited. We give that assurance very limited. So what assurance I will get, that is limited. What assurance that I am also giving you, that is also limited. And you know what? In audit, no. How we should give opinion. Suppose if everything is fine. Enquiry, recalculation, recomputation, everything I did right. Once everything is fine, how I give opinion, in the opinion paragraph. This is very important in exam. Anyhow, in audit report, I'll once again cover. In our opinion, to the best of our information and according to the explanation given to us, the aforesaid financial statements give true and fair view. We positively tell them. Get the point? Whereas in limited assurance engagement, no, we give opinion like this. Based on our review. How we give the opinion para? Based on our review. Nothing has come to our attention that causes us to believe that the financial statements are not true and fair. See, there is a saying, no? Suppose you ask your friends any review on a product. Is that product good or not? If at all he says it's a good, super product you can buy. That's a different assurance. If at all he replied, it's okay, not bad. Both are two different level of assurances, yes or no? Review is a kind of second level, not bad. So we mentioned that the financial statements are not bad. They're not, I did not get any information to say that they're wrong. I did not get any information to say that they're wrong. In this way, we give opinion. In fact, in review, we don't use the word opinion. We use the word conclusion. In review, what we give? We give a conclusion. What is the objective of review? To give conclusion. Now you see, whether it is review, whether it is audit, both are assurance engagements. So assurance engagement means an engagement in which practitioner expresses a conclusion. If it is an audit, the conclusion will be opinion. If it is a review, the conclusion is simply conclusion. Why am I giving opinion? Why am I giving this conclusion? Designed to enhance confidence of the users other than responsible party. Management is the one who prepared. Should I need to increase their confidence? No need. Company only prepared this. Why am I giving opinion? I am giving opinion not for company's purpose, but third parties, shareholders, creditors, customers, getting it? So many, government, whatever. About outcome of the evaluation of measurement of a subject matter against the criteria. Subject matter is nothing but financial information. Criteria is nothing but applicable financial reporting framework. As an auditor, what is our objective? Whether the financial statements are giving true and fair view in accordance with Applicable financial reporting framework, yes or no? We should, in audit also. So what is the subject matter that we should verify? Financials. Against what we should verify? Applicable financial reporting framework. So the financials we verify in comparison with the applicable framework and give us our opinion whether they are as per applicable framework. This is what even misstatement definition points out. You remember misstatement definition? What is reported in the balance sheet and what is applicable as per framework. If both are matching, no mistake. If both are not matching, there is a misstatement. Exactly. So in an assurance engagements, what are the elements? 3 parties will be involved in assurance. Whether it's an audit or limited assurance, 3 parties involved. 1, practitioner. He is the one who gives conclusion on the assurance. 2, responsible party. This is the one who prepares the financial statements. Correct? 3, users who are going to use this financial statements and our report. Our practitioner's report and the financials. So both are being used by some third party and they take some economic decision. So we call him as intended users. So intended users are the persons from whom an assurance report is prepared. These persons may use report in making economic decision. This itself can be asked as a true or false statement. This can be asked as a true or false statement. They'll give you like this. A responsible party. They'll give you a statement like this. A responsible party is the one for whom assurance engagement is prepared. And these are the persons who use the report for making decisions. Wrong. The statement is incorrect. So, intended users are the one for whom we are preparing assurance report and they take decision based on the assurance report. Remember, you need to understand who is responsible party. They are the one who responsible for preparation of subject matter. In case of financial statements audit, subject matter is financials. Who is responsible to prepare financial statements? Management. Yes or no? So responsible party means nothing but in audit, who are the responsible party? Management is responsible party. Yes or no? Remember, I told you this is a revision session. I assume naturally that you already have basics understanding of audit. I assume you know what is meant by management. I assume you know what is meant by auditor. Getting it? So don't think again why sir is not explaining, who is responsible party, management. No, I hope I'm only thinking here everything. Whatever you already know, I'm just thinking that. Next. Now audit, no, generally related to historical financial information. So where practitioner provide assurance, not necessarily related to historical. In assurance, no. How assurance is different from audit? Audit, we give opinion on historical information. Whereas assurance means what? It's a broader subject. Assurance we can give on historical as well as other than historical. So you see this, that's why. So elements of an assurance engagement, in that they are giving a conclusion. Audit is related to historical, whereas practitioner may provide assurance not necessarily related to historical. He can provide assurance on other than historical also. So assurance engagement word is very wide. Able to understand. So in an assurance engagement, 3-party relationship, this itself can be asked. So write about 3-party relationship in case of an assurance engagement. 4 marks descriptive question they'll ask. Able to understand how a question can come. Don't expect the question paper to be very simple and plain. Question can be asked in any way. Like I'm showing you right now, true or false statements, all that. Any way they can test. MCQs can be tested. Now in MCQ, they'll give you 4 statements. They'll give which of the following statement is not true. Which of the following statement is not true? They'll give you these 3 statements. They'll give you these 3 statements, and the 4th statement they'll give you this one. Audit is related to historical financial and assurance is also related to historical financials. They'll give you 4th statement like this. They'll give you 3 correct statements, 1 wrong statement. You need to pick the wrong statement. That's the question which is actually asking. Unless you read and understand this terminology in the same way, you cannot solve MCQ paper. It takes lots of time for you to understand the question itself. That's why read from the original text always. Able to have you understood? Next. So what is subject matter? Subject matter is nothing but the information which we will examine. Information to be examined by practitioner. For example, financial information in the financial statements. That is the subject matter in an audit of financial statements. Able to understand? So in an audit of financials, subject matter is financial statements. Criteria. What is criteria? It is nothing but benchmarks used to evaluate the subject matter. Whether the financial statements are right or wrong, we will evaluate it by comparing it with benchmark. What is the benchmark? Applicable financial reporting framework like standards, guidance, law, rules, regulations. These are all what? Financial reporting frameworks. These are all talking about what? Financial reporting frameworks. Now, in an assurance engagement, we can give our conclusion. We can give our opinion. only when we examine it right, without examining it, without sufficiently checking it, without appropriately checking it, can I give an evidence? Can I give a conclusion? Suppose, if somebody is asking me, give me your opinion on this phone. Yes or no? This is the appropriate phone which I have to give an opinion. If I use some other phone and give opinion, it's not appropriate. Now, suppose I gave this person the phone. Just he unlocked, immediately I took back. Now tell me what is your opinion. Immediately what he'll say, hey, let me check. Oh. Okay, then you give. Just 2 minutes, you open settings, about all that is opening. Again, I pull back. Let me use sufficient time. Yes or no? You're asking me whether the phone is performing well or not. Allow me some time to operate. Yes or no? How much time? Sufficient time. What is sufficient time? For each person, sufficiency differs. Somebody can just within 15 minutes examine and then give whether the phone is good or not. Somebody like half a day. Some reviewers, YouTube reviewers, they use 2 days, 3 days. Then they will give a review. Some reviewers use 1 month and then give a review. So the level of sufficiency is a subject matter. Is a subjective matter. Agreed or not? That's it. So sufficient related to quality of evidence obtained by auditor. Appropriate refers to quality of evidence. One evidence may be providing more comfort to auditor than the other evidence. Obviously, so it depends. So for somebody, if I give them mobile phone to check, they open camera and then see. If camera is good, mobile is good. That's what they feel. For somebody, performance. Same way in financial statements, Suppose if I have to verify purchase invoice, I have to verify purchase, some purchase. Suppose fixed asset itself is there here. For some auditors, they just look at the bill and convince. Okay, fixed asset is there really. For somebody, show me physically. So one evidence will give one level of comfort to one type of audit. Able to understand. For somebody, physical verification will only give them the comfort. For somebody, just to show me the bill, that's enough. For somebody, show me asset register, that's enough. So what evidence will provide more comfort to the auditor is again subjective matter. Subjective means what? In audit we use the word professional judgment. What we use in audit? We use the word professional judgment. So what evidence to be verified? How many evidences should be verified? It's again a matter of professional judgment. Now more about evidence, we have a dedicated chapter, evidence chapter, there I will discuss. Next, finally, in an assurance engagement, we understood what are the ingredients. Okay, so there is a subject matter, there is a criteria. Against the criteria, the subject matter will be evaluated and we will finally give our conclusion. How do we give conclusion? Through a written assurance report in appropriate form. Tell me, we have an audit report format, right? Why audit report format? Why there is a format? Why there is a standard on the audit report? Because audit reports must be comparable. Yes or no? Suppose if there is no standard on audit report, suppose you verified. So some of your, suppose you took up some audit, you verified financial statements. Now we are asking you, sir, whether the financials are true and fair. You gave an opinion. The financial statements are excellent. Another guy gave an opinion. Financial statements are marvelous. Another guy gave an opinion. Financial statements are okay. Another guy replied, financial statements are good. So all these are like, no, tell me, if any shareholder is comparing these audit reports, whether good, marvelous, fabulous, fantastic, all these words, are they comparable? We can't. For somebody, good itself means fabulous. For somebody, fabulous is not even good. So there must be some uniformity in the way we give opinion, correct? The standards are ensuring the uniformity. Look, if everything is good, give this opinion. Use this paragraph. Okay, don't use your own paragraph. Don't put your creativity and all into audit report. Look, your audit report is being used by lakhs of users. Okay, they may understand the language in a different way. So the institute has designed a language. So if you want to give positive opinion, what language to be used? If you want to say negative opinion, suppose you said financials are not true and fair. Suppose you felt financial statements are not right. They are not rightly showing the information. You give an adverse opinion. Yes or no? We have 4 types of opinions, broadly speaking, actually. Unqualified opinion, qualified opinion, adverse opinion, disclaimer of opinion. Disclaimer means not giving opinion, simply speaking. Okay. Under what circumstances we give each of these types of opinion, we'll discuss later. We have an audit report chapter. So that's what written assurance report means. Now tell me, what's the difference between audit and review? Yes or no? Audit is a reasonable assurance. Review is a limited assurance. Limited assurance is a lower level of assurance than audit. Able to understand now easily? Next, review involves few procedures. Gathering sufficient appropriate evidence based on which limited conclusions can be drawn. However, audit and review both are related to historical only. Correct? Have we seen it or not? So now, what is the difference between reasonable assurance engagement and limited assurance engagement? Same points, they gave it in the form of a box. Reasonable assurance is a high level of assurance, but not absolute. Reasonable assurance is a high level of assurance, but not absolute. Whereas limited assurance is a lower level of assurance than reasonable. Now I have this doubt. Can an auditor accept an assurance engagement where the level of assurance that we get is less than limited assurance? The question is, suppose one question. Can an auditor accept an assurance engagement on financial statements that is less than reasonable assurance? Yes, he can accept. That is called limited assurance engagement. Second question. Can an auditor accept an assurance engagement where the level of assurance is less than limited? What less than limited? Limited assurance itself is very subjective, very highly subjective. That assurance is only providing a very basic level of assurance. Beyond, even lesser than basic level of assurance is not acceptable at all. So an auditor shall not accept any assurance engagement where the assurance is not even limited assurance. Able to understand. Next, where in reasonable assurance, reasonable conclusions we will draw. Here we just draw limited conclusions. We will not have more conclusions. Whereas in reasonable, we do extensive procedures. Whereas in limited assurance, we do few procedures. Few procedures means what? We just do inquiry and analytical. Whereas here extensive means what? We do inquiry, we do inspection, we do recalculation, we do analytical procedure, we do external confirmation, we do physical verification. So many we do in audit. I hope you are able to understand these words. What are types of audit procedures? You have a question in evidence chapter. What are various types of audit procedures? Inquiry, inspection, confirmation, recalculation, reperformance, analytical procedure, external confirmation, physical verification, observation. Yes or no? Have you remember? Yes. So they are nothing but audit procedures. There are various audit procedures. Whatever I do, that has been given a name. Right now I am talking, you are observing me, you are listening to me, you are again comparing with the book, you are inspecting. If at all you are getting it out, you are inquiring me. And if at all, whether what I told is right or not, you are confirming with your friend, yes or no. Whatever activity you are doing, for that it has been given a name. For that we have given a name, that's it. So it is not that for purchases we should do inquiry, for sales we should do inspection, for fixed asset we should do analytical, for so and so current asset we should do. No, for same item. Suppose I have to verify purchase of commodity. Suppose I have to verify purchase of goods. I will inquire first. What are the purchase? What are the purchase documents companies maintaining? I'll inquire first. Then they gave me all the documents. I'll inspect it. Then in the documents, some totaling and all is there. I will recalculate it. Getting the point? Then this purchase is from third party. I will ask third party whether this purchase is genuine or not. External confirmation. The purchase is the purchase is recorded in warehouse also, in the stock register also. I will go there physically and check the stock physically. Able to understand? Physical verification. Look, there is only one transaction. On the same transaction, I'm doing all the audit procedures. Audit procedures we will be doing all the audit procedures or few audit procedures on the same transaction or same account balance. That's it. So this itself can be asked as a direct question, 4 marks question. What is the difference between reasonable assurance engagement and limited assurance engagement? If they give you this question, they are expected you to write only this box. You need not write anything else. In exam also, draw box only. Don't put first reasonable assurance side heading 4 points. Then putting a side heading limited assurance engagement again 4 points. No, don't do that. And when you're writing in exam, you can fold the paper. At paper and where the box is required, you can fold the paper. How you have to fold the paper? Okay, suppose if there is a margin. Suppose if there is a margin like this, obviously there will be a margin, right? Like this margin is there. Like this margin is there. Now this is the paper. Within this line, center you need to find here. You should not sign the complete page center. The page center might be this. But what you are writing, you are only writing in this area, right? For this, in the writing area, center you should find out. Able to understand? And fold it. And then write 4 points left side, 4 points right side. You need not even draw lines also. If possible, draw with the pencil. Okay, with the pencil you can draw. Actually, they only recommend to use black pen. Okay, so preferably draw line with a black pen only. And don't, when you're writing any points, don't draw the end line. End line and all don't draw, because the matter how much it will come, you also don't know, right? When you're writing. Okay, so sometimes you may expect 2 lines. There will come 3 lines. So once you write all the 4 points, then you complete it. Able to understand? Suppose in exam, if the question is about what is the difference between review and audit, they are asking you to write 1, 2, 3 points. If the question is on what is the difference between audit and review, then you have to write first 3 points. If the question is on what is the difference between reasonable assurance engagement and limited assurance engagement, you have to write the box. Understood? Some students know if this question is asked, they'll write the first 3 points. And institute will not put the marks. Why? The fellow who is valuing the paper doesn't know the alternative answer. Actually, both are conveying same right. Observe. What they are asking, exactly observe. Whatever you know, if you write, you will not get the mark. You will get the mark only when you write the relevant content, what they are exactly asking. Next. So, are there any assurance engagements related to subject matter other than historical financial information? Yes, we can provide assurance not only on historical, but on future also. Projected financial information. What is it called as? Projected financial information. We can give assurance on projected. So, assurance can be given, may related to prospective financials, may not be related to historical. Able to understand? For example, assurance not only related to prospective. I can give assurance other than his financial data itself. I can give assurance on financial data. I can give assurance on other than financial data also. Suppose YouTubers know they are giving reviews on products, right? On what they are assuring actually? They are giving assurance on other than financial data. Some companies know they call us specifically to verify controls. Suppose Metro Rail Authority, Chennai Metro Rail Limited, they called you. They will call you. There are assignments which auditors are accepting today. Technical assignments. We call them as what? Technical assignments. They called you, sir. We have a a customer. No, when he enters the metro station, first he should buy the ticket. Then we will be given either some coin or some sort of authorization token. Only when the token is presented at so and so particular location, the gates will open so that the customer can enter inside the metro station and go to the platform. So then the train comes, natural customer enters into, then go to the destination, again customers, get down, and then while exiting, he has to, again, there is an authorization control there also, sir. The customer has to drop the authorization, whatever token, then the gate will open so he can leave outside. This is the controls we established, sir. Now we want an assurance report from you, whether the controls we established are operating effectively. So we are asking you. Now here, assurance is on what? Other than financial information. Okay, suppose if it is financial, assurance on financials. Now which financial? Past or future? If it is on historical financial, we have audit and review. If it is on future financials, projected, prospective, then that engagement we call it as what? Simply assurance engagement. What is it we call it as? Assurance. Prospective financial information means what? It means financial information based on assumptions. Yes or no? Anything about future is always based on assumptions presented now. Yes or no? So, if financial information based on assumptions about events that may occur in future, possible actions by entity. You see, everywhere they are using the word future oriented, may, possible, assumption, yes or no. It can be in the form of a forecast, or it can be in the form of a projection, or it can be in the form of a combination of both. Now, what is forecast? What is projection? That and all will not required. Now, we will be discussing that in CA final. 3400 standard is there. We will be discussing in CA final. That and all. That in depth is not required. Understood. Now, tell me, now we understood what is prospective financial information. Now, what is historical? Historical means information expressed in financial terms about economic events, economic conditions, economic circumstances occurred in past. The later, nothing but in this case, historical, relates to financial information based on assumptions and occurrence. Sorry, here you see, it is important to note the difference between historical and financial. Within the first line, later means prospective. First, what they use? Historical. What is the difference between historical financial information and prospective financial information? Within the sentence, later what it is there, second what we used? Prospective. So the later relates to assumptions about future events and possible actions. Therefore, historical financials are rooted in past, prospective financials are related to future events. This itself can be asked as a question because these are all newly added topics. Able to understand? So they'll give a statement. Assurance engagement means only about historical financial information. Comment, no. Assurance engagement can be either historical financials or other than historical financials, or it can be other than financial information also. It can be even other than financial information. No. In case of assurance, no. Prospective financial, no. What level of assurance we give? Sir, historical, we have two levels. One is limited assurance, another one reasonable assurance. On prospective, which level we use? Reasonable or limited? They have used a different word, moderate assurance. What word have they have used? Moderate. Why are they using this kind of different word? Just to confuse us. Getting it? Because they have to make it complicated, no? So they are using another word called moderate level of assurance. In dictionary, na, if you observe moderate, one synonym is reasonable. In the dictionary. For reasonable, na, in dictionary, another synonym is moderate. So moderate assurance means reasonable assurance only, technically speaking. But tell me, about future, how can I give reasonable assurance? How can I talk about future, first of all? We can't talk about future, right? How can I give assurance on future? Generally, in assurance about future, no. Assurance on prospective financials, no. In the report, no, we mention assumptions. We mention assumptions. Our assurance on the prospective financial information is on assumptions given under the financial statements. So we escape very cleverly, saying based on those assumptions, this what. Suppose if that assumption do not succeed in the future, suppose we thought next 5 years, suppose no, in India 2018, 19, 19, 20 is the year where so many restaurants were opened up and all of them collapsed. COVID issue. Yes or no? Nobody has expected. Now in 2019-20, when a particular chain of restaurant group, when they are availing loan, no, they gave prospectus, sir, our restaurant branding is like this. We are going for expansion. We have so and so name and fame here. So next 5 years, next 3 years, you see, our results are going to be like this. Suddenly 1 year closed. Yes or no? So prospective information is based on assumptions. Auditors should also give conclusion based on assumption only. So in assurance report involving prospective, the practitioner obtained evidence to the effect of assumptions. Where we get evidence? We get evidence about assumptions. We will not get evidence about the plant and machinery value. We will not get evidence about the profit numbers. In audit, no, historical, no, we get evidence on numbers. Whereas in prospective, numbers and all are imaginary, na? They are not real numbers. The numbers are based on assumptions. I will get evidence on assumption. Dear management, you said next 5 years your business will grow by 30%. What is the proof? How do you conclude? Company showed me, sir, look at the industry, sir. Every business in this industry is going by 50%. Don't you think we can grow at least by 30 for the resources we have, for the competence we have, for the market presence we have? They are giving me all the logics and explanations. You gather evidence of all that and then document it and then give an assurance. Be able to understand. So we should get assurance that the assumptions are not unreasonable. What we should get assurance on in respect of assurance on prospective financials, we should get evidence about assumptions. What evidence you should get? Get an evidence in such a way that assumptions are not unreasonable. Means assumptions which they used are reasonable. Means genuine assumptions. For that you should get evidence. So such type of assurance, no, they can only provide moderate level. That is the reason why we are giving moderate level only, because absolute is not possible, because it is based upon assumptions. So prospective financial information relates to future. Evidence may be available to support the assumptions. Na? See, whatever assumptions that you are taking, na, for that you are asking evidence. That evidence is also valid on the date only. Later on, if the conditions changed, the evidence and assumption which we used may not be relevant. That statement, while evidence may be available to support assumptions on which prospective is based, such evidence itself is future oriented. Therefore, not in a position to express opinion on as to whether results shown in prospective will be achieved. Evidence itself is assumption based. So, therefore, in such assurance, practitioner provide a report assuring that nothing has come to practitioner attention to suggest that assumptions do not provide. Here also we are choosing negative phrasing. Here we are not saying assumptions are right. We are saying after we verified, after management discussion, after inquiring with the management, I will tell you that as far as my information and knowledge is concerned, nothing has come to my knowledge that this assumption is wrong. So which means what am I indirectly saying? Assumption is right only I am saying. But instead of saying that it is right, I am saying that we did not get any contrary information to say that this assumption is wrong. What clarity? This is called negative phrasing. What is this called as? Negative phrasing. In a review engagement, limited review engagement, historical financial information, and in assurance on prospective financial information, we use negative phrasing only. While giving our conclusion, we use negative phrasing. We don't say straight away they are right. We say they are not wrong. Able to understand? You know, you have MCQs, right? In MCQs, no, sometimes they'll give you these answers. MCQs, no, how MCQs can be tested. Generally, what we assume MCQ means wrong, 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 true, right? Okay. Else, yeah, wrong, 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 and right. So in this answer, in this MCQ, no, you have to select what is right. Some other MCQs, right, 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 wrong. Getting the point? You have to select which of the following is not correct. Nothing but you have to select which is wrong. There are another MCQ, not wrong, not wrong, not wrong, wrong. Or sorry, right. Now what is not wrong? It means right, technically speaking. But there is a different level of intensity here. In CA Inter paper 5 deals with auditing. Right only. In CA Inter paper 5 deals with auditing and ethics. That is also right only. Now when these two options were there, first one is not wrong, second one is right. Understood the difference? Getting it? So CA Inter new scheme P5 deals with auditing. That's actually right. Look at another option. CA Inter paper 5 deals with auditing and ethics. That's also right. CA Inter P5 deals with auditing and ethics, but not assurance. They'll give you, see, all the four are correct only. They give you 4 statements, all the 4 are correct. Now in that case, you need to pick the answer right. That is challenging. Many students fail in these MCQs. So when MCQs, 3 answers, they all 3 are right only. As a part of audit, auditor has to conduct audit procedures, namely inquiry, analytical procedure, inspection. True. Option B, same sentence, extra added, recalculation, reconfirmation. That is also true, not wrong. Option C, as a part of audit procedures, auditor has to inquire, inspection, analytical procedure, external confirmation, recalculation, recomputation, reperformance. Option D, none of the above. Example. So among all these 4, which one is more accurate and more complete? C. In this way they'll ask. Sometimes they'll ask you wrong, 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 not wrong. Sorry, not right. No, getting it. Or else, no, they'll give you, sorry, not this. Not right, not right, not right, and wrong. They'll give you 3 statements which are actually not right. 1 sentence abruptly wrong. Able to understand? In any of these way, MCQ can be asked. When you're solving MCQ, when you feel like all the 4 options look similar, there you should not confuse. You should come into conclusion which of this combination is asked. If you figure out this logic, any MCQ can solve, even if it is confusing for others. Able to understand? So MCQs means 3 right statements, 1 wrong statement, or 3 wrong statements, 1 right statement. Those days are gone. Now they are asking you the 3rd combination and 4th combination models. So this is when the students are feeling MCQs are difficult. In order to solve these MCQs, you must have absolute command of the terminology, sentences everywhere. Because those sentences are exactly copied and pasted in MCQ lines. You try to solve ICA online MCQs. In ICA site, they enabled MCQs. You can solve online directly. You can attend. There, these questions only were there mostly. Next. Then, so we covered one important discussion in this topic, in this particular chapter. Now tell me, who appoints an auditor and to whom the report is to be submitted? Generally, in case of partnership firms, LLPs, sole proprietary concern, AOPs, the management will appoint. In case of partnership firm, partners of the management, LLP partners, AOP managing committee, they will appoint. Auditor also have to submit the report to management only, because in partnership, LLP, all these cases, there is no specific legal requirement for audit. Only in LLP audit is compulsory. In remaining all other forms of organization, audit is not compulsory. So there the audit type is what? Voluntary. There partnership firm is appointing auditor voluntarily. Now there are 2 types of audit depending upon its requirement. Is audit compulsory or not? Depending upon this question, there are 2 types of audits. One is statutory audit. Another one is non-statutory audit. So once I'll go there, what is statutory audit and non-statutory audit? First I'll cover this and then. So is audit mandatory or voluntarily? It is not necessary always. Legally it's not necessary that audit is always mandatory. There are entities like who are compulsorily required to get audit. For all entities it's not mandatory. For some entities it's always mandatory. So for non-corporate entities, non-corporate means what? Which are not companies, which are not body corporates, which are like partnership firms, LLPs. Sorry, LLP is also body corporate. For them it is audit is compulsory. Sole proprietary concern, AOP. For them audit is not compulsory. In India, every person is required to get audited if turnover crosses certain threshold limit under income tax. That too, many people who are non-corporates, they are getting audited because of tax audit requirement. Next, it is possible that some entities, like schools, may get their accounts audited for the purpose of getting grant or assistance from the government, or the audit is being done because of the government requirement. Some governments, they give incentives to schools. They give incentives to some engineering colleges to promote so and so thing. Government will give grant, and the government want audit report on the grant related. It's a special purpose audit again. Next, so audit is not always mandatory. Many entities get their accounts audited voluntarily because of benefits from the audit. Many such concerns means what? Entity, enterprise, organization, establishment, whatever the word, have their internal rules for audit due to advantages from the audit. So who appoints auditor? In case of mandatory audit, the law will talk who will appoint the auditor, whom audit report is to be given, all that. For example, the popular thing that we know is company audit. In a company, that two companies are two types: government entity, non-government entity. Government company, non-government company. Government companies are called as public sector entities. What is it? Public sector entities. Non-government entities are called as private sector entities. Even today I am getting these doubts. Sir, what is the difference between private limited and private sector? What is the difference between private limited and private sector? Private sector means it's not owned by government. It's not controlled by government. So that's called private sector. If some entity can be controlled by government in economic decisions, in their business decisions, then that's a public entity. What is it called as? Public sector entity or public sector undertaking, PSUs. Now, Reliance Industry Limited is here. It's a public limited company, but not public sector. In Reliance Industries, who are the major owner? Ambani and his family members. So, government is not the major owner. Of course, government also have some 10-15% of ownership in Reliance through LIC. Getting it? So, government is having some shares in Reliance, but Reliance is not a government company. Reliance is not a public sector company. It's a public limited company. Again, private limited, public limited. What's the difference? Private limited means our company ownership is limited to private people. Only me and my partners, only me and my other shareholders, we only can decide who can be owner of this company. It's private. Our affairs are private. Our company is privately limited. Public limited. Anybody can enter into ownership of this company. It's public. A company ownership is open to public. That's why it's called as public limited company. Suppose in this public limited company, more than 51% ownership is held by either central government or state government or combination of central and state government or another government company, then we call it as government company. Are you getting the point? So now understood what is the difference between public limited and public sector? Private limited and private sector? Private sector means not owned by government mainly. So it can be listed company, unlisted company, or a simple private limited company. All these are private sector. Next. Now, in case of government company, who will appoint the auditor? C&AG. C&AG. Today in new scheme, in company law, we have this chapter, audit and auditors. So C&AG will appoint auditor in case of government companies. Whereas in non-government companies, shareholders will appoint the auditor. And they will give the report to whom? To the members of the company, whether it's a government company or non-government company, to the members. In case of a partnership firm, they give report to partners. That's it. So, to whom the report is to be submitted? The auditor. The outcome of the audit is a written audit report in which auditor express opinion. The report is submitted to the person who is making the appointment. In a government company, the appointment is made by C&AG. So, the report is given to President of India, Government of India, in case of central government owned companies. Or in case of state owned companies, to the governor. In case of non-government company, the appointment is made by members. So, the report is also given to members. That's it. In case of a firm, partners we will address. In case of proprietor, we will address to proprietor. That's it. So this itself can be asked as a question. Able to understand? Anything can be tested. Don't think this will be ignored, this will not be tested. No, don't be in that assumption. Benefits of audit, I'm not reading. Okay, I'm not covering it. It's a very easy question, right? What are the advantages of audit? Hope you will understand. So here, what is an engagement and what are the benefits of external audit engagement? Benefits I will not cover, but what is meaning of engagement, meaning of external audit engagement I will cover. So what is an engagement? Engagement means an arrangement to do something. Today I am engaged in taking the class. Getting the point? Whatever I am engaged in, that's called an engagement. Able to understand? So in the context of audit, what is engagement? It means formal agreement between auditor and client under which auditor agree to provide auditing services. So it takes the shape of engagement letter. So in an audit, auditor agrees with the client to audit the financial statements. This is called as audit engagement. If it is review engagement, then it's a review engagement. If it is assurance, assurance engagement. If it is some other services, related services engagement. Understood? Now what is external audit engagement? External audit engagement is to enhance confidence of the users of the financials. Such as these engagements are reasonable assurance engagement. For example, in India, companies have to get their annual accounts audited by external auditor. For non-corporates, they may choose their accounts audited by external auditor because of the benefits. For corporates, it is compulsory. For non-corporates, if you want to get the benefits of audit, get it, appoint. So benefits I'm not discussing, it's very easy. Audit provides high quality information. Audit acts as a moral check. Audit gives credibility to the financial statements. Banks and all, we give loans based on the audited financials. Insurance companies and all, in order to settle their claims, they may look for latest audited financials and all. There are so many benefits which I'm not going into. Okay, next. Now, what are the inherent limitations on audit? Very important question in this particular chapter. Just a minute. Just for 1 minute. I'll take. In the meantime, go through the book, no? Whatever we have covered, no? Just briefly go through. Have you studied all this earlier, at least one reading also? Studied. Okay. Now, by the way, have you observed how I'm filtering the information now? Yes or no? Same way you have to do revision. By the time we complete all this, you will understand how to filter from the main book, and that's the best way to do revision. Okay, go ahead. Yes, let's continue. So write a short note on inherent limitations of an audit. So what are the inherent limitations of an audit? So see, you know very well that 100% we cannot cover in audit. Suppose you take this classic example of Avenue Supermarts. Avenue Supermart, it's a D-Mart, nothing but. Is it in Chennai, D-Mart? Ah, fine. Earlier it was not in. Okay. Fine. So D-Mart, you know, they have across India today more than 200 stores. Across India, they're having 200 stores. Each D-Mart, on an average, they do a business of 1.5 crore in a day. Each D-Mart. Getting it? In a day, D-Mart turnover is somewhere around 250 to 300 crore. In a year, the turnover is somewhere around 1.2 lakh crore. Maybe on a conservative estimate, 95 to 1 lakh crore. This is the turnover of the D-Mart. Suppose D-Mart appointed you as an auditor. You are the auditor of the D-Mart, Avenue Supermart. Now I only spoke about sales. What about purchases of D-Mart? What about employees of D-Mart? D-Mart, no, in only one store, they will have 250 employees. So 200 stores into 250, 50,000 employees approximately. D-Mart will be having somewhere around 50 to 60,000 employees. Now what about the salaries paid to them? Now when we are appointed as an auditor of D-Mart, we should check sales of D-Mart. We should check purchases. We should check employee benefit expenses. We should check fixed assets. We should check inventory. See the quantum of inventory. In one store itself, look at the quantum of inventory. How do you verify inventory? As part of our audit, there is a standard called 501. As part of that, you need to verify inventory physically. 200 locations. Physically, I should verify. How long it takes, yes or no? So, in audit, we don't verify 100%. So how do we conduct audit? See, since the time available for doing audit is very limited, we first to do understand how DMART is functioning. We first understand how DMART is functioning. See, generally, who will take most amount of care in running a business? Auditor will take or management will take more than you about the safeguarding of the money. Company is more concerned. They are more concerned because it's their money at the end of the day. Understand? So we know that we are very concerned about their financial safety. Beyond ourselves, companies most concerned about their financial safety. Every business organization, they are highly concerned about their assets safeguarding. Yes or no? So the DMART has implemented so many controls, so many cameras, so many controls, entry controls, exit controls, employee checkings, employee cannot use phone, DMART within the DMART they can't use. So in so many DMARTs, they have to surrender the phone the moment they enter inside. Only while going out, they will. And again, while they enter and exit, they should not keep any money in their pocket also, their own money. Any money, whatever is there, if the employee carries, for them lockers will be given. So in that locker, they need to keep everything. So while again going to the locker, they need to, come off the duty and then only go to the locker. They need to sign out of the duty and then go to the locker. So many controls have implemented to ensure that no sort of theft happens. So this is what this is just one or two examples of controls which DMART is having. So when I am doing audit of DMART, I first understand how they are functioning. What is their organization structure? Where mistakes can happen? Where frauds can happen? I should do risk assessment. What? Risk assessment I should do. Where things can go wrong? How the sales they are accounting? How sales are billed? How inventory is maintained? How inventory records are maintained? How inflow is captured? How outflow is captured? How closing stock is calculated? Is it automatic or physically, manually they are doing? And whether the physical stock they are comparing with the records at reasonable interval. In CARO we have this point. So I need to look at how controls are implemented at DMART. By doing this entire study of internal control, by evaluating DMART's internal control, then I will get a conclusion. Fine. DMART as a whole, they are functioning effectively. Now I just have to do nominally, I will select some samples and see whether the sample is rightly processed or not. Rightly transaction is recorded or not. I will just select a sample. So based on sample, I am giving my opinion on the entire population. Correct? Now tell me, when an auditor verifies sample, what is his objective? Is he want to give opinion on the sample or opinion on the population? We have to give opinion on the entire profit and loss account and balance sheet. But we don't verify 100% of each and every transaction. We only verify sample with a view to get a conclusion on population. This is one reason why our assurance is only reasonable assurance. Able to understand? See, you may say, sir, anyhow we are not verifying 100% now. Why even that 100 and 150 also? Something is better than nothing, right? So on that logic, we give reasonable assurance. In audit, even if we verify 100 and 150 samples, the way we select the samples are very dynamic. We know how to select a sample which contains material misstatement. The art of selecting sampling, getting it, that decides whether you can find frauds or not. You do analytical procedure. We do observe the transactions every day. We can easily identify exceptions. Fine, I'll discuss slowly. I'll disclose slowly. This is called scrutiny. Ledger scrutiny, we call it as. How we do ledger scrutiny, I'll gradually cover. So, our audit procedures are very limited. We only verify sample data. Based on that, we are giving opinion on the whole population. Definitely, our opinion can go wrong, correct? Because we verify 100 items only out of 10,000 or 1 crore invoices. Out of 1 crore number of purchase transactions, we verified 150 sample items. Within this 150, we did not find single mistake. Generally, when we did not find single mistake in 150, what we assume? Everything is good. So I gave everything is good. But in reality, most of the transactions are fraudulently recorded. Getting it? But unfortunately, when you selected the sample, you did not get that item which is actually fraudulent. Or you selected sample, right? In that also frauds were there. But you did not find the fraud. Because the person who is committing the fraud, will he commit a fraud in such a way to detect it easily or not detecting it easily? Getting it? So person committing the fraud will ensure that the fraud cannot be discovered. He manipulates every record. Getting the point? Fine. So the nature of audit procedure, whatever the way we work, that itself has limitation. That is one limitation in inherent limitations. 2. Another limitation, financial reporting. Another limitation is what? Nature of financial. Right now what I have discussed is nature of audit procedure. See, auditor carries out his work by obtaining audit evidence. Because of practical legal limitations, auditor cannot obtain 100% evidence. He does not test all the transactions and balances. He forms his opinion just based on sample. It is a practical limitation on the auditor, correct? Even if you want to verify 100%, how long you do audit? DMAT accounting records are prepared by a team of 500 people. You are a single auditor and you are carrying your article assistants and all 10 article assistants who are focusing on lunch time. Yes or no? Okay, so you're carrying along with 10 article assistants and 10 senior paid assistants, and many of them are thinking when Sunday will come so that we can roam. Honestly, we cannot do 100% audit, right? It's not possible. So based on sample, we do audit. Management, no, sometimes they may not give you complete information. Do you think management will come? Sir, we all did non-compliances like this. Sir, we violated these laws, sir. We violated these laws. Do you think management will come and tell you? No, they always want to hide their mistakes. If they do some mistake, they always hide it. Management will not provide complete information. No matter you try your level best. That's why what we do, here we get management representation. We try to identify all mistakes which are performed by management, which are done by management. We try to identify all the mistakes. In addition to that, we will also get a written declaration. Management, give me declaration that whatever mistakes you did, you disclose to me. That none of the mistake you are hiding it from me. If at all you are hiding any mistake from me, probably you also don't know that mistake. If that is the only case, fine, acceptable. Whatever non-compliances you have committed, whatever misstatements you have committed, you please disclose me honestly. Let us sit and rectify it. No issue. I'm okay. See, it is part and parcel of life to do mistakes. You made so many mistakes in financials. Let's correct it. I'm okay to correcting. I'm allowing you to correct. You prepare, you take your time, correct all the mistakes, and finally give me the financials. On that only I'll give opinion. So if any mistakes are there, no, directly we will not come and give qualified opinion, adverse opinion. First we will tell them, see, these are the mistakes, please rectify. If they don't rectify, they want to publish the balance sheet P&L as it is, which is containing mistakes, which is misleading, then I will give qualified opinion. Hey, look, this balance sheet P&L contains mistakes. These are the mistakes. I will highlight them in the audit report. I will talk about them in the audit report. Suppose if they rectified the mistakes and sent the revised balance sheet P&L to the shareholders, will I have to talk about that? No, able to understand. So management will not provide complete information. So in case they have not provided required information, he can only report that. So you can't, can you slap management and all? You don't have that powers, man. You're only watchdog, not biting. Auditor is a watchdog, yes or no? You can only watch and you can only, comment whatever you have watched. That's it. You don't have biting powers. Biting and all taken care by regulatory. Yes or no? You report whatever you have watched. That's why auditor is called as a watchdog. Next up. The management, no, sometimes they are dishonest, unscrupulous people, nothing but dishonest people, and maybe involved in the fraud. They have engaged in concealing the fraud by sophisticated organizing schemes. They organize it. They do frauds in such a way you can't even find fraud. Getting it? Suppose they have purchased so and so goods. What is the proof that they have purchased the goods? They show invoice. They show e-way bill. GST bill also they will show. They will show transport copy. They will show photos and all everything. But that and all completely fraud. How do you know? So we depend upon whatever information they prepared. Their information we use and then give our opinion. Next. Remember, by the way, audit is it's not investigation, right? Again, by the way. Are we liable to investigate each and every FIR? Suppose some third party they purchased goods. Some goods they have purchased. Do you want to go to Chennai Cybercrime Department and see whether transportation of goods happened in the camera? No need. That much and all audit not required. Yes or no? You just have to, based on the documentation, see whether it is genuine or not. If that is genuine, you give that it is genuine. Sir, what if tomorrow it is really fake? You are not responsible. Look, law is again there to protect you. You as an auditor protected. Everybody knows that what you are doing is reasonable. At least that reasonable verification you should do. You should not come and say, even if I verify 100 also, there is no point, right? Inherent limitation is already there. You cannot sit silently and give audit report blindly. You can't do that. We will see tomorrow if any fraud happened in the company, we will check. Have you done your due diligence properly? We will check, the lawmaker will check you, will check your documentation, will see, have you done the work properly, reasonable efforts, whatever you have to give, have you gave that efforts or not, they will check. If at all you have not given any efforts, you are giving carelessly, sir, even if I verify 100 also, what's going to come? Nothing, right? That's why I did not verify and gave a report directly. And you can't give these answers, na? So minimum you should do some work. In spite of it, beyond your control, if some mistakes happen, fine, we cannot blame you. If at all you do your work diligently, carefully, with the professional competence enough, your duty is fulfilled. Whether after we performed the audit also still frauds were there, you are not responsible. You just have to prove, sir, I did my audit properly. See, I selected samples scientifically. I verified each and everything. I spoke to them. I got evidences like this. In spite of all this, I could not find that this fraud is there. How do I know? How can you blame me? Yes or no? Can you argue or not? Next. Timeliness of the financial reporting and decrease in relevance of the information. This is another limitation. The relevance of information decreases over time and auditor cannot verify each and every matter. Therefore, a balance has to be struck between reliability and cost. For example, an auditor who is conducting audit of company last 2 years, he has sought detailed information from the management regarding various matters. During his third stint, he chooses to rely upon some information obtained as part of second year. However, it could be possible that something new has happened and that information is not relevant. So the information being relied upon by the auditor is not timely. For this, I can give an alternate example. Look, tell me, when are we doing audit generally? Once financial statements are being prepared. Year starts on April 1st, ends on March 31st. Tell me when auditor is appointed. Will the auditor be appointed before April 1st or after 31st March? During the year. Getting the point? Auditor will be appointed during the year. In case of non-government company, during the year he will be appointed for 5 years at a time. In case of government company, they will be appointed for this year and his appointment is valid up to conclusion of next AGM. Getting the point? So auditor is generally appointed during the year. Already year started. Just because you're appointed, do you think you will do audit immediately? Arey man, I'm practicing chartered accountant. I have 40 clients like this. 40 companies I'm doing audit. Now don't say, sir, ceiling limit 20 only na. Excluding ceiling limit, I'm talking. Ignore that. So 40 companies I'm doing audit. So obviously, not all 40 companies audit I can do immediately. So for many companies, I will go and do audit after 31st March only. Which means all the transactions are over, all the transactions are accounted, books are prepared, everything is over. Now I'm going and doing audit on the past data. Now, when I directly go and do audit in the month of August itself, I may discover some extra important points, which I will not get when I'm doing audit in April month. After March year is completed, when I go and do audit, I will not get that much data, that much clarity when I'm doing the audit at the time when the transaction is happening. If I lively see the transaction, I know what all happened. If I do not see in live the transaction, how can I believe the transaction? Based on documentation only. That is what they're trying to convey here. And further, future events may affect the entity. Regarding this future event, I will talk in SA 570, going concern point. I'll talk there. So what are the inherent limitations? One is nature of financial reporting. Another one, nature of audit procedure. Audit procedures is like, I already told, he do not test all the transactions, all that. So no, nature of financial reporting. By the way, tell me, in balance sheet, P&L account, plant and machinery, fixed assets is there. Do you think that is 100% accurate value? No. Fixed assets, how are they valued? Based on fixed asset values after depreciation. How the depreciation is calculated? Based on estimate. One example of accounting estimate is what? Life of the asset. When I say projector life is 5 years, exactly after 5 years, will the bulb blast? No. Yes or no? So it is just an estimation. It is just an estimation. So the asset actually may work more than 5 years, less than 5 years, which means the depreciation amount that we are calculating, is it 100% accurate that reflect reality? No. When the depreciation, when the balance sheet itself is not 100% accurate, how come you and me give absolute assurance that it is 100% accurate? Yes or no? Balance sheet itself, nature of financial reporting itself is not 100% perfect. How come you as an auditor say it is 100% perfect? So preparation of financials involves judgments by the management. Judgments means what? Assumptions and estimates. They are subjective. Some uncertainty is there. Degree of uncertainty is there. Therefore, auditor may not obtain absolute assurance that financials are free from mistakes due to fraud, because financials by nature themselves are not 100% true and fair. They are not 100% accurate. So on one of the premises for conducting audit is that Management acknowledges its responsibility. This we will discuss later. This we will get in terms of engagement. Premise means nothing but responsibilities of management. Just the first point alone is enough. In exam, no, you just have to write first point. What are inherent limitations of audit? First point you have to write. Then nature of audit procedures. First point along with example you write. Then audit is not an investigation. This point you can write. Timeliness of financial reporting. Only first paragraph you can write. That's it. 4 marks question if it asks. Sometimes no, they may ask you one of the inherent limitations, or else they'll give you nature of audit procedure is an inherent limitation to an audit. Briefly discuss. Then you just have to write entire B complete. Entire answer you have to write. Anyway the question can come. They can only ask only sub part of it, or they may ask you a full question. Leo, see, I'm giving all the observations so that after finishing entire this revision class, you have to remember all these observations and study in different ways. Okay, that's it. Next. So write about scope of audit and what is included in the scope of audit and what is excluded. So as part of audit, what we are not expected to do. We are not expected to do technical things. Auditor is not expected to perform duties which are outside the domain of his competence, which is not where I'm not competent. Suppose whether so and so asset is in proper condition or not, I may not check. Getting the point? Suppose no, worry, mining companies there na. Mining companies use big machinery. Vehicles and all will be so big. Whether the vehicle is in good condition, will you check? Can you even drive that? You don't have that expertise. Yes or no? So physical condition of certain assets like sophisticated advanced machinery, their condition we can't determine. So it is not expected from auditor suitability of like civil structures. Suppose can I see a building and tell whether the building is in good condition? Can it be used for 10 years or 20 years? Fitment certificates and all. Can I give? It's not possible. Now how do you check? Company, no, they purchased recently one building. They constructed recently one building or some old building they purchased. For that, no, the useful life is kept as 20 years. How do you prove that it is 20 years? You will take help of an expert. At some cases, we take help of an expert. Same way, whether a particular document is original or duplicate, we can't assess. So auditor is not an expert in authentication of document. So the genuineness of documents cannot be authenticated by him because he is not expert in that field. I have never done forensic analysis, laboratory analysis, all that. Yes or no? Next, an audit is not an investigation into wrongdoing. He does not have any specific powers of search. You know, just because I have appointed as an auditor, next day, surprisingly, I went to director's house. I want to do raid. Hey, show me, open your locker and show me. You're not investigator, man. Yes or no? You don't have all these powers. Your duty is very limited. Look, I told you, you're a watchdog. That's it. Okay. Next. So audit is distinct from investigation. Whereas investigation, critical examination of accounts with a special purpose. Investigations we do specifically to discover frauds. The objective of audit, on the other hand, has already discussed, is to obtain reasonable assurance, all that. The scope of audit is general and broad, whereas scope of investigation is specific and narrow. This question can be asked. What is not included in scope of audit? 4 marks question you can get. Understanding? Everyone, if at all you're thinking I'm speed, I can't do anything because I have to cover hell lot of things. Yes or no? We are only still covering just 2 chapters. This chapter will be over. Just a minute. How much time? Another 10 minutes I'll close. Then what is included in scope of audit? I should cover all aspects. I should cover purchases. I should cover sales. I should cover fixed assets. I should cover inventory. I should cover controls in the company. I should cover director remuneration. I should cover employee benefit expenses, all aspects. And I should also check how far information is reliable. I should check reliability of information. And I should get evidence sufficiently. So sufficiency of information and all, we'll talk little in depth in evidence chapter. Okay. And I should also check whether financial information in the financials are properly disclosed as per applicable framework, as per applicable law and regulation. Is it disclosed properly or not also? I should check. So what is included in my scope is I should cover all aspects. I should ensure that the information is reliable and I should get sufficient evidence and I should see that information is properly disclosed in financials. And I am not expected to perform technical things and all. Next. So what is a scope? Scope refers to reach of something. The purpose of an audit is to enhance confidence of the users. Users, who are the users? Shareholders, employees, customers, government, regulatory, whoever it is. Enhancing of confidence is achieved by expressing opinion by auditor whether the financials are prepared in accordance with the applicable financial reporting framework. So applicable financial reporting framework means what? It's a framework adopted. Who is adopting? Management. In preparation and presentation of financials that is acceptable in the view of nature of entity. If it is a company, schedule 3 is acceptable. If it is a listed company, part 1 is acceptable. Unlisted company, part 2 is acceptable. For NBFC, part 3 is acceptable framework. So in view of nature of entity, whatever acceptable framework is followed, then that is called as applicable financial reporting framework. And what is the objective? General purpose or special purpose? What is the objective? Getting it? So that is called applicable financial reporting framework. Next. So auditor can only give reasonable assurance. What is reasonable assurance? Reasonable assurance, no, it is different from absolute. Absolute means 100% guarantee. I guarantee that this information is correct. If tomorrow if something go wrong, come and blame me. That's called guarantee. Getting it? Reasonable assurance is not a guarantee. Of course, it's a high level of assurance. I verified, na? I verified the background data, I verified samples, I verified vouchers, I verified I spoke to third parties, I got external confirmation, I took legal opinions, I verified. It's a high level of assurance, but not absolute assurance. Remember, we do audit with competence and skills as per standards on auditing. We apply procedures in accordance with standards. We get audit evidence and we evaluate it. So based on that only we draw conclusions and opinion is formed. So whatever we are doing, no, it is not just like that. It is not something better than nothing. We are doing some works as per standards. We are trained for that. We know how to discover frauds even with samples. Getting the point? When I say based on the sample, nothing is misstated, 99% I'm sure it is not misstated. Able to understand? Exceptions might exist. You see, in India, there are more than 5,000 listed companies. In how many listed companies frauds are happening? Which are being reported outside? No, right? So, it's always say that audit is working. Truly, it is working. Audit is working. Though we are doing on a basis of sample, it is still effective. So, misstatements, no, they can occur due to fraud or error or both. So, he has to see effect of misstatements on the financials as a whole in totality. What is the effect of the misstatement? Effect of the misstatements we'll discuss in 450 standard. We'll discuss later. Obtaining assurance, this is common point, this is normal point. So opinion is reported and communicated as per findings. So how to give this opinion, how to report, how to give audit report, we have a next chapter, that is audit report chapter. And finally, how audit is interrelated with other subjects. Whatever is given in the A, that is also given in the B. Same points are covered. In the B, no, they covered with the side heading. In the A, they did not use that. See, in order to do audit properly, what are we auditing, by the way, in the entire subject, in what context we are discussing? We are discussing in the context of general purpose financial statements audit. Now, these general purpose financial statements are prepared in accordance with accounting standards or schedule 3 in case of bank, some other accounting standard. In case of NBFC, part 3, schedule 3, yes or no, Ind AS. Now, tell me, do we need to have the knowledge of accounting or not? If you don't understand accounting, you can't do audit properly. You can understand audit subject, but you can't do audit. Yes or no? 2. You need to understand accounting standards. You need to understand schedule 3. You need to understand laws and regulations applicable for the company. You need to understand tax laws because company is creating tax liability. Na? Whether the tax is calculated correctly or not, you should have tax knowledge or not. You should have knowledge of GST. You should have knowledge of financial management because no, in schedule 3, there is a requirement that every company should present key ratios. There is a disclosure requirement. Every company should present key ratios in schedule 3 notes to accounts. Ratio analysis and all, in which subject it is there? Financial management. The auditor should have a knowledge of financial management. You should have a knowledge of costing, production, normal loss, abnormal loss, to evaluate scrap value, scrap sales and all. How do you check? Only if you understand costing knowledge, normal loss, abnormal loss, all these terms. So in order to do an effective audit, you must have a full whole dimensional knowledge. Multi-dimensional knowledge you must acquire. Yes or no? Next. So what aspects we cover in audit? So what is definition? Independence we have already discussed. Nature of financial information I have already discussed. And we need to express opinion. Purpose also we have discussed. We have discussed all this in fundamentals itself. So that first question is very basic. I'm not covering. Okay. What aspects I will cover? I will verify whether financials are in conformity with books or not. I will first have to check what I have to check, whether financials are matching with books of accounts or not. Trial balance sheet matching or not, first I should check. Second, books of accounts, some entry is a general entry. For that, what is the proof? Supporting bills. So supported by sufficient appropriate evidence. Nothing but what is the proof for purchase? Purchase invoice, GRN note, delivery challan, transport copy, e-way bill. And I should also check nothing is omitted and no duplications, no fictitious. Duplication means what? Recording same transaction multiple times, not twice. Getting it? Recording the same transaction multiple times is called as duplications. So duplication we will not accept, omission we will not accept, fictitious entries and all we will not accept. And whether information conveyed by financials is clear, unambiguous. Getting it? Is it clearly giving the information? When we are reading the balance sheet P&L notes, no, there should not be any confusion. Next, whatever amounts, classification, presentation, disclosure, no, they are as per standards. And financials are present in true and fair view of operational results and assets and liabilities. Aspects in this, any 4 points you have to write. A 4 marks question can come. What are the aspects to be covered in audit? Any 4 points you have to write. Getting it? They'll ask you like this. What is the definition of audit? What are the various aspects to be covered in audit? B point, write about nature of auditing. This itself can be asked as a 4 marks question. Nature of audit. What is the nature of audit? Audit is an independent examination, all that. An entity whose financials are verifying, no, it may not be profit oriented or it may be profit oriented. So our audit nature is like we give opinion on the financials. Why audit? The purpose is to enhance confidence of the users. There are so many users. I think that's it. Then finally, first question. This is about history of auditing and all. That's not required. And finally, what are the qualities of auditor? The auditor should be having certain personal qualities like tactics, tact. He should be careful. He should be firm, means he should be committed. You should have good temper, no short temper. Don't scold the client and all. He'll remove you next year. Integrity, discretion. He must have the power to take decision on his own. Okay. So he must have the knowledge of industry. He must take decisions in the right way, common sense, patience, clear-headedness, and most importantly, integrity, reliability. Yes or no? When you should not search for when a chance will come so that I will be alone with the cash balance and all. Okay, you should not be having the thoughts to steal cash and all. Okay, next. In addition, he must have the shine of culture of attaining a great height. Means you must have an attitude to achieve great heights. Okay, highest degree of integrity backed by independence. Whatever basic human qualities that are there, that are required, auditor also should have same human qualities. Don't think you're not a human being. Okay, professional qualities. Apart from this, he must have knowledge of taxation, he must have knowledge of accounting, he must have knowledge of accounting standards, knowledge of frameworks, knowledge of laws and regulations, all that. Then we have engagement and quality control standards. This is what I started now, introduction. Whatever standards we have now, we call them as what? Engagement and quality control standards. So standards on auditing, standards on review, standards on assurance, standards on related services. Apart from this, we also have one more standard called standards on quality control. So what do you mean by standards on auditing? So they gave here some matter. Standards on auditing apply in case of audit. Standards on review apply in case of review. Standards on assurance will apply in case of other than historical financial information, nothing but prospective or non-financial information like controls and all. Standards on related services. There are two types. Agreed upon procedures, compilation engagement. What is agreed upon procedure, compilation engagement? I will cover in the next class. Okay. Just this alone I'm keeping it pending. It takes little time. Then we finally have standard on quality control. We have an exclusive standard on this. We will be discussing this in the next chapter, terms of engagement. We have a SQC full standard itself to discuss. Able to understand. Why standards are required? This is what initially I told. Why audit report? If at all we ask you to give opinion, every one of you will give different wordings. In order to have uniformity, correct? That's why we have standards. Why accounting standards? Same reasons are there for why auditing standards. But anyhow, let me not conclude like this. Let me discuss this little more briefly in the next session. Clear until now? Are you okay with this pace? 99% I will cover almost. I will briefly tell you what is there in that particular thing. If any important or any difficult point is that I will cover for sure. Okay, that's it. So take care. Tomorrow, just a minute, I'll just confirm you with the timing for the next class. So we'll resume. In the previous session, we were about to conclude nature, objective, and scope of audit, right? In that, predominantly all the concepts majorly we have covered. Now, at the end of the chapter, we have something like engagement and quality control standards. There I just have to talk about, right? Now, so as we know, what are all the engagement quality control standards? We have mainly 4 types of engagement standards. One is standards on auditing, standards on review, standards on assurance, standards on related services. Standards on auditing and standards on review, they both deal with historical financial information. Whereas standards on assurance, it deals with prospective financial information. Actually, don't say the word prospective, it uses the word other than historical financial. Other than historical financial information means it can be prospective financial statements, or it can be not at all related to financial statements, like assurance on controls. Getting it? Like I told you that example also, Metro Rail Division example. And we have other standards, that is standards on related services. Now in exam, they may ask you, write briefly about standards on auditing. They may ask you a question, 4 marks question. Write briefly about standards on auditing. Then you have to write this content. Standards on auditing. So standards on auditing, they apply in the context of audit of financial statements by independent auditor. It is important to remember that standards on auditing apply in historical financial information. Yes or no? And they establish high quality benchmarks. See, benchmarks means nothing but standard itself means what? By definition, benchmark. Whenever we do any work, we should follow a uniform procedures. Getting it? We should follow some benchmark approaches while we are doing the work, so that the quality of audit can be preserved. Getting it? Like you imagine, everywhere today standardization is being happening. Everywhere, in every sector, in every product, in every food item that we are eating today, standardization is happening. Whether you eat the Domino's pizza in Chennai or in Bangalore or even in USA for the matter, the taste is same, the varieties are same, the process of making it is same, the mixture, ingredients, everything is same, because they made standards for making a pizza. Whether it is Domino's or Pizza Hut or KFC, whoever it is, all worldwide chain of restaurants, they are standardizing their procedures. Even in case of, now it is coming to biryanis also. You know, Ambur biryani, it's being standardized now. Okay, and even Idiyappam, they are bringing standards in everywhere. Have you heard of this Rameshwaram Cafe, which is famous in Karnataka? Has been expanding now to, you know, they opened recently in Hyderabad. They opened recently in, they're opening in Chennai also very soon. I don't know. Probably they're having. So it's a restaurant where they offer all tiffin items, breakfast related items and all. They are making standardization. So the same taste and quality that you get in Bangalore, the same taste and quality you get in Chennai, only because of standards. Standards means benchmark. Now, while maintaining books of accounts, while preparing our financial statements, in our thing also we are having standards. Standards means what? Whether you prepare or I prepare, somebody else prepare, another company prepare, a partnership firm prepare, listed company, unlisted, whoever it is. Getting it? If we prepare financial statements, whatever the company financials, irrespective of its geographical location, thus financial statements can be understandable by anyone and everyone and comparable. So that is the purpose of standardization. Getting it? Now we have standardization in audit, and that's what standards on auditing deals with. We have standards on review engagements, how to conduct a review. Like if you are appointed to conduct a review, limited assurance engagement, we also call it as what? A limited assurance engagement. So what points how you have to cover, how you have to do this review, how you have to provide assurance engagement, how you have to execute that work, and how you have to perform related procedures, related services. For all these cases, standards were there. Now here you see standards. So standards on auditing have been issued on wide spectrum of issues. They'll give you a question like this. Standards on auditing have been issued on wide spectrum of issues in the field of auditing, ranging from objectives till documentation, comment. They'll give you like this. They pick 2 lines in this and then ask you. Now which means these lines are exactly used in this context, right, in the introduction. So you are supposed to know only these points. Able to understand. Now, like you say, standards on auditing, we have on so many issues, right? SA 210, for example, it is talking about terms of engagement. SA 220, talking about quality control for audit. 230 talks about documentation. 501 talks about specific considerations for selected items. 520 talks about analytical procedures, how to do analytical procedures, what is analytical procedure. 530 talks about sampling, audit sampling. 540 talks about some accounting estimates. On various issues, standards were issued. More in depth, I will discuss the difference exactly between a standard and an accounting standard in SA 560 discussion. When I'm discussing subsequent even standard, there I will exactly point out why we have a standard separately for certain accounting items. Generally, auditing standards apply for whom? Auditor. Are they applicable to management of the entity? Is company or management who are preparing financial statements, are they liable to comply with standards on auditing? No. Standards on auditing is for auditor who is conducting the audit. Accounting standards is for the entity who is preparing financial statements. We have to check, as a part of our audit, we have to check whether the entity is complying with the standards on accounting. Yes or no? Now in India, we have accounting standards, we have Ind AS. Internationally, we have international accounting standards, IFRS. Getting the point? Some countries, they directly follow IFRS. Suppose European Union, entire Europe related countries, Europe as well as certain parts of other countries, mainly Europe. All European Union countries, which are there, approximately some 20 plus countries were there in the European Union, they all follow IFRS. Getting it? Even United States, they also follow, I think IFRS only, they also follow IFRS. In India, we have adopted IFRS, modified according to our Indian circumstances, and we are calling them as Ind AS. Most of the Ind AS content is similar to IFRS. Able to understand. And IFRS is, Ind AS is applicable in India only to listed companies, that's we know. And remaining unlisted companies, private limited companies, for all of them, normal our accounting standards which are issued in 2006. Okay, they apply. That's what AS 1 to AS 32 that we have. Able to understand. Next. So auditing, the standards were issued on wide range of spectrums like documentation, financial, identifying, assessing risk of MMS, audit sampling, audit evidence, various aspects of financial statements audit. Okay, they have given just a few, 4 or 5 examples of various standard numbers and then headings. So you can give any other number here. Getting it? No problem. Any other number. Need not be the same examples. You can use any other examples. Getting it? Then what is standards on review? They apply in the context of review. We have understood that review is a limited assurance engagement. It provides lower assurance than audit. Even in review, we obtain evidence, right? Yes or no? We obtain sufficient appropriate evidence whether the items are free from material misstatements. Yes or no? In audit also we obtain evidence. But in review, the procedure we do through which we obtain evidence is inquiry and analytical. Whereas in audit, we do all other procedures, all types of audit procedures, whatever is possible. We try to get evidence in best possible manner. And we have 2 standards on review, 2400 and 2410. Engagements to review historical financial statements. Another engagement you see here, review of, what is the word used? Interim financial information performed by independent auditor. This is very famous in case of listed entities. This standard is very famous. Listed entity, they announce quarterly results. In company law, there was an amendment. They have added one new section called 129A, which talks about periodical results. Interim periodical results, interim periodical financial statements. Getting it? Normally, only for listed entities, the quarterly results is mandatory as per SEBI guidelines. But now company law has brought 129A section in and saying, certain class of companies which is not yet active, the section is not yet fully active, they just introduced to the section, class of companies the MCA has to notify yet. Okay, certain class of companies, unlisted public company or big private companies, big private limited companies, they may have to file with registrar periodical results. Getting the point? Periodical results have to be filed. Now while filing periodical results, now quarterly financials and all, like without audit we are filing it, right? At least get them reviewed. Get them reviewed. Reviewed by whom, by the way? A separate auditor? Huh? No. You already have independent auditor, right? Who has been appointed for full year. Give him the same work. Pay extra fee and get that, periodical results reviewed by him and give a review report. Able to understand. That's it. So remember, both standards on auditing, standards on review, both deals with historical financial information. Then standards on assurance. These are the standards they apply where the subject matter is other than historical financial information. Such assurance, no, they are neither audit nor review. These standards are called as assurance engagements. For example, assurance related to prospective financial information. Not only that, assurance may be regarding non-financial matters like operation of internal controls, all that. Now we have two standards, actually three. There is a standard called 3402 also. There is another standard 3402. In auditing, we have a standard 402. SA 402. For that parallel standard that was given in assurance is 3402. Actually 3402 is called as SOC audit. It's very famous. Systems and controls audit. What is it called as? Systems and controls audit. SOC audit. Worldwide is a very popular audit. Getting it? Today, once we qualify as a chartered accountant, we should not simply think like blindly going into some big four or some company attending campus. No. There is a lots of vacuum in the firms. In CA firms, they are dying because they're not finding adequate staff, qualified staff, they are not finding. Everybody is just blindly going to big four or probably to some corporate. Getting it? So today, many enterprises, many entities are wanted to delegate SOC audits to many medium-sized audit firms. But the problem is, medium-sized audit firms are not getting manpower. They are unable to do these audits. In the next 10-15 years, I'm telling you, the growth is so high in India. So be aspirational. You will have a very good future. Just that dedicate yourself to this because you have chosen this route for success. Yes or no? So dedicate yourself on this. Fine. So SA 3402 is another standard. Anyhow, these numbers are not important for you. SA 3400, examination of prospective financial information. SA 3420. 3420 is different, 3402 is different. Getting it? So assurance engagements to report on pro forma financial information included in prospectus. I don't know how many of you have seen prospectus of any company that is coming for public issue. You see prospectus, so small letters they use. Very small. And that prospectus size is close to 300-400 pages. Normally, if at all we keep that prospectus in a normal readable material format, it will come to 1200 pages. So when a company is coming and asking for money from public, they are giving 1200 pages of information about themselves to make you confident. In that, financial information will be given by the company. Last 10 years, what is our financial data, all that. So pro forma financial information, what is it called as? Pro forma financial. They don't give fullest financial statements. They give maybe latest audited financials or last year audited financials or last 3 years audited financials, as is they may give. But before that, some information will be provided in a brief manner in the prospectus. Now in the prospectus, financial information you are including, right? For that, we will give assurance. We will provide an assurance report. It's not auditor review. We provide an assurance report on the financial information which is taken from audited financials already. Able to understand? There is something called summary financial statements. There is something called summary financial statements. Audit of summary financial statements, SA 810. There is a standard, okay, which you don't have in syllabus. We'll discuss it in final. Able to understand? Next, finally, standards on related services. So standards on related services, there are two types. Agreed upon procedures, compilation engagement. One is what? Agreed upon procedure. Another one is compilation engagement. For example, what is an agreed upon procedure? Suppose there is a big company. They are having stat audit going on. Some stat audit is going on. Now, this company, this is having registration. This company is operating in 15 states. This company is having branches across 15 states. Now in all these 15 states, now tell me, when they are having 15 states, they are operating branches. Tell me, GST registration they need to take state-wise? Yes or no? They are supposed to take registration state-wise. Now which means this company will have how many GST numbers? 15. Now each of these entity, each of these GST registration, let us call it as a separate entity. From GST point of view, they are deemed a distinct person. Yes or no? So now they have to file every month 2 returns. Outward supply return, summary return. Inward supply return also they have to file GSTR2, we call it as, but in that place it is automated. It is auto-populated. GST. So we technically file 2 returns only. One, what sales we made, supply we made, and 3B. 2 returns they file. For how many months they file? 12 months. Approximately you see 360 returns. Yes or no? Approximately how many? 360 returns they have to file in a year for all these branches, one single company, understand? Okay, now, as a part of our audit, if you recollect CARO, in that one point is, we need to verify as an auditor. Suppose I'm the auditor of the entity. We have to verify whether the company is regular in payment of statutory dues. Whether the company is regular in payment of statutory dues to respective authorities. Regular means what? Are they paying within due date? Are they filing returns within due date? This is what I have to verify, which means for all these 360 months, approximately for 15 entities multiplied by 12 means approximately 360 returns they filed. All these 360 returns I should verify, right? Tell me, as an auditor, within the limited time I have, with the limited resources I have, how can I verify all this 360? So what I mentioned this company, sir, this is a very big significant difficulty. You know, this is something you should have already completed, sir. Dear management, you should have already completed this work and you give me the workings, I'll verify whether the workings are right or not. But now you did not do anything. And I have to, from the scratch, I have to do GST reconciliation altogether, which will take 10 to 15 man days extra. Do one thing, give me extra man days. Company is not ready. Sir, we have to file annual results with SEBI. Sir, within 60 days of end of the financial year, we need to announce, we need to release the annual report. We have to call for AGM. All this is going, you have to finish the audit as soon as possible. You are not doing this work and you are compelling me too fast. You know how it is possible? So let's do one thing. You appoint another CA. Okay. Tell him to do this. Now the company appointed another CA like you and me. And they told him, please sir, please agree upon this procedure. Getting it? What procedure? You just to do GST reconciliation. So whatever procedure they agree upon, that procedures are called as what? Agreed upon procedures. In any context, agreed upon procedure means the company will give you one work. You just have to complete that work and give them back. Able to understand? Suppose if the work given to you is for preparation of financial statements, suppose, you know, many companies, small and medium sized companies, they will not have a full-time chartered accountant, full-time secretary and all. Yes or no? They don't know how to prepare financial statements as per Schedule 3. We have learned or not? Whose responsibility to prepare financials? Management. They have to prepare the financials. Now tell me, management, board of directors, none of them they don't know anything about commerce and finance. They don't know real account means what, personal account means what, basics of accounting also they don't know. How do you think they'll prepare financials? So they have to take somebody's assistance, right, to prepare financials. Now tell me, BCom, MCom, yes or no? Those graduates, can they prepare financial statements? They may prepare final accounts, but they may not prepare financial statements as per Schedule 3, Ind AS, all that. So obviously, who has that knowledge of Ind AS and all this? Only chartered accountants and cost accountants have this knowledge. So a company will appoint them. Okay. What is their duty there? Compilation. What is their duty? Compilation. Compilation of financial information as per applicable financial reporting framework. If it is general purpose financials, then general purpose framework. If it is special purpose, special purpose. Compilation engagement means we prepare the financial statement and then give the company. Able to understand. It may be historical or it may be prospective. But my duty is what? I compile the financial statement. Compiling means what? Will I prepare the information or will I just compile from the information? Compile from the information. Who should give the information? Exactly. So an engagement in which a practitioner may be called upon to assist management with preparation and presentation of historical financial, or it may be prospective also. Here it is not covered. Getting it? Without obtaining assurance of the information. Obviously, why should I want whether the information is correct or not? My duty in compilation is what? You gave me information, I'll prepare and then give it to you. So such type of compilation engagement falls under related service, and practitioner, after he compiled the financials, after he assists the company in compiling the financials, he will give a report stating that it is not an assurance and no opinion is given in this regard. We will clearly give a report. Compilation report we will give. Just like audit report we give now in audit. In a review we give review report. In an assurance we give assurance report. In compilation we give a compilation report. In that report we clearly mention, look, we have not audited. We were only involved in assisting the company, assisting the management in preparation of financial information. These services are called as related. Agreed upon procedures means what? They may require auditor to perform certain procedures. Example, trade payables related some work, trade receivables related some work, purchases from related parties some work, sales related segment reporting work, or I told you GST reconciliation work, whatever. So company will give some work to you. You just have to complete that work and then give it back. That's it. That is what your scope of engagement. Understood. In both these cases, assurance is not involved, audit is not involved, opinion is not involved, review is not involved. Clear? That's it. Now, standard on quality control. Standard on quality control. I'll discuss. This introduction is anyhow we are covering in SQC specifically. So there I'll cover. Right now we are not in a position to understand SQC at this moment. Next. Why standards are needed? Just now I told at the beginning itself. Why standards are required? Domino's example, all that. Now, standards ensure carrying out audit against criteria with global practices. They improve quality of financial reporting. Quality of financial reporting means here they are talking about accounting standards. Remember, this is not about auditing standards. They generally will use the word standards. Why standards are important? Which standards they are talking about? Irrespective of everything. They are talking in the context of finance. In the context of finance, standards means what? Standards on auditing, standards on accounting standards and auditing standards. Standards promote uniformity. As audit of financials is carried out following standards. Standards equip professional accountants with knowledge and skill. So by reading standards, we understand how to do audit. We understand what are all the procedures that we need to follow. That is what we are learning in this entire subject. Correct? And standards ensure quality. Why quality? Very simple. You just go to Domino's, any pizza you taste. Is it the same quality or not at some other location? Hardly some 2 to 3% variation only. So whether so and so person newly appointed or the chef is newly recruited, it doesn't matter. Whoever is making that pizza, they just have to follow certain guidelines. So naturally, it ensures quality. If you standardize the procedures, it ensures quality. SOPs, we call it as standard operating procedures. Getting it? Then, now what is the duty of the professional, duty of the chartered accountant in relation to quality control standards, engagement and quality? So with respect to all the standards that are issued, what is our duty? Our duty, we have to follow. Getting it? Standards are to be followed in all the engagements undertaken by them. Ordinarily, these to be followed by professional accountants. Sometimes, a situation may arise when a particular procedure given in the standard would be ineffective. What standard says may not be possible in the particular scenario. Example, SA 501, when the inventory is physically with third party. What SA 501 says, get external confirmation. Let us assume the standard ends there itself. Actually, it extends beyond that, but let us assume for the convenience, it says external confirmation, you get over. But I felt getting external confirmation from third party is not sufficient. I am having doubts about really whether the inventory is there in the third party premises or not. I'm having a doubt. When I interact with the company, I got to know that some suspiciousness is happening. I want to visit physically there. I don't want to get confirmation. What actually standard says? Get confirmation. Now I don't want to follow that. Why? I felt getting confirmation is ineffective in that context. So can I do visit, third party premises directly, ignoring what standard says? Yes, you can. But mention in the audit report the same point. Mention in the audit report in other matter paragraph. Okay, that as per SA 501, getting confirmation from third party, we did not. Because it is ineffective. Because it is ineffective. Getting it? Considering in the scenario, we went physically to the third party premises and confirmed by observing the inventory and the related records whether inventory is present in the third party or not. So when you have, there may be a situation when a specific procedure as required in standard is ineffective in a particular. In such case, how alternative procedure performed achieve the purpose? Getting the point? What is purpose of 501? Get evidence on existence of inventory. Whether inventory is there or not, get evidence. How to get evidence? External confirmation. That is not possible. Reason for the departure. Why you deviated from the standard? Reason also you document. Understood. Remember, by the way, here this flexibility is given, right? This is given in preface itself. Preface to standards. Before standards topic starts, there will be a preface to the standards. In the preface itself, they mention, look, any procedure, any requirement given in a standard, If that is not suitable in the scenario, you can perform alternative procedure. How alternative procedure you performed, right? How is it achieving the objective of the standard? See, at the end of the objective of the standard is very simple. Get evidence, get conclusion. Without evidence, you should not conclude. Now, to get the evidence, how you should get the evidence, I have given certain procedures. If that procedure is not suitable, you performed an alternative procedure. How alternative procedure is effective according to you? You should give reason. Able to understand. Then, his report should draw. So, in the report, now we should draw attention to these departures. How we should draw attention? One is emphasis of matter paragraph, that is for financials. Another way to draw attention, here we want to talk about audit related deviations. We can talk about audit related issues in which paragraph? Other matter paragraph. I'll discuss immediately after this engagement related terms of engagement. After that, audit report. Today only we will start that session also. Okay, in this only. Fine. Remember, it is to be noted that this is very important for true or false statement. It is to be noted that a mere disclosure in the report does not absolve a professional accountant from complying with applicable standard. Just because you are mentioning in the report, so and so I'm not following, so and so I'm not following, can you take such an option as an excuse for not complying with standards on auditing? No. In a very exceptional circumstance only these kind of situation will arise. Normally the situation will not arise. Clear? All of you will do solve MCQs. Now you see, which of the following is not an advantage of audit? It provides high quality financial information, true. It acts as a moral check on employees, it's correct. It enhances risk of management bias, let's hold on that. It helps in safeguarding interest of shareholders, all these three are correct. But it increases the risk of management bias, that is not the advantage of audit. Sorry. Yeah, that is not advantage of audit, correct? It enhances risk of management bias. That is not an advantage. How audit affects management decision making? Technically, yes or no? Management bias means management, no, they will be having this partiality attitude. Like when they are making accounting records, they may do mistakes because of audit. Is it true? No. Which of the following is not true about assurance? It relates to providing assurance about historical financial information only. They have used the word only. This is not true. Let's look at other options also. The practitioner obtains sufficient appropriate evidence. Yeah, that is true. There is some information to be examined by practitioner. Of course, he has to verify something. A written report is also given. Yes, all the three are true. So the first statement, assurance engagement deals only with historical information. That is wrong. So answer is A. Able to understand. Next. Which of the following statement is true about engagement standard? Engagement standards ensure proper rights to practitioner in the course of their duties. Fine. Engagement standard ensure preparation and presentation of financials in standardized manner. No. Why engagement standards? To perform audits and reviews effectively. Yes or no? We are not preparing the financials. Even in compilation, we help management to prepare financials. There we don't ad hocly take the entire work. Getting it? Fine. Let's see third. Engagement standard ensures uniformity in their duties. Engagement ensures savings in resources of clients. This is even wrong. See, actually, now the conflict is between B and C. Sorry, B and D. Yes or no? Engagement standard ensures preparation and presentation of financials in a standardized manner. Probably, they may use this word in the context of compilation engagement. Let us understand. They may use it in the context of compilation. Engagement standard ensures saving resources of clients. Is not correct, right? Are we saving any resources for client because of engagement? Engagement standards are for our practitioners. It's not related to client. So which of the following statement is true? Okay, sorry. They are asking true statement. Then option is C. Sorry, I was confused. C. The answer is C. If it is true, the answer is C. Absolutely true. It's true statement they're asking. Engagement standard ensure uniformity in performance of their duties. Engagement standard ensures rights to practitioners and duties. No. They're talking about how you should do the work. Rights and duties are given in the terms of engagement. Rights and duties are given in the law. Getting the point? Next. Consider the following statement in relation to limited assurance. It involves obtaining sufficient appropriate to draw reasonable conclusion. Even in limited assurance also, we get sufficient appropriate evidence. Review of interim financial information of a company is an example of a limited assurance engagement. Both are true. Just a minute. Consider the following. It involves obtaining sufficient evidence to draw a conclusion. Review of interim financial information of a company is an example of assurance. Actually, no, here in which context they gave statement to do, I'm not understanding. Suppose are they exactly testing the original heading? Suppose if they use the word review of historical financial information by independent auditor, then it comes exactly 2410 standard name. Are you getting it? Getting it? So technically speaking, when I feel both the statements are appearing to me, it is correct. Both the statement 1 and 2 are correct for me. Sorry. Limited conclusion. Limited conclusion. Sorry. Limited. So which means only statement 2 is correct. Which means option D, right? Yeah. We have to be very technical, right? Yes. So to draw reasonable conclusion, it's a limited conclusion. Which of the following statement is true about standards on auditing? They deal with voluntary responsibilities? No. They deal with mainly mandatory. Of course, standards are mandatory. Yes or no? Engagement standards and quality control standards are mandatory for every professional. The sole purpose is to help government? No. These deal with carrying out audit according to law. Of course, that is also important, but mainly talks about mandatory responsibilities. Able to understand? B is the right option. Then we have in case study some MCQs. What kind of assurance does audit provide? Reasonable level, right? Reasonable level of assurance is also means high level of assurance. It provides reasonable assurance, correct? Option C. The auditor can force an employee of a company to provide him required information. Can you force anybody? You can't. Yes or no? He can only request for providing him necessary information, but it cannot be forced by him. If at all, in spite of requesting, they are not giving, you will give disclaimer of opinion. So Ali had listened in one of the class that audit covers all aspects of the entity, concluded that each and every transaction is verified by auditor. Wrong. No, do we verify each and every transaction? Goretti is also seemed to be in agreement with him, but she was of the view that it also meant that audit should be organized to cover all areas. What she said is correct. So she has to cover all the areas. That is correct. All aspects to be covered in audit, right? What are the aspects? Cover all areas. One of the important points. Whereas each and every transaction, Ali argument is not correct. So getting it. Actually, Goretti, what she did is, she even agreed with Ali regarding, yes, we should cover each and every transaction and all aspects. Technically speaking, both are wrong. Yes or no? Yes. So views of both Ali and Goretti both are incorrect. Now you are able to decode the MCQs now. Okay, you should read carefully. Every time whenever you are reading MCQ, you should simultaneously recollect the topic. Also, all of them discussed about benefits of auditing. Which of the following is not a benefit of audit? Not a benefit. Errors and frauds may be discovered. That's a benefit. Government authorities can make use of audited accounts for various purposes. It's a benefit. It can help bringing out deficiencies in internal control. Yeah, internal controls, we will find some weaknesses. Definitely when we are doing audit, what flaws are there in the system, we can point out. Since auditing is connected to future, auditing is connected to past, correct? Historical financial information. Goretti told her friends that she had read a news report about how a company had misled its auditor by providing some fabricated documents. Which of the following is correct? We have seen this. Scope of audit excludes. Auditor is not an expert in authentication of document. So if a company provided us any duplicate which are not original, we don't know. We relied upon the information, all that. So is auditor responsible if the company provided fabricated documents and mislead the auditor? Is auditor responsible? See, we are only responsible to the extent of skepticism. We should be skeptical. When they gave a document, we should do the due diligence. Is it original or duplicate? Yes or no? But we need not send it to forensic laboratory and send. Able to understand? Suppose a director, he gave a written statement, some written statement. When this statement is written, exactly what is the date, ink, how much it dried, that and all not required. Yes or no? It was wrong on the part of the auditor. That's wrong. All that was wrong on the part of the auditor. Wrong. Both are wrong. Auditor has to conduct audit by exercising skill. but he is not an expert in discovering genuineness of document. Hence, management consisting of dishonest person may lead him to rely on the fabricated documents. I think C option is somewhat feasible. Let's see. Management cannot mislead the auditor due to their high level and expertise. At that and all, we only imagine. Okay. The above is fine. So answer is C. Are you getting it? Look, when you're doing audit, literally you don't know anything about the business, about their affairs. So we are having very basic level knowledge about the entity. And the company is the one who knows, the management is the one who knows each and every affair of the company. So we should regularly interact with them when you're doing audit. Getting it? Directly going to the system, taking the vouchers, ticking the vouchers. No, not that. That's it. With this, nature, objective and scope of audit is completed. Confident on this? Yes. Yes. We'll begin the next chapter, that is ethics and terms of audit engagement. This chapter is broadly divided into 3 parts. Okay. One is talking about ethics. Like this is what many confused about that newly added topic. Nothing. It's there already. Earlier also we have this. Just that the way it is discussed has been changed and little in-depth discussion has been added. Actually, students thought in CA final we have ethics, right? CA final, what is the audit subject name? Advanced auditing and professional ethics earlier. Okay, everyone thought final syllabus is added. No, nothing. Same inter syllabus only. Final syllabus ethics is discussed at final itself. Okay, so because of this chapter, they have changed the the entire subject name itself. Fine. See, there is something called Code of Ethics. There is something called Code of Ethics which is issued by ICAI. By the way, 3 parts, right? I told you. Part 1 is ethics. Part 2 is regarding SA 210, terms of engagement. Part 3 is talking about SQC and SA 220. Part 3 I will discuss later. Okay, fine. So Code of Ethics. Fine. Part 1, Code of Ethics. So ICAI has issued Code of Ethics to be followed by our professionals. Once they qualify, what ethical principles they have to follow. Look, not just in CA, in every profession, ethics is common. In every profession, Code of Ethics will be given. For lawyers, Bar Council of India has prescribed certain ethical guidelines. For doctors, they have prescribed certain ethical guidelines. For practitioners like us, CS, Institute has prescribed certain ethical guidelines. The regulatory body, the respective regulatory body has authority to prescribe Code of Ethics. For our chartered accountants, there is an act called Chartered Accountants Act. There is an act called Chartered Accountants Act. In that act, they have given rules-based approach to ethics. What is it? Rules-based approach to ethics. Like we have schedules. Schedule 1, Schedule 2. In this schedule, Part 1, Part 2, Part 3, Part 4. Whereas Part 1, Part 2, Part 3 in Schedule 2. Schedule 1, 4 parts. Schedule 2, 3 parts. In each part, they have given certain clauses. They have given certain clauses. Suppose Schedule 1, Part 1 contains 12 clauses. Schedule 2, Part 1 contains 10 clauses. Getting it? So each clause talks about, one clause is saying how you cannot use chartered accountant word as a designation. When you can use the word chartered accountant, when you cannot use the word chartered accountant, one clause is specifically talking on that. Clause number 7, part number 1, schedule number 1. Suppose you see part number 1, schedule number 2, clause number 1. It talks about confidentiality. It talks about confidentiality. If you breach confidentiality, what is the punishment? If client information you leak to others, what is the punishment? Like that, ethics is like implemented through these rules, which are compulsive in nature. Yes or no? But tell me, can 100% of the ethics, can it be rule based? Can I inculcate 100% ethics and all in a person's mind only through rules and regulations? Obviously, there are certain occasions where rules cannot give the answer. Your conscience should decide. Your conscience, like you should decide. Your principles should decide. Your judgment should decide. So, ethics is a subject which we discuss in 2 contexts. One, principle-based approach. One approach is principle-based approach. Another approach is rule-based approach. Able to understand? Whatever it is necessary that spirit is followed. Look at the underlying intention, spirit of the ethics to be followed. For example, there is a, in company law, we have disqualification, remember? A relative of an auditor can hold securities up to 1 lakh face value. There is an exception. Now some students ask me, sir, auditor's best friend is a director of a company, sir. In company law, disqualification is not talking about best friend. Na? Friendship cannot be defined, right? That's why it's so beautiful. Okay. So, friendship cannot be defined. So, disqualifications of the company law. Does it say best friend of an auditor? You cannot have, if you have a person who is a close friend or best friend to an auditor, how to define it? It's not possible, right? If there is a relation, blood relation or step relation, if some relationship is there, I can define that is not valid. Friend, how? It's a hypothetical word, right? So, now tell me, your best friend is a director of a company. There is no restriction in company law, but you know you can't do independently the audit. The moment you act independently, he'll shut you down. Yes or no? So you can't do audit independently for sure. Now tell me, can you accept that audit? Rules are silent on this. Ethics should, morality you should able to understand. So principle-based approach of ethics is, it requires compliance with spirit of the ethics. It requires accountants to exercise professional judgment. Whenever they say professional judgment, they are indirectly saying you use common sense. Getting the point? In every situation based upon their knowledge, their skill, their expertise. So professionals should use judgment to evaluate every situation to arrive at a conclusion. Whereas rules-based approach, you strictly follow the rules. Company law says a relative of a person, a person who is a relative to key managerial person is disqualified. Rule-based approach, that is. Able to understand? It may lead to narrower outlook. Correctly? In company law, disqualification, some 10 points only there. It clearly says relative of an auditor only cannot be appointed. So, ethics are incorporated through certain provisions in the law. But they are very narrow. Spirit of the ethics may be overlooked while strictly following the rules. Sometimes while following the rules, spirit of the law we forget. So, rules-based approach is somewhat rigid, as it may not be possible to deal with every practical situation that it may, occur. It might occur. So, this question directly they may ask you as a 4 marks question. Write about principle-based approach versus rules-based approach to ethics. The first question is not that relevant. Probably in this first question, what is the need for professional ethics? Need. They may ask you that. What is the need for ethics in our profession? Getting it? Remember, whether it is law, medicine, whatever it is, getting it? Every professional body is having ethics. Auditing is also no exception to it. We also have certain, in fact, I'm telling you, ethics in auditing is paramount, very important. Why? Third party is involved here. Getting it? The assurance that we provide is being used by hundreds, thousands, lakhs of users. Getting it? So in auditing, ethics is utmost important for sure. Next. The purpose of assurance is to enhance confidence. Professional ethics are based on morality. Getting it? Therefore, a person who as an individual and as a class, willing to place good public, getting it? Personal gain, enjoyed respect, nothing. If at all, whoever keep ethics as highest, they always have that reputation and enjoyment of this respect and all. So professional ethics seek to protect interest of the profession as a whole. In this, you just remember any 4 points. You just write any 4 points. If at all they asking you a question, write about need of professional ethics. Any 4 points if you write and a 4 marks question. Getting it? I'm just searching for easy points. So in the spirit of the things, ICI requires its members to comply with principles of ethics while performing their duties. So the ethics for chartered accountants is codified, means they have brought some law, schedule 1, schedule 2, all that. Whether you are in practice, whether you are in service, you have to comply with the code of ethics. For people who are in service, ICI has given separate guidelines. For people who are in public practice, ICI has given separate guidelines. Any deviation from the responsibilities brings the disciplinary mechanism into the action. Getting it? If at all we violate ethics, we violate any rules, if at all tomorrow some inspection happened in our firm, it can be discovered, and ICA will take a disciplinary, ICA will punish us. Getting it? We have something called disciplinary committee in ICA. We have something called disciplinary committee in ICA, and they will punish us. You see, I'll show you once, the committees and all, once just for a brief idea. So in the subsequent discussion, when we get that word, we will not get confused. So ICI website, this is. So if you observe here, you see on the top, there is something called committees, yes or no? You're able to see this? Committees. You see this committee. In ICI, they're having standing committee, non-standing committee, directorate and secretary. There are 4 standing committees. One is disciplinary committee, executive committee, finance committee, examination committee. Like you have examination board, right? Who will announce the exam dates, valuation, that and all will be in the scope of examination. Now we have another committee. We have non-standing committees. You see, these are the non-standing committees. Have you heard of Accounting Standards Board? Auditing Standards Board? These are all non-standing committees of ICA. What are they? Non-standing committees. Accounting Standard Board, Audit Committee, Auditing and Assurance Standard Board. By the way, Audit Committee of ICA this is. In companies, we should have Audit Committee. Section 177, there is a section. In companies also, we should have Audit Committee. Not this and that is not saying. That is, for every entity will have their own audit committee. This is ICI's audit committee. Getting it? Board of studies, so many committees were there. Ethical Standards Board. Ethical Standards Board is the one which is giving this entire Code of Ethics chapter. Whatever content that we are reading, no, this is actually developed by whom? Ethical Standards Board has given this content. Able to understand? That's it. Next. So what are the principles of what are the fundamental principles of ethics? To my shock, this one asked us 5 marks question in CA final May 23 exam. May 23 exam, this was asked for 5 marks question. Nobody has expected this. Fundamental principles. So what are the fundamental principles? Integrity. I'm not reading inside depth because we have a lot to discuss. Tough points and all I'll cover. These are easy points. Yes or no? Integrity means what? Straightforwardness. Yes or no? We have to be honest. We should not, dilute our, discipline and all for the sake of any sort of pleasures or pressures which company is providing us. Objectivity. We should work unbiased. Our work approach should be unbiased. He belongs to my city. He belongs to my religion. He belongs to my caste. He belongs to my creed. No, nothing. That kind of bias should not be there when we are working. Yes or no? And most important, maintaining your competence is your fundamental moral responsibility. You have to be highly competent. You must be knowledgeable. Yes or no? And competence is a moral responsibility for every profession. Can a doctor say, I did not study that chapter? Obviously not. Able to understand? So it's your moral responsibility to be competent in all the areas that you are dealing with. You care. You have to exercise care. Yes or no? You have to be very careful while you have to be very diligent, careful. So you have to exercise that care. That is your fundamental responsibility. Remember, these fundamental principles are common in every profession, not just at accountancy. In every profession, all these 5 points you can apply to even doctors also. You can apply to even lawyers also. Confidentiality. There was a time, even now also, same firm is acting as auditor for big companies of same industry. Why are they appointing auditors so confidently even though they are auditors for our big competitor? They know auditors maintain confidentiality. Getting it? Doctor has to maintain confidentiality. Lawyers has to maintain confidentiality everywhere. So professional behavior, our behavior with the clients, customers, patients, it should be very professional. Getting it? We should not behave in such a way that bring disrepute to the profession. Able to understand? Then another important ethical rule is what? Independence. Independence is another important ethical principle. Independence means what? Independence of mind, independence of appearance. Independence of mind, it is nothing but talking about state of mind that permits provision of an opinion without affected by influencers. Without others' influence, you should give your opinion. You should provide the opinion. Provision of opinion means what? Providing the opinion. Allowing an individual to act with integrity, exercise unbiasedly, and maintain that carefulness, alertness. Getting it? Skepticism. Skepticism is nothing but alert. Being alert. The moment you say something suspicious, you have to immediately point out. Independence in appearance. The avoidance of facts and circumstances that are so significant that a reasonable and informed third party would reasonably conclude firms or members' team integrity had been compromised. Nothing but when a third person sees us, when a third person who do not have any interaction with us, by providing the information given by us, if at all he feels that my independence is compromised, then independence of appearance is not there. For example, suppose I am the auditor of a company, or my sole proprietor concern, sole proprietary firm audit example. So there is a sole proprietor. So he wants his books of accounts to be audited. I gave an audit report. And that fellow took the audit report financials to a banker. Banker asked, sir, audit and all completed. Yes, sir, look at this audit report. Who is this auditor, sir? Sir, he is my own brother. Now tell me, a third party, informed third party, they use the word informed means the third party has little knowledge. Getting it? Sir, if your brother and all audited, how can we rely upon? This is what they reply, yes or no? So informed third party who has knowledge of these things. Getting it? If at all he feels that, no sir, this report I will not believe. Why? Because the third party feels in his mind, independence of the auditor has compromised because of the relationship that he has with the client. Yes or no? Next. Independence is not only exist in fact. Yes, okay, you are not related, but should also exist in all reasonable persons. It should be existing inside the person also. So it's not just a fact. We both are not related. That doesn't mean I may act independently. There is no necessity, right? Client can bribe me. Intimidation threat. Yes or no? All he'll say me like this. If you do not work like this, I will not reappoint you as an auditor for next year. And I am a new beginner for the industry. I am a new practicing professional. Fees is very important to me to survive. Because of these reasons, many CS are compromising on independence. And that is why it's sort of bringing disrepute to the profession. Next. As a statutory auditor of listed entity, chartered accountants would cease to perform any usual function if at all any persons who rely upon the accounts do not have any faith in the independence and integrity of the chartered accountant. So if at all the auditor of a company, if at all people do not have trust on the independence and integrity, the purpose, the very basic purpose of audit itself is gone. Independence is dependent on state of mind and character as well, and it is very subjective matter. One person might be independent in some circumstance, in another different circumstance, he may not act independently. Therefore, every chartered accountant has to decide whether he can act independently in the given circumstances of a case. Only then accept the work. If at all a client approaches you to do some audit or review or some other work, and their independence is utmost important in that work to perform. If you know that in this particular client, I cannot do the work independently, I cannot exercise the rules and regulations as per the guidelines given to me, don't accept that work. If at all you can safeguard it, you can protect from these threats, if at all you can establish safeguards so that your independence will not be affected much, then you can accept the work again. So what are the threats? Okay, fine, independence affected, we are discussing. How independence affect? Independence is affected broadly by 5 reasons. 1, self-interest threat. Because I'm having ownership in the company. Example, I am having interest in the entity. Through that I am getting threat to my independence. I will be hesitant to comment anything negatively on the company because it affects my ownership valuation. Able to understand? So that's a self-interest threat. It occurs when auditing firm or a partner is benefiting from a financial interest in client, like direct financial interest, or we have given a loan to the client, or we have dependent on the fees given by the client so much. Close business relationship, potential employment opportunity. Client promised me tomorrow or the next year he will give me few more works where I will get few more fees, contingent fees. You know, a CA is prohibited to accept fees on contingent basis. Can I accept audit fees as a percentage of turnover? Prohibited. It's a violation. Clause number 9. Getting it? Of professional ethics. 9 or 11 or some clause is there. Okay. Part 1, clause number 9 or 11 of schedule 1. Self-review threat. This is another threat. Self-review means what? Suppose, no, very recently I resigned from a company. Example. Okay. In that company, I am a finance director. I am the one who designed all the financial controls and all. I am the one who has designed and chosen accounting policies. I decided the accounting estimates. I have given all the guidelines to prepare books of accounts and financial statements. Now I resigned. I took up COP again. I'm a chartered accountant actually. And I took up COP again. The same company is asking, why can't you come? You know very well about this company. You can do better audit. You're anyhow independent. You're anyhow unrelated to this company in any way. But I am the one who designed all this. I am the one who involved in preparation of financial statements. How can I come and do verify? Maker and checker should be different. Yes or no? That's called self-review threat. So, which occurs when in a review of any judgment reached in a previous audit or non-audit engagement. Review of any judgment reached in previous non-audit engagement. Earlier, I am the one who chosen that accounting estimates. That judgment is taken by me. Now you are coming and asking me to review it. Now you are coming and asking me to audit it. Able to understand? So, recently, you are a director or senior officer of the company and you are now coming as an auditor. Or an auditor performs services that are themselves subject matter of audit. Suppose, company is asking me to do GST reconciliation through a compilation work. Agreed upon procedure. I did that as per that based on the company information. Now they are asking me to audit also. Not possible, right? Self-review. Non-audit engagement means what? Here they have used the word non-audit engagement, right? So what is a non-audit engagement? This itself can be asked as a, true or false statement. True or false statement. They may give you like this. What is a non-audit engagement? And write about self-review threat. Write about a self-review threat and also define non-audit engagement. You have to write this B point. Non-audit engagement means what? Any professional services to an entity other than audit, other than review. These includes management services, internal audit, investment advisory, design and implementation of financials, 144 section services all. They are all non-audit services. We call them as what? Non-audit services. Whereas in Companies Act, we call them as prohibited services. Remember? Yes. Now, there is another threat, advocacy threat. Suppose I'm acting as an auditor of the entity. The same entity is giving me a court case because I'm also having, LLB. Okay. Or my partner is a lawyer, practicing lawyer, let us assume. Getting it? The firm gave me that work. Like the company for whom where I'm acting as an auditor, they gave me a case to defend against the company. Actually, company is only fault. But we have to defend the company in the court of law. Now you see, am I supporting my client's opinion? Yes or no? Where there is no validity. So indirectly, my ethics, my independence might also be compromised. When you are promoting a client's opinion to a point where people believe objectivity is compromised, whatever client says you are acknowledging, you are accepting. When auditors deals with shares of the audited entity, or you are coming to know that you are becoming the client advocate in litigation or third party disputes. You are only becoming the client's advocate. Actually, you are the auditor. You are only becoming advocate. That's called advocacy threat. Next, familiarity. Familiarity threat comes. There are some companies. Very recently, one of my friend have told he went to US for for pursuing CPA. So in one CPA firm, that firm is auditor for one US company for more than 45 years. More than 45 years. In Chennai itself, I know certain firms who are auditor for more than 25 years for the same company. That too private limited company. Private limited company means what? 3 directors will be there. Out of them, only 1 director will be doing the business. He himself is a shareholder. Remaining 2 directors are his wife and mother, who will not do business at all. Why 3 shareholders? Astrologer told them. Yes or no? So, this fellow is the only one who actually do the entire business, everything. And now that director is my friend, example, or maybe not friend. We become very close friends because of the 25 years of association. Yes or no? So they appointed me. Every day he'll call me. Every day he'll talk to me at least for 10 to 15 times. Getting it? Everything, every move, whatever the move he is going to do, he'll intimate me. Example. Now tell me, have we developed certain bonding or not? 1 year itself is enough to develop such a bonding. Yes or no? Now 25 years we are the auditors. You know all my relatives and friends. I know all his relatives and friends. Tell me, tomorrow, if at all, if something went wrong in the company, if I have to qualify, if I have to give an adverse opinion, obviously, will I be in a position to give an adverse opinion because of the bonding that I have, because of the sympathy that has been created between us? No. You see, these are self-evident and occur when auditors form relationship with the client where they end up being too sympathetic to the client's interest. Getting it? So whatever client's interest is, that becomes matter for you. That is called familiarity threat. Because of the familiarity that you have with him, the threat has been created. One examples, close relative of an audit team working in the senior position of the company. Suppose I am carrying my audit team now. In that, my manager is there who is a CA. Getting it? His relative is director of the company. Former partner of the audit firm is a director now. Or else my earlier partner himself is a director. Because we are already having familiarity. Familiarity means having familiarity with the management. Who are having familiarity with the management? Either you or team member. Next, long association between auditors and the client. Long association, from so long you both are acting. See, that is why to overcome familiarity threat only rotation of auditors has been introduced. Getting the point? Rotation of auditors is very specific in India. It's not popular in the world. It's very specific in India. So rotation of auditors, what is it? In case of non-government company, an individual cannot act as an auditor for more than one term of 5 consecutive years. Partnership firm cannot act as more than 2 terms of 5 consecutive years. Then after, they must have a break of 5 years. Why? Familiarity threat protection. Then intimidation threat. Remember, any of these can be asked as a question. Don't think, write about 5 types of threats. No, they will not ask like this. They'll ask a specific trend. They'll ask you, they expect from you to give examples. Sometimes, no, they give examples and they'll ask you, they'll give this first line example. Close relative of an audit team working in a senior position of a company. What threat is this? Self-interest threat. Huh? No, I don't have any interest in the company. Self-review threat. Huh? No, it is not talking about the work which I'm doing. Advocacy. Yeah? No. Is it talking about intimidation? Intimidation means what? Either benefit or pressure. Getting it? So intimidation, blackmailing or bribing. That is intimidation. Here they are saying, okay, my relative is working. So what is this threat? We both are having close connection. So my independence might affect because of the close connection means familiarity. You need to select the answer. Familiarity threat. They'll give an example. They'll ask you which threat it is, or they'll give you which of the following is an example of advocacy threat. They'll give you which of the following is not an example of self-interest threat. Able to understand how many ways they can ask. Next, intimidation. Intimidation means auditors are deterred from acting objectively. So you will not be cooperated well by the client, so that you can act unbiased. Because of threat of replacement. So some auditors know, because if at all they disagree with the client, they will be replaced. So for that reason, they will not disagree with the client's judgments, even though the judgment is not correct in that particular circumstance. Client has chosen some lower accounting estimate for an asset where depreciation amount calculated is very high. Getting it? Or he has chosen a higher accounting estimate where depreciation was calculated very low. Actually, right amount of depreciation is not that. Depreciation is understated. Profit is overstated. But I cannot disagree with the client because he will replace me if I disagree with him. Then, such threats attempts to intimidate the auditor to deter them from acting objectively. Able to understand? Then, so we have to safeguard. So we have threats, right? In order to avoid these threats, in order to overcome these threats, we have to put safeguards. So safeguards means what? Like if at all, generally safeguards means, suppose no, if in one of my audit engagement team, actually engagement team means for a particular client, me, my manager, my senior article and junior article, some of us as a team, we will go and perform the audit, right? The entire team is called as what? Engagement team. For this entire team, who is mainly responsible? Engagement partner. We call him as what? Engagement partner. Suppose I know that one of my team members' relative is a director in the company. Familiarity threat is there. What should I do? I should remove him from the engagement. This is a safeguard. What is this activity is called as? Safeguard. Or If suppose, if removing that fellow from the team is not possible, or already a team is completely occupied, every other team, now changing the team is not possible, then give him works in such a way that which are not connected with the finance director. Able to understand? So these kinds of safeguards I should implement to reduce the independence threat, to an acceptable level. Suppose if safeguards cannot be implemented, you know that the threat will exist for sure. You cannot implement the safeguard. You cannot overcome that issue. Withdraw from the engagement. What is it? Withdraw from the engagement. If auditor is unable to fully implement proper safeguards, credible and adequate safeguards, he must not accept the work. Before we accept the work itself, we have to check all this. We have a question in SA 220. Accepting and continuation of client relationship. Acceptance and continuation of client relationship. In that, one of the point which auditor has to consider is ethical requirements, including independence. That too, in case of listed company, you need to specifically focus on independence, whether independence is affected or not. Then only give your acceptance. Able to understand? We have that SA 220 later. There I will discuss more. Then what is skepticism? Skepticism is an attitude, understand. It is not something that we consciously do. Getting it? Suppose, if you went for audit, you are observing the things. In the warehouse, there are no CCTV cameras, nothing. Immediately, you should be alert. Why CCTV cameras were not there? Getting it? Almost today in every business organization, cameras are very important. That too, the company is dealing with goods of such nature which can be easily stolen. And you're not implementing CCTV cameras. It's a control weakness. It's a very big threat for the theft possibility. Getting the point? High theft possibility is there. Now, if you're not alert, if you're carelessly looking at the warehouse, will you identify this? So you have to be alert. Whenever you're going and working, you should be alert in that context. Getting it? So, skepticism means being alert. Professional skepticism means alert to the following. Like alert to what? Conditions that indicate possible fraud. Conditions that indicate possible fraud. Example, right now I told you theft. Theft is a misappropriation of asset. Fraud is of two types in the context of audit. Fraudulent financial reporting, misappropriation of asset. Two types of frauds we have. One, accounting fraud. Two, asset related fraud. When do we find circumstances of fraud? Only when we are alert. Only when we are careful. Only when we are skeptical. Questioning mind. Able to understand? And requirement of additional procedure. So you should always be alert whether any additional work you have to do. Yes or no? So that you can find some mistakes and all. Information that brings into the question reliability of documents and responses. When you ask any question, no, they will reply. Will you just listen and leave it, or you have to interpret the reply? You have to interpret the reply and then take appropriate action. That is called skepticism. And evidence that contradicts with other audit evidence. Suppose director gave me an information that, sir, we are having approximately 1 crore worth of inventory in the godown. When I went to the godown and when I'm interacting with the storekeeper, when I looked at the inventory record, I came to know that the inventory value is just 45 lakhs. Now what director told me, what is there in the inventory, both the evidences contradicting each other. When there is a contradiction like that, will you ignore or will you be alert? Or will you become more alert? You will do additional procedures. Yes or no? Which is correct? Director told 1 crore, this year is 45. Which is correct? You must investigate further, right? That's it. So skepticism is necessary to reduce overlooking, to reduce overgeneralizing, to reduce inappropriate decision making. Understood or not? You will take decisions rightly if you are alert. That's it. Now, by the way, tell me, can you suspect the client right from the day one and then do audit with that objective? No, we never. We believe the client. In fact, they are the one who prepared entire books and financials. We have to trust them. We don't have another alternative. But if something suspicious you found, alert. That is what skepticism says. Don't doubt. Getting the point? Don't do the work with a doubt in your mind. Able to understand? By the way, they're using the word professional skepticism, right? Use it in the context of profession only. Suppose director is introducing his family member, she's my wife. Don't be skeptical there. Okay, yes. Next. So clear? All of you? Ethics related part mostly I covered. Wherever trickiest portion is there, I have covered. Fine. So just 2 minutes we'll take and then continue terms of engagement. We'll finish that and then take a break. Okay. Just relax 2 minutes. Yes, let's continue the part 2 discussion. So here in this we are discussing about 210 standard. Actually SA 210 heading is agreeing the terms of audit engagement. Okay. Now, see, this standard mainly deals with these situations. When you can accept an audit. Okay. If what conditions present, you can accept an audit. 2. Before accepting the audit, have clarity regarding the terms of the engagement. And having clarity alone is not sufficient. Make it documented. Getting it? Make it in the form of written agreement. Getting it? So that's called engagement letter. So get an acknowledgement from the management of the entity that they accept their responsibilities. Regarding that, mainly the standard is dealing with. Now, like why the standard is so important? Of course, in exams it is important, and even in reality it is important. Many firms are not doing this. Many firms, they are not doing all this, standards. I'll show you one. There is a quality review board report. I'll show you one quality review board report, QRB. What is this QRB and all? I'll briefly give you an idea. So this is the latest report available, which is given on 9th November 2023. Okay. So this quality review board is nothing but they are the one, like you become once a CA, you practice, right? Your firm will be selected by quality review board. They will check how qualitatively you are doing the audit. Getting it? Are you doing the audit properly? Are you complying with standards on auditing or not? They will do all that checking and all. So this report will be in both the languages. So key highlights 15 page. Earlier we have in CA final quality review chapter. Now it is not there. But just I'm showing you how many firms have violated many things. You see, when they reviewed, right? Some clients they reviewed, and related audit workings also they reviewed. Related audit workings also they reviewed. You see here. Yes. Is this visible? Out of the firms, no. They reviewed. Whatever firms they selected, whatever specific audit assignments they selected, right? 30% of the firms, they are not following SQC1. See, 30% of the firms are not following SQC1. 4% of the firms are not following SA 210. Documentation is not proper for 16% of the firms which are reviewed by the quality review board. Getting it? 14% of the firms, they are not doing external confirmation. Okay, like this, they do this analysis on every standard. How many percentage of audit firms are not complying with the respective standards? Okay. Once you qualify, once you started a practice, once you sign the audit report, don't think your duty ends there. Their review duty starts. Peer review is there. Quality review is there. NFRA review is there. Getting it? 3 reviews were there. NFRA will do for listed entity audits. NFRA will give annual reports like this. This is quality review board annual report. NFRA also gives annual report. In that they clearly mention what actions they have taken on various CS every year. They'll mention that. Getting it? So be careful in, whenever you're doing practice, be careful. Understand first. The problem with many when they're doing in practice is They also like, they never studied audit. Only now actually we are discussing audit in true sense. Okay, once upon a time when we were studying, nobody will teach us audit properly. They just plainly read, turn the pages and proceed further. They also don't know, we also don't know. Okay, but at least you are happy that I'm there to teach you very clearly, things and all. Getting it? Earlier we don't have. Earlier audit, now 5 days we study, go write exam, will qualify. Now it is not possible. Now it is 10 days required at least. At least 10 full days for audit only. At least for 10 full days if you study audit, there is a chance that you will secure 55 plus for sure. Okay. So what is this terms of engagement? Mainly why this is very important. See, company, like client, let's assume the client or company, whatever, they are very good in only business. They don't know about all the finance, commerce, formalities and all. When they appoint auditor, they think that auditor only prepare books of accounts, auditor only prepare financials, auditor only, file IT return, auditor only will file ROC return, auditor only will pay income tax. So clients will think like this. So you need to tell them, right? Hey man, look, you are asking me to do audit, that too under Companies Act. It's a stat audit. Under as per Companies Act stat audit, my duty is only to do audit of the financials prepared by you. And I need to give a report whether the financials prepared by you, is it as per so and so applicable financial reporting framework or not? That is what my duty. So applicable financial reporting framework means in the view of the nature of entity, objective of the financials, whatever rules and regulations for preparing financials they follow is applicable financial reporting framework. So and so company is a listed company, or so and so company is a private limited company. They have, for them, Schedule 3 is applicable, normal accounting standards are applicable. They have to prepare financial statements as per Schedule 3 and accounting standards should be true and fair view. This is whose responsibility? Management. I am only responsible for conducting audit of these financial statements and supporting books of accounts and give an opinion through a report. I should clearly communicate them what is my responsibility, what is there, what is included in scope of audit. And some clients, they think an auditor we appointed, he will discover each and every fraud. Look, I am not responsible to detect a fraud. My duty is not a duty of a detective or investigation. I do audit. As part of audit, I no doubt do risk assessment. I do try to identify where things can go wrong. I will do that. But there is no guarantee that all frauds will be discovered by us. All errors will be discovered by us. Even after we have conducted the audit, still some material misstatements might exist. Correct? Huh? Which are not detected by us, undetected misstatements. We should tell all these things at the beginning itself to the client, right? Otherwise, client may misunderstand that everything you are discovering, everything you will find, you will set right everything. Look, I am not here for set rating everything. I am here to give my opinion. That's it. How do you communicate all this? Through engagement letter. How do you communicate? Through engagement letter. Just a minute. So let's come to engagement letter once and we'll see the engagement letter. So 73 page. So there is an engagement letter which I have given here. So engagement letter. Now tell me, who will give engagement letter to whom? Auditor will give to the client. See, this is a very common sense point. In any industry, who will dictate terms and conditions? Seller or service provider? Contrarily, buyer or service receiver? Who will dictate the terms and conditions? Obviously, seller. Yes or no? What are the terms and conditions to be followed when you are traveling in metro rail? Will you decide or metro authority will decide? Metro authority will decide. Yes or no? So same in the bus also. Whether when you are doing an online transaction, they are asking agree terms and conditions. Who are asking? Are you designing and then giving them, or they are designing and giving you? Service providers are the one who will design. See, as a service receiver or a customer, you don't know what are all possible things that can happen. Service provider because he's dealing with various customers, he know what each and every customer thinks of. So what they are providing exactly, what you are getting exactly, who should tell you? Service provider. In an audit, who is service provider? Auditor or the client? So who should give the engagement letter terms and conditions? Auditor. That's it. Okay. So engagement letter is one which is given by auditor and sent to the client. What client has to do? He has to read, agree to everything, sign it and then send back it to the auditor. And what we have to do? Document it, save it. Able to understand. So what we will give an engagement letter? So what we will mention in the engagement letter? Look, you have requested that we audit. We never beg, no. Yes or no? Client requested us to do audit. Reality, forget. But you requested us to do audit. Getting it? Of what? Balance sheet, P&L, cash flow, all that. We are pleased to confirm our acceptance and our understanding of this audit. What is meant by audit? By means of this letter. Through this letter, I'm explaining you what is audit. Look, the responsibilities. We will do audit as per standards. Indirectly, if at all client asks, sir, what will you do in audit? We will do audit as per standards. What are standards? Attend my audit class. Yes or no? So in that, we do identify risk, we obtain controls, we check accounting policies, we check, going concern basis, we evaluate presentation, structure, content of the financials. So much we will do. Yes or no? And also we are informing because of inherent limitations, some mistakes we may not identify. Able to understand? You're able to see that in the books. Okay. So, and now you see here, our audit will be conducted on the basis that means premise, assumption. I do audit on an assumption that management understand that they have the following responsibility. Management should have the knowledge of the following. What? For preparation of financials that give true and fair. For internal controls, management decides so that financials are free from misstatements. Not only that, who should give information to us about everything about the company? Management only. To provide us access at all times to information. Additional information we ask for. Unrestricted access to people within the entity. If I want to talk to production manager, you should allow me. If I want to talk to so and so person, you should allow me. Why you want to talk to production, sir? You are dealing with accounts only, na? Look, as part of risk assessment, I want to know what is happening in the company, how the business is being managed, how the affairs are managed. So I have right to talk to anybody. In fact, under 143 Companies Act, rights of auditor. One right is access to information. Another right is access to any person so that I can talk to them and get information whatever I want. Yes or no? So whatever our rights are their right, their management duties, their management responsibilities. This is what you will get in preconditions to audit. This entire information is what? Preconditions to audit. Precondition means what? If this condition is accepted by you before the audit, then only I will start the audit. Able to understand? Now let's go back to this engagement letter discussion. By the way, right now you saw engagement letter, right? Once again, just now you saw engagement letter, right? Finally, our fees. How much is our fees? See, engagement letter, no, it is not compulsory to mention fees. Fees can be without mention. You need not mention in the engagement. Most of the auditors, how they will mention, no, fees as we discussed over phone conversation or as we discussed in the meeting. Otherwise, fees details and all, engagement letter and all, articles will have access, na. Immediately he'll be start calculating how much my partner is getting, how much he is giving me. Yes or no? Yes. Reporting finally. So how we will report also, we have to inform the client. Look, we give audit report as per so and so standard. If everything seems fine, we give unmodified opinion. If at all anything contrary appears, we have to modify our opinion. How we will modify our opinion? As per so and so standard. We just briefly mention that. Finally, we will send. Please sign and return the attached copy of this letter to indicate your acknowledgement and agreement with the arrangements for our audit of financials. So, our firm name, signature, everything, and So, our firm name and signature here, below, here, director will sign it. Respect to person, I think below, I think that point is missing, okay. So, here, director will sign and send it back. Okay, acknowledged for and on behalf of directors, board of directors, somebody will sign it and then send it back to us. At the beginning of the audit, we should get this engagement letter. Then there is another letter called written representation. What is it? Written representation, SA 580. There once again I will connect with this engagement letter. In engagement letter, we will ask management, you are responsible for this, accept your responsibility. Whereas in written representation, we ask a letter that you fulfilled the responsibility. Here in engagement letter, we will ask acknowledgement for accepting the responsibility. Whereas in written representation, we will get a letter where management will have to say they fulfilled their responsibility. Able to understand? Now we have, just a minute. Now we have seen the engagement letter, right? So what are the contents of engagement letter right now based on the letter that we have seen? In the engagement letter, what we have mentioned, just a minute, I'll show you directly the content. What are the contents of engagement letter? We first told what is our objective of audit and scope of audit, yes or no? We also spoke about responsibilities of auditor, correct? We just saw. We spoke about responsibilities of management. In that we spoke about applicable financial reporting framework. Then we spoke about expected form and content of any report to be issued by the auditor. And a statement that there may be circumstances the report may differ from original form and content. If at all I have to give modified opinion, the form will be different. So these are the contents of engagement letter. They'll give you a question. What is an engagement letter? What are the contents of engagement letter? 4 marks question they'll give you. Able to understand. Next. Obviously, engagement letter must be in writing. It must be reduced to writing and should exactly specify the scope of work. We clearly mentioned you have requested us to do audit of financial statements comprising balance sheet, P&L, cash flow notes. Why we are mentioning so clearly? We could have just mentioned audit of financials now. Why we are mentioning cash flow statement, everything clearly, so that no confusion. Getting it? I am not here to review your annual report. I am not doing your board of directors report. I am not here to check your management analysis report, audit committee report. I am only here to report on balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. Clear? Next. And tell me where it is most important engagement, a stat auditor, non-stat auditor. We think like stat audit generally, non-statutory audit is most important. In stat audit, no. Company law itself clearly gave. Management is responsible for preparation of books. Management is responsible for so and so. Auditor is responsible only to audit. He should not do prepare books of accounts. Companies Act clearly mentioned. So even if management is not aware of it, tomorrow if they blame you, you can open the Companies Act section and show. In stat audit, ignorance of law not excuse. Whereas in non-stat audit, sole proprietor voluntarily appointed me. Partnership voluntarily appointed me. They will not have the knowledge, right? If at all tomorrow they blame me, how will I prove them? There is no statute to support me. Yes or no? So in non-statutory audit, very, very important is engagement letter. Of course, now whenever we accept any engagement, in reality, we of course give engagement letter in every context. Even if at all you are accepting compilation engagement, even when you are accepting agreed upon procedure engagement, even if a client approaches you just for filing IT return, prepare engagement letter and give. Tell him these are the terms and conditions. Do work in corporate style. Yes or no? Do every activity in a particular style. Client came IT return. Sir, first give me documents and I'll file the return. No, don't do that. Getting it? So have formal approach with each and every client. Even if the client is paying 1,000 rupees fees only, still have a formal approach with the client. Able to understand. You see, when I announce this class, in the class itself, I'll clearly mention video itself. I'll upload it on YouTube and all. Yes or no? So that tomorrow, if I directly take this and then upload, you will ask me, definitely, sir, we paid fees and then came, you uploaded free of cost on the YouTube. Yes or no? Will you or not? Obviously, some of you at least will question me. If I tell at the beginning itself everything, how much I'll cover, what I'll not cover, what I will do after this, I will do recording everything clearly. You accepted all that and then only came this. Yes or no? So we have to be very clear. Tomorrow, if any student blame, I'll share this video directly. Okay, look at, I confirmed preconditions to this class already exist. Next. So audit engagement letter is a letter sent by auditor to client. It is interest of both the parties to reduce possibility of misunderstanding about terms and conditions. Next. What are preconditions to audit? The auditor he shall decide whether financial reporting framework is acceptable. Whatever the company, suppose a company appointed you as an auditor and they are not preparing financials as per Schedule 3. When I asked them, sir, are you following Schedule 3? No, sir, we are not following. We are following something else. Schedule 3, we are not following. Getting it? How far the other framework which they are following is acceptable. Suppose a company specifically appointed me for auditing on January 1st to December 31st financials. Special purpose financials there. And they are prepared as per IFRS. Why they prepared as per IFRS? They have to give it to foreign holding company. There is a foreign holding company which is there outside India. Foreign holding company has to do consolidation. For consolidation purpose, this is Indian subsidiary. They have to prepare financials from Jan to December. Actually, they prepare from April to March. So this company prepared again separate financials, Jan to December, special purpose. Now for this special purpose financials, they appointed me as an auditor. Now, whether the special purpose financials framework they followed, right, IFRS, is it valid? Look at the holding company requirement. Why they are preparing the financials? Because of the holding company requirement. Holding company requires the subsidiary company to give financials for Jan to December based on IFRS. And here the company followed the same. The financial reporting framework which they are following is acceptable in the circumstance. Able to understand? And obtain the agreement of management. Obtain agreement of the management. Get their consent. Get their written acknowledgement for preparation of financials, for internal control, so that financials are free from mistakes. To provide auditor with access to all information, additional information, unrestricted access to persons within the entity from whom auditor can get valuable information. Get their acknowledgement. Only if management agree to all this, yes or no, then only start doing the audit. They should give all information relevant for audit. They should give. You know, we will get a written representation also at the end of the audit. Once we are completing the audit, before I sign the audit report, I will get a written information. Management, I am innocent. You provided me every information that I want in audit. Please acknowledge it. Tomorrow, if some fraud happened, if everybody is asking me, sir, why have you not verified? I asked management, sir, but they did not give. Management, they went and asked, sir, did auditor us? Sir, he never consulted us, sir. He'll come and do audit blindly, give audit report and went. Suppose if you have a written representation, see, sir, I already got this written representation. Management specifically told me that they gave me all the information. On this reliance, of course, I did my due diligence, all that. I carefully tried to retrieve all the data wherever possible. I got evidences wherever possible. In spite of this, management is hiding some information. What can I do? And they misled me with a written declaration also. You can be safeguarded. So no. Suppose if preconditions are not present, if management is not ready to accept the responsibility, getting it, what auditor will do? Discuss with them, and unless required by law, you should not accept the engagement. If preconditions are not there, don't accept the engagement unless it is mandatory to accept. In India, there is no such law that mandates. Okay. If the auditor decides that financial reporting framework is unacceptable, don't accept that audit. Or if agreement of management is not obtained regarding the responsibility on preparation, providing access to information or unrestricted access to persons, if management is not agreeing, don't accept. They'll ask you this itself. This itself has a 4 marks question. Only third point itself has a 4 marks question. Getting it? They'll give you a question like this. You are requested to do audit of so-and-so entity. As part of the audit, you are establishing terms of the engagement. Management financial reporting framework, what they followed is unacceptable. What is your decision in this regard? You need to write. If preconditions to audit is not present, that is, if the financial reporting framework is unacceptable, or if management is not agreeing to preparation of financial statements as per applicable framework, or designing and implementing controls so that the financials are free from misstatements, or to provide information to the auditor or unrestricted access to the persons, if management is not agreeing, I will not accept that engagement unless mandatory under law. Easy or not? Now in the given case, so-and-so situation, so-and-so company financial reporting framework is not acceptable. Therefore, auditor shall discuss with the management and accordingly do not accept the engagement. Suppose initially they gave agreement. They agreed everything. They gave preconditions to audit and all. They showed as if everything is present. They accepted everything. After accepting the audit, there is a limitation. Now what will you do? After you accept the audit, now they are putting restrictions on evidences and all. Now they are limiting your work. Now they are not providing information. What will you do then? Request them to remove the limitation. If management is not removing the limitation, communicate it with those charged with governance, audit committee, top management. If they are also not supporting properly, you understood that management is no more cooperating you, withdraw from the engagement. You have a right of resignation, right? Resign. Sometimes no, resignation is not possible. Sometimes, like in case of listed companies, auditor just like that cannot resign. Getting it? You cannot resign just like that. you have to resign after certain number of days. They have given some criteria. Listing obligation disclosure requirement. What is it called as? Listing obligation disclosure, LODR regulations. We call them as, what are they? SEBI LODR regulations. As per that, you can't withdraw just like that. There are some formalities that you have to fulfill. Suppose, no, if you give 3 quarters review report, if you have given 3 quarters review report, you have to give 4th quarter review report, you have to give annual audit report. You can't withdraw. Suppose I can't withdraw, management is not giving me information, how can I do audit? Don't do audit. Mention that, disclaim the opinion. You can give audit report and disclaim. If disclaimer of opinion situation arise, don't directly first withdraw. If possibility is there, resign. Don't give disclaimer. If withdrawal is not possible, then give disclaimer of opinion. Able to understand? Next. Suppose before you accept audit itself, management is talking about so many limitations. Sir, you should not talk to our lawyers, sir. You should not talk to so and so people, sir. Only if you are okay with this, please continue the audit. Limitation prior to accepting the engagement. If at all, before accepting the engagement, management is limiting my work. And I feel these limitations will make me to give disclaimer of opinion. Don't accept that engagement. Don't accept it. That's what this entire matter. Clear? Next. Then, first question is very simple that you see. Now in exam, what are the responsibilities of management? The answer is, I told you, for preparation of financials, for internal controls, to provide information. What is premise to audit? Same answer. What are preconditions to audit? Same answer. Getting it? Now, let's look at this engagement letter. Should we send engagement letter in every year? Like suppose a non-government company, they appointed me for 5 years. Okay. First year I gave engagement letter. Every year should I give engagement letter? In reality, we are giving every year just to avoid confusion. Okay. But technically, as per the standard, is it compulsory? In case of recurring audit, every year engagement is not required. Engagement letter. Unless there are change in terms and conditions. Getting it? Unless there is a change in terms, revised terms, or change in the law. Suppose if the law says you have to give every year, then, or a change in applicable framework. In the engagement letter, I will mention about Schedule 3, Part 2 and all. For now, this company is listed now, this year. Last year it was unlisted, Part 2 applicable. Now this company is listed, Part 1. In old engagement letter, I mentioned that management is responsible for preparing financials as per Schedule 3, Part 2. Now I should revise, so I should give engagement letter newly. Then there is a change in audit reporting requirement. Until financial year 17-18, until financial year 17-18, audit report format is different. From financial year 18-19 onwards, audit report format is different. So when financial year 18-19 started, all the auditors have given once again engagement letter because auditing standards have been revised then. Then changes in top management. Last time when I gave engagement letter, so and so directors were there. Now entire directors have been changed. They are new to this complete this profession. They don't know anything. I will give. And when there is a change in nature of the business, size of the business. In generally, whenever business has been changed, we don't give much unless company name changes. If company name changes, in the old letter we included old name. So in the new letter we should include new name. That's it. Now, suppose I gave engagement letter. Suppose I gave an engagement letter. Now the company, certain terms and conditions they want to change. Like, suppose in that, one of the point what I told, management is responsible to provide me unrestricted access to persons within the entity. I told them, you should give me access to all the people. I can talk to anybody. Management, without signing, first they called me. Sir, there is a condition that you have access to. Fine, sir, we are okay. But we have external legal counsel. There are some cases which they are dealing against the company in Supreme Court. They are quite busy, sir. They will not cooperate. Getting it? So, to that extent, I will modify the engagement letter, sir. Now, suppose if management requested me to change the term like this, first what I will do, I will just inquire. Why are you asking? Like, did they specifically informed you? I'll ask them. They showed the mail also. The lawyers, external lawyers, they gave a mail. We will not interact unless on the case matter with anybody. Only on the case matter, that too with the so-and-so CEO only we will interact. With nobody else we will interact. They sent a specific mail to the company also. Because the senior lawyers in Supreme Court, they will be very busy. Getting it? If you want to get a confirmation from them and all, they can't sit and do. Fine. Is it acceptable practice in industry? I will see. In every company also, senior lawyers will not communicate with anybody. That's an acceptable practice. Now here, management is asking me to modify the term to this extent, right? Is this genuine or not in this case? Justification is there or not? Yes. Then I will accept changes in terms. Suppose if this is not practicable in reality, if this is not an accepted practice anywhere, for this company, why this special condition? Maybe company only asked them to send a mail like this to the company again to the lawyers, so that auditors will not interfere with the lawyer, so that auditor will not get to know about pending litigations and claims against the company. If I find any malified intention, if the changes in terms requested is not justifiable, I will not accept. Suppose no, I am not accepting to change terms. Management is not ready to change the terms. Management is not ready to accept the original terms. They are not cooperating me to do audit. I got to know. What should I do? Withdraw from the engagement. What? Withdraw from the engagement. Able to understand? That's what. So why a changes in terms might arise? Because circumstances might change, or management or auditor misunderstood the original terms, or restriction on the scope of engagement by management or by circumstances. Getting it? See, restriction on scope by management. In this case, lawyers, suppose lawyers sent a mail. Management is not restricting me. Lawyers only saying circumstances restricting me. Getting it? Now, if there is a reasonable justification, auditor will accept it. When auditor accept new terms, shall we modify the old engagement letter or shall we give a new letter? Which is better? Let us give new letter. So the report would be appropriate. Auditor, whatever with the modified change, modified, revised terms, he will give a new letter. In the new letter, can we talk about old letter again? No need. So the new report would not include reference to original. Getting it? Further, they should record everything on new engagement letter. Even in the audit report, can I talk about this engagement letter issue and all? No need. Suppose if there is no reasonable justification, you should not accept the change. Suppose if you are not permitted to continue with original terms and you felt changing the terms is not correct, you shall withdraw. Getting it? And if you withdraw, check whether you have any obligation, either with the client contractually or otherwise under law. Whether your withdrawal has to be reported to anybody. Whenever you resign from the company, you have to report to ROC, ADT 3 form you have to file. Getting it? That's it. So what auditor should consider before agreeing to change the terms? Before agreeing to change. So suppose if a client asks you to change, what points you will consider? Generally, if the auditor is requested to change the agreement that conveys a lower level of assurance, he must have a reasonable justification. There must be some reasonable justification. So before agreeing to change, auditor has to assess whether any legal implications because of this. If the auditor concludes that there is a reasonable justification, the work can be performed up to the date of change. Work required, this is actually not required. Reasonable justification up to that is enough. Getting it? If the auditor concludes that there is a reasonable justification to change the audit engagement to a review or related, nothing but suppose if at all company is asking me to reduce the work, whatever work I am doing, right, I planned to do, right, they are asking me to reduce the work. In such a case, if audit is not suitable, I will suggest them, sir, let me do one thing. I will not do audit, I will do review. Because with the kind of terms and conditions you are keeping on, audit is not possible. Because audit requires reasonable assurance. For your requirements, review is a correct engagement. So I will recommend the client whether review or related service is suitable. So in order to avoid the confusion to the reader, the report on related services. Suppose if at all we accepted related services work, finally, originally they came for audit, they understood that I will not ready for them. So finally, sir, at least you do one thing, sir, you sit and prepare financials and give. So finally, an audit engagement proposal turned into related service. In that case, I will give a engagement letter related to related services where I will not talk about audit engagement. Any audit procedures I perform, no, because from audit I withdrawn. Because it was not justifiable with the company, I withdrawn from audit and I accepted related services. So can I talk about audit procedures and all which I performed in the related services engagement letter? No need. Even in the related services final report or engagement letter, I will not talk about the original engagement. That's it. Entire part 2 is also over. Clear? All of you, there are so many new points. Remember, I am only covering 50 to 60% of each topic. You have to sit and read again. Each and everything you said. I am giving you a brief outline so that you can study in depth each and every point. Every line is important. Any line can be tested as true or false statement or MCQ, or any line can be directly picked and asked as a descriptive question. Don't deviate from this terminology or wordings. Getting it? If you deviate from this material, which is exactly of ICA material standard, it will be difficult for you to interpret the question paper. Getting it? Many students write answers, though the answer is correct, it is not for the question which is asked for. Getting it? You are writing correct answer, but not for the question which is asked. So you have to be very careful. So you have to figure out exactly what they are asking. Only when you master in this terminology, you can do the exam really well. In preparation, struggle a lot. Exam you write easy. Or two things. Easy the preparation, struggle exam, struggle qualifying. Able to understand? I don't know how many of you are learning new points now. Getting it? Are you all learning new points? Listening properly, especially the last. Yes, okay, take care. So we'll take a break and get back. So let's begin the next chapter, that is audit report. So in this audit report, we are broadly discussing this in two parts. Though the weightage what they mention is 8 to 12%, there is a chance that 15 to 20 marks will come from this chapter in the form of MCQs as well as true or false and descriptive all put together. Only from CARO, 4 marks question is for sure. Only from CARO. Getting it? So fine, anyhow, all that we are going to discuss now, including CARO, all that we are going to discuss. Now, so what we are going to cover in this audit report, what we are going to learn. So this chapter, no audit report, we are going to divide it into two parts. Part 1, we are going to discuss reporting standards. Whereas part 2, we are going to discuss about reporting requirements. What is it? Reporting requirements. Both are different. Reporting standards means nothing but we are going to discuss about auditing standards, audit reporting standards, technically speaking. So where we are covering 700, 701, 705, 706, 710 and 570 and 299. These standards we are going to cover. And whereas in reporting requirements, we are going to cover CARO 143 subsection 3, 143 subsection 1, all these reporting requirements. Apart from this, we are also having branch accounts and branch audit discussion briefly. It's not in depth, but we are having briefly the branch accounts and branch audit discussion. That's it. This is the syllabus that we have in audit report chapter. Now, see what are the audit report? No, it is of two types. In the recent latest new scheme material, they brought a new concept called types of audit reports. Actually, opinions types we know, but audit report itself is two types. So they defined like this: unmodified report. Audit report is of two types. One is unmodified report. Another one is modified report. Another one is modified report. Unmodified report is a report which is exactly matches with SA 700 format. Which is exactly matches with SA 700. Like what is SA 700? Standard heading: forming an opinion and reporting on financial statements. That is actual standard heading. Now inside that, audit report format is given. What are the contents of audit report? So title, addressee, like that, there is a format, we will look into it. If as it is the same format you gave, getting it, where you are indirectly, actually where you are expressing unqualified opinion, that format is called as unmodified report format, where you are actually expressing unmodified opinion, which is also called as unqualified opinion. Look, I am using the word unmodified report, which is different from unmodified opinion. Suppose in SA 700 format we are not following. I mean we are following, but in addition to the elements of the audit report, in SA 700 audit report has multiple parts, like title will be there, opinion will be there, basis for opinion, like that some elements are there. I will show you. Okay, if at all we want to include some additional paragraphs in the audit report, which means we are modifying the format given under SA 700, right? Whatever original SA 700 format, we are not as it is giving it. We are adding some additional points inside that audit report. Then since we are modifying the format of audit report, they are calling it as modified report. But within this modified report, your opinion can be again unmodified opinion only. Your opinion can be unmodified. Then why are you modifying the report when you are giving unmodified opinion? Because the original format of SA 700 do not talk about key audit, emphasis of matter para, other matter para, all that. Don't worry, I will slowly introduce what are all that. If at all you are giving unmodified opinion plus emphasis of matter paragraph or other matter paragraph, getting it, which is not there. These two were not there in the original format of audit report. Now you added these two, right? Which means original format is modified, right? So modified report. But still, your opinion is unmodified opinion only. Or if at all you are giving modified opinion, even then since you are modifying the opinion, that is also modified report only. If at all you are giving modified opinion, that is also modified report. For example, either you give qualified opinion, adverse opinion, disclaimer of opinion, or you are including going concern issue. You are including going concern related paragraph, material uncertainty related to going concern. If you are adding that paragraph, then also we call it as what? Audit report is modified. Able to understand? So modified audit report doesn't mean modified opinion. Please make sure that modified audit report doesn't mean modified opinion. Like I'll show you that, they have given here, don't worry, is at the 705 introduction, we gave the diagram. This is newly added diagram actually. You see here, audit report, unmodified report means or nothing but unmodified opinion, no emphasis of matter, no other matter, nothing. As it is same, original audit report format is there, right? Same as it is issued to the client, same unqualified opinion. Suppose you are adding emphasis of matter or other matter paragraph or even going concern paragraph, then you are modifying the original format of audit report, right? So the report is modified or modified audit report. But still you might be giving which opinion? Unmodified opinion, or you are giving modified opinion. Then also you are modifying the report. So either qualified, adverse or disclaimer, whatever opinion, then also it's called as modified opinion and modified report. Understood these two new terms which were not there earlier. Actually, there is no change in the original standard, just that little more clearly they explained it. Earlier it was there as part of standard, but it is specifically silent on this. So standard is not explicitly talking about this point, but they just gave little more clarity now. Are you clear? Like why this point I'll tell you. If auditor is modifying the audit report format under SA 700, he shall communicate with those charged with governance. We have seen this point actually earlier also. We have in SA 706, when you want to include emphasis of matter paragraph, you have to communicate with those charged with governance. You want to include other matter paragraph, communicate with TCWG. You want to include going concern paragraph, communicate with TCWG. Whenever you want to modify the audit report format which is discussed under 700, you have to communicate with the top management. So whenever you are giving a modified report which contains unmodified or modified, whatever opinion it might be, but when you're not following the original format of 700, we call it as modified report. Communication with those charged with governance is compulsory. Remember, it is communication, not permission. Getting it? Don't think that permission has to be obtained. No, we have to communicate. Sir, we are modifying the report. This is how we are going to modify. This is the wordings that we are going to use. Tell me if you have any objection on these wordings. If at all, maybe from my point of view, the wordings appears very good. But from your point of view, these wordings appears objective. Getting it? So just give me your opinion. If at all, amicably we can resolve, we can proceed further. Getting it? That's what this modified report means. Clear? Now, let's look at audit report contents. First of all, how to prepare this audit report. In fact, we are learning this subject entirely for why? To prepare audit report, correct? Huh? The objective of learning this subject itself is completely to prepare audit report, to give opinion. Okay. Now, what are various types of opinions? On what occasions we give various types of opinions? Straight away I will enter into. Now, obviously, any report that we are giving, it must have a title. The title must be, since this is audit report, that to whose auditor report? Stat auditor, independent auditor. So the title must be very clearly mentioning that independent auditor's report. In exam, no, they'll ask you, write about title and addressee of audit report. 4 marks question they'll ask you. Getting the point? Below we have given. So what is title? You need to write this matter. Addressee means you need to write this matter. Define addressee in the audit report. 3 marks question they'll ask you. Getting it? So title, independent auditors report. In case of review, independent practitioners review report or independent auditors review report. Getting it? In case of agreed upon procedure, practitioners agreed upon procedures report. Getting it? Actually, in compilation 4400 engagement I told, right, related services, it's a non-assurance, right? Is independence required in case of non-assurance? Not that required. Why? Because we are not giving any assurance. Nah? Assurance means what? Our report will be used by some third party and takes a decision based on our opinion and conclusion. Whereas non-assurance, where are we giving opinion? We are just preparing data and then giving. So just a compilation. So their independence may not be that required. Getting it? Fine. So title of the audit report must be very clear. Independent auditors report. The title is same across all the countries. Getting it? You can see here there is a Tesla is, this is United States. Report of independent registered public accounting firm. What is it? Report of registered independent public accounting firm. CPA, right? Certified public accountant. In India it is CA. In US it is CPA, parallel course. Certified public accountant, we call them as registered public accounting firm. See, first of all, understand, once we started practice, right? Once you take up the practice, like once you qualify, you apply for membership to the ICA. Remember, membership of ICA is not voluntary process. Once you qualify, you have to complete articleship form, all that, and then you have to give it to the ICA, all the requisite details, so that you will get membership allotment. Membership number having, that doesn't mean you are eligible to do practice. You must again apply separately for COP, certificate of practice. Only if certificate of practice is there. Practice means PRACTICE, not SE. Getting the point? Practice. So practice is nothing but a license. It's nothing but a license to provide attestation services from the regulatory body called ICA. Getting it? So now you will apply COP. Now you applied COP in your name, right? Now how can you represent yourself to the society, by the way, as a chartered accountant? Now, will you represent to the society individually on your name or as a partnership firm? That's your choice. Suppose, in audit, no, firm means what? Firm means partnership firm, huh? No, firm means enterprise. Firm means establishment, concern, entity, organization. Firm dictionary meaning means entity, understand. Partnership firm means the firm is partnership. Are you getting the point? Even company is also called as a firm. Because it's an entity, right? Company is an entity. Sole proprietary firm. Have you seen this word? Have you heard this word? Sole proprietary firm means what? It's an entity having only single proprietor, single owner. So it's a sole proprietary firm. Now, once we practice, when you are practicing, suppose you want to practice without any partnership. As an individual, you want to practice. Example, you can practice in your membership with your membership number directly. That's enough. You can practice in your individual name. You can sign in your name, give membership number, that's enough. Or you can get firm registration number also. You can get firm registration number also. GP Kapadia and Co. Chartered Accountants. GP Kapadia is the first chartered accountant who founded the institute. Getting the point? Who recommended to Government of India and made a separate body for us. GP Kapadia and Co. Actually, when he started, his only single person, proprietor. GP Kapadia and Co. is his firm name, his business name. Suppose myself, caramharsha, rest of our CNCM is my entity. Both of us, same. It's my firm name. I am the owner for it. Able to understand? GP Kapadia and Co. is a firm name and he is the owner for it. Are you getting it? Now, in that firm, if another owner also join, then it becomes partnership firm. Able to understand? So, firm can be either sole proprietary firm, partnership firm, or LLP. Able to understand? So, that is what firm means. So, in India, always once you qualify, if at all you want to practice, my sincere advice is immediately incorporate a firm. Apply to ICA. Firm registration number. Whenever you are doing attestation, sign in the name of the firm. Sign in the name of the firm. On behalf of the firm, you sign with membership number. Don't sign without firm name. If you do not talk about firm name, don't sign it. So have a firm name so that your firm will have experience. If you directly practice on your name, what will happen, if you directly practice on your name, or if somebody, some senior says practicing in his name directly, no firm name, he died, his goodwill also died. Suppose GP Kapadianko, he is no more, but still the firm name is continued na. You can sell that and encash goodwill to another chartered accountant. You can sell your firm name. Firm name, if you establish, it will have experience. Getting it? So whether the partner is having experience or not doesn't matter. For getting central statutory audits of public sector banks, firm experience is most important. Senior partner experience is also most important. But firm experience, if it is not there, you will not get big audits of big listed companies and all. Able to understand? Right. Next. So same, the heading will be similar to our Indian headings. And there is another company called Shell. So okay, fine, I'll discuss later. So this is the types of opinion. Now title you understood, right? Now addressee, to whom we have to address, generally it shall be addressed based on the circumstance. If law regulation specifies, then to them you address. In company law, they specified. Auditor 143 subsection 2. It talks about audit report. Auditor shall give audit report. It should be addressed to shareholders of the entity. They clearly mentioned it. So when we are giving audit report for a company, address is to members. So normally it is addressed to whom the report is prepared, either shareholders or top management of the entity. In case of company, it is addressed to shareholders. 3 marks question they'll ask you. Like write about addressee in the context of audit report. 3 marks question. Then finally, what we need to give, you see, without wasting shareholders' time, we are straight away entering into opinion section. We are straight away entering into opinion section. What is our opinion? That is what primarily our audit report is looked upon. Yes or no? So what is our opinion? And we all know that opinion is of 2 types. Opinion is of 2 types. So auditor's opinion is of 2 types. Now side heading, no, we should keep like a opinion. In the audit report, actual audit report, no, we should keep side heading like opinion. I'll show you Tata Motors audit report. This is the audit report. You see title what they used? Independent Auditor's Report. To addressee to the members of the Tata Motors. Now here they have added one more side heading. What is this? Report on audit of standalone financials. See, the entity whom you are auditing. The entity whom you are auditing. The company where you are auditing. If that company has subsidiary companies, we all know that that company has to prepare another set of financials. That is consolidated financials, correct? So an entity which has subsidiaries, it has to prepare 2 sets of financials. In that case, one, its own financials. That's called standalone financials or separate financials. In across worldwide, it is very popular word is separate financial statements. Whereas in India, we use the word standalone financials. Along with this, they should also give group picture, consolidated financials. Getting it? Individually, Tata Motors is super profit entity, but it has Jaguar Land Rover Range Rover subsidiary, which is loss making. Now, when my subsidiary, when my children is loss making, who will compensate the loss? Parent. Getting the point? Now, as a parent, individual, I'm making profit. As an investor, if you only look at me, you will be tempted to invest in me. But look, my entire profit, whatever I'm getting, no, my child is eating away because of his losses. So look at my consolidated position. We are actually loss making. Able to understand? Standalone, I am profit making, but consolidated loss making. So for taking economic decisions for shareholders, consolidated picture is also very important. Where the funds, the company is profit oriented, but where the funds are getting diverted, that is very important. So consolidated financials give that family picture. Getting the point? நம்ம கல்யாணம் பண்ணம்பல groom மட்டும் நம்ம பார்க்க மாட்டோம்ல, we don't only look at the groom or bride, we look at the family also, right? As it is. So investing in a company is like a marriage. Getting it? So you have to think long term. Short term யோசிச்சா அவ்வளவுதான். Marriage and company investment both will fail. That's why always traders and all suffer loss, because they're short term oriented. Getting it? Next. So when a company prepare 2 sets of financials, na, you should also give 2 audit reports, right? One audit report on standalone financials, another audit report on consolidated financials. Now in this Tata Motors annual report, the report which I am showing is annual report. In this, 2 audit reports were there. Which audit report is dealing with what? So they highlighted. This is a report on Standalone financials. In consolidated financials related audit report, they mention report on consolidated financials. Then straight away, first thing is what? Opinion. You know, here simply they have used the word opinion. They didn't mention anything, which means unqualified opinion. What does it mean? Unqualified opinion. The auditors of Tata Motors have expressed unqualified opinion. So now types of opinion. Unmodified opinion, we know. Modified opinion. Now what is unmodified? Modified. Look, we are doing what? We are doing audit of financial statements. Who prepared them? Management prepared them. As per what? Applicable financial reporting framework, they have to prepare. Getting it? Suppose, no, I verified. I checked the background data. I checked bills, documents, supporting evidences, everything, all that I verified. I felt the balance sheet P&L which company prepared is completely true and fair. By the way, what is the difference between true and fair? What is the difference between true and fair? Very simple. True talks about actual fact. Fair talks about possibility of the fact. Able to understand? For example, I sold goods to a customer for 100 crores. Some 15-20 customers I have. To all of them together, I sold for 100 crores credit sale. So what is the fact? I sold goods for 100 crore credit sale. That's a truth. That's a truth. It's a fact. Getting it? Now I want to show in the balance sheet my asset as on 31st March is 100 crore. You know what? Out of these 100 crore, approximately some 10 crore worth of debtors. They were about to become insolvent. There I will not collect the 10 crore money. Where I will not collect 10 crore. Fairly, how much I can receive? 90 crore. Yes or no? Now tell me, in balance sheet, if I only talk about true position, people do not understand fairly how much in reality I realize. Yes or no? Moreover, remember, it's a current asset. It is something that I immediately receive it in future. Yes or no? So if I only talk about truth in the balance sheet, the purpose of fairness will be lost. Getting it? You fairly tell people how much you have to receive. It must be true and it must also be fair. The fact of fair cannot be more than true, generally in terms of monetary. Getting it? So that's why you see debtors, true amount 100 crore minus provision 10 crore, fairly we can receive only 90 crore. Reasonably our position is 90 crore only, not 100 crore. 100 crore is truth, but fairly, logically, technically, how much I can collect? 90 crore. That's called true and fair view. Able to understand? So this definition you can apply in every context. Now, so if the financial statements are presented true and fair, everything has been followed, accounting standards, everything is followed. Does the financial statements require modification? In this scenario, suppose I verified everything is followed, accounting standards, everything, fairly, everything has been presented. Do they require any modification? No. When they don't require any modification, I will also not modify my opinion. That's why I'll give unmodified opinion. Able to understand? When I say unmodified opinion, indirectly I'm saying financials don't require modification. Financials don't require modification means what? They are showing true and fair. So that's it. Suppose so and so accounting standard company did not satisfy. And because of that, either in amount, classification, presentation, disclosure, some mistake is there in the balance sheet P&L notes which they are releasing to the public. I politely requested management, there is a mistake in the balance sheet, there is a mistake in the P&L, there is a mistake in so and so notes. Kindly modify. Management agreed. And they modified it. They made sure that, sir, whatever you said, we will do that. And we want our balance sheet P&L to be true and fair. They modified everything. Now, after they modified everything, do they require any modification again? Which opinion we will give? Unmodified only. Getting it? Suppose management is not ready. Sir, it's already done. Board of Directors and all approved the financials. They all left for vacation. Now, no more possibility. We can't modify the financials, and in our history itself we never did that. So okay, you don't modify financials, do one thing, I'll modify my report. Able to understand? So if financial statements requires modification, but requires modification means what? Indirectly what are we saying? They are containing misstatements. Correct? If the financial statements requires modification but company is not modifying, I will give which opinion? Modified opinion. Fine. Then I will modify my report. I will talk about that mistake in my report. If you do not rectify, I will talk about that in my report. There I will give modified opinion. Able to understand? Now, modified opinion. how, when modified opinion arises, here I'll tell you. So how a question can come in exam here. So types of, not this. So under what circumstances a modification to the opinion is required? This itself can be asked as a straight question. In SA 705, 91st page, it is there. Generally, I don't talk about page number because no, the same book I will sometimes modify and then give where page numbers might change, but the content is exactly same. So that's why I'll not refer more 705. Under 705, part B, you see. Under what circumstances a modified opinion is required? They'll ask you a straight 4 marks question. When modification is required, right now I told, when the financial statements contains material misstatement, not just normal mistake, material. Normal if the immaterial mistake. Suppose Tata Motors is having 65,000 crore turnover, 11,000 crore fixed assets. Getting it? Now 65,000 crore turnover, I found some 1 lakh worth of mistake. Is it material in that? Should I have to discuss about it? No need. Getting the point? So if there are no material, if there are material mistakes, then I will have to modify my opinion. Not only that, like I'll give you some circumstances now. Suppose no Tata Motors you take here itself. Getting it? Everything is in crore. So simple numbers I'll take. Okay, simple numbers, some 1,000 crore. Revenue, other income, some 100 crore. Some expenses, direct expenses and all 500 crore, indirect expenses and all some 200 crore, profit is some 300 crore. Getting it? So maybe 400 crore. Getting it? So balance sheet got tallied, everything is fine. Obviously balance sheet tally because it's a double entry system. Double entry system means whatever entry you write, it will always tally. Okay, because debit and credit amount equals, right? That's it. So balance sheet tallies means there is a question once upon a time, it used to be asked very frequently in CA inter audit. Balance sheet is tallied. Does it mean auditor need not do anything? We have this in very old scheme. Before 2017-16 and all these kinds of questions used to come. More technical and logical questions will come. Financial statements, everything are tallying. So auditor is saying, since everything is tallied, my duty is no more. Your duty is not to verify balance sheet tallied or not. Arithmetical accuracy is not your duty alone. Of course, arithmetical accuracy is important. Beyond that, what is your duty? Genuinity of the transaction. Whether the information shown in the balance sheet is true and fair or not. That is what your duty is. Fine. Now here there are no material misstatement. Everything is honestly presented. Clearly revenue, expense, everything is clearly done. No misstatement is there. No modification is required. Which opinion I'll give? Unqualified opinion. Are you getting the point? Suppose, there is a balance sheet. There is a balance sheet. Some fixed asset is some 500 crore. Investment is some 200 crore. Current asset is some 300 crore, 1000. Right side liability, some liabilities is there, ignore that. Now, in investment, no. 5 crore worth of land they purchased. 5 crore worth of land a company has purchased. This is actually purchased for constructing a factory. But when it is when a land is purchased for constructing factory, what it is supposed to be? Fixed asset. But the company showed right now as investment. That too they showed as long-term investment. That too how they showed? Long-term investment they classified it as. Now tell me, is this a mistake or not? Are they misleading by wrongly classifying or not? Now rest everything, fixed assets, remaining 195 crore worth of investment, remaining 300 crore worth of current assets, amount classification, everything is proper. Everything else is proper. Only this mistake is there. Tell me, 5 crore in 1000 crore, no doubt a material item. Able to understand? For a 1000 crore company, 5 crore is material. But for a company which is of 1 lakh crore, 5 crore may not be material. Remember, you might have learned this. Materiality is a relative term. What is material for one entity may not be material for other entity. So 5 crore is no doubt a material misstatement in the form of classification. They made a mistake in the form of classification. Now tell me, which opinion you will give? I will say balance sheet is not true and fair. Don't believe, don't invest in this company, get cheated. No, right. It's material, but not pervasive. But not pervasive. Pervasive means what? Significant impact on the company. If there is a significant impact on the company, then we call it as pervasive. As a whole, you are getting misrepresentation. As a whole, the balance sheet is misleading or P&L is misleading. Then we call it as what? Pervasive. Let's look at the definition of pervasive at first and then we'll go further. What is a pervasive? It's a term used in the context of misstatements to describe effect on the financials of the misstatement. What is the effect of misstatement on the financials as a whole? So to describe that, we use the word pervasive, or pervasive can be in a case of possible effect when there are no misstatement because of when we are unable to obtain evidence. Sometimes no. Suppose no, same example you take, 5 crore worth of land is there. Getting it? So I am inquiring for ownership documents. They are saying, sir, ownership documents we have to yet to receive from the registrar, sir, because that day closing time we went and signed all the documents, but printout and all were not given. Printer is not working in the register office. You know, right, how government works. So all the reasons and all, company is telling, okay, March 31st printout is not working. You can go on April 1st, which is also working, and collect na. So that time registrar on leave, sir. Now today the date is June 10th, man. I'm doing audit on June 10th. Year is over, 3 months over. Now what is the reason? Then I want to go to the register office and then inquire. The company is not letting me. 5 crore worth of related land documents were not there. Ownership documents were not there. Now can I say company is gambling? Land is not owned by the company. Can I say that? I don't know. I don't know whether it is really owned by the company or not. If you show me a document, I will say, I will confirm that, yeah, owned by the entity. You did not show me the document. How can I confirm whether it is owned by you or not? I am not getting evidence here. I am not getting evidence here. Absence of evidence for a material item in the financial statement. Yes or no? Now tell me, since I don't have 5 crore worth of land related ownership document, can I directly say entire balance sheet untrustworthy, don't believe it? No. This is no doubt material, but it is not pervasive. Able to understand? But there is a possible effect, right? Tomorrow, what if this 5 crore is not really owned by the entity? 5 crore worth of the land is actually a leased land, but company showed it as own land. Getting the point? Possibility of misstatement is there, right? Possibility of misstatement. But is this misstatement, have we identified it? Do we identify this mistake first of all? First of all, mistake or not, we don't know, because we don't have evidence. So I am talking not about misstatement. I am talking about possibility of undetected misstatement. Understood? Possibility of undetected misstatement. So what is undetected misstatement? Mistake might be there, but not detected. You are saying mistake is there, not detected. Are you really saying there is a mistake? No. Possibility only I am saying. Getting it? Since evidence is not there, there is a possibility that some mistake might arise in future, which is material but not pervasive. Which opinion I'll give? There also I'll give qualified opinion. I will give indirectly. Qualified opinion means what? In our opinion, to the best of our information, all that, we will say our aforesaid financials are true and fair except these matters. Except so and so land ownership document is not provided to us. To this extent, we cannot talk about the ownership. Or we will say that land is wrongly classified as an investment. If there is a misstatement, we call it as misstatement. Able to understand? When can I talk about misstatement and all? When there is an evidence. Suppose if I do not have evidence, can I talk about misstatement? We don't know. If information is not there, how can I say it is right or wrong? When I say something is misstated, you must have proof. Na? Sir, show me the proof that you are saying mistake. Here I don't have evidence. Able to understand? So qualified opinion is given in two circumstances. One, you have got evidence. You have a proof that land is used for fixed asset, factory construction. Construction is also going on. It should be classified as either fixed asset or capital work in progress. You physically went there, clicked photographs and all, documented everything. 3. In the balance sheet, it is shown as investment. You have evidence everywhere that it is a mistake which company did. You can prove it. Getting it? Now you can give qualified opinion. In this scenario, whether the land is owned by the company, in the fixed assets or in the investment register, land is appearing. But ownership documents are not with the company. They are claiming that registration and all completed, sir. But registrar is alone. Registrar has to give us the document, which is not yet received by us. How far I believe this statement? I cannot say that this is wrong also, because I don't know what is the real fact. I don't know. Getting it? Possibility of misstatement which is not discovered by me. Getting the point? The possibility is material. So then also I will give qualified opinion. I will not take risk on this. I will give opinion on the rest of the financials as true. I will put this under exception. Able to understand? Suppose if this value, land, the value of this land is 50 crore. The amount of the land is how much? 50 crore. And it's a classification mistake. What is it? It's a classification mistake. 50 crore worth of land classification mistake. I have a proof that the land is a fixed asset, but company showed it as investment intentionally. And when I interact with the management, I clearly understood they want to manipulate fixed asset turnover ratio. They want to manipulate people saying our fixed assets are productively used. See, our fixed assets are 100 crore and we are generating 500 crore turnover, which means we are using 5 times the fixed assets in a year. Able to understand? They're manipulating. Actually, if I put this 50 crore, if this 50 is also added, no, the fixed asset turnover ratio would be 2.5 or 3 times only, which is industry average. So company want to wrongly classify fixed asset into investment and claiming we are better than industry. But actually they are doing classification mistake and misleading the public. Now tell me, by classifying 50 crore worth of amount in 1000 crore, 5% value in the total balance sheet, if it is wrongly classified, which is a significant, pervasive or not? Which opinion I should give? Since it is misleading the company position altogether, company key ratios and all altogether misleading, I should give which opinion? Adverse opinion. Dear shareholder, do not, the financial statements are not showing true and fair. Suppose, second example we have seen a qualified opinion. Suppose 50 crore worth of land, we don't have evidence. Let us assume 50 crore worth of land, we do not have evidence, and they classified under investment, and it is not used for factory purpose. Okay, classified under investment. It's actually right classification. As per management intention, it is right classification. But the point is, where are the ownership documents? And when I see company bank statement, there is no movement also. 50 crore you purchase, na? There should be outflow 50 crore, right? To so and so party. That is also not reflected. If I ask company, sir, we purchased it on credit, sir. We will pay third party next year. When I see registration document, that is also not there. How come you show? Able to understand? So something is fishy. Okay, and I don't want to take risk. What should I do? It's a material item and moreover significant. Moreover significant. Yes. I think yes, sir. In the bank statement also there is no outflow for 50 crore worth of transaction. Getting it? So I found finally it is a material item and it's a very significant item, pervasive item for which there is no evidence. So let me stay away from giving the opinion. I know remaining or right, but 50 crore worth of element, no, I don't know, right? How can I comment when I 50 crore worth of element in the balance sheet, 50 crore worth of element, this itself is a very big significant transaction. Getting the point? We don't have evidence. I cannot talk about position. If this 50 crore is fake, no. Company position is actually very bad. If this 50 crore is removed in the asset. If this 50 crore asset is kept, no. Company NAV is positive. If this 50 crore is removed, no, company net asset value is negative actually. And I don't know whether, I don't have any evidence to substantiate whether this 50 crore is right or wrong. Getting the point? Now tell me, in that case, I will not take risk. I will not give the opinion, disclaimer of opinion. Now you see, if evidence is not there, for a material item, but not pervasive, I give which opinion? If evidence is not there for material and pervasive also, then I give which opinion? I will not give opinion. That is called disclaimer of opinion. Suppose evidence is there. I have evidence. I have a proof. I have all the documentation. And I can prove that it's a material misstatement. I can prove it. And it is not pervasive. Which opinion? Qualified opinion. Evidence is there. It's material misstatement what the company did. And it's pervasively impacting the company as a whole. Which opinion? Simple. All of you? Yes or no? Now, suppose if, Tata Motors, no, the company had a huge loss. Which opinion you will give? You should immediately think, sir, loss, okay, fine, let it be. So what? Whether it is loss or profit, why are we bothered? Whether the loss is rightly shown or not is what important to us. Some students know if the company is having profit, unqualified opinion. If company is having loss, we will give modified opinion. Hey, okay. So it's not profit or loss. Whatever they showed, is it right or not? That is important for us. Getting the point? That's why you see, objective of the entity is not relevant. Getting it? Whether they are profit oriented or non-profit oriented, whether they are profit making or non-profit making, that is also not relevant for us. The numbers, no. What is that number is not that is important for us. Whether that number is right or not is important for us. P&L numbers right or not. Balance sheet numbers right or not. That is important for us. Getting the point? Suppose if the Tata Motors, they are having actually super profits. But to avoid payment of taxes, they are reducing the profits and showing. They are understating the profits and showing. Are they misleading or not? Are they misrepresenting or not? We should give modified opinion. Now, which modified opinion? Qualified adverse, depending upon pervasiveness. Now, what do you mean by pervasive? Now, what do you mean by pervasive? So, pervasive means what? So, here I have given pervasive definition. Pervasive effect means pervasive effect on the financials or those. Pervasive effect on financials or those in auditor's judgment. They are not confined to specific element, not confined to specific account, not confined to a specific item. Mistake is not in one item or element, multiple items affected. Then also it is called as pervasive, or if so confined. Okay, let us assume it is only related to a specific element. In our example, we have seen the second scenario example. Mistake happened only in one item, land, but it is representing substantial portion of the financials. It is representing substantial portion. Suppose in our example, let us modify. In fixed asset 10 crore mistake, in current asset 10 crore mistake, in investment 5 crore mistake, in creditors 5 crore mistake, in equity some 15 crore mistake. Can I say the above financials are true and fair except current assets, except fixed assets, except equity, except reserves, except creditors? Can you say like that? If mistakes are not confined to means what? If the misstatements or if if the effect is relating to multiple items, then also it is pervasive. If the effect is not related to multiple, only single item, specific item, which could represent the substantial portion of the financials, then also we call it as pervasive. Or if the mistake or if the effect which auditor is talking about, effect or possible effect. Effect, when we can use the word simple effect, misstatement evidence is there. If evidence is not there, we don't talk about effect, we talk about possible effect. Because evidence is not there means, how can you concretely conclude on one thing? Getting the point? So possible effect, when evidence is not there, we bring the word possibility there. Getting the point? If the effect or possible effect is related to disclosures which are fundamental to users. In fundamental disclosures, if at all you made misleading picture, then also we call it as what? Pervasive. Suppose for a company, going concern is not appropriate. Okay, the company going concern is not at all appropriate. The company cannot continue at all. But still, they prepared financial statements using going concern basis, and they proudly declared in the notes to accounts the entity is a going concern, which is a fundamental accounting assumption where company is misleading. It's also called as what? Pervasive. Got clarity? All of you? So now, if tomorrow pervasive question comes, can you answer? Yes, sir. So now tell me. So under what circumstances I will modify? If I conclude based on evidence, financials are not free from material misstatements. Not free from misstatements means financials containing misstatements. How I concluded? Based on evidence. I have evidence. Or if auditor is unable to obtain sufficient appropriate evidence to conclude that the financials are free from mistakes, in order to say financials are not having mistakes, I am not able to conclude because I am not able to get sufficient appropriate. In these two circumstances, you will modify the opinion. Depending upon the pervasive, you decide final opinion. So under what circumstances auditor will modify? One, based on evidence, you concluded financials are not free from misstatements. Or you are unable to get evidence to conclude that they are right. Able to understand. Next. So this is one important question. Now let us discuss this opinion wordings and all. Opinion wordings. I hope now you are clear, right? Let me show you one diagram also. Suppose how we will give opinions. I have given as a box. Okay, in institute material this much depth is not given in the box, but I'm showing. Now tell me, I have obtained evidence. Everything entirely I have obtained. There is no circumstance where whatever information I asked, management denied. There is no such circumstance. Everywhere. Then and there they gave me documents. Everywhere I have got. And you know what? There are no material misstatements. No material misstatements. When there is no material misstatement, Will the concept of pervasive applicable? Not applicable. That's why I have cleverly used the word NA. Getting the point? It is not no, because pervasive thing itself do not apply. Which opinion I'll give? Unqualified. Suppose I have got evidence, I can prove it. Okay, you wrongly classified the land, which you are using it for construction of factory, which is supposed to be fixed asset. You are showing it as investment. I have a clear-cut documentation. Is material misstatement exist? Yes, in the form of classification. But is it pervasive? No. Which opinion I'll give? Qualified opinion. Suppose no, company is not giving me documents, ownership documents, sufficient appropriate evidence not obtained. Now, is the land value material? Yes. You see here, I am not using the word MMS. Observe, MMS word I am not using. When I can say there is a mistake if I have evidence. So, but here evidence itself is not there. Document itself is not there. Getting the point? How can I say about misstatement? How can I talk about mistake in that? Evidence itself is not there. But for what item? Material item it is not there. However, is the effect, possible effect pervasive? No. Which opinion again? Qualified. So, qualified opinion definition will have two parts. Qualified opinion definition will have two parts of the definition. You see, qualified opinion is given in two parts. Are you getting the point? So, qualified opinion. Auditor obtained sufficient appropriate evidence. Based on that, he concluded mistakes are material but not pervasive, or unable to obtain sufficient appropriate evidence and concluded that because I did not get evidence, now I am concluding possible effect on the financials of undetected misstatements. You see the word possible effect of what? Mistakes. Which mistakes? You identified? No, I did not identify. That's why I'm talking about probability. Getting the point? The possible effect of undetected misstatements could be everywhere. You see future tense oriented. Able to understand, because evidence is not there, I cannot talk about present accuracy. Yes or no? Could be material but not pervasive. Are you getting the point? So if evidence is not there, no, we always think like this. Okay, we always think like if evidence is not there, what if this is wrong? And that wrong item is material but not pervasive. That's what they mentioned here. The same aspect they mentioned here. Evidence is not there. Can you ignore that and give unqualified opinion? No. What if tomorrow it go wrong and that is material and pervasive, or that is material but not pervasive? That's what exactly. What if the possible effect on the financials on the tomorrow when the fraud is discovered, the impact could be material but not pervasive, but that impact we could not detect now. Undetected misstatement on the financial statements of the possible effect. Clear? Now, if this definition, no, first part of the definition is there, right? In that definition, suppose no, here instead of but not, I mentioned end. Suppose I have evidence, there is a material misstatement, it's material and pervasive. Which opinion? First part of the qualified opinion definition, just one word if you change, adverse opinion definition comes. Second part of the qualified opinion definition, here there is again but not, right? Is it visible? Yes or no? If I replace it with end, disclaimer. That's it. That's what adverse opinion definition and disclaimer of opinion definition. Can you read on your own? All of you? Yes, next. Tell me, can we just like that disclaim easily? Disclaimer of opinion is something extremely rare circumstance. Getting the point? It's not that easy. It's a very rare circumstance only we will give disclaimer. Multiple uncertainties, or it may be a single uncertainty, but that could be substantial portion. Getting it? Notwithstanding having obtained evidence regarding each individual uncertainty. Like what is it here? Suppose no, in our example, if you recollect, land 50 crore value. For remaining items, I have evidence, right? For remaining current assets, for remaining fixed assets, for remaining equity liability, for all that I have obtained evidence. Only for land worth of 50 crore I did not get. But then still, even though I have evidence for other items, why I have chosen disclaimer? If I give unqualified opinion or qualified opinion with exception, that will not be sufficient. That will not give the impact of the opinion. Look, this is a 50 crore item. If this went wrong, there is no point of gathering evidence for other things. First of all, company position itself will turn around. If this 50 crore went wrong. So I want to quantify. See, I want to convey the impact of this 50 crore. That's why I gave disclaimer of opinion. Able to understand? So, So whatever evidences you obtained, on the other items of the financials, when you are giving disclaimer, will you consider that again? No. When you decided to give disclaimer, because the evidence that you could not obtain is pervasive in nature. Getting the point? Again, by the way, the word pervasive is different from persuasive. There is another word called persuasive. Auditor will obtain persuasive evidence, not pervasive evidence. Able to understand? Pervasive means when we talk about impact on the financials. Persuasive means convincing. Getting the point? We generally get what kind of evidence? Convincing evidence. Based on documentation, we convince that it is true and fair. Suppose whether purchase, right now in our example, if they showed us the registration document, we will convince, right? Why all this discussion? Unnecessary? Yes or no? Now, are we liable to check the document originality, all that? No. There, that much skill and all we don't have. Getting the point? So, the nature of evidence that we get in audit is generally persuasive in nature. Are you getting the point? That's why our assurance is reasonable assurance. We don't get absolute assurance because we don't look at conclusive evidence. We look at convincing evidence. Able to understand? If it convinces me, enough. A building is there, I will go and see. It is there. Convincing. Able to understand? So, ownership document is there. Ownership document is there. Convincing that it is owned by our company. Getting it? The value is how much? Shown. It is convincing. But in reality, all are fake. I don't know that. I'm not bothered. Getting the point? What I'm bothered is proper documentation is there or not, genuinity there or not. I will try within my scale of skill set. Getting it? If I do that exercise, if I do that due care, diligence and all, that's enough. I can protect myself. Able to understand? In audit, giving unmodified opinion is very risky. Giving adverse opinion is zero risk. Adverse opinion means what? Hey, don't believe that. Tomorrow somebody invested in spite of this and lost money. They are coming, hey, what audit? Hey, I told man already, don't believe. Yes or no? There is no risk for me. If I give adverse opinion, zero risk. Now immediately, sir, every auditor can try to give adverse opinion. Na? Discover mistakes and give. You discover mistakes, man, and give. You want to give adverse opinion, you should discover mistakes, right? You should prove it is pervasive, right? You must have documentation, right? Without proving that, if you say, sir, I will give the adverse opinion, will client agree? Sir, why are you giving adverse, sir? Show me proof. No, I don't have proof. I want to reduce my risk to zero. Can I give adverse opinion? You can do on another clients or not on us. Yes or no? You want to give qualified opinion, adverse opinion, you should find a misstatement first of all. In order to find a misstatement, you should not think about lunch time, dinner time. Getting it? Next. Easy or not? Now, in the new scheme, they have added even this also. How material wordings will be there. Illustration they have added. I removed it here. I directly discuss it in this one. Renouncement book I'm discussing. You need not, you just observe it and leave it. You have already in the ICA book, illustrations were given. At the end of this audit chapter also, illustrations were given. At the end of the chapter also, illustrations were given. So if that illustrations you follow, that's enough. Now you see. Another 1.5 hours will conclude. Okay, by another we'll finish in this session entire audit report chapter maximum. It will be over. Maybe in CARO some 4-5 points, or maybe CARO part alone will be pending. That anyhow will continue in the next session. Okay, fine. Are you all okay? Interested? Connected? உக்காந்து கேட்டது தானே, நான் தான் பேசணும், நான் தான் ஃபுல்லா அலர்ட்டா இருக்கணும். ஐ நீட் டு திங்க். நோ ஆப்வியஸ்லி உங்களுக்கு எல்லாம் ஹாப்பி ஜாலியான வேலை. உட்காந்து செம்மையா சில்டா ஏசில ஓகே ஹாப்பியா கேட்டுட்டே இருக்குன்னு. கேட்க முடியலன்னா சும்மா ஏதோ அது இது பாக்குறேன், அவ்வளவுதான். So fine. So let's look at Tata Motors annual report, audit report. So you see, in Tata Motors, the auditors have given which opinion? Unqualified opinion. Why they gave unqualified opinion? Because they could not find any mistakes. We give unqualified opinion because we can't do anything else. Getting it? So, you see how the wordings. We have audited the standalone financials of Tata Motors comprising so and so. Getting it? In our opinion, to the best of our information, according to the explanations given to us. This is some protection para to us. Getting it? Based on information I got, based on explanation I got. What information, explanation you got? Come, I'll show you my documentation. Able to understand? Documentation is the proof. Based on my documentation, based on the information and explanation given to us, based on consideration of other auditor on that's okay, ignore it. Okay. The aforesaid standalone financial statement give information required by act in the manner so required and give a true and fair view in conformity with accounting principles generally accepted, accounting standards, schedule 3, all that. So here they did not use any exception, negative, nothing. Plainly they spoke about their fair. So it's an unqualified opinion. Now suppose if the qualified opinion, actually Air India audit report is there once upon a time, it has qualified opinion, but it's okay, I'll show you the illustration directly. So here here inventories are misstated. Inventories are misstated. The misstatement is material but not pervasive. Probably inventory misstatement, cost is 100 crore, NRV is 70 crore, company valued at cost, where they are supposed to value at 70. Let us assume the company is a multi-crore turnover company. So 30 crore mistake is there. It is just material but not fine. Now you see what opinion they gave? Qualified opinion. You see side heading itself is reflecting now. So people know we are making people's job easy. Which opinion auditor gave? They need not even read. Even if they don't understand anyhow. That's a secondary question. BA students understand panna mudiyala. Okay. So what opinion we give? Qualified opinion. So side heading. So first pair is same. We have audited all that. First we introduce ourselves. What we did. Then in our opinion, to the best of our information, according to the explanation given to us, the aforesaid financials give true and fair view, positive than but with an exception. You see in between, except for the effect of the matter described in basis for qualified opinion section of our report. In our report, opinion section is what we are reading right now. We have another section. After opinion, there is another section. What section they are calling it as? Basis for qualified opinion section. In that section means nothing but para. In audit report, first para is called as opinion section. Second para is called as basis for opinion section, like that. So what we are saying, in our opinion, to the best of our information, according to the explanation given to us, except, remember the word is except, not subject to. Getting it? Not with the below explanation. No, only the word we have supposed to use is except. Same word you should also use. You should not use an alternative word. So except for the effect of the matter described in basis for qualified opinion section. Nothing but, see, whenever we give opinion, on what basis you give opinion, you should tell that also in the audit report. In audit report, one of the content is first title, then addressee, then opinion, then basis for opinion. Basis for opinion. What is the basis? A basis is I do audit. Getting it? I did audit. How you did audit? As per standards. What standards say? That's what I'm going to talk. Getting it? So in audit report, first title, then addressee, opinion, basis for opinion is the fourth section in the audit report. Now, whenever you are giving qualified opinion, adverse opinion, disclaimer of opinion, side headings has to be changed accordingly. Getting the point? Suppose if it's a normal opinion, unqualified opinion, basis for opinion. Suppose if it is qualified opinion, basis for qualified opinion. Adverse opinion, basis for adverse opinion. Disclaimer of opinion, basis for disclaimer of opinion. Got it? Getting it? Now, so what are they mentioning here? Except for the effect of matter. When they say effect, they are not using the word possible effect. They are using the word effect, which means they have evidence. They have proven misstatement. Yes, except for the effect of matter. Which matter? Described in where basis for qualified opinion section of our report, except that the aforesaid financials are showing true and fair. Understood how the wordings are used. Now let us look at basis for qualified opinion section. Now see, basis for qualified opinion. What are we saying actually? The company. Now first I will show you for unqualified opinion. First I will show you for unqualified how basis for opinion paragraph will come. Tata Motors, I'll show you. Now you see, Tata Motors gave unqualified opinion, right? For that, what is the basis? See, if I give a qualified opinion, you ask me what basis, I will tell you what mistake exactly happened. I gave unqualified. Again, you're asking what reasons. I have 1,000 reasons to give unqualified opinion. What will I say? What is the basis for unqualified opinion? See, if I say something is wrong, you ask me what is wrong, I'll tell you. Everything is right. What is that you're asking me again? How can I describe it? So cleverly they described. Look, what is the basis? We conducted our audit. That itself is a basis. Getting it? How we conducted audit as per standards on auditing. Getting it? And standards on auditing. Okay. Now our responsibilities under those standards are further described in, like we do audit as per standards. What will you do in standards? As per standards, no, we have some responsibilities. Yes or no? Each standard talks about our requirements, right? Responsibilities, right? Our responsibilities under those standards, we describe not here. Below another section is there. What section? Auditors responsibilities. Auditors responsibilities for audit of standalone financial statements of our report. Like where? Below some responsibility. So your auditor responsibility section is there. Management responsibility here, and then below. You see here. So here in the Tata Motors, there is another section. What section? Auditor responsibility for audit of financial statement section. Below, I will tell you what are all my responsibilities under various standards. So in the basis for opinion section, we are mentioning we do audit as per standards. We also mention that as per the standards, we have responsibilities. Our responsibilities you want to know? Go to the next para. What para? What section? Auditor responsibilities related to audit of financial statements section of our report. Inside that, what are our responsibilities under standards we describe. Getting it? That point we are communicating where? In the basis for opinion section we are communicating. Understand? Now, we are independent of the company as per code of ethics issued. And now in our opinion section, no. What we mentioned in the opinion section, in our opinion, to the best of our information and according to the explanation given. Based on information I got, explanation I got, this is the opinion. Have you got sufficient information, by the way? That I am not answering in opinion. So in basis for opinion at the end, we believe that the evidence obtained along with the evidence obtained is sufficient and appropriate to provide a basis for the opinion. We gave opinion, right? Whatever evidence we have got, no, that is sufficient. That is appropriate to provide a basis for the opinion. So in the above I am saying based on information I am giving this opinion. Have you got sufficient information? Yes, I got sufficient information. See, look at basis for opinion section, last line. We believe that the evidence obtained by us is sufficient and appropriate. Got it? Now, you see in exam they'll give you like this questions. Wait, let me cover little more also. Then I will come back and then discuss how in exam these questions, whatever I'm discussing, will be asked about. Fine. Now, again, suppose here in this example, Tata Motors, they gave unqualified, they gave single line, single para, basis also. They just mentioned we did audit as per standards on auditing. As per the standards, we have so many responsibilities. You want to know the responsibilities? Look at the responsibility section. Okay, and we are independent of the company. We complied with code of ethics. Whatever evidence we have got is sufficient and appropriate. Based on that only we provide. We concluded. We arrived at opinion. We are mentioning that basis for opinion. So you're asking basis for opinion. Hey, don't think that I just gave opinion casually. I did audit as per standards. As per the standards, I have responsibilities, and I'm independent of the company. I complied with ethics. Whatever evidence I got is sufficient for the opinion. So this is the basis for the opinion. Am I replying or not? Short reply. Yes or no? Now, basis for qualified opinion here in this case. Here also you see common, whatever unqualified opinion basis for para is, as it is copy pasted here also. We conducted our audit as per standards on auditing. Our responsibilities are further described in auditor responsibility section. We are independent of the company. We complied with ethics. We believe that the audit evidence obtained is sufficient and appropriate to provide a basis for our opinion. Same para. In addition to that, you give qualified opinion. You should clearly tell specific reason also, right? You cannot give general reason. For unqualified opinion, you gave a general reason like you did audit as per standards. That's why you gave this opinion. Yes or no? Now here you gave qualified opinion. Qualified means what? You are saying that misstatement is there. What mistake is there? The company's inventories are carried in the balance sheet at 100 crore cost. Management has not stated inventory at lower of 100 crore or 70 crore, but stated them at a cost which is 100 crore, which is a departure from accounting standard. So applicable framework they did not follow in valuation of inventory. The company records indicate that had management stated the inventories at lower of cost or NRV, if at all management stated in the as per framework, an amount of 30 crore would be required to write down the inventory to their NRV. 30 crore will be required to write down the inventory. Accordingly, cost of sales will increase by 30 crore, income tax will increase by 6 crore, net worth and all will be increased or decreased by this much. Now you see, when we are qualifying, no, we are not just saying misstatement is there, we are also quantifying the misstatement. Yes or no? If mistake is not there, how does it affect? If mistake is not there, what would be the numbers? Are we quantifying or not? This is the responsibility as per 705. Under 705, if there is a qualification related to material misstatement, auditor must quantify. Suppose if you cannot quantify. Suppose if you cannot quantify, if quantification is not possible, then say that quantification is not possible. The company did so and so mistake. The effect of the mistake is in multiple areas which we are unable to quantify because of impracticability. What is that impracticability? You mentioned there. That's enough. You know, suppose I'll show you the next illustration where they gave adverse opinion. Here they gave adverse opinion due to material misstatement of in the consolidated. Here the financials are consolidated. What is the mistake? The consolidated financials are materially misstated due to non-consolidation of subsidiary. One subsidiary they didn't consolidate. Tell me, if a particular company, if one subsidiary company, if I don't consolidate, if I do not consolidate a subsidiary company, which item of balance sheet, which item of P&L will affect? You must know consolidation. To answer this, every item in the P&L account, every item in the balance sheet, every fixed asset item, every current asset item, liability, P&L, revenue, expense, every line in the item of P&L, balance sheet, cash flow, every line will affect, right? If you ignore one subsidiary, because if you add that subsidiary line by line, branch accounts, you know everyone, consolidated financials, how many of you have learned at least? Consolidated, you must know, right? Line by line consolidation method we follow. Yes or no? I'll tell you what happens in consolidation. I'll tell you briefly, if at all those of you who don't know. Suppose this is a holding company, this is a subsidiary company. When a company becomes holding company for another company, it has investment by holding company 100 crore. Yes or no? So sorry, investment in a subsidiary company, how much? 100 crore. Equity 100 crore. There are no outsiders. Let us assume it's a 100% subsidiary company. Now the subsidiary company, using this amount, 50 crore fixed assets they purchased, investment 20, current asset 30. Now that's it. No more assets and liabilities. Or else some inventory. Let's assume this investment is 30. Some liabilities is 10 crore. So total subsidiary company balance sheet 110. This is 110. Holding company, it has its own fixed asset 300, its own current assets from 200, its own equity some 500, and liabilities some 100. So this is the holding company 600. These are standalone balance sheets of holding and subsidiary. Separate balance sheets. Now holding company has to prepare consolidated balance sheet, correct? How are they doing consolidation? Line by line. Add fixed assets. How much? 350. Add current assets. How much? 230. Investments. Here investment is there. This investment I will not add. These both will cancel na. Intercompany. Yes or no? So how much investment? 30. Liability. This both. How much it is? 110. Equity. Don't add these both. This we knocked off. No, this side asset, that side liability we knocked off. So how much it is? 500. You see the total. How much? 610. And here also 610. Matching or not? Understood or not? This is what exactly happens in consolidation. Now, if I do not consolidate one subsidiary, as per consolidation 129 subsection 3, Companies Act, a holding company shall consolidate all its subsidiaries. If one subsidiary you didn't consolidate, tell me which item in the balance sheet, in the consolidated balance sheet affect? Every item. Every P&L item will affect. Now tell me, multiple items, when the effect is not related to, not confined to specific element, is it pervasive or not? Multiple items are affected, yes or no? Now which opinion we should give? Adverse opinion. So that's what in the illustration where what they gave, adverse opinion only they gave. In our opinion, to the best of our information, according to the explanation, getting it? The accompanying consolidated financials do not give true and fair view. We are mentioning straight away, do not give true and fair view. Now here you see, we are not using except. It's not just one or two exceptions. It's complete. Financials itself is wrong, because they use the word because of significance of matter. Because of significance of matter discussed in basis for adverse opinion section of our report, the aforesaid financials are not true and fair. Below you see, as explained, the group has not consolidated subsidiary. This investment is therefore accounted on so and so basis. Had XYZ consolidated, if at all the subsidiary is consolidated, many elements in the consolidated financials would have been affected. The effect on the consolidated financials of the failure to consolidate could not be determined. Is not determined. Why? How many? See, inventory, one mistake. I will show these items will affect because of this mistake. Consolidation, how many items you will list in the P&L? It's not even possible. Will you sit and prepare consolidated financials and then post it here? No, right? You will say that they have not consolidated one subsidiary. Every item in the financial will affect. So the mistake is not quantified. Understood. Now same here also, we conduct our audit as per standards. We comply with ethics. We believe that our opinion is, we believe that the evidence obtained by us is sufficient and appropriate. All that is common as usual. Are you clear? Next, disclaimer of opinion. Disclaimer of opinion, I'll see. Illustration 4. Disclaimer of opinion due to auditor's inability to obtain sufficient appropriate evidence about a single element of the consolidation. Single item only, but that single item could represent substantial portion. Getting it? You see here, the auditor was unable to obtain evidence about a single element of the financials, that is investment related one, joint venture, 90% of the assets. One investment is there in joint venture. That investment value is how much? 90% of the total assets. That 90% value you did not get evidence. Tell me, is it material and pervasive? Yes. Which opinion we should give? Disclaimer. Obviously, we did not get evidence here. Here we did not get evidence here. Getting it? We were unable to obtain sufficient appropriate evidence regarding a joint venture related investment. We did not get evidence, they are saying. Now evidence is not there. Which opinion you will give? Disclaimer. Now tell me, have you audited here? If evidence is there, I would have audited. At the time of planning itself, we will know all these issues. At the time of planning itself, I came to know that while planning the audit itself, I will not get evidence for 90% item. So have we audited? No. You see here, we were engaged to audit. What is the introduction line? We were engaged to audit. Whereas if you see adverse opinion, qualified opinion, unqualified opinion, first line is we have audited. Getting the point? Whereas when we are giving disclaimer, why are we giving disclaimer? Because we could not verify. We could not verify means what? We didn't audit. Audit means what? Verification, examination. Yeah. Next. So we were engaged to audit, and straight away, in our opinion, we don't have opinion. Can you say like that? We do not express an opinion. Straight away, we do not express an opinion. You see that wordings, in our opinion, to the best of our information, according to the explanation given to us, we don't have opinion. Not possible, right? So we do not express an opinion. Why? What is the reason? Because of significance of matter. There is a matter. It is so significant. Because of the significance of matter. Which matter? It is described in basis for disclaimer of opinion section of our report. Getting it? We have not been able to obtain sufficient appropriate evidence to provide a basis for the opinion. We could not obtain evidence to provide a basis for the opinion. So we are not giving opinion. No, basis for disclaimer. Now you see, when you are not giving opinion, first of all, what is the side heading? Original side heading is what? Actually basis for opinion. When you give an opinion, there is a basis. When you are not giving an opinion, is there a basis? Getting the point. What is the basis for not giving opinion? I did not get evidence. So that's why basis for disclaimer of opinion, in that no standard content is an original content. We have audited, we conducted our audit as per standards on auditing. That and all not come. When you give disclaimer of opinion, you need not talk about standards on auditing. You need not talk about ethical requirements and all. You need not talk about that belief that you obtain sufficient appropriate evidence. You see, straight away we will mention the reason and leave. The group investment in joint venture, which represent 90%, the group related informations were not provided to us. Accordingly, we are not able to give opinion on the financial statements. Are you getting the point? You straight away mention the reason that we are giving disclaimer of opinion. Now, auditor responsibility section. What is it? Auditor responsibility section, when we have given disclaimer of opinion, will change a lot. Generally, auditor responsibility section, I will show you. Tata Motors, I will show you for parallel comparison. Generally, auditor responsibility section, no, we will clearly talk our responsibility is to obtain reasonable assurance. Reasonable assurance is a high level of assurance, but not a guarantee. Misstatements will still arise even though after we do audit properly, we do risk assessment, we obtain internal controls understanding, we check accounting policies, we check all this nonsense. People listen when you give opinion. You have not given opinion. Why will I now? What should I do by knowing your responsibility? Your responsibility primarily to give opinion. That itself you are not giving. Correct? Huh? So in that case, can we talk about our responsibility so detailed in responsibility section of the audit report, which contains disclaimer of opinion? So accordingly, you see here, our responsibility is to conduct the audit. Okay. And give an opinion on the financials. However, because of the matter described in basis for disclaimer, we were not able to obtain evidence to provide a basis. So by the way, we are independent of the group. We have fulfilled all our ethical responsibilities and all. We are ethical, we are ready. The problem is company is not ready. So we simply concluded, you see how responsibility section is simply concluded. This can be asked as a question. Getting it? Right, auditor, what are the points to be included in auditor's responsibility section for financial statements in a circumstance where auditor disclaims his opinion? 4 marks question. It has been asked in CA final and CA inter also. We have a question, I'll show you directly in the book. First I'm showing all the practical things. Then if you go to the book, it is very easy for us to sync. Okay, next. So are you clear on all the opinions? That's it. Now straight away we'll go back to the book. Now tell me how basis for opinion paragraph will modify in case of modified opinion. In case of material misstatement in financials, please qualify. Not just qualify, it is quantify. What is it? Quantification is important. Quantify. Getting it? Obviously, now, if there is a material misstatement, quantify that. So, if there is a material misstatement that relates to specific amounts, by the way, I'm reading in 96th page, whatever, okay. The auditor shall include in basis or opinion section description of the qualification, quantification of the effect of the misstatement unless impracticable. If it is not possible to quantify, don't quantify. Suppose you are unable to quantify. If it is not practicable to quantify, the auditor shall state in the section. We have seen adverse opinion given. Yes or no? Adverse is also a type of modified opinion. Their consolidation subsidiary is missed. So unable to quantify the impact, auditor clearly mentioned now. If there is a material misstatement relates to narrative disclosure. Actually, this is something a separate point. Up to here only second point. From here it is third point. Make it as a third point from here. You see in the second point, full stop is then a first full stop. It is not practicable to quantify, state. Then after, if there is a material misstatement related to narrative disclosure like that, is it that you call it as a separate point. That's a separate point. Now, suppose in a disclosure company made a misstatement. Company gave a wrong disclosure. They gave a wrong disclosure. How do you qualify? You will mention that the disclosure is wrong and you should also give what is the right disclosure if possible. In your audit report, what is the right disclosure you should talk. Getting the point. Next. Suppose if the company non-disclosed. Even non-disclosure is also misstatement, right? Suppose company have not disclosed an important information which is a material misstatement. Now you will qualify the opinion, right? Obviously you will modify the report, you will modify the opinion, right? Now in the basis for qualified or adverse or whatever. How will you talk about the non-disclosure? If possible, discuss the non-disclosure with top management. What is its nature? How pervasive it is? If possible, if practicable to do so, include the disclosure in the audit report. In the basis for adverse opinion or basis for qualified opinion section, whatever they miss, include it if it is practicable to do so. Suppose company has violated segment information standard. They didn't disclose segment reporting. Segment reporting? Company did not disclose segment information. Segment information will come 5 pages. Will you give in the audit report 5 pages? People will not read audit report. Yes or no? If it is not practicable to include a disclosure, say that it is not practicable to include a disclosure. All this they'll ask you. They'll ask you this question. This third point itself they can ask you as a straight 4 marks question. If there is a material misstatement by way of non-disclosure, what auditor shall do? If material misstatement is by way of non-disclosure, what auditor shall do? Are you getting the point? So what auditor shall do in the, what is the reporting requirement? 3 marks or 4 marks question they'll ask. Have you identified all this when you're reading? No sir, I just want chart book. Understood now why charts I don't recommend. The question paper is at this standard. The way the content is discussed is at this standard. And people complain, they just read blindly, they don't understand anything. Audit is like that only. Yes, it is like that for those who cannot understand. For those who don't even try to understand. Able to understand, chart books, colored notes and all is not a way. Getting it? You see how I'm filtering the information? Have you noticed how I'm covering almost each and every topic? In fact, I'm not just reading, I'm explaining, by the way. Within the same time, can you read actually? Entire this content, actually you can read, right, if you already know this content. Now tell me, day before exam, we are having 20 hours time. More than 20, our entire 5 days session itself is coming to 20 hours. Yes or no? We are with this revision session itself 20 hours. 80%. That too I'm explaining, man. I'm not just reading. I'm explaining and connecting with the book also. That too may not 100% I'm connecting with each and every line, but I'm connecting predominantly, right? Predominant portion I'm covering, right? Within 20 hours I am doing explanation and connecting, making you understand and reading and looking at practical examples, all that, and showing and making you understand the things directly. Now, can't you read just after understanding, after having knowledge on this? Reading, does it take 20 hours? Provided you already done revision. So day before exam, students know, they ask me, sir, how to revise this book day before exam? Just like this. You already know this. Just that we are so, our brain is, we are brainwashed like short notes must be there before exam. Only then you revise. Otherwise you can't revise. Hey man, when I'm revising, no, I know. Suppose the moment I say this, suppose if I am revising in your place, suppose if I have to write exam tomorrow, I will say description of basis for opinion para. MMS, I know this content. I'll just move to another content. This is how I revise. Yes or no? This is how description of auditor responsibility. In case auditor is disclaiming, this is something I don't know. Let me read once. I'll plainly read. Then next one, communication with these. This I know already point. This is what revision means, right? Yes or no? Technically speaking, this is what revision. Revision means what? Whatever you don't know, you have to read. Whatever you think you have to read, you have to revise that. Each and every point you need not revise. Getting it? What we are doing, this entire matter which is there in 50 pages, you are compressing it in 5 pages, drone charts and all, and you are revising from that, going examination, looking at the paragraph, and you are not understanding. You are only staring at the fan. Yes or no? Why they are not cleaning the fan and all? You are getting all the questions. And you come out and say CA is a tough course. Primary work that you are supposed to do, you have not done. Able to understand? Look at in the revision itself, I'm covering at this level means what should be then the regular, which is 120 hours, 100 hours approximately. Not promoting my regular course, I'm just telling you. Getting it? If at all you have taken anybody's regular course and still you are not getting clarity, means you have taken wrong. You have taken wrong decision. Getting the point? If you are not understanding, if you are not connecting with the subject, auditing is a boring subject. It is boring if you don't understand. See how interesting it is. I'll show you this in the same till the end of the subject. Getting it? Everywhere practically we are discussing, not mucking up. Qualified opinion means that this oral drilling. No, not that. You need to understand, right? Next. Suppose if you are unable to obtain evidence, because of that we want to modify the opinion, qualified or if it is evidence is not there, which opinions I'll give? Qualified or disclaimer. Evidence is not there. Modifications results from inability. The auditor shall include in basis for reasons for inability. Why you are not getting evidence? Mention that. When auditor disclaims an opinion, the auditor shall not include. The auditor shall not include a reference to section that talks about responsibilities, a statement that sufficient appropriate evidence is obtained. I showed you. Generally, basis for opinion para, what we mentioned, we believe that, we have conducted our audit as per standards. Our responsibilities under those standards are further described in basis for our responsibilities under those standards are further described in auditor responsibility section of our report. All that we will talk when we give a proper opinion. When we do not give opinion, can we refer about them? That's what they're saying. Auditor, when auditor is disclaiming the opinion, auditor need not refers to all these points. Be able to understand, all of you. Okay, now this question, this J point, this itself can be asked as a 4 marks question. How description of auditor responsibilities for auditor financials when auditor disclaims the opinion. How auditor responsibility section in audit report. In audit report, there is a section, audit responsibility. How we will talk, how we will report it. When we give disclaimer of opinion, we just mention a statement that we are responsible to do the audit and issue a report. First we will mention, we are responsible to do audit and we issue a report. Because of the matters given in disclaimer of opinion, we were not able to obtain evidence, and the statement, and we also talk about independence and ethics. That's it. Generally, auditor responsibility section will be so vast. Okay, where we talk about what is audit, what is reasonable, what is high level of assurance, what are all we do as per various standards. Briefly, we cover entire syllabus in some 7-8 paragraphs in the original audit report. But when we are giving disclaimer, shareholder doesn't need all this. When we give disclaimer, shareholder doesn't require all this. Obviously, which opinion? Obviously in that paragraph we need not talk about all that. That's it. And whenever you want to modify the opinion, auditor shall communicate with TCWG why, under what circumstances you are giving modified opinion and what is the wordings of the modified opinion. Now if you communicate this, management will, sir, don't give modified opinion. I will give you the information. I will provide the information. They try their best. In spite of it, if still they are not giving information, they are not rectifying the misstatement, then you can finally give the modified opinion. Indirectly, this point is saying, first don't prepare final audit report. Prepare a draft audit report. Prepare a draft, give it to the management. If they give consent to it, then finally prepare a final audit report with the modified opinion. Are you getting the point? Next. Suppose, generally why we give disclaimer of opinion? Because we are unable to obtain sufficient appropriate evidence. Why are you unable to obtain sufficient appropriate evidence? Suppose if if we are unable to obtain because management imposed a limitation. Management themselves are restricting me from providing evidence. Politely ask management, request them to remove. Management removes. Proceed with the audit. Suppose if management is not removing, communicate with top management, perform alternative procedures and try to obtain evidence. If still you are not getting evidence, even alternatively, only management has to provide, which they are not providing. Then, if the effect is material but not pervasive, qualified. If the effect is material and pervasive, first withdraw if possible. If withdraw is not possible, no other option, don't give opinion by giving a disclaimer of opinion. Are you clear? By the way, one more thing. I'm repeating, but I didn't highlight it. Disclaimer of opinion. It's not disclaimer opinion. Understood? Disclaimer of opinion. So that is what here they have given. Okay. Consequences. Write about consequences of inability to obtain sufficient appropriate evidence due to management imposed limitation. Suppose here we are unable to obtain evidence not because management imposed limitation, but because of some other circumstances. Management is very much ready to provide, but external lawyers are not reacting. They are not providing. They are not removing the limitation. They are creating a limitation. Management is also pressuring them, but they are not responding. And it is relating to a very big pending limitation where 50,000 crore penalty proceeding. Getting the point? Now circumstances create. Now what should we do? If at all by alternative procedures also we are not getting evidence. Ultimately we did not get evidence. We will withdraw from the engagement if possible, or we give disclaimer of opinion. Same answer only. Getting it? Next. Now, they'll ask you this question once again. Which type of modified opinion is appropriate? The decision regarding which type of modified opinion is appropriate depends on the following. What is the nature of the matter giving rise to modification? You see, the same wordings have nature of the matter. Evidence obtained, misstatement found. That is one. Evidence not obtained and it's a material item. So nature of the matter is whether financials are materially misstated or you are unable to obtain sufficient appropriate evidence. What is the reason, nature of the matter that give rise to why you want to modify? Is it because of a material misstatement, or is it because you're not getting evidence? What is the nature of matter? First identify. And what is your decision on the pervasiveness of the effect or possible effect of the matter? So whatever the nature of matter, what is its effect or possible effect of the pervasiveness? Then decide what type of opinion you want to give. So which type of modified opinion to be given depends upon nature of matter that gives reason for modification. The nature of matter can be material misstatement is there, or inability to obtain evidence for a material item, and its possible effect or effect, getting it, from the auditor's point of view of its pervasiveness. The pervasiveness of the effect or possible effect of that matter. Getting it? Accordingly, we decide the modified opinion, and that entirely is summarized in the form of a table. Clear? Almost SA 705 predominant part we have covered. Now come back to SA 700 again. Now they'll ask you, so they'll give you an illustration. As a part of audit, auditor has to express opinion. That is his objective. So auditor has prepared an audit report. What are the points to be written? What are the points to be covered in opinion section of the audit report? This is the answer. This is the question. What points you will cover in opinion section? What points were there in the opinion section? We have audited the financial statements of so and so company comprising balance sheet, P&L, cash flow, significant accounting policies, yes or no? Identify the entity, ABC Limited. State that financials are audited. We have audited. Title, balance sheet, P&L, cash flow, all that. Refers to notes. So including notes to accounts that contain significant disclosures, all that. Date and period. Balance sheet for the date. P&L account for the period ended. Yes or no? So whatever introduction para is there, they have given it as a points here. Then basis for opinion para. What is basis for opinion section will contain? We conducted our audit as per standards on auditing. Our responsibilities under those standards are further described in basis for our responsibilities are further contained in auditor responsibility section of our auditor report. We are independent of the company. We comply with code of ethics. We believe that the evidence obtained. That is what actual para. Same points. State that audit was as per standards. Refer to responsibilities section in the audit report. Include a statement that you are independent and you fulfilled the responsibilities. State whether you believe that evidence obtained by you is sufficient and appropriate. Simple. This is what there in the basis for opinion, right? They'll give you a straight question like this. What are the contents of basis for opinion section? Like this they may ask you, or they may ask you, give a draft basis for opinion section. Give a draft for basis for opinion section. You have to draft actual original para that is given in that we have seen in the illustration. I don't think drafting question and all they may not give, but this they may ask you. Be able to understand. Then we have something called going concern. Fine. I'll go back once again to the contents of audit report. We understood title, we understood addressee, we understood opinion, we understood basis for opinion. The next para in the audit report is management responsibilities. Nothing but in preconditions, engagement letter, management responsibilities there. It's same as it is, will copy paste here. Management is responsible for preparation of financials. Management is responsible for internal controls. Management is responsible to give us the information. Management is responsible to select and apply accounting policies. Management is responsible for accounting estimates and all. All that management responsibilities we will mention. What are auditor responsibilities? Auditor responsibilities you see here. Responsibilities of responsibilities of auditor. Primary, obtain reasonable assurance whether financials are free and issue a report. This we need to mention in audit report. Then reasonable assurance is a high level of assurance but not a guarantee. I showed in audit report also same wordings, so that will be there. And we should also mention that misstatements can arise either from fraud or error. And we will also talk about we exercise skepticism, we exercise judgment, we do risk assessment, we do understand internal control, we also verify accounting policies, we verify management going concern, and we also check overall presentation structure of the financials. If it is a fair presentation framework, how the financial statements overall presentation looks like, structure looks like. Getting the point? That's it. Now in this note, they will ask you a specific question. Just a minute, I'm checking whether that specific question was discussed or not. That is also actually very important. this point. At the beginning itself is there in the 700. In the 700 at the beginning, fifth point. Evaluations to be made by auditor. C. Point C inside that fifth point. This has been asked in final once. Remember, in CA final and CA inter, questions are similar. In CA final, this discussion would be little more in depth. Getting the point? So in CA inter we discuss 60%, in CA final we discuss 100%. That's the depth level. Getting it? In CA final they'll ask with examples also. So getting it? Fine. So evaluation in case of pair presentation framework. You are appointed as an auditor, you are forming an opinion and reporting on the financials. What are the evaluations the auditor has to make with respect to fair presentation framework? If the financials are prepared in accordance with fair presentation, what additionally auditor shall evaluate? Auditor shall evaluate how overall presentation structure and content of the financials, how overall the financials, are they only talking about true or are they talking about fair? Whether financial statements represent underlying transactions and events so that fair presentation is achieved. Are they showing genuineness of the transaction also? Like you show debtors 10 crore, 100 crore, but provision is there 20 crore. Minus 80 crore only actually company can receive. So no. So underlying transactions and events intention should be correctly portrayed. So that is called fair presentation. Able to understand. So when financial statements are prepared as per fair presentation, the evaluation shall also include whether financials achieved fair presentation. Achieved fair presentation means the financials, whatever they are showing, no, it is not only true, they are also fair. They are also reflecting reasonable position and performance of the company, not just true performance and true position. Reasonable position. Are you getting it? That's it. Then we have, what are specific evaluations by auditor? They'll ask you this question. Write about specific evaluations by the auditor before forming an opinion. What are the specific evaluations? Very simple. Whether financial disclose all the accounting policies, whether accounting policies selected and applied are consistently done, whether accounting estimates are reasonable. We all evaluate. We evaluate this. Whether information presented in financials is relevant, reliable, comparable, understandable. Whether financial statement provide disclosures that are important to the users and all. Whether the terminology used is appropriate. Specific evaluation. 6 points were there. Any 4 you have to write. Getting it? Then one more important question. Write about qualitative aspects of entities' accounting practices. Write about qualitative aspects of entities. Auditor has to evaluate how accounting practices of the enterprise, how qualitative they are. Like when they are choosing an accounting estimate, for example, for a life of an asset or some inventory valuation, accounting estimate when they are choosing, how are they choosing the accounting estimate? Are they biased? Or are they choosing right estimate? Is management neutral whether the performance is profit or loss in terms of presentation? While presenting the financials, how are they neutral? Getting it? Are they tilted towards profit-oriented presentation, profit presentation, or are they neutral? So you need to understand their qualitative aspect. You need to check their, you need to interact with them and observe their mindset. Getting it? So management makes a number of judgments about various amounts. So while considering qualitative aspects of accounting, you may come across management bias. Getting it? Management bias you may find. Management bias means what? They are tilted to show high profits. Like suppose you are identifying some mistakes when you are doing audit. You found some 10 to 15 mistakes. You went, management corrected then and there 7 mistakes. Some 7 mistakes they didn't correct. Okay, fine, we don't know, maybe they'll correct later. Again, after 5 days I found another 5 mistakes. I went there. They kept on hold. Again I went with another 5 mistakes. After again 1 week. They corrected them immediately. What about past 5 and original 7, some total 12 mistakes they didn't yet correct. When I observe the pattern, no. Whatever mistake if rectified, profit increases, they are correcting. Whatever mistakes if they rectify, profit decreases, they are not correcting. Now tell me, by this interaction, by this analysis, can I understand, can I conclude that management is biased towards showing higher profit? Selective correction of misstatement brought to management attention. So management is doing selective correction of the misstatements, and management is making accounting estimates with bias. They are not making proper estimates rightly. By the way, just because management bias is there, can it constitute misstatement? Can I straight away say management is biased? Can I straight away say there are mistakes? Mistakes you have to find out. Possible management bias does not indicate misstatement. You need to investigate further to discover what are the mistakes that are there. Bias means it's an attitude, management attitude, you understood. Just because management is having that attitude, can you say there are so many mistakes in the financials, so and so mistakes are there, can you conclude? You cannot. So now if there is a management bias, or management is not neutral, this will affect auditor's evaluation, whether the financials as a whole are free from material. So it will affect your audit procedures. You will understand as a whole financials are free from misstatements or not. You will have some doubts. You will get some doubts extra. Etc. Forming of an opinion, these are all not required. These are all just you read later on, you can understand it. Then definitions, once again, general purpose financials, general purpose framework, fair presentation framework, compliance framework, all that were given here. I have covered it in the introduction class itself. Getting it? So what is general purpose financials? If the financials are prepared using general purpose framework. What is general purpose framework? I told you, general purpose framework keeps in mind common information needs of wide range of users. Wide range of users. Look, whenever I say I'm doing business, generally whoever it is, if I share with them that I'm doing business, what questions they'll ask? What business you're doing? What is the turnover? What is the profit that you are getting? How much you have invested in this business? Where is the location? What assets you purchased? These are the basic information which everybody asks yes or no. Even if you go for a bank for a loan, what they'll ask, what business you're doing? What are the assets? What is the bank statements? What is the bank balance? What is the asset? How much capital you invested? How much turnover you made? What are the expenses? What is the profit? Correct? Anybody to whom I share about my business, generally they ask these questions. Maybe one person might ask 12 questions, another might ask 15 questions, another might ask 20. But commonly, there will be some 15-20 questions which everybody want to know. Yes or no? General purpose framework addresses that common needs. Getting it? So what is general purpose framework? You see here, it's a financial reporting framework designed to meet common financial information needs of wide range of users. Getting it? Then now types of opinions, unmodified. The auditor will give unmodified opinion when auditor concludes that financials are prepared in accordance with applicable framework. Here you got evidences whatever you want. Modified. When we will give modified? Based on evidence, financials are not free from mistakes. Or I am unable to get evidence to say that they are free from mistakes. In two circumstances, I give modified opinion. Getting it? And the auditor shall modify opinion in the above circumstance. That's what. Now how unmodified opinion wordings will look like, I have showed you directly in the illustrations. Clear? So almost predominantly I have covered 700, 705 predominantly. Now you see here, if you look at this is the contents of audit report as per SA 700 format. Contents of audit report. What are the elements? Now if you observe, I'll highlight here with a box, red color box. Actually, if you look at the original standard SA 700, whatever I highlighted in red box is not there. Getting the point? As per 706, standard, we will add these two paragraphs if there is a requirement. As per 570, we will add this section in the audit report if there is a requirement. Suppose whatever I have showed in red box, right? If these are not there in audit report, that format is called as unmodified report. If these three boxes are also added in the audit report, then we call it as modified report. But modified report, does it mean modified opinion? No, that's it. So, okay, now let's discuss what is emphasis of matter, other matter para, key audit matter and material uncertainty related to going concern. So, when these paragraphs will come in the audit report, generally if you want to give unqualified opinion, standard, no nothing, you give normal SA 700 format without these paragraphs. If these paragraphs are also there, this is the order in which you should give. This is the order. So I gave you a comprehensive audit report format in the book. In the ICA book, you will not find a comprehensive format. Are you getting it? So that's why you see applicable as per relevant standard I mentioned right side. So these lines will come when there is a requirement under respective standard. Now, just a minute. I'll do one thing. I'll take 2 minutes gap and then I'll cover. So let's continue with the emphasis of matter paragraph and other matter paragraph. So So we have to discuss regarding this on SA 706. Actually, the 706 is a standard which is dealing with emphasis of matter paragraph and other matter paragraph in the independent auditor's report. That's a side heading. That's a heading of the standard. So emphasis of matter para and other matter paragraph in the independent auditor's report. Like, what is an emphasis of matter para and other matter paragraph? Simple example I'll show you. See Tata Motors audit report. See Tata Motors. I'll show you straight away the index itself. You observe the financial statements. Suppose standalone financial statements of Tata Motors starts at 232nd page. It goes up to 330 pages. So close to 100 pages financial statements and audit report together. Let us assume audit report CARO altogether probably will be 10 pages. And some balance, the audit report CARO, balance sheet, P&L, cash flow, single page, they're all together 10. Only notes to accounts is 90 pages. Notes to account is how many? 90. Again, consolidated you see approximately 120 pages, out of which 10 pages might be audit report, 100 pages is purely notes to accounts. So technically speaking, any shareholder or any investor or anybody third party, do you think they read entire 100% of the balance sheet P&L notes? Maybe balance sheet P&L they may have patience and then read and understand primarily, but notes to accounts, they no chance. So no, they don't read 100%, they don't read. So but as an auditor, by the way, you are signing the audit report, right? You are signing the balance sheet P&L notes, right? Or will you read full notes to accounts? 100%, man. You have to read. Hey, how will you sign without reading it? For shareholders and all, it's an excuse. For you should read at least, yes or no? So as an auditor, you should read 100% of the financial statements for sure. That is important. Now, when you're reading the financial statements in the notes, especially this 90 pages notes, definitely there will be certain points where you felt very important. Not everything may not be, but some 5-6 points you felt they're very important. Look, I'm not saying there are mistakes. You felt it very important. No, I know very well. Okay. In my interaction with people, they never read the notes to accounts. They don't even think notes to accounts is a part of financial statements. Obviously, notes to accounts is an extension. It's not, it's like an additional sheet. Getting it? For balance sheet item, P&L item, breakup and all is explained where? Notes. Accounting policy information is given where? Notes. So I know very well people don't read. But there are some 4 or 5 items in the notes, segment reporting, related party transactions, pending cases against the company, contingent liabilities, very, very important points were there. And I want everybody, and I know very well that the percentage of people who read my audit report are definitely higher. Those who do not read notes, I know very well majority of them read my audit report. Now I want them to read some important points in the notes. Okay, don't read 90 pages notes, but these 5 points, note number 35, note number 38, note number 49, these 3 note points I want everybody to read. What should I do? Highlight it. We should highlight it. Where? In the notes to accounts to poet, we should highlight with highlighter. You should highlight it in the audit report. How will you highlight? Emphasis. The name itself says emphasis means what? Highlight. Emphasis of matter paragraph is a paragraph used in the audit report that refers to an item presented or disclosed in financial statements. Actual definition contains one more word, appropriately presented or disclosed. Getting it? So emphasis of matter paragraph is a paragraph in the audit report. You see the definition. Emphasis of matter paragraph is a paragraph in the auditor's report that refers to a matter. Appropriately presented or disclosed in the financials. In auditor's judgment, in my point of view, is of such importance that it is fundamental for users' understanding of financial statements. Company is facing some contingent liability pending case issue, which they spoke very clearly in the notes to accounts. If at all company lose the case, they may have to pay some 2000 crore material penalty. But as on 31st March, it is contingent, they disclosed that information. Of course, company going concern and all, no chance. The company is very big. 1000 crores they may have to pay. The penalty they have to pay. Profit of the next year or the current year might affect. So this they mentioned in the notes. I want everybody to consider this. I want everybody to see this point. They presented honestly. Remember, they disclosed everything appropriately, honestly. No material misstatement, nothing. Now tell me, can I qualify this? Can I give a qualified opinion on this? Are you getting my question? So can I give a qualified opinion on a contingent liability which is appropriately presented or disclosed in the financial statements? I cannot. But that's an important point for the shareholders. How should I highlight it? In audit report you have another side heading, right? Emphasis of matter paragraph. There. Draw your attention. We draw your attention to note number 49, which talks about effect of a contingent liability if the company loses the case that they have to pay so and so. Refer note number 49 indirectly. Their detailed information is there. Are you getting the point? So, emphasis of matter paragraph can be used to highlight a matter where that matter is presented or disclosed in the financial statements. By the way, suppose contingent liability company is facing, right? They have to disclose it as per accounting standard 4 because it's a material non-adjusting event. Material non-adjusting event, they have to disclose in the notes, and they have to disclose certain points, only then people understand better. But they did not disclose it properly. They did not disclose information required as per applicable framework. They did not disclose fully. Now tell me, what should I do? Can I emphasize it? Can I highlight it under emphasis? No. Emphasis of matter paragraph is not a substitute for modified opinion. When a company has to disclose something which they did not disclose properly, when they did not disclose properly, the auditor has to qualify it, look at the impact of it, pervasiveness of it, accordingly give a modified opinion. If there is a partial disclosure or non-disclosure, you should not emphasize it. You should modify your opinion. When we modify indirectly, we are highlighting that issue. Anyhow, we are talking about that in basis for qualified. In that way, it is highlighted already. Are you getting it? When we can highlight under emphasis of matter para, only when the matter you want to highlight is free from material misstatement, you have evidence for that. Getting it? The only reason why you are highlighting, in your judgment, it is important for understanding financial statements in a better way. For that reason, you are highlighting. Because it's an important point, look at that important point. By the way, did company presented it wrongly? No. They appropriately presented. You see, the definition itself says the word appropriate. Getting it? Something which the company appropriately presented or disclosed. That only you can highlight. Suppose if the company inappropriately presented a matter, inappropriately they disclosed a matter, which is a material misstatement. Is it satisfying the definition of emphasis of matter para? No, it will not come under emphasis. So in such a case, if it is a material misstatement, what we will do? Modified opinion we will give. Are you clear? Next. Now, so that is emphasis of matter. Now, how do we emphasize? How do we emphasize? What is the manner of presentation of emphasis of matter para? The manner of presentation is just a minute. I will take Air India audit report. Air India audit report, you see. Emphasis of matter. How are they presenting? They are using a side heading called emphasis of matter. Then they are using the word we draw attention to what? Note number 29, note number 26, note number 49, note number 46, all that. At the end of the para, once all they are highlighted, once all they have highlighted, at the last they are mentioning something else. Our opinion is not modified in respect of the above. Like we are confirming them. Look, I am highlighting so many points, right? Don't think they're wrong. Don't think that I'm having any objective view on that. Getting objective view on that. Getting it? So my view on that is not modified. My view on that is they're correctly presented. They're rightly presented. Then why are you highlighting? Because it is important for you. Because I know you don't read the entire notes to account. Able to understand? So we are highlighting the emphasis of, we are using emphasis to highlight important matters that are presented or disclosed in financial statements. The manner of presentation. Now look at this manner of presentation. This itself can be asked as a straight question. Manner of presentation. This has asked many times in past also. 4 marks question or 6 marks question. So how will you present this emphasis? Include the paragraph in a separate section of the audit report with a heading that includes the term emphasis. Now here they may give you a true or false statement which was given in the last attempt or that before attempt. Okay. When auditor is using emphasis of matter paragraph, it need not be included in a separate section. It need not be included in a separate section. False. Emphasis of matter para, other matter para, key audit matter, going concern, all these paragraphs we should mention as a separate section in the audit report. How for opinion you are giving side heading and keeping as a section, how basis for opinion, side heading and all you gave, same way emphasis of matter also, it should be covered as a separate section within the audit report. Now express the matter being emphasized. Express it. Give reference to such matter. Air India, we draw your attention to note number 29. Also state that your opinion is not modified in respect of the matter emphasized. Air India, they have given at the end of the matters, our opinion is not modified. Yes or no? And remember, emphasis of matter paragraph is not a substitute for modified opinion. Not a substitute for disclosures in financials as per framework. Suppose if a company has to disclose something in the financials as per framework, if they do not disclose, you have to give a qualified opinion or adverse opinion. Don't say that I will disclose it in emphasis of matter paragraph. Company missed a point. No, I'll disclose it. No. Getting it? Reporting as per 570 when material uncertainty is there. So if any material uncertainty is there as per 570, that you need to report separately as per 570. Emphasis is not a substitute for 570 reporting. Sir, what is 570 reporting? We'll discuss later. Okay. Now, so that's emphasis of matter paragraph. Now, when I can use this emphasis of matter paragraph, you can use only when you are not required to modify the opinion on that matter. On that matter, you don't have to modify the opinion. You don't have to modify the opinion on that matter means that matter is appropriately presented and disclosed. Getting the point? That matter is presented and disclosed appropriately. And it is not decided as a key audit matter. If at all you are already discussing it under key audit matter, fine. Why should once again emphasize it? Duplication, right? Yes or no? If at all you are already covering it as a key audit matter, why you are emphasizing? Anyhow, you are covering in key audit matter. Anyhow, you refer once again anyhow about that point. Don't refer it. Duplication we should be avoiding. So that is the purpose. Getting it? Now examples. They'll give you like this question. Write about usage of emphasis of matter paragraph and give few examples. You have to write only these examples. Don't write your own examples. Okay? Because remember, person who is valuing your paper is dumb. He doesn't know anything. Obviously, no, he don't know anything. Okay, so he just compares the suggested answer and value your paper. Most of them are retired people are also there. So uncertainty related to litigation. Major catastrophe that occurred which have an effect on the financial position. Some subsequent event that occur between the date of financials and date of audit report. Early application of some new accounting. Actually, we are not liable. Our company is not liable for some Ind AS, but we are applying Ind AS to us. Getting it? So examples, only these examples, any 2 examples you have to quote. These examples only you quote, don't quote some other example. Then what is other matter paragraph? Understood all of you emphasis of matter? Then what is other matter paragraph? Look at the definition clearly. Other matter paragraph is a paragraph included in auditor's report that refers to a matter other than those presented or disclosed in financials. Other matter paragraph is not talking about those presented or disclosed in financials. Those presented or disclosed in financials is already addressed by emphasis of matter paragraph. Other matter paragraph is not talking about that. In auditor's judgment, relevant to users' understanding of audit. See, if I have to make the users understand the financials better, emphasis I will highlight important points. If I have to make the users understand about audit, audit report, auditor responsibilities. If I have to make them understand about audit report, auditor responsibilities, then where I can talk about my audit report and audit responsibilities, other matter paragraph. Example, so and so auditing standard 501. In case of inventory lying with third party, I should get an external confirmation, but I did not get external confirmation. I deviated from standard. Why I deviated from standard, how I achieved the objective of that standard, about this audit, getting it? I can talk in other matter paragraph. In other matter paragraph, I will tell, as per SA 501, when the inventory is in custody of third party, we are supposed to get evidence like this, but we did not get like this. We went through another alternative way. Why we went through alternative way, all that I described. Other matter paragraph you can use there. Are you getting the point? 2. I can talk about in other matter paragraph about auditor's report. What is it? Auditor's report. For example, you take joint audit. I'll cover joint audit standard briefly because it's an easy standard. Okay, only one topic I will read in joint audit. What is a joint audit? An audit is performed by 2 or more than 2 auditors, not 2 or more than 2 partners. Getting it? When I say auditor means the firm itself completely. When 2 or more than 2 different audit firms were appointed, these different firms might be, one might be a sole proprietor, another might be a partnership firm. So, or both of them are partnership firm, or both of them are sole proprietors. So 2 firms, different firms having different firm registration numbers. Getting it? When 2 or more than 2 firms were appointed to conduct audit of the entity or audit of a component. Getting the point? Whether the entity or branch, whatever. But for that scope, 2 or more than 2 auditors were appointed. Same scope of work. Getting the point? For the entity financial statements, me and another auditor and another auditor, 3 auditors were appointed. So we all have to do audit of the entire financials and give an audit report. So this is called as joint audit. When joint audit is there, how joint auditors will perform the audit? Like first joint auditor 1 will go and do audit all that and come back and give audit report. Then joint auditor will 2 go and he will also do entire audit and come back and give report. Joint auditor 3 will go and he will also do audit, come back and give report. No, not this. All 3 joint auditors together have to do audit. When joint auditors were appointed, they have to do audits. They understand why joint audit is. First of all, is it compulsory in any law that joint audit is compulsory? For banks alone, RBI guidelines says if a bank asset size is 15,000 crore and above, minimum 4 joint auditors must be appointed. Minimum 4 joint auditors must be appointed. And maximum joint auditors for a bank cannot exceed 12. What? 12. State Bank of India, you see. Getting it? State Bank of India is a company registered under SBI Act itself. Getting it? So State Bank of India Limited, you see, it has 12 joint auditors. It has 12 joint auditors. Punjab National Bank has 5 joint auditors. Reliance Industries Limited has 2 joint auditors. Getting the point? Now, why joint auditors? When the volume of audit work is so high, one audit firm cannot fulfill the duty properly. If the company feels that, then they will appoint multiple auditors. Same scope, same balance sheet, same P&L, all of you have to audit. Now, when multiple auditors were appointed, because the work is high. So what we should do? We should split the work and do. How we should do in case of joint audit the work? Joint auditors have to split the work and do. Getting it? Like now, what is the responsibility of the joint auditor? This is one major question in the joint audit which is important. Now, joint auditors generally divide the work and then do. Getting it? How they divide the work? Either based on geographical locations. Suppose if a company is having across India branches. So you do north branch, I do south branches. So 1. 2. Based on time frame. You do first 6 months audit, I do next 6 months audit. Based on items of financials. You do revenue and assets, I do expense and liability audit. Based on identifiable units. Another one is what? Based on identify. You do branch A, branch B, branch C, or you do division A, division B, division C audit. I will do division D, division E, division F audit. Are you getting the point? Any other suitable parameter. So joint auditors, they divide the work among themselves and then do. Now, suppose no, I am doing revenue and asset audit. You are doing expense and liability audit. Whether you did your audit properly or not, whether I did my audit properly or not, do we need to cross verify each other? No. The standard clearly says, standard says each joint auditor can rely upon other joint auditors work. Come on, they are also chartered accountants, you are also chartered accountant. If they do not do if they do not deliver their duty properly, they are punishable later. Okay, they are punishable later if it is found guilty. Getting it? You do your duty properly. You need not verify the work of other auditor. But the point is, there are some works which we cannot divide. Suppose balance sheet P&L notes, before signing we should read, right? All of you. Hey, you read note number first page to 45th page. I will read 46th page to 90th page. Can I do like this? Because entire notes to accounts, balance sheet, P&L are connected. Every point is connected to every point. Here division is not possible. Reading the financial statements, whether the financials are as per applicable financial reporting framework, to verify this, auditors cannot divide the work. 2. In joint audit, do we give separate audit reports? No. Joint auditors, all of them together give a single audit report. SBI, 12 auditors signed a single audit report. Single audit report, all 12 auditors signed on that. I will show you SBI audit report. You see, this is SBI audit report. 12 auditors they are having. How many they are having? 12 auditors from different firms. Getting it? They have 12 auditors. 12 of them signed this single audit report. So what is the reporting requirements in case of joint audit? Joint auditors generally arrive common conclusion. I will show you the matter directly, I think better. Yes. So reporting, you see, joint auditors arrive common conclusions and express common opinion through a single audit report. Joint auditors are not bound by majority's opinion. Suppose in the area of work what I did, I found misstatements which are pervasive and I want to give adverse opinion because the mistakes as a whole in the financials are pervasive, and you are doing audit, you found no mistakes in your area, and there are 11 auditors who wanted to give unqualified opinion, whereas I wanted to give adverse opinion. Okay, and we disagreed with each other. What we should do? You are saying single audit report. In case of exceptional circumstances where disagreement is there between joint auditors, where one joint auditor want to give adverse opinion, whereas remaining want to give other than adverse opinion, then joint auditor can give a separate report by expressing his own opinion. Now, company is getting 2 audit reports on the same financials. One audit report talks about unqualified opinion or qualified. Another audit report says adverse opinion. Now, shareholders should believe which report? That's their choice. Like, when this auditor who gave adverse opinion, why he gave adverse opinion, he will mention the reason, right? In the basis for adverse opinion section, they will read the reason. If for them, if the reason appears pervasive and material, they will agree with him. Those of shit, okay, like not at all required, this reason and all idiot, why he highlighted all this? I will go with 11 auditors. If at all he felt that. Materiality and pervasiveness are both are relative. Understand? What I feel pervasive is different, what you feel pervasive is different. What I feel material is different, what you feel material is different. Agreed or not? So, if shareholders felt the person who gave adverse opinion is so adamant, so conservative, auditors are also various types, right? Some auditors are aggressive in decision making, some are conservative, some are mediocres. Getting it? Somebody in a 5 crore mistake and all, why to qualify? Unqualified. Somebody, hey, 5 crore mistake, adverse opinion. Yes or no? It depends upon the risk appetite, risk perception. Able to understand. So anyhow, whatever opinion you give reason. That reason people read and they will decide which opinion there. You need not take that headache. Next. Now multiple reports are there, right? Suppose what if shareholder opened only one report, he don't know about other report also. So that's why in other matter paragraph, we should cross-reference other auditors' report. Dear shareholder, one of the auditors of the 12 joint auditors have given a separate audit report with a separate opinion. Kindly read that audit report also. Like this, cross-referencing should be there in both the audit reports. So in such a case, each joint auditor shall refer about other joint auditors report in their audit report, where they will refer other matter paragraph. By the way, the standard itself says each joint auditor can rely upon the work of other auditor. They need not review the work of other auditor. Tell me, once you qualify CA, will you CA, I am CA, that's it. How much you know, how much I know, that and all irrelevant. Will you argue like this or not? Generally. Next. Now, so I told you division of responsibility, how they will do. And some areas where they will have common responsibilities. This itself can be asked as a 4 marks question. What are the areas where joint auditors generally have a combined responsibility, where the work is not divided on any particular area? Opening balance verification, the work is not divided. All of them have to verify. Then opening balance, if some mistake happened tomorrow, all of them are answerable to that mistake. And decisions taken by all of them on a particular matter, or matter brought to the notice of all joint auditors. Some situation is there, some issue is there, everybody knows that. And proof is also there that everybody knows that. In spite of this, none of them reacted. Everyone is responsible. And for verifying financials, whether they are as per applicable statute or not, everyone is responsible. Verifying presentation as per applicable framework, everyone is responsible. And all of them are giving common audit report, right? Whether the audit report is as per the format recommended by SA 700 or not, who are responsible? All of them are responsible for ensuring that audit report comply with the relevant auditing standard and statute. All of them are responsible. Understood or not? Now, in joint audit, what are special considerations? Special considerations, nothing. Generally, if I'm the only auditor, while planning the audit, no, me and my office team members, if at all, we sit enough. But it's a joint audit. All engagement partners from all firms, all engagement team members, important team members from all firms, all of them should discuss and develop the plan, yes or no? Because they need to divide the area, right? They need to discuss mutually and divide the works. Now, can they divide abruptly, like without consulting other joint auditor? No. All joint auditors, the engagement partner and engagement team of each one should be involved in planning. They should establish jointly overall audit strategy. Getting it? Now they should, before commencing, all joint auditors should develop a joint audit plan. They may ask you only this third question on 4 marks question. So joint auditors should develop a joint audit plan. What points they will consider? In that division of areas, what? Common areas, what? What is reporting objectives? What are the important factors? What are preliminary engagement activities? What is the nature, timing and extent of resources necessary? You know, this discussion, mainly preliminary engagement activity means what? Reporting objectives means what? These terms are related to audit strategy chapter. There we will be discussing in depth. I know we are not planned this initially, but if at all time permits, I will discuss. Okay, next. Each joint auditor shall do risk assessment. Everyone shall do risk assessment. And everyone should document plans, audit plans for common areas, audit plan for specific areas. And they should give common engagement letter, get a common representation letter. All of them will give a common engagement letter to the company and get a common representation letter from the company. What is representation letter? 580 standard I will discuss. Getting it? Work allocation between joint auditors. The work allocation, entire completely allocation is there, right? Take a printout. Every joint auditor should sign. And how many printouts you will take? N plus 1. Getting it? Joint auditors 12, right? 13 printouts you take. 1 give it to the company. Tomorrow if company got investigation, some investigation is going on. They called so and so auditor. Which auditor they will call? Sir, whoever have done purchases work, they have to. Purchases work as per the plan, so and so auditor has done. So company directly will call them. So a plan, allocation, work allocation plan should also be given to the entity. So they should be documented and signed by auditor and shall be communicated to those charged with governance. Work allocation should also be communicated to the top management. Clear? Over joint audit. So simple, right? Next. Now other matter paragraph. Now other matter paragraph is used for what purpose? So other than information presented or disclosed in financials, if you want to talk about that in the audit report, like audit responsibility, you know, audit responsibility or audit report. 3 terms were there. Regarding audit, I told standards deviation. Regarding audit report, joint auditor, I told auditor responsibility. You know, briefly, I'll give you this example, SBI example. Brief example, I'll give such a beautiful example. Okay, SBI, no. Quickly, I'll conclude this topic. Okay, SBI Limited. I think probably after this, we will be left with the key audit matter discussion, going concern discussion, and reporting requirements, CARO. That's it. So probably after this, another 1.5 hours, we'll be finishing this standard. Now, SBI Limited, no. It has one subsidiary company called SBI Life Insurance. SBI Life Insurance Limited. SBI Limited is having one subsidiary called SBI Life Insurance Limited. Now SBI, since it has subsidiary, they have to prepare standalone financials, consolidated financials. Now SBI Limited is having an auditor. Yes or no? Let us call him as Mr. H. He's a holding company auditor, so let's name it as H. SBI Limited is a subsidiary company of SBI, right? SBI Limited is having an auditor called Mr. Yes. Getting it? Now SBI Limited, no, it is having more than 25,000 branches across India, or maybe 23, 24,000. I don't know exact number, but more than 20,000 branches they have across India. How many branches? 20,000 branches. Out of that, 16,000 branches were not audited. 5,000 branches approximately were audited. Within these 5,000 branches, in Chennai, Mylapore, there is a State Bank of India Limited. One branch is there. This is being audited by Mr. B, who is only branch auditor. Mr. B is who? Branch auditor of SBI. Getting it? Now, like Mr. B, for SBI, how many branch auditors they have? Some 5,000 branch auditors they have. Branch auditor responsibility is what? Doing branch audit financials, audit of branch financials, and give an audit report on the branch financial statements. Now all these branch related audit financial statements, branch auditors report and all will be given to whom? Main auditors. Whom? Main auditor. We call him as principal auditor. We call him as what? Principal auditor. Who is the principal auditor in our example? Mr. H, holding company auditor. Nothing but. By the way, from branch point of view, it's a head office. From subsidiary point of view, it's a holding company. Able to understand? From whose point of view? It's a head office, branch point of view. Now, branch financials, head office financials together we consolidate, right? That financials are called as what? Very good. Standalone financials. Standalone financials are nothing but head office plus branches all put together. Consolidated financials are what? You are doing standalone, right? That standalone financials of holding plus standalone financials of subsidiaries, standalone financials of associate and joint ventures, if you consolidate, that's a consolidated. Consolidated financials or financials consolidation of different entities. Standalone financials are consolidation of within the entity different divisions and branches. Understood or not? Now, auditor Mr. H, SBI Limited, he should give opinion on what? He should give opinion on standalone financials of SBI, consolidated financials of SBI. On both he should give opinion, correct? But Mr. H, he only did audit of head office. He didn't do audit of branches. Branch financial information he also don't know whether it is right or wrong. But Mr. H is saying standalone financials are true and fair. Why? Branch auditors said they are true and fair. Now my audit report you are trusting, right? Same way branch auditors report also I am trusting. So branch auditors, they have audited all the branches and they said true and fair, unqualified opinion. So as the whole company point of view also I am giving unqualified opinion. Suppose branch auditor gave adverse opinion on one branch. Should I give adverse opinion on the overall company also? Maybe at branch level that is pervasive. Same mistake I will evaluate from total company point of view. If overall company point of view also that mistake is material and pervasive, then I will also give adverse opinion. But I felt overall company point of view, branch auditors, so some of them gave adverse opinion, qualified opinion, all that. But they are all negligible. As a whole entity point of view, they are negligible. So I ignored that. I gave which opinion? Unqualified opinion. Now, tomorrow, ultimately you see, State Bank of India, you saw right now report, only 12 joint auditors names were only written on that. But tell me, entire audit of State Bank of India, is it performed by only these 12 joint auditors? No, there are unidentified, unknown, 5,000 branch auditors were also there, whose reports were taken by principal auditors and they used these audit reports and gave their opinion on the overall financials. Correct? Tomorrow, if something went wrong in so and so branch, people immediately comes and questions us. Hey, what are you doing branch audit? I need to clarify. Hello, I am not branch auditor. I am principal auditor. I gave my opinion based on branch auditor's opinion. He said everything is true and fair, and so I am taking his opinion and I am giving true and fair opinion. Why are you blaming me? Am I liable to verify branch auditors every financials also? If at all I have to verify, why branch auditor then? Are you getting it? Branch auditors are also chartered accountants holding COP. They are equally competent like me. For them also auditing standards apply. For me, what are all rules and regulations apply? For them also everything applies. Just that, since as a person, I cannot cover everything. We have a branch auditor separately. Are you clear? So now there is a division of responsibility on the financial information which is certified. Correct? whatever financials of entire SBI that we attested, that we signed, we have to tell people, yes, I am only signed, but I signed this entire balance sheet P&L, which includes financial information of 20,000 components, which are audited by other auditors. Getting the point? To that extent, to that number, to that extent of numbers, my opinion is purely based on their opinion. Correct or not? My opinion is purely based on their opinion. As a whole, whatever they told, that only I consolidated and applied my judgment and I gave my opinion. If something went wrong in the branch tomorrow, you can question me. I will reply, but don't blame me because I am not responsible. Now I should talk about this responsibility, right? I should tell this situation, right? Such a severe situation. State Bank of India auditors told the same in other matter paragraph. See, other matter paragraph, what they have mentioned is, look, shareholders, we did not audit 5,753 branches whose total asset value 21 lakh crore, whose turnover is 1.3 lakh crore. Okay, you didn't audit. Then how come you gave opinion? Wait. These financial statements have been audited by branch auditors whose reports have been given to us, and our opinion as far as related to these amounts are purely based on, solely on the basis of branch audit report. By the way, I'm not complaining here anything. My opinion is not modified. I'm not complaining anything here. I'm just bringing you the fact that 21 lakh crore worth of assets. See, balance sheet, no, I signed it, 30 lakh crore is the total asset value. 21 lakh crore worth of assets I didn't audit. Somebody else have audited. I'm mentioning that in my main audit report because branch audit report is not publicly distributed. Only main audit report is publicly distributed. Able to understand? Got clarity or not? That's it. So that is other matter paragraph reporting requirement. Now here we have newly added content related to branch audit. I will just open that and discuss. Audit of branch accounts. See, audit of branch accounts. By the way, same way, one more thing. I will give audit report on consolidated financials, right? Consolidated financials is a result of holding company plus subsidiary. You know, Tata Sons. There is a company called Tata Sons, or else take Reliance itself. Reliance Industries Limited. It is opened. I'll show you right now. I'll show you Reliance Industries Limited. Consolidation. You will be solving consolidation problems, right? So tough, right? RIL annual report I'm downloading. Okay, or else I'll tell you the impact itself. I'll tell you. You know, in RIL, no, in Reliance Industries, no, in consolidated financial statements, auditor will give audit report, right? In that audit report, no, auditor will mention. By the way, consolidated financials, they are consolidation of the main company and all subsidiary companies together. But subsidiary companies were audited, may not be by this auditor, right? Subsidiary companies are audited by different auditors. Reliance main auditors. In the audit report given on consolidated financials, inside that other matter paragraph, what they mentioned, you know, we did not audit 285 subsidiary companies, 170 associate companies, 65 joint ventures. They mentioned that these companies were audited by other auditors whose report is given to us, and our opinion on the above consolidated financial statement is solely based upon the opinion given by these component auditors. Understood or not? Now you see the definition of component here. You see here they have given SA 600 contains a slightly gave who is principal auditor, who is other auditor, what is a component. You know, generally from standalone financial statements point of view, what is a component? Division or branch is a component for standalone financials. For consolidated financials, what is component? Subsidiary, joint venture, associated enterprise. So component means a division, branch, subsidiary, joint venture, associated or other entity whose financial information is included in financial information audited by principal auditor. If principal auditor is auditing financial statements, right, in that other entity, other component financials are included, right? So that is called as, what we are including is called as component. Now they're using 5 words. Component means all these 5. Now out of them, these 2 are talking about standalone financials, whereas these 3 are talking about consolidated financials perspective. I don't know how many of you have read this point and understood the difference here. Getting it? So component can be a branch or division for standalone financials. Component can be a subsidiary company, associate or joint venture or any other entity for the consolidated. These financial information is included in financial information audited by principal auditor. Able to understand? Now who is a other auditor? Other auditor is an auditor other than principal auditor, who has responsibility to report on component, whose information is included in financial information audited by principal. Principal auditor is an auditor responsibility for reporting of an entity. You see, principal auditor means entity auditor, not component auditor. Getting it? When financial information includes, principal auditor is auditing balance sheet, right? That includes balance sheets data of components audited by other auditor. So because of SA 600 requirement, in other matter paragraph, we should clearly mention that to the extent of components included in standalone financials, to the extent of components included in consolidated financials, the audit was performed by other auditors. Their reports are given to us. As a whole, considering all that report and my audit of these main entity, my opinion is given. Like this you are mentioning in other matter paragraph. Got it? Understood? You have to read later on. Then, by the way, who can be appointed as a branch auditor? I'll just finish this. Branch auditor can be appointed by the auditor appointed. Branch, by the way, who can do branch audit of a company? Main auditor himself can do. Or we can appoint another qualified person. Suppose if the branch is outside India, main auditor only, we can send him to do audit. Or we can send another chartered accountant. Or if the branch is outside India, there also some certified public accountants, competent people will be there. Na? So by any other person duly qualified to act as an auditor of the accounts as per the laws of that country. Remember, audit is a universal subject. Audit is a universal subject. Auditing standards that we are following are internationally same. Getting it? So at the end of the day, whether I am auditor of a US company, whether I am an auditor of Europe company, every company prepare financials as per so and so framework. I have to verify whether they prepared as per so and so framework and give an opinion. That's it. Clear? Now, branch accounts related discussion is also there, but let me not hurry up. So we'll discuss this in the next session and then finish it up. Okay? Are you comfortable until now? So what else we are having pending is 710 comparatives. One thing is pending. 701 key audit matter is pending, and branch accounts discussion is slightly pending. Then finally I will discuss with CARO. Over. This chapter will be over. Another 1.5 hour probably will be over. Clear? In CARO also I will not discuss each and every clause. Important clauses I will be covering. Okay, that's it. So let's resume with the next session. In the previous session, we have been discussing the branch accounts and branch audit topic. First of all, understand, branch audit is not compulsory. Branch accounts is also not compulsory, technically speaking. If you look at the Companies Act also, even there is no compulsion that branch has to be audited by a separate auditor. First of all, an organization is not necessarily required to establish a branch. Are you getting the point? So, suppose you take Avenue Supermarts itself, D-Mart itself you take. They have stores across India, but their accounting is happening centralizedly at their corporate office only. They don't have accounts at branches separately. Getting it? But contrary, you take banks. They have, especially public sector banks, not even private sector. For public sector banks, accounts are maintained at branches separately again. Now, in case of banks, branch audit is popular only for public sector banks. Like HDFC, ICICI, these are all private sector, right? Their branch audit concept is not there. Because in ICICI, HDFC, all these private banks, the accounting happens centralized. Whereas in public sector banks, accounting happens at then and there, at branch level itself. If A branch is maintaining separate books of accounts, it's for its own operations. Then only the concept of branch audit arises. If at all entire accounting records are maintained at single, like head office itself, corporate office itself, there is no need of separate branch auditor again. Consolidated accounts are available at head office itself. So, first of all, having a branch itself is not compulsory for lawmen from law point of view. For business convenience point of view, we open branches. But legally, is there any requirement that we have to open the branches? No. Same way, okay, if I open a branch, should I maintain separate books of accounts for branches? Is there any compulsion? No, that is also no compulsion. Suppose if an entity has opened a branch and has maintaining separate books of accounts, that branch books of accounts audit can be conducted by whom? Main auditor himself. If in the absence of any specific appointment for branches, the company auditor himself can do the audit of branch. Or if you want to have a separate auditor for branch, another chartered accountant having COP can be appointed. Suppose if the branch is outside India, any of them, either the company auditor, principal auditor can do the audit, or branch auditor, we can send a separate chartered accountant, another chartered accountant to do the audit, or we can appoint an auditor as per the laws of that nation. Getting it? So any of them can be appointed as a branch auditor. Now when a branch auditor has been appointed, the principal auditor, the main auditor of the company, has to use the work of branch auditor. We call him as, we have a standard called SA 600, using the work of other auditor. We don't have in-depth discussion on that. We only have a brief discussion on that. So what it says, when accounts of the branch are audited by a person other than company auditor, there is a need for clear understanding of role of the other auditor. So you need to understand what is the role of the other auditor. Role means what is his scope. Getting it? Now, what are the reporting requirements for branch auditor? First of all, if you ask me, same reporting requirements what main auditor of the company has, same reporting requirements, but on a branch level. Like for example, we all know CARO reporting requirement. Suppose if CARO is applicable for the company, public company, naturally for the branch also CARO is applicable. So the branch auditor should also comment on those 21 clauses. Getting it? But those clauses he will check from perspective of the branch. Able to understand? So he will not be checking it from the perspective of the company. So that's the only difference. Only the scope of coverage is different. But the rights and duties of branch auditor and main auditor, the powers, the formalities, engagement letter, representation, documentation, evidence collection, everything, reporting, everything will be same for both of them. But when a company auditor is considering materiality, right? Main auditor, he will consider materiality from whole company point of view, entity point of view, whole complete point of view. Whereas a branch level auditor, he considers materiality at a branch level only. Getting it? Suppose if a branch turnover is 10,000 crore and the company turnover is 10 lakh crore. Getting it? Now, branch auditor will decide materiality based on 10,000 crore. Whereas company total turnover including all branches put together is 10 lakh crore. The company auditor will decide materiality based on 10 lakh crore. Understood? So therefore, there is a great necessity for proper rapport between the main auditor and branch auditor. So when using the work of other auditor, the principal auditor should ordinarily perform the following procedures. This itself can be asked as a 4 marks question. So how principal auditor can use the work of other auditor? What are the audit procedures the principal auditor will do? What audit procedures the principal auditor will cover while using the work of branch auditor? So here what work, like we need to, whenever we were appointed as a main auditor, and when we know that for branches of the entity, for components of the entity, separate auditors were appointed, at the end of the conclusion of my audit, I have to give opinion on the overall financials, which includes branch financial information, which is audited by branch auditors. So if that is the scenario, if that is the situation, principal auditor should advise the other auditor how his work is going to be used. Make sufficient arrangement for coordination at the planning stage itself. So at the planning stage of audit itself, you should advise, you should have an interaction with all the branch auditors. Of course, we will not have a direct Zoom or Google Meet interaction and all. We will send them certain checklist. As a principal auditor, as part of my audit procedure, with respect to branches, I will send certain checklist items, questionnaires I will be sending to branch auditors. Look, only if you finish the audit, I can finish my audit. Getting it? If at all branch auditor has not given the audit report, can I give my audit report? Is it possible? Obviously not. So I need to advise him, I need to advise him the timetable for completion of audit. So I need to advise him at the first, like what is the timetable within which we have to finish the audit. Look, this company is a listed company. They have to file with SEBI by May 31st itself, all the financial statements, everything audited. So we have to complete everything by May 10th at least. So if I have to complete audit by May 10th, you have to complete by April 30. So I need to advise them. Okay. And a principal auditor shall also advise branch auditors. See, this is a bank. Loans given is a very special area where so many NPAs were there. Getting it? I need to tell the bank, I do risk assessment, right? As a main auditor, I do risk assessment. Even as a branch auditor, you also do some risk assessment. And as a main auditor of the entity, I found certain risks at the entity level. At an overall company level, I found certain risks. Especially in the loans and advances given to various customers, there are so many special mention accounts. There are so many special mention accounts which are not turned into NPA. Special mention accounts means just a default started. 90 days is not yet completed. Generally, when a loan is given, when a loan is treated as NPA, if the amount on that is overdue by more than 90 days, then we call it as what? NPA. But the amount is just overdue. 90 days and all not yet arrived. We call them as special mention accounts. So when I interacted in my risk assessment process, when I spoke to the people, management, I found there are so many defaults from the customer. I need to tell all the branch auditors, look, NPA is a special focus in this area, in this particular entity. There are so many high level of NPAs that are there for this particular entity. So we all have to be very, very careful. So I need to advise the other auditor what special considerations. And I should also tell him what are the significant accounting areas that branch auditor should focus on. What are the significant auditing and reporting requirements I should focus on? They should focus on. And also I will also obtain representation as to compliance with them. Nothing but I will tell them, look, for this company where we are doing audit, CARO is applicable. All branch auditors also should give me CARO report. For this company, 143 subsection 3 checklist is also applicable. You should all do this 143 subsection 3. For this company, if at all any fraud is identified, less than 1 crore, we should report to Board of Directors Audit Committee. If it is more than 1 crore, we should report to central government. I should inform all the branch auditors. All these reporting requirements also I should communicate to branch auditors, because branch auditors may not aware of what are all the reporting requirements that are applicable for the entity. They may not aware of. That's it. Now, for not only that, principal auditor might discuss with other auditor or review a written summary of other auditor procedures. Whatever branch auditor has performed, right? If possible, I can review his workings. But remember, generally we don't do. SA 600 clearly says there is a clear division of responsibility between principal auditor and branch auditor. For the branch operations, for the branch audit related responsibility, the complete responsibility is with the branch auditor only. When any investigation went on further, they will only see one point. As principal auditor communicated with other auditor as per standard on auditing 600 or not, they'll check. They will check whether you have a proper coordination between you or not alone. They will check. If possible, the principal auditor may also wish to visit other auditor. Getting it? If at all he want to directly interact with any significant branch of the entity, he can visit directly other auditor. And by the way, how much, the nature, timing, extent of procedures will depend upon circumstances of the engagement and auditor's knowledge of competence of the other auditor. Like whether I will visit there, how much I will focus on branch auditor's work, how much I review their work, it all depends upon my understanding of their skill set. If at all I feel the branch auditor is a very competent guy, yes or no, if at all he knows everything good, very good, in my interaction I got very confidence that he'll do very well the work, I may not visit also. Getting the point? So I will directly take his report and then conclude my audit. What they have covered in entire this branch accounts and audit question. Getting it? Okay. Now you can read it, you will understand later on. Here they just I mean, they just spoke about books of accounts, all that. Books of accounts of branches also must be kept at registered office. But if it is not possible, if the books are maintained at branch, periodically, yes or no, the branch has to at least send a summary data of books of accounts to head office. So that is what they just mentioned. So every company has to maintain books of accounts on accrual basis. All that is what they spoke here. Clear? So now we understood other matter paragraph, where we understood SA 299 and we understood branch audit responsibility, where in the other matter paragraph auditor can talk about auditor's responsibility. Correct? That's it. So by the way, other matter paragraph will be included when it is not prohibited by law. Of course, there should not be any prohibition in law. In India, there is no such prohibition. There is no such prohibition in India on the other matter paragraph or emphasis of matter paragraph or any other paragraph. SA 701, if at all you decided it as a key audit matter, then also no need to communicate it under other matter paragraph. Able to understand. Now, I'll come back to this one. I'll come back to key audit matter now, or going concern point I'll cover. Going concern point I'll cover. Then I will discuss about key audit matter. Now you see, if you, I hope you're all clear on these things right now. So one is emphasis of matter paragraph, we understood clearly. Other matter paragraph, we understood. Responsibilities of management already we have seen. That is nothing but preconditions to audit, nothing but. Now let's look at material uncertainty related to going concern. It is actually there as part of fourth chapter. So we have a fourth chapter, right? In that 570 standard is there. So we'll go there. See, in the audit report, the paragraph is what? Material uncertainty related to going concern. This is one standard, very important. Every time a question is coming on this, either an MCQ or a true or false or a descriptive. Okay. So, see, going concern is a very important assumption which every company chooses. Of course, see, what is our responsibility? Simply, whether the financial statements that are prepared by the entity, whether they are true and fair or not. Yes or no? This is what our responsibility. We should obtain reasonable assurance whether the financial statements are true and fair. Now, in that financials, management has chosen one assumption that the financial statements are prepared based on going concern. Now, I should check as part of my audit whether the assumption used by the management is fair or not. When a management can use going concern assumption, only when they can continue the business successfully. Only when they can continue the business without any interruptions. Only then, only if they have that ability, they can use the going concern assumption. You know, there was a news yesterday or day before, Vodafone is going for extra funding. 45,000 crore funding they're going for extra. Getting a Vodafone. Already Vodafone, we know how struggling it is. Vodafone and Idea, in spite of their merger, still they are not able to perform. They are not able to compete with Jio and Airtel. Getting it? Now they are going for extra funding so that they can acquire more market share in 4G and 5G spectrum. Getting it? So they are going for it. Now, before, again, Air India also, if you see, before Tata acquires Air India was struggling a lot. They are having accumulated losses of 70,000 crore. Accumulated losses of how much? 70,000 crore. Net worth, if you see, it's actually negative. Net worth is how much? Negative. That is what accumulated losses is nothing but. See, if a company is getting profits, realized profits, that to realize the profit means what? You sold goods on credit and you recovered the money also. Suppose you sold goods on credit, you purchased for 10,000, I sold goods on 20,000 on credit completely. 10,000 rupees profit I have, but I have not realized it. Many companies are having unrealized profits. Getting it? What is realized profit is very important. For going concern, the most important principle that we check here is liquidity. The most important principle that we check is liquidity. So whether the entity has ability to continue as a going concern, that we need to check. Whether the organization whom we are doing audit, right? Do they have the ability to continue as a going concern? Can they continue the business? That we need to check. They will say, sir, we will continue the business. We can continue the business. We don't have any issues. They will claim all that. We should check whether their claim is correct or not. Whether their ability is correct or not. Is it possible or not? We should check. Getting it? So for that, no, what we will see is, first of all, tell me whose responsibility primarily to check going concern assumption? Management. They are responsible for going concern assessment. Management is responsible. So as on 31st March, nothing but reporting date. At every reporting date, the organization's management should assess themselves. Can our business sustain in this competition, in this so much of risk? Can we continue our business or not? So what are the problems that we are having? You know, in companies, no, they will have a committee, listed companies, especially risk management committee. The committee only duty is what, they try to identify the risks. What are the risks that the entity is facing? Business risks and all. Getting it? So they try to do continuous risk assessment. Or risk assessment is not something only auditor do. Risk assessment is something management also do. Our risk assessment objective is different. Their risk assessment objective is different. Their risk assessment objective is to continue the business. Whereas our risk assessment objective is to identify the areas where mistakes can happen. In the financial statements, ours is in the context of financial statements audit. Theirs in the context of continuity of the business. Getting it? So management has to do, they have to specifically assess. They have to specifically assess risk. So the preparation of financial statements requires management to assess entity's ability, even if the financial reporting framework does not include an explicit assessment to do so. Nothing but, see, some financial reporting frameworks, suppose you see schedule 3. Schedule 3 is silent on going concern checking. Even accounting standards are also silent. Whether accounting standard 1 says we must use going concern assumption for preparing financials. If we do not use, specifically we have to disclose. Beyond that, it is not talking. You see our financial reporting framework, it is silent on management has to check going concern ability. That point is not there in the financial reporting framework. Just because there is no explicit requirement, can we skip this? No. Whether there is an explicit requirement or not in the financial reporting framework, management has a moral responsibility to check whether going concern is possible. Remember, if going concern assumption is not possible, we have to show entire balance sheet values at net realizable value. We have to prepare balance sheet on liquidation basis. When you prepare balance sheet on a liquidated basis, it will not balance. It will not tally. Getting the point? In a double entry system, amounts will be equal, debit and credits. Total of debits equal to total of credits in a double entry system. Whereas once you start preparing financials on liquidation basis, getting it, you will either end up with the net result positive or net result which is negative. You either end up with these two when you prepare financial statements on liquidation basis. So see that this is the fact. This is the fact why we show fixed assets at historical cost. Why Ford Motors India, they showed fixed assets at cost basis even though they are making losses, because they don't want to close the business. So whatever amount they have invested, some 15,000 crore, 10,000 crore, they have invested in plant and machineries, factories. So they are depreciating on the 10,000 crore. Some 500 crore they depreciated. Again 500 crore they are depreciating every year. Some book value, carrying value of that plant and machinery factory, somewhere around 7,000 or 7,500 crore carrying value. But its net realizable value is not even 700 crore. Not even 10% of the carrying value. Getting the point? Then why are we showing at 7,000 crore when in the real market if you sell this, why are it not even fetch 10% of the value? Then why are we showing at 7,000 crore? Who the hell are selling? I am not selling it. No. You are not selling the factory means what are you trying to do? I want to continue the factory. I want to run the business. I want to manufacture cars and sell the cars and recover more than 7,000 crores. Correct? You all have impairment loss standard. This is what in impairment they tell, right? What is impairment loss? Carrying value minus recoverable value. Yes or no? If recoverable value is more than carrying value, no impairment. If recoverable value is less than carrying value, then there is an impairment. Yes or no? By using the fixed assets, I should be able to generate more than carrying value. You see in my balance sheet, fixed asset value 7,000 crore. If I today sell it 700 crore only, but I'm not selling it, right? If I have to sell it, I am concerned about how much I will realize. But I don't have the intention to sell it. So what is important, by using this asset, how much cash flows I can generate in the near future, in the next 10 years or next 7 years, that I will discount it to the present. Getting it? And see the recoverable value, present value of discounted cash flow. This is a technique you use in impairment. So impairment is not there. Now you know, Ford has reached in such a stage that they are not able to sell at least 100 cars in a month. Where other companies, you see other companies, they are selling at least 5,000 cars, 10,000 cars. Maruti Suzuki is selling every year, every month 10 to 15 lakh cars. They are selling, 1 to 1.5 lakh cars. Every month they are selling 1.5 lakh cars, Maruti Suzuki. Whereas Ford is not able to sell at least 200, 300 cars also. How will you pay salary? So it clearly shows you cannot generate money by using these assets. You cannot generate money by using these assets. You should not show them at historical cost. Your going concern is affected. Management has to do this assessment. Every year they have to do the assessment. Now, by the way, going concern means obviously assessment is about past or future. Obviously future. How long? For future means for how many years? From the reporting date, at least 1 year is enough. From the balance sheet date, next 1 year you check. From the balance sheet date, within next 1 year, nothing but from balance sheet date exactly 12 months. Okay, whether within this 12 months, whatever company liabilities were there, right? Can the company repay? Just we have to check that. If at all company can repay, if the company can repay, yes, company going concern is good. This is what we assume. Suppose if the company cannot repay, we assume that going concern is inappropriate. We assume that going concern is inappropriate. Within the next 12 months, the obligations which the company has, they cannot repay. How you are repaying, I don't bother. Whether you will take extra loan, whether you will raise funding from shareholders, whether you get some foreign funding, that and all, I don't bother. Next 12 months, you have 100 crore liability. Can you repay it or not only, I will see. Whether you borrow from so-and-so party, whether you borrow from your relative, whether you borrow from holding company, whether you borrow from subsidiary company, whether you borrow from bank, how will you bring the money and repay? I am not thinking about that. I am only concerned about can you repay or not. The moment you start defaulting, like people may, file a case against the company, insolvency, bankruptcy code and all comes into picture. Insolvency proceedings will start. Where will you do the business? If you default, you will stop doing the business. Yes or no? So management assessment about going concern involves inherent uncertain future outcomes. They have to assess the future outcomes. Getting it? So they need to consider what is the degree of associated outcome of an event. Like what is the possibility that the company will fail? What is the size and complexity of the company? Nature and condition of the business. Condition of the business is what is the status of the business? Any judgment about future is based on information available at time when the judgment is made. Obviously, see, today when I say going concern is possible, I am telling it today because based on the information available today, I am saying future it is going concern is possible. This information might change later on. So this question can be asked. The second point is there, right? This itself can be asked as a straight question. Management's assessment about entity's ability to continue as a going concern involves making judgments at a particular point in time about inherently uncertain futures. What are the factors that are relevant regarding these judgments? What factors are relevant? So management considers uncertainty, degree of uncertainty of the future outcomes, size and complexity of the entity. Actually, this itself can be taken as separate point. Nature and condition of the business and the degree to which it is affected by external factors. And remember, any judgment about future is based on information at the time when the judgment is made. And objective is not required. So what is auditor responsibility? We have to obtain evidence regarding appropriateness of management's use of going concern basis. So every company will prepare financials based on going concern. As an auditor, we should get evidence on whether this assumption used by management, is it appropriate or not. Only to that extent. Our objective is to get evidence whether they used going concern assumption, right? Is it fine? Is it possible? Is it fine? You should have documentation. If you do not have documentation, you can't. How will you prove that going concern is possible? So you should have documentation. What you will document, what audit procedures we will do, right? I'll show you. We will try to see indicators. We will try to check indicators whether the company is having any of these symptoms. Going concern is affected. Suppose if a company going concern is affected, how going concern is affected, symptoms you will find. See, remember, indicators, does it mean company will shut down the business? No. Indicators will only give you an idea that company's ability is affected. Okay, so the following are the factors that cast a significant doubt on entity's ability to continue as a going concern. Remember this sentence. Events or conditions that cast significant doubt on entity's ability to continue as a going concern. Getting it? So the factors are various. It may be due to financial issues, it may be due to operational issues, or it may be due to other issues. For example, non-compliance with capital, non-compliance with regulatory requirements such as solvency or liquidity requirements for financial institutions. Paytm has been failed to comply with RBI requirements. RBI is regulatory for Paytm. So Paytm failed to comply with RBI requirements, and that's why the Paytm banks, which is a separate entity, the license has been cancelled. Getting the point? So if you fail to comply with regulatory requirements, it affects your business. It suddenly stops your business. Regulatory suddenly cancels your business. Look at Yes Bank 3-4 years ago. What happened with Yes Bank? Look at with Punjab National Bank. Getting it? Of course, Punjab National Bank is of a different issue again. That's not a regulatory related issue. That's a fraud. Punjab National Bank, it's a fraud happened. Getting it? Pending legal proceedings against the entity. If successful, the company cannot pay. Vodafone, they still have to pay 50,000 crore worth of amount to Telecom Regulatory Authority of India. 50,000 crore worth of amount. Suddenly, Telecom Regulator says, I will not give installment, you have to pay. Vodafone have to. They have to sell their complete company to somebody and then get the money and then pay. Change in law, regulation or government policy that adversely affects the business. Sudden changes in government policy. Suppose if the government comes up with certain notifications regarding some education institutes. Getting it? So suddenly some universities and all may have to stop functioning. Uninsured or underinsured catastrophe. Suppose if at all some catastrophe happened and you don't have proper insurance for the machinery. Getting it? That is another reason why your going concern might affect. Next, operating conditions. So some operating indicators will also be there. Like if an entity's going concern is affected. An entity is going concern. Why company cannot continue the business? Because management itself want to close the business. Management intends to liquidate, or loss of key management without replacement. Generally in stock markets, if you see, suddenly if a listed company owner, he died. The shares and all, plunge like anything, like they just fall down. Of course, they recover again later. But if at all the company could not find a proper replacement for the main, whoever the CEO, very difficult for the company to survive. Loss of major market, loss of key customer, loss of franchise, loss of license, loss of supplier. Right now, Vodafone is not able to compete with others because they don't have 5G license. Loss of license, that's nothing but. Loss of suppliers, lack of suppliers. One more important thing is lack of suppliers. Today, cars waiting period, mobiles waiting period, manufacturing and all affected badly because of semiconductor shortage. Getting it? And that's why India want to promote semiconductor manufacturing. Labor difficulties, labor strikes, shortage of important supplies, highly successful competitors suddenly emerged. Our company going concern is affected badly. Financial indicators, net liability position, borrowings are approaching maturity without any prospects of renewal or repayment. Like I have to pay, next month I have to pay some loan, but I don't have money in my bank. Getting it? Going concern might affect. Withdrawal of financial support by creditors, adverse key ratios, discontinuance of dividends because of lack of funds. A company stopped paying dividend because of funds issue. Inability to pay creditors on due date. Inability to obtain finance for the new product or development of any other investment. Getting it? Suppose I want to launch a new product, but I'm not able to find any, funding. Many startups, they died in the initial stage itself because of lack of funding. Even though they have a very innovative product. That's why today sharks, show is popular. Popular. Yes or no? They give funding and they're also advertising. Both. So these are the conditions that will cast a significant doubt on going concern. Now you see, write about risk assessment procedure. Now I showed the list, right? There the question can be asked in the way, what are the financial indicators? Getting it? Regarding entity's ability to continue as a going concern. What are the operating indicators? Anyway, they can ask a descriptive, or they can ask an MCQ. Which of the following is not a financial indicator? Which of the following is not an operating indicator? Like that they'll ask you, MCQs. Getting it? Now, auditors should also do risk assessment procedure related to going concern. First, auditor has to check whether management has already performed. Whether management, because it is primarily whose responsibility? Management. Management has to do going concern risk assessment. They must have a formal system. In listed companies, it will be there. In listed companies, risk management committee will be there. They do all this. So whether management has a formal system to continue their ability to verify, to evaluate their ability to continue as a going concern. If such an assessment is performed, just to discuss the assessment with management. See, ask them, sir, have you identified any events? Have you identified any condition that may cast significant doubt on entity's ability to continue as a going concern? If so, if at all management identified some symptoms, how management is addressing them? How management is answering? How the management is resolving them? Suppose if management has not performed, that assessment, but still they are using going concern basis. On what basis you are using? See, if you do an assessment, whether I can continue the business or not, if you do the assessment and based upon that you got a positive result and then you are continuing the business, fine, it is correct. But if you have not done the assessment at all, without doing the assessment, how come you choose an going concern assumption? Ask them. The auditor also shall remain alert throughout the audit. Throughout the audit, be alert to identify any event, to identify any condition, to identify any symptom, indicator that may cast a significant doubt on the entity's ability to continue as a going concern. This itself can be asked as a straight question. What are the write about risk assessment procedure related to going concern? They'll ask you this. Now, management, they have to do a detailed analysis of going concern. Generally, they have to do a detailed analysis of going concern. Suppose look at Jio, Reliance company. They are having super profits. Their turnover is super. They are consistently getting revenue, no marketing, nothing. They are also not doing much of marketing. They don't put any advertisements and all. So it's just word of mouth. The company is able to sell so many products, so many services just based on word of mouth. Getting it? Now you see, suppose when there is a history of profitable operations, ready access to financial resources, management makes its assessment without detailed analysis. In such a case, evaluation may be made without detailed procedures if auditor's other procedures enable the auditor to conclude management's going concern use is appropriate. Like Reliance, if at all I'm doing audit of Reliance, example. Reliance has a very readily available so much of profit. Just like that, they'll get loans if at all they want. Now, going concern issue itself is not there. So management did not perform detailed analysis. I will also not perform detailed procedure because it is ready completely. If at all, based on my understanding of the overall entity, if I got to know that company is very stable, I may assume that company's going concern assumption is proper. Getting it? Whereas in other circumstance means what here? If at all company is not having profits, if the company is not having ready accessibility to finance, suddenly if they want 5,000 crore, they can't get. Getting it? Evaluate management assessment may include an evaluation of process followed to make its assessment, assumptions on which assessment is based, whether management plans are feasible, all this you have to check. How management assessed, what information they considered. Now finally what decision they have taken, going concern appropriate or not appropriate, what they have taken, all that. Now for how much period we have to do assessment? We have to cover at least 12 months from reporting date. 12 months from reporting. Suppose if the management has prepared for less than 12 months, from 31st March, cash flow forecast. What is it? Cash flow forecast. If the cash flow forecast is made only for less than 12 months from balance sheet date, we will ask company, please prepare budgeted cash flow statement. budgeted cash flow forecast for at least 12 months. Minimum 12 months they should prepare. So March 31st, 2023, suppose if that is a balance sheet date, up to 31st March 2024, next 1 year, whatever liabilities you have, including your monthly employee cost, including your all monthly fixed cost and all, getting it, including that, including liabilities that are maturing in the next year, like some debentures were maturing in the next year, some preference capital is maturing, some loan EMIs and all you have to pay, all that outflows, how much, right now what is the business, how much it is happening, every month how much, on an average how much business we are making, assuming the same business is happening in the next 1 year, provided no exceptions exist in the market, getting it. So next 12 months, can the company repay without any difficulty? If at all anywhere negative is coming, anywhere deficit is coming, whether company has OD facility available, whether company has a cash credit facility, loan facility available, we need to check. Like, you know, once upon a time, this going concern, no, many auditors, they don't check properly. They simply say, we did not find any events or condition, and they escape from the standard. The standard also says what you have to do further audit procedure when, as per the standard, when you find any events or conditions, when you find any events or conditions that cast a doubt on going concern, you have to do further investigation. Getting it? So that is what are the additional audit procedures when events or conditions are identified. If you identify any events or conditions, what additionally you will perform, what additional procedures you will perform if you identify any events or conditions. If at all I did not identify any event or condition, I am not supposed to do additional procedure. I will simply do risk assessment procedure. Risk assessment procedure means what? I will ask management, have you performed the going concern assessment? If so, have you found any events or conditions like this? If not, give me the documentation. I will just briefly check and then close my audit for 570. If at all management identified events, what events they identify and what extra work you did so that you can resolve these events and conditions tomorrow if it comes. So I will document all that. Now, if at all I identify any event and condition beyond what management identified, additional procedures I will do. What additional procedures? What is the management's plans for future action? Entity, whether the entity prepared a cash flow forecast based on reliable data, and generally about the future, they assume, right? They estimate future cash flow based on assumptions, right? How far assumptions are having supporting information, whether any additional information is available since the management performed this assessment. Management, no, they identified some events or conditions. They did all this future cash flow, all that forecast. This and all happened in April month, whereas I'm doing audit in June month. Within these 2 months, whether any additional information we got, that we need to check. And written representation, I need to get a written representation from the management regarding their future plans and the feasibility of those plans. Management has to give a declaration. Sir, yes, we have some symptoms, we have some issues related to going concern, but it is not that a major issue. We can resolve by these products. Okay, we are now going for digital marketing, so we will increase our marketing cost and all. And till date we have never do any marketing. So now if at all we spend on marketing, we will be getting to know to more people. Now there will be so many who will buy our products and all. Getting it? So this is a future plan of action, sir. How far this is feasible? Look, sir, we have taken market experts' opinions also. They are saying all these plans are feasible. Like that, they will give a declaration to us. Written declaration. That's called as what? Written representation. So they'll ask you this question. Additional procedures, they'll ask you this question straight away. You have to write what are the additional procedures. This you have to write. Sometimes they'll ask you, give examples of audit procedures. They'll ask you a question. Give examples of audit procedures when events or conditions were identified. What are the audit procedures that you perform when you identify events or conditions that may cast a significant doubt on entity's ability to continue as a going concern? So give few examples, they'll ask. Directly examples means you have to write from the below any 4 points. Like what I will do. I will analyze cash flow. I will look at latest interim statements if at all available. I will read debentures and loan terms agreements and all. I will read the minutes of the shareholders, minutes of the meetings of board of directors, all that. I will talk to the lawyers, whether any pending cases pending against the company. I will check whether any arrangements for finance is there, whether any financial support, related party support and all is there. And how entities dealing with unfulfilled customer orders, means customers have paid advance, they ordered the goods with the company, but company have not yet started manufacturing because of the lack of funds. Whatever customer gave advance, so that is paid to suppliers, pending dues. And subsequent events if at all there, adequacy of borrowing facilities, reports of regulatory action, and whether any sale of assets and all has been planned by the entity. All these I will check examples, any 4 points or any 5 points. Getting it? So what are the additional procedures you do? And what are the examples of audit procedures you do technically? So this is both are different questions. Getting it? Anything can be tested in exam. Next, have you not studied this standard earlier? Have you? This much is not there, right? Finally, what auditor will conclude? Finally, what auditor will conclude? See, suppose no. I'll tell you about Air India situation. What happened? In Air India, in their audit report, they mentioned like this. Here, you see here, they have mentioned like this. Material uncertainty related to going concern. This is a side heading which they mentioned. Below they have given the matter. What they mentioned, you see. The company has incurred a net loss of 7,000 crore. They are given in millions. I'm just turning into crores. Okay. 7,765 crore during the year ended March 2020. This was a 1920 year. And the company's current liabilities exceed its current assets by 54,000 crore, means net current liability position. And the accumulated losses are 70,000 crore approximately. The Air India accumulated losses are 70,000 crore. See, look at this fundamental financial analysis. How can I have excess of liability over asset? That to current liability over current asset. How it is possible? See, if I have money in my bank account, that's a current asset. And I can, suppose if I have 10,000 rupees in my bank, I can only pay 10,000, right? If I pay 30,000, then I have a negative current liability. Able to understand? A negative asset balance I'll have. So if I have 10,000, I'll only pay 10, not 30. How I paid 30,000 to a creditor? By borrowing 20,000 rupees funding. By borrowing 20,000 rupees from bank extra. Now I have 10,000 in my balance sheet asset. I have 30,000 liability. 10,000 I paid. Another 20,000 I borrowed from bank and then paid. Bank also gave me because I'm having turnover. Though I'm having losses, though I'm having all that, but I'm having turnover and business, somehow it will turn around and they'll repay me. So I borrowed some 20,000 from bank and then paid it. Now my position is negative 20,000. This is what happened with Air India. In every organization, how liabilities and more, how current liability exceed current asset. By how working capital comes negative. By overdrafts, loans, borrowings. Able to understand? So technically, now tell me, I have to pay them right at any cost. Current liability means I have to pay within the next 12 months. And this position is continued from more than 7 years, actually 7-8 years before itself this has been started. Now how come they're paying? Now how are banks are giving money to these Air India when they're having negative balances? Because government of India is supporting. Because government, so they'll mention here, in spite, they'll mention here, you see, in spite of these events or conditions, in spite of this financial condition, in spite of this worst condition, which may cast a doubt on the ability of company to continue as a going concern, in spite of these events where there is a doubt on going concern, the management is of the opinion. The management is of the opinion that going concern basis is fine in view of support from Government of India. Government of India is releasing funds every time. As long as they support us, we can continue our business even with negative profits, even with negative cash flows. So we don't have any problem. Tomorrow suddenly one creditor is coming and asking me, demanding money. No problem. I'll call Government of India. They'll just transfer the money. I'll pay them. So I will record. I have to pay to Government of India. Government of India record in their books of accounts receivable from Air India. Over. Able to understand? Just a journal entry, fund transfer, settlement over. But I have to pay rate. How long Government of India supports? What if government withdraw the support tomorrow? Is there any guarantee that government will support this Air India continuously? Material uncertainty exists. Fine, whatever. When I interacted with Air India Board of Director, example, okay, they told very clearly, sir, we don't have problem, sir. Okay, losses and all, let it be there. We have government backing. Okay, we have so much of fund access. So government, whenever we have to pay some creditor, government will interfere and pay him. Okay, so we don't have problem. All the 70,000 crore loss, 7 lakh crores, 70,000 crore loss, 50,000 crore loss, 7,000 crore, all this negative and all, just numbers only. Okay, we have support from government. I asked them, do you know government of India supports next 1 year? No sir, already we are in talks. The government is continuously keeping meetings with us every week. Okay, so they wanted to privatize this Air India. They want to sell to somebody. Luckily, next year Tata is ready to buy. Getting it? So, if at all no buyer is coming, we may have to shut down the operations. Possibility is there or not? So, government may not support in future continuously. So, fine. As of now, you have not defaulted anybody. Because government have supported, you have not defaulted anybody. But what about next 12 months? Uncertainties. What is it? Uncertainty is there. That's called material uncertainty related to going concern. What is it called as? Material uncertainty. Can I say as an auditor, hey, your going concern is not there? Can I say? Can I say you cannot prepare financials on going concern basis? Sir, how come you say? Government is supporting us right now. Have you ever defaulted to anybody? You can't say that going concern is inappropriate for us. We are running, no. It's been more than 7 years that we are in minus. Okay, still we are running, right? As long as government supports, going concern is appropriate. Fine, I agree. Going concern is appropriate. But material uncertainty exists. Are you getting the point? Fine. So what we have to do? Then management asks me, sir, what we have to do? Simple. Disclose that in the financial statement. Disclose the same in financials. Disclose in the balance sheet P&L. Disclose in notes to accounts clearly that Air India is facing a severe crisis. All these days we are meeting our liabilities because of the support received from government of India. Tomorrow there is an uncertainty that government might stop funding us, may start selling us. So suddenly Air India might have to halt their operations. Possibility there or not? So Air India has disclosed the same in note number 53 of their notes to accounts. They honestly disclosed. What is the tough time that they are facing? They honestly disclosed in notes to accounts. Now tell me, material uncertainty they are facing. They disclosed the same adequately in the financial statements. Can I modify my opinion on that? Can I give a modified opinion on that? I will still give which opinion? Unqualified opinion, because they honestly disclosed. But the point is, this is a very important point, yes or no? Which every shareholder should read. Air India notes to account is also 100 pages. In that, somewhere in the 53rd point, you mentioned about going concern issue, company's continuity, survival issue related thing you mentioned. How many of the shareholders will definitely read this note number 53? I am not sure. What should I do? What should I do with this 53 point? Emphasize it. What should we do? We should highlight it under emphasis of matter paragraph technically. But emphasis of matter paragraph, Air India is already highlighting so many other points. Air India is already highlighting so many other points under emphasis, which are important for financial users. But this is something survival issue. This is something companies, like do or die. Getting it? That's a kind of situation. This is not just like an important matter like anything else. Of course, this is important. This is very, deadly issue. Yes or no? So important issue. So I will not highlight it under emphasis of matter. Of course, that's a paragraph where I can highlight the issue. But I will dedicatedly keep another paragraph. What paragraph? Material uncertainty related to going concern. Separate paragraph, because this is a going concern issue. Since this is a going concern issue, I will highlight this under a separate para, material uncertainty related to going concern. And here I will draw attention to going concern point. Here we will draw attention to going concern point. By the way, by drawing attention, are we objecting on this point? By the way, we are not objecting. We are just highlighting this point. So, material uncertainty related to going concern is also a highlighter para. But there, which matter you can highlight? Only going concern issue you can highlight. That too, when you can highlight here, by the way, then the going concern issue is clearly discussed in notes to accounts. Suppose Air India is facing this severe crisis. Material uncertainty and all is there. But company, sir, let us not disclose this in the financials. Why unnecessarily bring questions into the shareholders' minds? People are market price and all, share market price and all, thinking like anything. Very good. Company, people are thinking company will revive in the next 2-3 years. Fine. The matter is between us. Okay, nobody else knows our position exactly. Getting it? I will not discuss it in the notes to accounts. Now tell me, are they misleading or not? by not disclosing material uncertainty situation they are facing and which they are not disclosing in the notes to accounts, is the financials misleading or not? If in this scenario, now tell me which opinion you'll give. Qualified opinion if it is material but not pervasive. Suppose if it is pervasive, adverse opinion. You will straight away give adverse. At that time, will again this material uncertainty paragraph will come? No. Material uncertainty paragraph is something like emphasis only. When the material uncertainty is discussed in financials, I can highlight it. In this example, they didn't mention it in financials itself. How can you highlight? In the financial statements, material uncertainty point they did not cover itself. That's why I'm qualifying. That's why I'm giving adverse opinion. So I will give adverse opinion or qualified opinion, and reason I will clearly mention in. Basis for adverse or basis for qualified opinion. Here misstatement is done by Air India by way of non-disclosure. Here misstatement is what? Non-disclosure. When there is a non-disclosure, I should qualify. I should give adverse opinion. All of you. So, now tell me, with respect to going concern, that to material uncertainty. If the material uncertainty is honestly disclosed in financial statement, I will give which opinion? Unqualified. And since that's a very important point covered in notes to accounts, which everybody should read, I will highlight that in material uncertainty related to going concern pair. Suppose if the company do not disclose it properly, or they didn't disclose at all, then what should I do? I should modify the opinion, give a qualified opinion or adverse opinion, and mention the reason and basis for qualified opinion, basis for adverse opinion. In that case, will material uncertainty para comes? No, remember, material uncertainty related to going concern para in the audit report, it arises only when on the going concern issue we have given unqualified opinion. With respect to going concern, what opinion we have given? Unqualified opinion. Then only material uncertainty issue will come in the audit report. Suppose you see here Air India auditors, they have given which opinion? Qualified opinion. But the qualification is related to some accounts receivable, all that, not related to going concern. Qualification they gave with respect to what? Other issues not related to going concern. Did auditor give qualified opinion on going concern issue on any of these points? No. Which means going concern issue they clearly showed. With respect to going concern, I don't have any modified opinion. But since it's a severe issue, I have to highlight it. Able to understand? Suppose no, if Air India, they did not present the situation in the financials, then this para itself will not come. Directly here in the qualified opinion or adverse opinion para, I will directly talk about this. Basis for qualified opinion para, I will directly disclose that point. Whatever management has to disclose, right, I will disclose it here. In the previous session we have covered, if material misstatement is by way of non-disclosure, the auditor has to disclose it in the auditor's report wherever it is practicable. That's it. Next. Till we have, we'll just conclude it. That is what here entire point. Question number 9. Question number 9 and 10 is of that only. This point we have covered just now. This point only we have covered. Suppose no, it's not about uncertainty and all. It's already done. Going concern is no more. Forget about material uncertainty. Government of India publicly announced, Air India, that we will not support Air India anymore. Nobody gives credit to Air India. All fuel companies, they stopped supplying fuel to Air India on credit. They only want to supply on cash basis, and almost 90% of the Air India flights are not on board. Getting the point? They are not operating. Almost laborers and employees and all are striking. Still Air India is using financial state. Still Air India is preparing financials on going concern basis. In spite of all this. Now tell me, is it about uncertainty or it is clear? It is clear that going concern is inappropriate. You cannot continue the business. It's already stopped already. Getting the point? By the time I am doing the audit, it's already stopped. Forget about 12 months. Not even 2 months completed from balance sheet date. It's already halted. The operations, 90% operations have halted. Able to, only the 10% also what, government flights only they're running. Oh, government executives will use, right? Only those flights are running. Flights were not operating for customers. Hey, I'm not telling real situation. Example only. Okay. Yeah. Again, Google it and then don't ask me. Right. So, if going concern is clearly inappropriate, but still company, they are issuing the financial statements using going concern basis. Now tell me, are the financial statements absolutely misleading or not? When the going concern assumption is inappropriate and the financial statements are prepared, and the financial statements have been prepared using going concern basis, in the auditor's judgment it is inappropriate, auditor shall straight away give which opinion? Adverse opinion. They are misleading, they are not true and fair. Able to understand? Suppose no, primarily tell me who should do the assessment of going concern? Management. For how many months they should do? 12 months from balance sheet date they should do the assessment. If management has not at all performed the assessment, or they performed the assessment for less than 12 months, we requested them to extend the assessment up to at least 12 months, which management denied. So either management has not performed the assessment or has not extending its assessment up to 12 months. What auditor shall do? See, if management is unwilling to make or unwilling to extend the assessment, the auditor shall consider the implications for audit report. In such a situation, since going concern assessment is not performed, whether going concern is possible or not, how do we know? Yes or no? We cannot say either yes or we cannot say no. So we will issue either a qualified opinion or disclaimer of opinion as may be appropriate, because it is not possible for you to get sufficient appropriate evidence. Are you clear? So in this going concern, I'll tell you a structure how to read this. Getting it? First going concern, first question is actually talking about going concern issue, accounting issue and all they're talking. Second, no, they're talking about auditor's assessment about going concern. Management has to do this assessment. If management has not done, request them to do. They have to. If they did not do, no, in spite you request, directly come to the opinion section. Getting the point? Directly give a modified opinion if they don't do the assessment. If they have done the assessment, ask them, you found any symptoms about going concern? If there are any symptoms, what are you going to do to resolve this? If at all management has not done the assessment, why you didn't do the assessment? If at all management has already done the assessment, you also do risk assessment along with management. So whatever works and all, whatever workings they did, no, their workings will be having, no, their discussions will be having, no, evaluate it. Getting the point? Look at the cash flow forecast. Companies will have next to 1 year budgets and all will be there. Read them. Look at the latest financials. Look at pending litigations the company is facing. Look at the, OD facilities, cash credit facilities, financial arrangements the company readily having. What is the company's capacity to raise money right now? Look at all these monetary aspects. Getting the point? Finally, you will also get a conclusion whether going concern is fine or not. If at all going concern is appropriate, and management also used going concern basis, happy, unqualified opinion. Suppose going concern is fine today, but material uncertainty is there. Ask the company to disclose it in the financial. If they disclose it honestly, you give unqualified opinion, highlight that in the audit report. If management has not disclosed the uncertainty, give a qualified opinion or adverse opinion, reasons mentioned in the basis for qualified or basis for adverse. Suppose going concern itself is inappropriate and management has still used going concern basis of accounting. Getting it? You should give adverse opinion. That's it. Okay. Now you have to read carefully from the beginning to end. Okay. So with this going concern is also complete. So with this we have completed going concern also. We still have key audit matter and directly we'll go to reporting requirements CARO. With that we will finish the topic. Okay, just a minute.
Hi guys, before I proceed discussing key audit matter, like you'll be watching key audit matter entire discussion. I just want to add one point to that. You can make a note here. I hope you're already going through this book. Here there is a space, right? So you can add a note, prohibition on key audit matter. So SA 705 prohibits the auditor, please make it right, please note this, the auditor, SA 705 prohibits the auditor from communicating key audit matter when auditor expresses disclaimer of opinion. Replay this video once again and write this sentence here. Prohibition on key audit matter, SA 705 prohibits the auditor from communicating key audit matter when auditor expresses disclaimer of opinion. Remember, it is disclaimer of opinion. So when auditor expresses disclaimer of opinion, key audit matter cannot be. Tell me, what is the logic behind disclaimer of opinion? Disclaimer of opinion means we didn't audit. Even if you recollect the opinion sections and all, when I'm showing you the audit reports, we have audited. This is what we use when we have given unqualified, qualified or adverse. But when we are giving disclaimer of opinion, we use the sentence, we were engaged to audit. There we don't use the word we have audited, because the moment we are expressing disclaimer itself means we have not conducted audit properly. When we have not conducted audit properly, because there are no evidences available, because there is no evidence available, when there is no audit itself properly conducted, where is the question of important audit matter? I have not conducted audit properly. Predominantly, many areas we didn't do audit. Now, in that case, when all the areas are not covered by me, since evidence is not available, how can I select key audit matter? Just to remember this, come back to this particular, this 2-3 minutes, whatever I'm covering, just continue watching key audit matter. Now, just keep this in mind. Just remember this and keep this in mind, and then continue watching key audit matter, then proceed further. Now, after discussing key audit matter, come back to this 2 minutes once again if possible. So that you will get more strong connection to this. That's it. So this is a prohibition on key audit matter, which is not given in the ICA book. So we have specifically added. Even in our book also, we have not given. I'm specifically adding in the classroom. Okay. Take care. Continue watching this key audit matter discussion.
Yes, next we'll proceed to key audit matter discussion. Key audit matter discussion. So 701 is the respective standard that is dealing with key audit matters. Now you see the definition of key audit matter. First, before going to the definition, I'll talk about applicability. So key audit matter, communicating key audit matters in the independent auditor's report. Communicating key audit matters in the independent auditor's report. It is mandatory for listed entities. For all listed entities, it is mandatory. Or when key audit matter is required to be communicated, when there is a law or regulation which says that key audit matter communication is compulsory, then we should communicate. Or if auditor decided at public interest, if auditor decided otherwise to communicate key audit matter, not because of law or regulation, not because it's a listed company, we just voluntarily want to communicate key audit matter, then you can communicate. Now, what is a key audit matter? So you see the definition, you read this, you will not understand anything. Okay. Key audit matters are those in auditor's professional judgment were of most significance in audit of financial statements of current period. Key audit matters are selected from matters communicated with those charged with governance. Let's decode the term itself. Key audit matter, important audit matter, significant audit matter. The audit matter that caught auditor's attention. Yes or no? Where auditor has given his more attention, that's a key audit matter. Now, I will first show you what key audit matters they are communicating. How they are communicating, I will show you, and then I will discuss. How Tata Motors auditors have communicated key audit matter, I will show you. You see, this is a key audit matter. Same definition copy pasted here also. So key audit matters are those matters in our professional judgment were of most significant in our audit of financial statements of the current period. Same definition. Huh? What is the definition in the book also? You see, key audit matters are those matters which in the professional judgment of the auditor were of most significant in the current period financial statements audit. And these are selected from the matters which are communicated with those charged with governance. You see, these matters, now here what are they saying? These matters were addressed in the context of our audit. By the way, whatever I'm showing you as a key audit matter, we solved it in audit, we verified in audit, we performed audit on that. Getting it? Then why are you communicating? Just for your public interest. Now you see, since it's a listed company, mandatory. Otherwise, it's a public interest. Whatever they are communicating key audit matter, right? What they are communicating, I will tell you. I will show you. during the year, the company has transferred its passenger vehicle undertaking to a step down subsidiary, Tata Motors Passenger Vehicle Limited. So they recently demerged. It's actually like a demerger. Getting it? So they created a company called Tata Motor Passenger Vehicle Limited, separate company. Until this demerger happened, only Tata Motors is dealing with passenger vehicles, commercial vehicles, everything. Now Tata Motor Passenger Vehicle deal with passenger vehicles. Getting it? So formerly known as Tata Motors Limited Business Analytics, whatever. Getting it? So for this NCLT approval has been obtained in a scheme of arrangement. All that the company has accounted this transfer in accordance with GAAP. Net assets transferred amounting to 1960 crore. The transfer of PV has a significant measurement and disclosure impact on so and so. We have identified transfer as a key audit matter given the significance, complexity, unusual transaction which is material in the financial statements. So we decided, why we decided this is key audit matter, they're telling. Now right side you see what they're telling. What we addressed, like you see how the matter was addressed in our audit. So this transfer of assets happened, right, to Tata Motor Passenger Vehicle from Tata Motor. Getting it? How this issue we verified in our audit, they are telling. So what they verified, we evaluated design and tested operating effectiveness of controls over assets and liabilities relating to passenger. What assets and liabilities are exactly related to passenger vehicle segment, we verified. We checked operating effectiveness of key control for identification of amounts disclosed in a discontinued operation. So Tata Motor is now discontinuing passenger vehicle segment, right? So relating to that, what amounts and all were there, they checked. We read the minutes of the board of directors. We read the NCLT order. We performed the necessary procedure to determine completeness and accuracy of assets and liabilities identified. Getting it? Whether the assets of PV, passenger vehicles, all the assets are identified or not, they checked. We evaluated appropriateness of accounting treatment. We performed necessary procedures to identify all this. We ourselves are not able to understand. How do you think shareholders understand? Have you understood anything right now, whatever I read? That is why key audit matter. Getting it? One stupid matter. This is one stupid discussion. Key audit matter in the audit report. You tell me, opinion paragraph, what are you saying? In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are true and fair. See, as a shareholder, what I want is, you are an expert, you are a competent person, you studied CA final, you studied important Indies and all, left some A's, okay, fine, whatever it is, you know all this, you just tell me, is it fine or not? Getting it? Suppose I went to a hospital, okay, I have a throat issue, doctor replied, pneumono microscopic silicovolcanoconiosis. What is it? Getting it? You have a throat issue. Tell me that now. Getting it? So you tell me that. Why are you using your all technical terminology and that? Correct? So as a shareholder, tell me what. See, you are saying so and so division transfer to so and so passenger vehicle happen. You just tell me that I understand. How you verified and all? How do I know? See what they are doing exactly the same, right? What is key audit matter? Left side they are mentioning. During the year, Tata Motors have transferred passenger vehicles, entire assets and related liabilities to a separate entity called Tata Motor Passenger Vehicle Limited. Because of the amounts involved, because of the assets involved, because of the transaction size, because of the unusual nature, we selected it as a key audit matter. Good. Right side, you are telling me how you did audit. Have you verified that? Is it relevant to a shareholder, normally speaking? Even market analyst also, it's not required. So I want to invest in a company. Tell me how this particular transaction is. See, if at all you use this in emphasis of matter paragraph, now you highlighted this point in the notes to accounts. They mentioned about this particular discontinued business operation, which because why the discontinued, they transferred it to another entity. So you explained in notes, you highlight in emphasis. Okay, you're highlighting. I understand. Have you verified how far it is relevant for me as a shareholder, or as an investor, or as a creditor, as a customer? Technically, this is like over enthusiasm. Hey, let us give more information to people. By giving more information, you are unnecessarily confusing. What a shareholder normally thinks, key audit matter. Hey, you know, prachani irukke idlo. What auditor is trying to tell, key audit, some important audit, key audit matter, na, what they'll think, some issue is going on. That's what people think, yes or no? We know that key audit matter is not a modified opinion. We know that. We know that our opinion is not modified in this matter, means it is not, there is no problem in that. Auditor is just giving additional information. We know that. How do a normal person understands that? Are you getting the point? So key audit matter is such that, but still we have to study because we have an exam. They will be asking us, they will be asking this in exam. So what they are doing in key audit matter is nothing. Auditor, when he's doing audit now, when he's doing, see, he'll be covering so many areas. He'll be verifying sales, he'll be verifying purchases, he'll be verifying assets, he'll be verifying liabilities. So as part of that, he has verified some transfer of assets happened to so and so. He felt this is an important matter to be communicated. Are you getting it? So he communicated what happened, and right side is communicating how he verified that. That's what, you know, how the matter was addressed in our audit. This is what they are communicating, right? So he communicated how the matter is addressed in audit. So that's it. This is what key audit matter. And you see, by the way, in the talk, no, he clearly mentioned, look, we do not provide separate opinion on these matters. We are not providing any opinion on these matters. I'm just sharing you for your understanding, for public interest. There is no public interest here. Public itself don't understand this. Correct? That's the key audit matter. Now let's see. But for us it is important. For us it is important. So key audit matter. Now have you understood the difference between key audit matter and emphasis and other matter paragraph? Emphasis matter paragraph, in financial, some note point is important. I want everybody to read that. What should I do? Highlight it. In emphasis of matter paragraph, we draw your attention to note number 49, note number 44, note number 55. Our opinion is not modified on the note matter. Whatever I have highlighted, no problem on that. Other matter paragraph. There we talk about audit. There we talk about audit report. There we talk about our division of responsibility and all. And there also we discuss everything, and we will say, by the way, I don't have any objection on the above point. Key audit matter. This is an important issue. This is how we addressed. This is how we audited. So in key audit matter, what are we explaining? We are just presenting our skills. How we do audit, all that. Correct? So, and we do not provide any separate opinion on this matter. Indirectly they are saying, I don't have any objection on this. Correct? Understood the difference? Material uncertainty related to going concern. That is also highlighting para only. That is also a para to highlight. But only going concern, material uncertainty related issue. Correct? With this, key audit matter is over. Now you see purpose of key audit matter. What is the purpose of key audit matter? To enhance communicative value of audit report by providing greater transparency about audit that was performed. Key audit matter provides additional information for users of the financials to assist them in understanding entity and areas of significant management judgments. So wherever big decisions are involved. So to make the people understand where and all big decisions happen, key audit matter is one platform where auditor can share. By the way, suppose no entity forgot to disclose something in financials. Can we disclose it in key audit matter? If they forgot to disclose, you have to qualify. Yes or no? They forgot to disclose something which is important. What you have to do? You have to qualify the opinion, or you have to give an adverse opinion. So key audit matter is not a substitute for disclosure in financials. That applicable framework requires a management to make. Management is asking you to make some disclosures which you forgot. And key audit matter, don't use it as a substitute for that. Key audit matter is not a substitute for modified opinion. Suppose if there is a material misstatement, you have to modify. Key audit matter is not a separate opinion. This point also they have covered in the introduction. Key audit matter is not a substitute for 570, material uncertainty related to going concern. Same point we have seen in emphasis. Emphasis of matter paragraph is not a substitute for disclosure. Emphasis of matter paragraph is not a substitute for modified opinion. Emphasis of matter paragraph is not a substitute for material uncertainty related to going concern, disclosure. Yes or no? Understood that now? That's it. Now, okay, how auditor decides key audit matter? How will I select a key audit matter? Very simple. If the risk involved in that is very high, in a particular transaction, risk is very high. That I will select it as a key audit matter, and I will explain how I solve that in audit. Or if the matter is relating to area in the financials where significant management judgment is involved. Where significant management, suppose company, they have changed estimated useful life of plant and machinery whose value is 3 lakh crore. The plant and machinery worth of 3 lakh crore, estimated useful life has been revised from 30 years to 50 years. This happened in Reliance last year or 2 years before. So their original plant and machinery life was 30 years. They have revised it to 50 years. Oil refinery. Getting it? So the revised life of mission, the revised life of this plant and machinery, revise it to 50. Now it's a significant estimate, right? Significant change in accounting estimate, right? Auditor selected it as a QI. Obviously, when 3 lakh crore worth of plant and machinery life is changed, see impact, how much depreciation will affect, how much profit of the company will affect. No doubt it's an important audit aspect, which we will definitely give more time to it when we are doing actually audit. Or a significant event or transaction. So key audit matter can be related to areas of significant risk. Key audit matter can be selected from area where significant judgment is involved. Key audit matter can be selected from significant event or transaction happened during the year. Now Tata Motors, right now whatever I showed, the key audit matter is because of a significant transaction happened. Are you getting it? It's a big transaction. Sale of assets and liabilities of passenger vehicle to a separate entity. It's a significant event, significant transaction. Getting it? And how auditors should communicate. What is the manner of communicating? This can be asked as a separate question. They'll ask you, define what is key audit matter. What is the manner of communicating key audit matter? 4 marks question. Or they'll ask you, what is a key audit matter? Determining key audit matter. How auditor determine key audit matter? What factors auditor will consider while determining key audit matter? So that can be asked separate question. Auditor has to communicate the introduction to the audit report. In the audit report, no, key audit matter section, you will put a separate heading. You see, the auditor shall describe each key audit matter using appropriate subheading in a separate section. You see here, Tata Motors, separate section is there, na, key audit matter. And appropriate subheading is also there, na, here, transfer of passenger vehicles, you see. This is a subheading inside the key audit matter, separate section, na, you see here. Like, so the auditor shall describe each key audit matter using appropriate subheading in a separate section of audit report with the heading key audit matter. That's what exactly Tata Motors did. So no, the introductory language, how introduction, key audit matters are those in auditor's judgment were most significant in the audit of financials. These matters were addressed in the context of audit as a whole and in forming opinion thereon. The auditor does not provide separate opinion thereon. Exactly no. You see, exactly happened. So you see, key audit matters are those in our professional judgment, all that these matters were addressed. We do not provide separate opinion, exactly given or not. I'll show you Tesla also. In America, in US, no, it is called as critical audit matter. It's called as what? Critical audit matter. So they gave a separate section, critical audit matter. Critical audit matter communicated below is a matter arising from current period audit, and that was communicated to audit committee. Nothing but key audit matters are selected from which matters? Those matters communicated with, those charged with governance. Getting these matters, you see here, these matters does not alter in any way our opinion on the financials. Indirectly, what are we saying? On the key audit matter, I'm not giving any separate opinion. So you see here, and we are not providing a separate opinion on critical audit matter. They clearly mentioned. Able to understand. So key audit matter concept is also prevailing across the world. Getting it? We use the word key audit matter. They use the word critical audit matter. That's it. Next, obviously, whatever the matters you want to communicate as a key audit matter, first you should communicate matters to what are the matters you decided as key audit matter. Communicate to top management. If applicable, suppose you decided there are no key audit matters, but it's a listed company, mandatory. But you decided there is nothing such key audit matter which requires attention of shareholders or attention of myself, first of all. Getting it? Then you introduction language as usual. Key audit matters means what? You describe and say that there are no key audit matters. Getting it? Depending upon the facts, the auditor's determination that there are no key audit matters to be communicated. If there are no key audit matters, mention that there are no key audit matters. Able to understand? See here. Except for the matter described in basis for qualified opinion or material uncertainty related to going concern, we have determined that there are no key audit matters in our report. See, very simple. If at all we have given qualified opinion, why we would have given qualified opinion? Because there is a material misstatement. Why would have given adverse opinion? Because there is a material misstatement. Or why we have given qualified opinion? Because I'm unable to obtain sufficient appropriate evidence on a particular matter. No, they are also important issues, right? They are also important issues, right? But why I am not talking about them in the key audit matter section? I already covered there. Somehow it was highlighted, right? So when I either qualify on a particular aspect, or when I emphasize on a particular aspect, or when I communicate it under going concern, indirectly I am highlighting those issues, right? Indirectly, by pointing out them, I'm highlighting them indirectly. Yes or no? So that's why if you don't have any key audit matter, you communicate introduction like this. Except the matter described in basis for qualified. Except them, there are no other key audit matters which are to be communicated under this para. That's what they're communicating. Able to understand. If this key audit matter, this definition is, this is also over. Key audit matter discussion is also over. Have you studied this key audit matter? And are you clear now whether what is the difference between key audit matter and all that? So key audit matter is also over. Now other information para 720 we do not have in CA Inter. 720 standard we don't have. Then signature of the auditor, place of signature, date of audit report. First I will finish these three, then I will go to the CARO. Okay. Now, signature of the auditor. Sometimes in exam they'll ask you key audit matter. What is a key audit matter? Here 6th point is there, right? In the 700 below also we have given key audit matter little briefer. That is nothing but applicability of key audit matter. That is nothing but applicability of key audit matter, which is actually given in 701. Remember, for audit of complete set of general purpose financials of listed entities, auditor shall communicate key audit matter. Or if there is a legal regulatory requirement, if the law or regulation requires, we have to communicate. If auditor otherwise decided to communicate, he can communicate. So signature of the auditor. This has been asked as a 2 marks question many times in true or false statement. So how auditor should sign? The report shall be signed. The report is signed by the auditor in his personal name. Getting it? Where the firm is appointed as auditor. By the way, firm means what? Sole proprietary firm, partnership firm, LLP. You see, I covered all the three in the bracket. Suppose if an individual is practicing in his own name directly without any firm name, I told you it is possible. Yes or no? Then you just mention your name, membership number. That's enough. You are having COB, that's enough. But sometimes no, you participate in firm name. If you want to sign in on behalf of the firm, then where the firm is appointed, the report is signed in the personal name of the auditor and in the name of the audit firm, like Ramharsha and Co. Chartered Accountants, partner so and so signing. Getting it? The partner or the proprietor who is signing the audit report shall also mention membership number, which is given by ICI. They also include registration number of the firm. That's called FRN. Getting it? Which is allotted by ICI. Are you clear? Not only that, below the signature, you should also mention UDIN number. Unique document identification number. The purpose of UDIN is very simple. Suppose I'll show you, my signature is very simple. Anybody can copy. Okay. The strike and all may not match. That's it. This is my signature. I don't want to make complicated. If you sign 500 pages on a single day, you will understand how simple signature will help you. Getting the point? Once upon a time, tax audit reports and all we have to send manually. Okay. That time, suppose if 15 clients were there, example, each tax audit report will have some 70 pages. Total all annexes all put together. 15 into 70. How many? So I need to sign. Suppose if I sign like this, no. So sign like this. Getting it? Imagine 500 pages I have to sign in a single day. I have to go to hospital. Correct? So I made I made consciously my signature simple. Now today anybody sign this, my membership number also I'll give 239714. Okay, do whatever you want. Getting it? You can't do anything because today if you go and submit any document with my signature, with my membership number, the document may not be valid if you do not have UDIN number. If there is no document identification number generated from my ICA login portal, you have SSP portal, right? Same way I will have a UDIN portal. In that I will have a UDIN number, UDIN account for me, like a Google account. I have a UDIN account. Getting it? In that account, whenever I sign a document, I should give document details, information on which date I am signing. In the document, if I mention any amount, no, that amounts I should mention. Getting it? Briefly, I will tell about the document which I am signing, and I will generate UDIN there. I will click generate button. UDIN number will come, 16 or 18 characters. Some UDIN number will come. That number I will paste on the document. Now, I'll show you right now how this exactly works. Suppose you see here Tata Motors. Here auditor have signed this audit report, right? See Tata Motors, no, they happily use this auditor name. BSR & Co. This is nothing but KPMG. Nothing but KPMG form. Getting it? So KPMG have signed this audit report. You see, so and so person have signed. There is no signature also here, by the way. But UDIN number is enough. This itself is enough. Getting it? I will check this whether this is really signed by him or not. I will check this. I'll see. What is the date of the audit report, by the way, here? 12th May 2022. ICI UDIN. I'll go to UDIN. So verify UDIN. So who is the verifier? Are you a bank or regulatory? Others. Name of the verifier. So mobile number. Mail ID. UDIN number. So 59633. End OTP. LID OTP. Mobile OTP. 0. Now I will click verify UDIN. Now you see document details I'm getting. This is the document verification number. So Aziz Wastani, he's the one who signed. It's an audit function. It's a stat audit. It's a date of document signing is 12th May. Financial year 1st April 2021 to 31st March. PAN number of the SSE means Tata Motors PAN number. Gross turnover reported in the document what he signed. Whatever the document he signed, no, in that gross turnover reported how much they're reporting. So gross turnover how much they have reported? 47,263 something is there, you see here. 47,261, just did the rounded off. Shareholder funds, this is in the balance sheet, you will find 19,000 crore. So now you see, okay. So here, balance sheet is signed by the auditor right here. So he signed, his UDIN number is given like this. His UDIN number is given. So what balance sheet, what P&L exactly he signed? Some numbers he has given for verification purpose. Profit he has given, turnover he has given, net worth he has been given, all that. Getting it? So I'm just cross checking. So okay, fine. So if somebody bring Tata Motors balance sheet that it is signed balance sheet by so and so, UDIN number I'll verify whether the same person mentioned this or not. UDIN details, no. Who gave that UDIN details? The person only gave personally. Getting the point? So UDIN is like a digital signature today, which cannot be forged. So even if you forge my signature, nothing. It is not useful anywhere. Getting it? Tomorrow, if somebody forged my signature and try to, involve me in some affair, getting it? I will simply tell, where is the UDIN? Without UDIN, my document is not valid. That I didn't sign. So I need not even say that I didn't sign. Where is UDIN? First question I'll ask to defend myself. Clear? So that's UDIN. So can you read this on your own? They'll give you a 2 marks question or 3 marks question if possible on that. Then place of signature, which is ordinarily the city where the report is signed. Wherever you sign, in wherever the locality you sit and sign the report, that city you can mention. It can be either your audit office city, your office city, or you can be the client place where the client has been. Getting it? If the city is very popular name like Chennai, Mumbai, Bangalore, Kolkata, Pune, there are some cities which people can easily recognize. If a city name is not easily recognizable, then add state name also. That's it. Date of audit report. Can I date the audit report earlier than the date on which I obtained the evidence? So date of audit report shall be not earlier than obtaining sufficient and appropriate audit evidence, shall not be earlier than approval of the financials. See, financials has to be approved now. Company has to approve the financials. Only when the financials are approved, it can be released to the public. Getting it? So only after they were released to the public, only the financials which are approved will be released to the public. So on the approved financials, I should give audit report, right? Management decided, yes, this is the balance sheet, this is the P&L, we are going to issue to the public. So on that I should give audit report, which means my date of audit report should not be earlier than the approval date. Can it be later than the approval date? Yes. But 99.99% of the cases, date of audit report equals to date of approval of the financials. I will talk about that in 560 standard. Clear all of you? So we are just pending. We are just one more thing that is pending is report on legal and regulatory requirements. So UDIN is also completed. So only this is pending. So we'll take a break and come back. Yes, fine. So let's continue. See, one doubt which one student has asked is like, see, we give opinion on the financial statements as a whole, right? Suppose I found a material misstatement in fixed assets, suppose plant and machinery, and I found misstatement in inventory, and I also found a misstatement in trade payable and a misstatement in revenue from operations. I found totally 4 misstatements. What is the impact of these misstatements on the overall position and overall performance also I evaluated? Getting it? For example, fixed assets were overstated by 10 crore. Inventory is understated by 10 crore. As a whole, assets are neither overstated nor understated. Overall impact is this. But not every time we only consider overall impact. What we need to consider is individually, because see, balance sheet total is not a decision making criteria. What is the total balance, total of assets? That is not the criteria for decision making. The criteria for decision making is each and every element of the financial statement. Now, fixed assets is overstated by 10 crore, which is a material misstatement. Current assets is understated by 10 crore, which is also material misstatement. What is the total misstatement? 20 crore. For a misstatement, there is no sign. Positive or negative, there is no such discussion for misstatement. It is overstated by 10 crore, this is understated by 10 crore. The fact that they both are setting off with each other is ignored. You should not consider that. Total misstatement, how much? There it is 10 crore, here it is 10 crore. Total misstatement 20 crore. Now, suppose, and revenue from operations also some 5 crore mistake. Total misstatement 25 crore. Now, whether this total misstatement is pervasive or not, you should check. For qualified opinion, individual misstatement we will consider. Whether we should give a qualified opinion or adverse opinion, we consider individual misstatement. Getting it? Qualified. For adverse, pervasive, overall effect we should consider. Able to understand? Now, suppose the actual doubt was, suppose on plant and machinery, I want to give qualified opinion. For inventory, I want to give adverse. No, that is not possible. As a whole, you check what is the total impact. As a whole, because of so and so misstatement, is it giving a misleading picture as a whole, financial position? If so, give adverse opinion as a whole. Mention why you gave adverse opinion, reason in the basis for adverse opinion section. Over. Got it? Next, report on legal and regulatory requirements. Don't worry, as I go further in the next session, probably I will talk about presentation also, how to present all the answers. See, wherever possible, I'm telling you how a question can come in exam. Getting it? Relatively, the audit syllabus has been increased. Though they have removed some 1 or 2 chapters, but the existing chapters content has been expanded like anything. Entire pronouncement content is added. Once, earlier going concern standard is used to be 2 pages. Now it is 7 pages approx. 6 to 7 pages approx going concern. You saw the content that I showed, right? Getting it? So almost each and every standard which they discussed, now they discussed it very in depth. Earlier the standard is used to be discussed in a brief manner, but now it was discussed completely in depth. So report on legal and regulatory requirements. So in that, I will directly discuss with CARO. In that, only important points I will cover. So reporting requirements under Companies Act. Now you see, we still have 710 standard which is pending. Comparative information, yes or no? So comparative corresponding figures and comparative financial statements, that I will cover once I finish this. Maybe I will cover that along with 510 if possible. Along with 510 I will cover that, or else let's do one thing. I will cover along with 510. And now let's look at reporting requirements under the law. So in audit report, under report on other legal and regulatory requirements, we should talk about 143 subsection 1, 143 subsection 3, 143 subsection 11. 143.11 is talking about CARO, which talks about auditor has to report on 21 aspects. Auditor has to report on 21 aspects. 143.3 is some 17 aspects were covered. Some 16, 17 items were covered. On 17 issues, auditor has to talk. 143.1, there are 6 inquiries. So auditor has to inquire into these matters and then report it in the audit report if the answer is negative. So 143.1, auditor has to report only when auditor want to talk negatively. If auditor do not have any negative opinion on that, if auditor has a positive opinion on these 143.16 items, no need to talk in the audit report. You will not find 143.1 in Tata Motors because auditor may not have any negativity on that. Whereas 143.3, 143.11, CARO 21 plus these 17. Whether your opinion on these clauses is positive or negative or even not applicable, you should clearly mention that fact. Are you getting the point? So 143 subsection 3, you should clearly mention that fact. 143 subsection 11, 21 clauses, you should clearly mention that fact. Now, so first I will talk about CARO directly. So 143 subsection 11. So under 143 subsection 11, Companies Act has given a power to the central government that central government may notify by an order on what aspects of the company the auditors has to additionally report on, in addition to the reporting requirements under standards on auditing. In addition to standards reporting requirements, what other aspects the auditor has to report on, central government can make an order. Accordingly, central government has issued an order called Companies Auditors Report Order 2020. In that, they have specified 21 variety of issues. Okay, so this CARO is applicable for all entities, all companies it is applicable. For banks, it is not applicable. For insurance company, it is not applicable. Section 8 company, 1-person company, small company and a private limited company. Getting it? For the following companies, CARO is not applicable. For banking company, insurance company, section 8 company, 1-person company, small company, private limited. And we all know one small company means paid up capital 4 crores and turnover is 40 crore. If a small company which satisfies these conditions, then it's actually treated as what? A small company. And private limited company which satisfy the small company definition were also treated as small company only. If a private limited company satisfying the definition of small company, then also it is treated as a small company. Accordingly, CARO do not apply for the private limited company. This criteria given for private limited company in CARO, right? They have not updated. This criteria is something given in 2004, which they didn't revise it. Getting the point? So these are the mistakes that happen in lawmaking process. Always in lawmaking, there is no intention. There is only mistake. Getting it? There is no intention behind the law. So when they made an amendment in small company, corresponding amendments they should make in every other private company limits a discussion. So that corresponding amendment was not made here. So right now there is no point of discussing private limited company for conditions, because a private limited company, if their paid up capital is less than or equal to 4 crore or if the turnover is less than or equal to 40 crore, CARO do not apply because it can be treated as what? A small company. Are you clear? Suppose in exam they asked you, ignore small company definition. Whether CARO is applicable for private limited company or not, ignoring small company definition. Let us assume the companies don't want to avail small company status. So whether CARO applicable? 4 conditions if satisfied, CARO do not apply. Not a subsidiary or holding of a public limited company. 2. Paid up capital and reserve sum surplus does not exceed 1 crore on the date of balance sheet. 3. Total aggregate borrowings from banks and financial institutions shall not exceed 1 crore at any point of time during the year. In the entire 365 days, on any day, my outstanding amount is nowhere crossing 1 crore. And the turnover including discontinued operations related turnover put together not exceeding 10 crore as per schedule 3. Then these 4 conditions are satisfied for such private limited company, CARO do not apply. I'm not discussing much in depth on this. Getting it? Next. Now, whether CARO is applicable for holding subsidiary companies, first of all, holding company, subsidiary company, both are two different entities. The relationship between them is holding and subsidiary. The holding and subsidiary is about relationship. You and your father, both are two different persons. Yes or no, from the government point of view. But the relationship is father and child. Holding and subsidiary is a relationship study. At the end of the day, they both are two different companies, have their own PAN numbers, have their own corporate identification numbers. Correct? Huh? So, now when for holding company, subsidiary company, whether CARO is applicable or not, how do you apply the above limits? Respective company. Holding company, their own turnover we will calculate, their own capital we will calculate. Subsidiary company, their own turnover, their own capital. Able to understand? So we consider limits separately. Now, by the way, CARO is applicable. CARO reporting is applicable only if at all we are giving audit report on standalone financials. Suppose for a particular company we are giving audit report on consolidated financials also. In that audit report, CARO report need not be added. Remember, CARO will come where? As part of audit report. CARO is part of audit report. In the audit report, one para is there, right? Report on legal and regulatory requirements. Under that para, CARO will come. CARO is not a separate report. CARO is part of the audit report that we are discussing. Getting it? Next. Now, when you are giving audit report on consolidated financials, right? On consolidated financials audit report, CARO will not apply, right? However, 21st clause can be applied. 21st clause in the CARO will be applied when I am giving an audit report on consolidated financial statements. Inside that, audit report will have side heading, right? Report on other legal and regulatory requirements. Under that 21st clause point I will talk. Which audit report? Audit report on consolidated financial statement. Now, what about companies having branches and branch is audited by another auditor? What about them? Well, branch auditor has to comply with CARO? Yes, of course. If CARO is applicable for company as a whole, branch is also liable for CARO report. Accordingly, branch auditor should also report on CARO in the branch auditor report at branch level operations. Able to understand? So now when you are considering CARO is applicable or not, you should total all branches turnover and then calculate. You should total all branches capital and then calculate. Of course, capital will be only in the corporate office books of accounts. Share capital will not be reflected in branches, right? How branches operate? They take loan from head office and then operate. Getting it? So, now, see, what is important in CARO is, so every student they learn 21 clauses, how to remember 21 clauses, all that they find. The point in exam, what they ask is the inside content. Okay, regarding fixed assets, what is the reporting requirement? Regarding inventory, what is the reporting requirement? Regarding loans and advances, what is the reporting requirement? Only the inside content of a clause is what they test. Getting it? Of course, remembering clause number is very good, because when you're writing the answer, if you refer to clause number, that will also add an advantage. Getting the point? Now, so fixed assets, what auditor has to report on? Auditor has to report on 5 issues related to fixed assets. Auditor has to report on 5 issues. 1. Whether company is maintaining fixed asset register. Whether the company is maintaining fixed asset register. Is the company maintaining asset register which contains details of quantity of property, plant and equipment and intangibles, situation of property, plant and equipment. So where the property, plant and equipment, where the fixed assets are situated, how many fixed assets we have, description of the fixed asset, when it was purchased, when it was installed, how much amount we paid for it, what are the installation expenses, how much is the capitalized amount, how much is the depreciation. Like that, the company has to maintain an asset register. Now there are electronic softwares, asset register related softwares were there. In the software, they have to maintain asset register. Whether the company is maintaining that or not, you have to tell. See, as a part of audit, you have to verify all this for sure. Whether CARO is there or not, you have to verify. Whether fixed asset controls were proper or not, as part of audit, we have to verify. Here, explicitly, you should tell people whether the company is maintaining register or not. Next, whether the company is doing physical verification at reasonable interval. Next question which CARO is asking is whether the fixed assets are physically verified by management at reasonable interval. Reasonable interval means what? Tata Motors, They do verify their fixed assets once in 3 years. Physically, they'll go and check all premises once in 3 years. Infosys do check their fixed assets once in 3 years. Getting it? They don't verify every year. They don't verify, go and verify and confirm whether fixed asset is there or not. A specific audit will not be conducted. Generally, internal auditors will do physical verification. Internal auditor also part of management. Internal auditors are also part of management. Getting it? So internal auditors of Tata Motors specifically, their only work of, their only agenda, they will take a asset register. They will go and try to check whether physically existing or not in the respective location or not. Across India, they may have some 2-3 factories. Across India, they may have multiple own showrooms. In every showroom, some furniture will be there. Some air conditioners will be there. So many machines will be there in every showroom. Yes or no? So across India, the internal audit team, they have to travel everywhere and physically go and check. Okay, this asset we purchased, it is there as per record, physically also there or not. That's called physical verification. Able to understand? So physically they have to verify at reasonable interval, and we have to check whether management is doing so or not. Then suppose on physical verification, companies sometimes find differences. Generally, for the kind of internal control which a company has, most of the companies, for the kind of controls they have, there won't be discrepancy. Very rare discrepancies will there. Even if discrepancy is there, even suppose physically 10 assets should be there, 10 tables should be there in one particular warehouse. They went there, tables are only 9. One table is not there. So there is a shortage of table. But is this a material shortage as a whole? That you need to check. If that is not a material shortage, you need not comment on this point. Getting it? Now, third one, with respect to fixed assets, immovable property related point. Whether title of immovable properties, ownership of the immovable properties, registration deeds in the immovable properties, are they in the name of the company? Check out. Suppose if they are not in the name of the company, why? Description, what property it is, what is the actual carrying value, whose name it was held, what is the reason why it was not held in the name of the company. This is very popular clause for sole proprietary concerns converting into companies. Many sole proprietors, they convert themselves into companies. So all their immovable properties which they own in their name for business purpose, they don't convert into company name immediately. Maybe they later on they may convert. So in these cases, the sole proprietary concern where the proprietor converted his business into company name. So properties and all he will register as company owned property. In the company fixed asset register he will record. But the ownership is in whose name? Director name, shareholder name. Getting the point? Why you have not converted into company name? You should mention the reason. That's it. Then fourth point in fixed assets. We need to check as an auditor. We should check whether revaluation is done by a registered revaluer, if at all, whether the company has revalued its PPE or intangibles, whether company did revaluation, check out. If so, if revaluation is done, the company went for revaluation of its assets. Who did this revaluation? Is it by a registered valuer or not? Check out. Okay, registered valuer only valued. If the change because of the revaluation is 10% or more in the aggregate of the net each class of PPE, if the change is 10% or more in the aggregate of net carrying value of each class of PPE, suppose property, plant, if you look at the breakup, plant and machinery, equipment, furniture, electronic fittings and vehicles, these are each class. Getting it? Now each class aggregate value will be there. Vehicles aggregate value how much? Before revaluation 10 crore. After revaluation how much? 12 crore. Now the percentage of change is how much? 10 crore to it went to 12 crore. What is the percentage? Base is what? 10 crore. Original value is the base. Revalued value is the target. What is that percentage? 20% variation in the vehicles revaluation. Since vehicles were revalued for more than 10% change, since in the vehicles aggregate value 10% or more change is there because of the revaluation, auditor has to specify the amount of change. So you will give a table here. So vehicles were revalued before revaluation 10 crore, after revaluation 12 crore, amount of revaluation because of the revaluation 2 crore, the percentage is 20%. Nothing but they are indirectly asking because of revaluation how much assets have been decreased or increased. Remember, revaluation effect we will not consider in cash flow statement. Yes or no? Revaluation effect we will not consider. Generally, if you see last year fixed asset value 10 crore, current year fixed asset value 12 crore, people immediately think that what? Company purchased assets. No, It's revalued the assets. That's why there is an increase in the fixed asset value. There is no cash outflow. Able to understand. So cash flow statement gives us that picture. I think it. Next. Whether any proceedings have been initiated or pending against the company under Benami Transaction Act and rules made thereunder. Suppose no, under Benami Transaction Act law, whether any case has been opened against the company where we are doing audit. If so, whether the company has disclosed the information in financials as per Schedule 3 today. Getting it? You have to disclose all this. MCA has given a notification that every company shall disclose in their financial statements, notes to accounts, certain extra disclosures that are in addition to accounting standard requirement, that are in addition to original Schedule 3 requirement. In addition to that, a company has to disclose certain extra information. One such point is, if company has been selected for Benami transactions proceeding, that proceedings details the company has to disclose in the notes to accounts. Auditor has to check whether the disclosure is made or not. And under CARO we should report. Yes, company has been liable for Benami proceedings. They have disclosed in the financials. So here we are, just we will give positive opinion in CARO. Yes, the Benami proceedings initiated against the company were disclosed in the financial statements. We will give positive. Are you clear? Next, you see Tata Motors audit report. So they have clearly explained all this. They have clearly explained all this. So this is the CARO report. First I will show you its reference in the auditor's report. So you see here, this is audit report only. Report on other legal and regulatory requirement. Under that only CARO is given. But instead of talking 21 clauses directly here, they gave it as an annexure. Refer annexure here, they are saying. Getting it? Remember, in exam, additional answer sheet is also part of answer sheet only. Yes or no? Same. So annexure means it's not a separate document. It's part of the audit report. So look at this annexure. Yeah, this is the annexure. Annexure A to independent auditor's report. And you see what? The company has maintained records. It's a positive opinion. The company has maintained proper records. It's a positive opinion. Second aspect. B, physical. According to the information and explanation, company has a regular program of physical verification of PPE over a period of 3 years. And considering the size of the company, considering having regard to size of the company, nature of the assets, the periodicity of physical verification is reasonable. Yes or no? Looking at the size of the company, physical verification is reasonable. If the sole proprietor concern, no, only one table, one chair, one fan is there. Every day he can check physically. Look at a company like Infosys. Look at a company like TCS. Yes or no? Where? Look at Deloitte. You know, Deloitte is having their corporate office in Hyderabad. 1 lakh employees are there in that building. In the 2 buildings, they'll be having 1 lakh employees were there. So 1 lakh employees related chairs, 1 lakh employees related tables, 1 lakh employees related laptops, 1 lakh employees related fixed asset infrastructure, air conditioners. Imagine how many assets were there. Yes or no? So they need to physically verify, obviously, whether all the, of course, you cannot take anything inside that building or you cannot take anything outside the building from the building. Controls were very strict, but still, for a confirmation's sake, at least one time you should see, right? So they might have been verifying once in 3 years. So once we will verify Deloitte Hyderabad office, then we'll verify Deloitte Bangalore office, then we'll verify Deloitte Delhi, Mumbai, and then Chennai. Again, by the time I complete all this, it will take 3 years. Then again I'll go to Hyderabad office again. Able to understand? So there will be a dedicated team. Their only work is physical verification. Their only work is what? Physical verification. That's it. Then here you see, according to the information, all the title deeds are immovable properties. They are in the name of the company except finance leased properties. We know very well, if any property has been taken on finance lease, accounting standard substance over form, you should show it as a fixed asset, yes or no? But even though you are showing it as a fixed asset in your books of accounts, have you really owned it? Is it in your name as per the registration documents? No. So that's why they said other than immovable properties which the company acquired as a lessee. Getting the point? Where the lease agreements are in the favor of the company lessee. Able to understand? They clearly mentioned. So here the company has not revalued. Accordingly, this clause is not applicable. Finally, according to the information, there are no proceedings initiated against the company. Accordingly, this subclause is not applicable. Over. Easy or not? Next. Then inventory. Inventory, auditor has to verify 2 aspects. One, physical verification aspect he has to verify, working capital loan aspect he has to verify. In May 23 or November 22 exam, working capital related was asked for 5 marks question. Getting it? Working capital related was asked for 5 marks question. They gave an illustration. Okay, the company has borrowed, cash credit, working capital loan for more than 5 crores. The company was sanctioned for more than 5 crores. They got a limit. And see, this information, the company has to disclose it in Schedule 3 notes to accounts. Whenever a company was sanctioned for more than working capital loan of more than 5 crore, sanctioned limit, the company has to disclose in the Schedule 3. What they need to disclose? What quarterly statements you filed with bank. See, like in bank audit, we will be discussing one point. Working capital loans, generally cash credit and overdraft. The cash credit and overdraft, generally these facilities we will take by giving them security of our current assets. By giving them security of our current assets. That too, hypothecation mode, which means the assets will be in our godown only. We will be selling them, buying them, selling them, buying them. They are floating assets. Able to understand? They are not fixed assets, they are floating assets. So by hypothecating our inventory and trade receivables, we will get working capital loans. Many banks know, many companies, what they are doing, they hypothecate their current assets with the bank. They need to file statements with the bank. Have you heard of drawing power? So how? Like I'll tell you. Suppose company has an average current asset value in the throughout the year. Average means throughout their average. One day maybe 10 crore, one day maybe 5 crore, one day maybe 10 crore current assets. Average value is some 7 crore. So company gave current assets average figures to banker. In the last 1 quarter, average current asset is this much. Like that, company filed a statement. Based on the statement, based on some verification by the bank, stock audit by the bank, they sanctioned a loan amount of 5 crore. And since company gave a security, entire drawing power also given. Entire 5 crore the company can withdraw also. But actually, if you see the quarterly statement, if you see the actual books of accounts, the stock value is not 7 crore. The stock value is 5 crore only. But the company, whatever statement they filed with the bank, it shows 7 crore. So this is a regular practice in reality. Now, in the Schedule 3, the company voluntarily, honestly should disclose how much is the stock value, nothing but how much is the current asset value in your books of accounts as on so and so date. On the same date you filed with the bank stock statement, right? How much you showed in the stock statement. Company has to disclose that in the financial statements. We will see this point in items of financials. Auditor also should check whether company did like this. In books of accounts, the value is this much. Whereas in the stock statement they filed with the bank, the value is this much. Whether any such differences were there, auditor has to specifically highlight here. You see, Tata Motors, I'll show you. So they have pointed out, like, see, according to the information and explanation given, the company has been sanctioned working capital limit in excess of 5 crore in aggregate from all banks and FIs together on the basis of current asset. In our opinion, the quarterly statements filed by the company with such banks or FIs are in agreement with the books of accounts, except statements filed for 30 June, 30 September, 31st December, all the quarters covered. Okay, with the State Bank of India, Bank of America, Citibank, HDFC Bank, ICICI Bank, Standard Chartered, Kotak Mahindra, Union Bank, Bank of Baroda, where differences were noted between the books and reported to the bank as per the statement. So there were differences. They covered all quarters, they covered all the banks in India. Yes or no? And they mentioned the differences were 689 crore, debtor 490 crore, something 758 crore somewhere. So all this for every for creditors also has a difference. Getting it? Inventory also might have some difference. What they said, you see, actually they are supposed to give an adverse opinion here. They need to give an opinion like the stock statements filed with the banks are not matching with the books of accounts. This is actually, but cleverly what they gave, stock statements filed with the banks are matching except the following banks. All banks they listed out, all the quarters they listed out. Able to understand? Now finally you see, these statements were subsequently rectified after year end 31st March and submitted to the respective banks. Already you gave statement, enjoyed the loan, consumed the loan. Now you are giving revised statement. Earlier you gave, sir, I have 10 crore worth of asset and you got 8 crore loan. At the 31st March, sir, I have only 5 crore worth of loan. Sorry. And you are giving statement. Are you getting the point? So that's it. So see, they can't do anything. Because Tata Motors, no, they don't agree for giving modified opinion. They don't agree for giving adverse opinion, sir. Give qualified opinion. Okay, say that everything under exception. Who will observe? Are you getting it? So that is the problem. Now, so physical verification here also the same. Whether the company, whether the management is conducting physical inventory counting at a reasonable interval. So here inventory reasonable interval is different from fixed asset reasonable interval. Fixed assets, no, there won't be any movement. Every day fixed assets will go out, come in, no. So fixed assets generally we purchase, hold it for certain number of years, and after that, once the lifetime is over, we will dispose it. Whereas inventory is not like that. High movement every time, in and out, in and out, in and out. Yes or no? So as per CARO, guidance note on CARO, inventory has to be physically verified by management at least once in a year. Compulsory. Even under SA 501. Remember, we as an auditor has to check physically the inventory. Whether the inventory is in existence and condition of the inventory also we should check as per 501. Compulsory we should check. So Tata Motors, they clearly mentioned inventory has been physically verified by the management at reasonable interval. Here you see, if at all they verified physically, right? Have they found any discrepancies of 10% or more in aggregate of each class of inventory? Each class of inventory means what? Raw materials how much? Work in progress how much? Finished goods how much? So in raw material physical verification, you found a difference. If the difference is 10% or more, shortage or excess, whatever, auditor has to report it here. By the way, who did this physical inventory counting? Management only. Management only conducted. You will see their documentation. You will find whether differences were there or not. You will understand by looking at their documentation. If management is hiding everything, we can't do anything. Okay, next. Investment guarantees, that is not an important point. That's not an important thing. Maybe inside that, no, they may ask you E and F. E and F might be somewhat important. E and F. So what is this? Whether any loan or advance in the nature of loan granted that fallen due during the year has been renewed, has been extended, or fresh loans were granted to settle the overdue loans to the same parties. If so, what is the amount of dues that are renewed or extended? What is the percentage of the aggregate to the loans and advance in the nature of loans granted during the year? Nothing but every company, no, intercorporate loans, nothing but. These companies, no, they will give loans to their subsidiaries, their partnership firms, their employees, like to related parties and unrelated parties. They will be giving loans to related parties and unrelated parties. By the way, this point will not apply for finance companies. Investment companies and banking companies, this one. Of course, bank CARO itself is not applicable. NBFCs, this point is not applicable. So they'll give you this point. This point is not applicable. This is not applicable to companies whose principal business is to give loans. For which companies the business itself is giving loans? NBFCs. Non-banking finance, suppose Muthoot Finance, their business is what? Giving loan, gold loan. So no, Bajaj Finance, what is their business? Giving vehicle loans, giving car loans, giving housing loans, like that. Further, this point is not applicable. Now, other than these companies, it's normal manufacturing, trading and service companies. If they are giving loans now, whatever the loans they rescheduled, means loan is given long back, now we are rescheduling the loan. We are rescheduling or we are renewing or we are extending the due date period. Due date we are extending. Like they have to pay in so and so amount by so and so date. The due date we are extending. How much amount of loans? How much amount worth of loan that you rescheduled the terms and conditions, or you renewed the terms and conditions, or you extended the credit period again? Getting the point? How much amount? And this year you have given so many loans, right? As a percentage of total loans given this year, how much of the loan was rescheduled? Suppose this year I gave approximately 1000 crore loans. My company has given total loans how much? 1000. And out of this, 100 crore worth of loans were rescheduled loans. They are not freshly given. They are rescheduled loans. Means loans were given long back, but I wrote off and then gave it as a fresh loan again. Getting the point? 10% of the total loans were rescheduled loans. 10% of the total loans was renewed loans. 10% of the total loans were extended loans. So you need to give this breakup clearly. Next, demand loans without repayment period. Nothing but whether the company has given any demand loans to anybody. Demand loan means repay, loan on call. So the moment a company call for repayment, they have to repay. Whether any such amount, how much amount is given as a demand loan, what is the percentage of demand loan of total loans granted? Suppose company gave 50 crore loan to a director. Getting the point? 50 crore worth of loan to a director. Actually, the company has given 1,000 crore loans during the year to anybody. Employee loans, it may be employee loans, it may be director loan, it may be subsidiary company, whatever. 5% of the total loans were demand loans given by the company. And how much of the loans, demand loans, were given to promoters related parties specifically? How much of the demand loans were given to promoters and all that? Total demand loan, how much? 50 crore. To directors and all, how much you give? Some 5 crore you have given. Example. So that you need to mention. Clear? See, the time within which we have is we need to discuss all this. So don't think that I'm going little speed. I hope you have already gone through this. So getting it? Next. Deposits easy point, cost to cards easy point, statutory dues. I am only covering, that's why little tough points. Statutory dues. Statutory dues, we are dividing them into two parts. Undisputed dues, disputed dues. One is undisputed due, another one is disputed due. Now, undisputed due. See, what is first of all undisputed and disputed? Disputed due, suppose a company has received a income tax demand notice. Company has received a income tax demand notice that company has to pay so and so 100 crore tax amount pertaining to so and so assessment year. Demand notice is received. Suppose if company accepted it without filing any counter appeal, company has accepted. As on 31st March, no appeal has been filed. As on that date, what is that due? Undisputed. As on that date, what is the due? Undisputed. I didn't went for dispute that I will not pay this tax and all. So company has showed it as a liability in the balance sheet also. Income tax liability, income tax notice demanded due. 100 crore they showed. This is undisputed. Suppose if a company filed a counter appeal, company went to tribunal. Getting it? So the order came is from appellant, appeal, Commission of Income Tax Appeals. From them they have got the order. Now why should I pay? My accounting, everything is correct. You are only calculating wrongly. You are only assuming wrongly. You are not considering my data. Fine. I will go and argue in the tribunal, not before you. So company filed a tribunal, Income Tax Appellate Tribunal. Getting it? They filed a case against the CIT appeals in the ITAT. Now the 100 crore in the dispute, right? That's called disputed due. Are you getting the point? Next. Now every month the company will have to pay GST, right? Every month they have to pay GST. Whatever GST they are collecting from customer, they have to pay. Every month company has to pay provident fund and all, right? Like they will collect from employee their contribution. Company also will add its own contribution, employer contribution. Both together they need to deposit with the provident fund authorities. ESI contribution, GST, municipal taxes, property taxes, local taxes, customs duty. Yes or no? Statutory dues. Statutory dues means what? Statutory dues means any liability that an entity has to pay because of a levy under a law, because of a compulsion under a particular enactment or act. Getting it? That's called as a statutory due. Now that is divided into two parts, undisputed and disputed. Now what is undisputed, what is disputed, we understood. So if any due company has to voluntarily pay every month by calculating, that's an undisputed due. Disputed due means I told you just now. Getting the point? Now what auditor has to comment regarding these dues? Suppose if there is a disputed due, company auditor has to disclose the following. In case dues have not been deposited, because I didn't deposit with the company, I just only paid, like what, stake money. I mean, that's called actually deposit money. What is it? Deposit money. Getting it? So we generally keep certain deposit to go for a tribunal. Suppose if I have to go for a tribunal, I have to pay some 20% of the demand, just as a deposit money. Getting the point? So deposit money I'll keep and go. So remaining 80% I didn't deposit now. Some companies now they don't even deposit 10%. They don't even deposit 5%. So in case any dues which are under dispute not deposited because there is a dispute, the auditor shall indicate how much amount is involved in the dispute and where the dispute is pending. Look at how Tata Motors is showing this. So look at this. So they are showing like this. Name of the statute, Income Tax Act. Nature of the due, income tax. 2 crore is pending. Paid under protest. Protest means as a deposit. Paid under protest means as a deposit. So related to which period? Forum. In High Court the case is pending. We just have to give disclosure. We just have to. We take this information from company, disclose it in your CARO report. Getting the point? So how much amount is pending and where it is pending, under which law it is pending, to which year it pertains to. Getting the point? All that. You see, they have given Service Tax, Finance Act 2014. Getting it? So some 1086 crore relating to 4-5. Some amount is spending at High Court. Some amount is spending at Sestat Tribunal. Getting the point? So we just show that information. What about undisputed due? Undisputed due is what? In that, no, what auditor has to check is two parameters auditor has to check. Regarding undisputed dues, we have to check 2 points. Is the company regular in depositing undisputed statutory dues? Is the company regular in depositing undisputed statutory dues? Regular undisputed means what? Regularly depositing. Regular means what? Within due date. Within due date. If the company is paying every month GST liability by next month 20, every month they are paying on or before 20, the company is regular. Getting the point? Suppose if the company is defaulting, every month they are paying late, or 3 to 4 months they paid late. Now in the CARO report, what we should say? The company is not regular in paying undisputed dues to GST department. The following is the list of default. April month, so and so state registration, so and so default. May month, so and so state registrations, so and so default. We should give a list of defaults. Able to understand? All of you. Further, suppose if there is a default, if the company is not regular, what is the extent of outstanding? What is the arrears that are outstanding? That too for a period more than 6 months from the date they become payable shall be indicated by the auditor. Nothing but suppose the company has to pay some GST liability to department. The company has to pay some GST liability to department. As on 31st March, some 10 crore liability is still pending. Now from when this 10 crore has to pay? Out of this 1 crore belong to March, 1 crore belong to February, 1 crore belong to January, some 3 crore belong to December, some 2 crore belong to October, some 2 crore belong to September due. September related due is there, not 2 crore. That has to be paid by actually September 20. But it is not paid on September 20. March 31st also came. From the date it became due, it is outstanding for more than 6 months. The GST amount belonging to September month is outstanding for more than 6 months. That 2 crore auditor has to report. What about October due, November due, December, January, February? Of course, they are also outstanding. I didn't pay, but they were not outstanding for more than 6 months. As on 31st March, how much of the statutory due is outstanding, which is, of course, there is no dispute. Still, government department has not issued me any notice and all. There is no dispute. This is something voluntarily I have to compute and then pay. Every month we compute voluntarily GST and then pay. Every month we pay not because GST officer is coming and demanding. Voluntarily we have to comply with the law. If you don't comply voluntarily with the law, tomorrow if scrutiny or assessment happens, they'll levy penalties, interest and all. Correct? So, undisputed dues, 2 questions. Is the company regular? If not, as on 31st March, how much of the outstanding due is there, which is outstanding for more than 6 months from the date they become originally payable? So 31st March should be more than 6 months from the original due date. That amount you have to disclose. MCQs will be asked on this. Able to understand. Whereas disputed due, what we need to show? How much amount is pending in the dispute, where it is pending. Just information we should show disputed. Whereas undisputed, we should give our opinion also. What opinion? Is the company regular? That opinion we should give. Further, we should disclose about more than 6 months outstanding due. Here or not? Now they have given a note point. A mere representation to a department is not a dispute. See, suppose they gave a demand notice. We just went to the income tax department and we want to meet the concerned appeal assessing officer or the commissioner. Sir, what is it regarding? Can you just explain? You have raised a demand notice. I just want to know because we have not yet filed a case against them. Now, this is just a representation that we are going. That you can't call it as a dispute. Are you getting the point? Dispute means what? You have filed a case against him in another forum. Upper, higher authority, you have filed a case. That is called dispute. 8th point. Discovery of undisclosed income. Discovery of undisclosed income. You see, whether any transactions not recorded in books of accounts have been surrendered or disclosed as income during the year in the tax assessments under Income Tax Act. If so, whether the previously unrecorded income has been recorded in the books of accounts during the year. This is a prior period item. Getting it? May be treated as a prior period item. Nothing but, department because of the powers they have, search and raid, income tax raid. They raided the company. They suddenly found some excess cash, for which company is not giving explanation where is the source of the cash. Because for company, all the sales are on online only. Every amount is received only through bank. Now suddenly, where is this cash? Company is doing some cash transactions which they are not showing in the P&L account. Getting the point? Now these transactions are pertaining to previous years also. Getting the point? Now finally, after this raid, company agreed, surrendered to the income tax department and paid tax, all that. Whether such an incident happened in the company where we are doing audit, whether such an incident happened or not, we should just report. Are you clear? And we should also see whether previously unrecorded income, this is something unrecorded, right, in the previous years, is it now recorded in the books of accounts also? We should check how the company records this as a prior period. Next, default in repayment of dues. Remember the questions I'm telling you, this is how they ask the questions. They don't ask you what is 8th class in CARO. Getting the point? They'll ask you inside the content. So they'll ask you what are the reporting requirements in relation to working capital loan in case of the CARO reporting. So under CARO, regarding working capital, auditor has to report on certain matters. What is the reporting requirement? This is how they'll ask you. Regarding statutory dues, what is the reporting requirements? This is how the questions will be asked. So you need to write the content inside. You need to understand it first and then write it thoroughly. Next. So now default. The company, they're paying loans and advances they have taken from various banks, right? They're repaying it. Now when they're repaying, there are some default. You see, whether the company has defaulted in repayment of loans to financial institution, bank, debenture holders or government. Whether the company has defaulted in repayment of dues. So is there a default when the company is repaying? The default means what? After due date if you pay, it's a default. On or before due date if you repay the installment or interest expenditure, it's a honoring the contract. If you pay after the due date, it's default. Of course you paid later. You paid it. The fact that you paid has to be ignored. When you paid after due date, that's it. That's a default. It will be reflected in the CIBIL report. Getting it? Auditor can find all this data in CIBIL report. So generate CIBIL report for the company. You will find all the loans, when the amounts were paid, what are the amounts that were paid late, okay, where and all they dishonored. Getting the point? With the commitments entered into the banks and financial institutions, you will find. Remember here, only banks and financial institutions are mainly covered. Getting it? Now look at, if so, suppose if there is a default, what is the period of default, how much amount of default, how much is the amount of default, and for how long the default continued. Lender wise you should give, like name of the nature of the borrowing, working capital loan, nature of the borrowing, working capital loan, name of the lender, ICICI Bank, amount not paid on due date 10 crore, whether principal or interest or both, it's an EMI, it's an installment, delay in number of days, April month EMI 5 days, May month EMI 10 days it was paid belatedly, March month, some June month EMI some 2 days delay, some February month some 15 days delay, like that you need to mention. Of course company paid later on. If at all company do not pay, then you will mention up to 31st March it is delayed. You will mention that as on 31st March not yet paid. Getting it? Remarks if any. If at all you want to add any comment on it, you can add it. Suppose whether the company is declared as a willful defaulter by any lender. So whether any lender classified this company as a willful defaulter. Willful defaulter means you have cash but you're not paying. Getting it? They are called as what? Willful defaulter. Or you have taken loan for one purpose, you diverted the funds to some other purpose and defaulted this loan. Primarily you diverted the purpose of the loan, right? You violated the promise given to the bank that you will use it for so and so purpose. Then also you are called as what? Willful defaulter. So in the CIBIL report it will appear. Whether the company is declared as a willful defaulter, in the CIBIL report it will be appearing. Getting it? Next. Now, for what purpose the terms loan were obtained? For what purpose the term loans was used? Term loan means long-term loan. Getting the point? Or it may be a short-term loan also. Getting it? So whether the term loans taken by the company, generally term loan means for a particular purpose they will give. What is the purpose you should mention and then take the loan. Getting the point? If at all you are using the loan for some other purpose other than the designated purpose, able to understand, then the auditor has to comment here. So diversion of funds is a very big important thing. Diversion of funds should not happen. So suppose if a company raised money from True, by issuing prospectus from public. For what purpose you stated in the prospectus, for the same purpose you should use the money. You should not use it temporarily also for some other purpose. Suppose whether funds raised on short-term basis, if they have been utilized for long-term purpose, indicate what is the nature and amount. What is the nature and amount to be indicated? Like for what purpose it is invested ultimately. So a short-term loan, overdraft, cash credit, short-term loans, working capital loans, all these are what? Short-term loans. You should use it only for short-term purposes. But suppose if the overdraft amount you withdrawn and invested in a land, getting the point? Short-term loan is invested in long-term asset. You have to indicate. These are all symptoms of defaults. These are all what? Symptoms of default. Suppose I took OD from one bank, repaid another OD which is coming due in another bank. If I have to pay this OD tomorrow, I will withdraw from that OD and then repay to this bank. So there is a flexibility of adjustment. But if I invest in land, tomorrow due date comes, the company is not generating any revenue. How should the company repay? Suppose if the amount of loan is kept in short-term purpose only, getting the point? If they kept in working capital rotation only, the company will get back the money very soon. So if at all these incident happens, if we report in CARO and all, people get to know a company is not managing the funds properly. At any time they will default. If at all any short-term loans were invested in long-term purpose, it will be an event or condition that may cast a significant doubt on entity's ability to continue as a going concern. Further, some companies they take loans to meet subsidiary company needs. Whether the company has taken any funds from any entity or any person, not necessarily bank or FI. Getting the point? On account of or to meet the obligation of its subsidiary associates, joint ventures. If so, what is the nature of transactions and amount? So whether your company, have you taken any loan? For what purpose? Not for your purpose, but for your subsidiary company, associate company, joint venture companies. For their purpose you have taken the loan. So how much you have taken, all that you need to indicate. Same way, whether the company has raised any loan during the year on pledge of securities held in subsidiary associates. If so, give details thereof. Also report if there is a default in those loans. Nothing but I have shares in one company. My company has shares in another company. That too, we have 51% shareholding. Naturally, our company becomes what? Holding company. But I have shares in another company. That shares have a market value, right? So what I did is I went to a bank. I kept these shares as security. I kept with bank these shares as a security and got a loan. And if I default, what happens? Bank will exercise its right. Naturally, I will lose the ownership. If I lose ownership on the subsidiary company, bank will become the holding company. Getting the point? I will lose the control on my subsidiary company. So look at the impact of this transaction. So they are asking, dear company, have you taken any loan where the property, security that you have given is what? Shares that you are holding in subsidiary companies, joint ventures, associates. That you kept that you gave as a security and then got a loan. Have you defaulted this? So we need to check. So this will give information about losing of interest, losing of control on the subsidiaries. Because if you default, bank will exercise their right. They will sell the shares to somebody. You will naturally lose ownership. Able to understand. Next. It feels like you have not seen all these points. You have seen it. All of you. Next, further. So that is regarding default. In this, they'll ask you. They will ask you regarding loans taken for subsidiary company needs. What are the reporting requirements in relation to loans taken for subsidiary company needs or loans taken by pledging securities held in subsidiary company? So like this they may ask you. Getting it? Or they may write about reporting requirements in case of default in repayment of dues to banks and FIs. Getting it? They may ask you that. Next. End use of funds raised. Here it is regarding IPO, FPO, preferential allotment. Nothing but by issuing shares. By issuing shares and securities, you are raising the money. You are raising money by issuing shares and securities. Now, how you are issuing shares and securities? Maybe through public offer or maybe through preferential allotment or private placement. Maybe through preferential allotment or private placement or public offer. Whatever it is. Whether you are raising money from public offer or preferential allotment or private placement, you are issuing shares essentially and you are raising the money. Now, when you're issuing your shares and raising the money, you would have told some purpose, right? For what purpose you're raising the money? Did the company use the money for the same purpose or not? Did the company use the money for same purpose? Like Vodafone is going for 45,000 crore fundraising. So they are coming for further public offer. Now, what they are mentioning in the prospectus and all, we want 45,000 crore worth of capital for our expansion in 5G network. Now, once they get the money, are they using it only for 5G network expansion or are they using it to pay salaries to employee? You need to check. If not utilized, if the company, for what purpose they raised fund from shareholders. Remember, in the 9th clause, it is talking about fund raised from banks, loans and borrowings. Here it is fundraising activity through shares, allotment of shares. Suppose if the money is raised from IPO or FPO, if the money is raised from IPO or FPO, if they were utilized for purpose for which, whether the money raised for the same purpose. If not, what is the default? Vodafone raised money and used it to pay 1,000 crores of the money, 1,000 crore of the out of total money, they used it to repay creditors. Another 2,000 crore they used it to repay salaries, arrears of salaries. Another 3,000 crore they used it to buy fixed asset, which is not related to 5G expansion. Another 5,000 crore they used it for renovation of all their warehouses. All their stores. Getting it? So, if there is a default, you indicate. Suppose no. Generally, in the public offer, no, we will mention in the offer letter, in the bank terms and conditions, within what time you should spend the money also. When we are raising money, we should also tell the people, right, for what purpose. When are you investing? You should tell when. Suppose if there is a delay in utilization, you should mention. Suppose no, I told 45,000 crore money I raised, 2,000 crore salaries I paid actually. So which is a default. I subsequently rectified it. I got collection from my customer. That money again I routed to 5G expansion. So I rectified it subsequently. Temporarily only I defaulted and I rectified it. Even if you subsequently rectify, it has to be reported. Tell me, is this information available on the face of the balance sheet to shareholders? No. Since you are the auditor, you see entire funds flow analysis, you see entire cash flow analysis, you understand from where the company is getting funds, where the company is moving the funds. Able to understand. How do you do this funds flow analysis? Very simple. Company bank account, they'll get money, 45,000 crore credit is there. Getting it? Suppose already some 10,000 crore credit already their balance, total 55,000 crore. 5,000 crore salary paid. I will assume that from the old balance available, they paid. Another 7,000 crore they paid for salaries. 5,000 crore old balance is still there. 2,000 crore balance now, from where it got actually 45,000 crore credit is there, right? From that they utilize the 2,000. I will conclude like this. Able to understand? FIFO basis on I'll match. Okay. Then preferential allotment, same. If a company has went for any preferential allotment or private placement, getting it? Verify compliance with 42 section. If they go for private placement, whether companies at 42 section has been complied or not. And whatever the amount raised, no, is it used for the same purpose? If there is a non-compliance, how much is the amount involved and how much is what is the mistake they did? With what condition they failed? Indirectly, non-compliance, when I mention non-compliance, what non-compliance they did? Indirectly, I am talking about what punishment company will get. Reporting of frauds. Reporting of frauds is like whether any fraud by the company or any fraud on the company. Getting it? On the company, who can do the fraud? Either officers or employees or anybody. You see, I intentionally added this officer and what and strike through it. Getting it? Because originally once upon a time this was there. Now it is removed in CARO 2020. So I intentionally kept like this. Okay. So whether any fraud by the company committed a fraud on third parties, it has to be reported. Somebody committed a fraud on the company because of which company has suffered some financial loss. It has to be reported. If yes, what is the nature of the fraud and amount involved is to be indicated. In Tata Motors, no, they mentioned that. They mentioned some theft point. You see, during the course of our examination, records of the company, explanation given to us, no material frauds by the company or on the company has been noticed or reported, except that we have been informed about 3 incidents estimated to 15 crore involving 3 employees who in collusion with certain vendors processed payments with inadequate documentation and benefited from them. The services of these employees were terminated. So some employee have done a fraud on vendors. Getting it? Vendor related fraud they have committed. So auditor is reporting that. That's what in CARO also CARO also says, right? If any fraud has been committed on the company, here employees committed a fraud on the company, 15 crore worth of vendor management fraud. So they reported. Are you clear? This is something not we discovered. Company already discovered this. Getting it? You see the first point. Whether frauds committed, whether any frauds by the company on the company has been noticed or reported during the year. Getting the point? If you notice, report it. Or if they were reported already to the company, report it. Both have to be reported. If you identify any fraud, you report here. If management has already identified any fraud, you report it. Now you may say, sir, what if management do not disclose the information? That's why we get written representation. We get a written representation that all the frauds identified by the company has been disclosed to the auditor. Nothing is omitted from auditor's knowledge by the company. Directors, CEO has to sign this. Tomorrow, if company did not disclose me, later it was discovered that, I will show, sir, see, management, I discussed with them, they said no. So they are lying me, they are cheating me. Able to understand. Next, 143.12. There is a section called 143.12 where if we identify any fraud for more than 1 crore, getting the point, if we identify any fraud for more than 1 crore in each transaction, in a particular transaction, if the fraud amount is more than 1 crore, that transaction we should report to central government by filing ADT 4 form. We should report to central government. So they are asking here whether any report under ADT 4 is filed or not. Dear auditor, have you filed any ADT 4 report? So Tata Motors auditor said no. No report was filed, which means 15 crore worth of fraud they told, right? Who discovered that actually? Company only discovered. Auditor not discovered. 143 subsection 12, no, reporting of frauds by auditors, no. That is about auditor identified the fraud. If auditor identified the fraud, which company did not identify earlier, that auditor has to specifically report to central government. Central government will inquire the company, why you did not identify the fraud? Auditor who is doing on a sample basis himself identified fraud. You are doing your knowledge, you are having knowledge of entire affairs. You are not finding the fraud, you are not reporting. Somebody is doing something wrong in your company. So government will put an investigation there. Able to understand. Further, whistleblower complaints. Whether auditor has considered whistleblower complaints, if any, received during the year by the company. So companies know whistleblower policy will be there. There is something called whistleblower policy. Getting it? Whistleblower means what? See, night times and all, Gurkhas and all will be there. So if they find something suspicious, what they do? They blow the whistle. Getting it? That's called whistleblower policy. So like that, in a company, they have to establish a whistleblower mechanism. They should educate each and every employee. Look, employees, there is a box available there. Whistleblower complaint box. Complaint box is available. If you find something wrong in this company, in any affairs, in whatever the issue, please drop your complaint. You need not even mention your name, like that company may do, or the company may mention that you mention your employee ID code, all that. What is the fraud that you are noticing? Please file that. Your information will be kept confidentially. Getting it? That assurance company has to give them. So that a kind of mechanism company has to create and explain it to the employees. So some employees know they filed complaints there. Getting the point? Actually today it's not kind of box. Today it's completely online forms. Getting it? That too, the online form should not be editable. In such a way, IT control should also be employed. So now company have received approximately some 500-600 complaints from various employees regarding various complaints. Auditor has to go through all of them. That will help him in risk assessment, right? While watching, by reading all these complaints, I will understand where things are going wrong. So that will help me to do audit much more better, right? In CARO, they are asking, dear auditor, have you considered the whistleblower complaints during the audit of the company, which are received by the company during the year? So whether the auditor considered the whistleblower complaints, they are just asking, have you considered? If you considered enough, no problem. If you do not consider, you are missing potential information. Nidhi company not required for you. Related party transactions also not required. See, when I'm saying not required, not that from exam point of view. Now I am not teaching. Getting it? If I sit on teaching that, when will I cover next topic? Next. Nidhi company is nothing but a NBFC. It is also a type of NBFC. Fine, I'll briefly cover. Nidhi company, for every 1 rupee of net owned funds, Nidhi cannot accept 20 rupees of deposits. What happens in Nidhi companies? Let us assume a Nidhi company shall not have more than 200 members. Or minimum number is 200 members. Something like that is there. Okay. Nidhi companies. So Nidhi rules were there. Under company law, for Nidhi companies, there are separate rules, separate provisions, separate forms. Nidhi forms and all will be separate. Okay. So it's something similar to chit fund company. So what Nidhi companies will do, no, they will take loan from each and every member. Suppose 200 members join in a Nidhi company. One scheme is there. All the members will give a deposit with the company. Company will be paying interest to them. Company will be paying some interest to them. Now the amount which I have taken from 200 members, no, I will give to the members who want loan. Whoever wanting the loan, I will give the transfer the money to the members. Now, how much amount of loan I can give? 90% of the amount of deposit I collected. Maximum loan, how much I can give? 90%. You see here. Whether Nidhi company maintaining 10% unencumbered term deposits. So out of total deposits I've accepted, 10% should not be given as loan. 10% I should always maintain liquidity. Suppose some depositor may come and ask back his money. So I should give them. Getting it? And in order to do this business, no, whatever liability is there, right? Suppose I'm accepting from 200 members. 200 crore I'm accepting. I must at least have 5%, 5 crore own capital. The owner who is running the Nidhi company must have at least 5 crore capital. If a Nidhi company is accepting 200 crore deposit, that's a liability for the Nidhi company. Capital should be minimum how much? 5 crore. Actually, the numbers which I told is only for basic level understanding. This is not 100% true. There are so many calculations that are involved for Nidhi company, net worth calculation, capital requirement calculations and all, which are not important for us. Now, I just explain you understanding, to understand this point. Whether there has been any default in repayment of interest or deposit, if so, what are the details? Whether the Nidhi company, they have to pay interest to deposit holders, right? Is there any default? Auditor has to report. So if at all you are an auditor of Nidhi company, you have to report. Related party transactions, very simple. Related party transactions, no, whether 177 audit committee have to give approval for related party transactions. 188, which is exclusively talking about related party transactions. Getting it? So whether the conditions are complete or not. 2. Whether the related party transactions are disclosed in financial statements as per applicable accounting standard. 2 points we should check. Whether the related party transactions are conducted as per law. 2. Whether the related party transactions are disclosed as per applicable framework or not. We have accounting standard 18, related party. So as per accounting standard 18, we have to disclose in notes to account certain related party transactions. Whether the disclosure is proper or not, auditor has to check. Internal audit system, I will talk about this in SA 610. We have an SA 610 in the audit evidence chapter. There I will discuss. Non-cash transactions, that's not required. NBFC, this is little bit in-depth. NBFC, I'll briefly cover. See, if a business, if an entity whose principal business is from finance activities, then that company, that entity must register as NBFC. Suppose out of total assets in the balance sheet, more than 50% assets are financial assets, or in the total income in the P&L, more than 50% income is from the financial assets. The income is from the financial assets, means predominantly your income is generated from finance activities. You are not doing any business operation. You are doing finance business, nothing but. You are supposed to be a finance company. Of course, you are not a banking company where you are not accepting deposits. Getting it? So, you are an NBFC liable for registration. Now, look at the company where you are doing audit, Tata Motors. Look at their other income. Look at their finance income. Is it more than 50% of the total income in Tata Motors? No. The finance income is 1 or 2% only for the Tata Motors. Okay. Look at the financial assets, investments, cash balance, debtors, loans and advances given, not debtors, loans and advances given, cash balance, deposits, fixed deposits, investments. So these items total you see. Is it more than 50% of the total assets of the Tata? No, it is somewhere around 5 to 10%. So Tata Motors is not satisfying principal business criteria. Therefore, Tata Motor is not liable to be registered with RBI as an NBFC. First question, whether the company is required to be registered under NBFC, whether the company is required to be registered as an NBFC as per section 45 IA. If so, if there is a requirement, whether the company got registration? No. Getting it? So Tata Motors, the principal business criteria not satisfied, therefore they are not liable for registration. Accordingly, they did not get registration. Now, you need to also specifically tell whether company has conducted any NBFC activity without registration. Suppose if the company is liable for registration, but not registered and are still doing happily NBFC activity, report it. Further, whether the company is a core investment company. Whether the company is a core investment company. Whether the company you are doing audit is a core investment company. What is a core investment company? Tata Sons Private Limited. There is a company called Tata Sons. Tata Sons private company, what they do? They don't do any business. Their only business is investment in various other companies. Tata Motors, Tata Consultancy Services, Tata Steel, Tata Passenger Vehicle Limited, Tata Beverages Limited, Tata Communications Limited, Tata Steel, Tata Power. All these, approximately some 30 companies were there, Tata Group. All these 30 companies were subsidiary companies of Tata Sons Private Limited. What Tata Sons Private Limited do? They just invest in companies. They just keep on investing in companies. More than 90% of their total assets, more than 90% of their total assets are represented by investment in multiple companies. That company is called as core investment company. What is their core business? Investment. Are you getting it? That's called as a core investment company. So whether the company is a core investment company, check out. Suppose if I'm doing audit of Tata Sons, yes, Tata Sons is a core investment company. Whether it continue to fulfill CIC criteria, is it still fulfilling CIC criteria? Yes. Even today, total investments value out of total assets of Tata Sons Private Limited is more than 90%. Still it satisfies core investment company definition. Core investment companies, they are supposed to register with RBI as NBFC if the asset size is 100 crore and above. If the asset size is more than 100 crore, they have to register with RBI. Otherwise, they are exempted. Suppose, is the company which you are doing, is it an unregistered CIC? If it is unregistered core investment company, unregistered means what? Not registered with RBI as NBFC. Why? Exemption is there. Whether the exemption continue to apply, whether they are fulfilling the exemption criteria, auditor has to check. Now, Tata Group, it has only one core investment company. Actually, 6 were there, I think so. 6 were there. So, whether Tata Group has more than one core investment company, if yes, indicate the number of core investment companies as part of the Tata Group. So, in Tata Group, I know one core investment company, that is Tata Sons Private Limited. There might be some 2 or 3 core investment companies might be there. Just indicate the number and names. That's it. I don't think they'll ask this. Next, cash losses. Cash losses. Because in CA internal, you don't have NBFC. I think in accounts, you have NBFC accounts. In Group 1 now, new scheme, is it there? I don't know, I'm just asking. If at all any of you are writing new Group 1, if at all you have seen advanced accounting, just tell me. Is NBFC audit, NBFC accounts there for you? No, then fine. Earlier it was there. Okay, fine. Now we have in CA final NBFC audit. We have a very advanced level discussion. Fine. Cash losses. Whether the company has incurred cash losses in the financial year and in the immediately preceding financial year. If so, amount of cash loss has to be indicated. Nothing but what is a cash loss? Look, just 1 minute. Okay. Yes, let's continue. Auditing is not a scoring subject. What very many claim that. Correct? The reason why it is not scoring is you will not give the same amount of attention that you give for costing or effect. Financial management, for a comparison sake, I'll tell you. Financial management total number of hours classes in a regular is 100. Auditing also 100. And financial management weight right now in the new scheme is 50. The same 100 hours in auditing is 100 marks. And for a paper like FM and SM put together, student will spend 150 hours on coaching. And since it's a FM is a practical subject, they solve on it. They revise, they spend another 100 hours. They spend 250 hours and they get 60 or 65. If at all they spend all 250 hours. Whereas in audit, he wants to finish in 50 hours coaching. And he wants to revise in 20 hours. And he will complain that I will not even get 40. You are spending 250 hours there and getting 60. And you are trying to spend less than 100 or 150 as a whole and expecting 60. If it is possible, you spend same amount of time on audit, I'll bet 70 plus you will get. It's all about, you see, always, the result is always in proportion to the efforts we give, right? So no, accounting is a scoring subject. Yes, it is scoring because you spend 300 hours on accounting. On coaching, practice, everything, 300 hours you spend. Same 300 you spend on audit. In accounts, whether you get exemption or not, I'm not sure, but in audit, you'll get exemption if you spend the same amount of time. Able to understand? So, what is important is spending time, how much time we are dedicating. So, we should always look in that perspective. In every attempt, he will spend only 50 hours in audit. And every attempt, he will fail in audit. And he'll come and say, sir, always I'm failing in audit only, sir. How many hours you spent on auditing? Sir, I studied for 10 days. How many hours you studied account? 25 days. Obviously, that's the reason. So you take 5 days there and study here 5 days extra. You will qualify now. So he is getting 55, 58, 59 and all the 3 subjects earlier. In audit alone 35. And he failed. Just another 5 marks if at all he got, he would have qualified. Why he didn't get that 5 marks? Because he wanted to finish in 20 hours audit. How it is possible? Complete that to text only here it is. No numbers. Complete theory. Yes or no? You need to understand it, right? Some students, they come and say, sir, I'm unable to remember the terminology. First you are unable to understand when first you recognize that. Forget about remembering. You didn't understand first. First you should understand the terminology, right? In order to remember it. Without understanding it, how should you remember? How will you remember? Obviously not possible, right? So understanding is most important. Understanding means not sentence, word. Understanding the context. How it impacts. Getting it? That is what understanding really means. So try in this way, you will definitely find that improvement. You will definitely find. So give time for audit. Okay. You give time and then see the result. Okay. How you are treating other subjects. Same way you should treat audit also. The point is audit becomes a secondary subject for many. Auditing and last path. We'll take care of auditing at last. No issue. Day before exam, 2 days, marathon, chat book over. You will go and write chat only. Getting it? So examiner, no, he'll give question for 100 mark, 100, the mark, like how he'll write. If the question standard is at 100, what you understood is 60. And what you're reading from chat book contains only 30. What you're writing is 20. What you get is 1. The problem, this is how the marks are reducing, correct? Huh? So read thoroughly from the main material. I could have made a color notes in auditing. This time consciously I delayed it. No, let me not do. If I make a color notes, I will use by mistake color notes only. Okay, simplified notes. No, let me not do that. MCQs and all. See now, I don't know. Some students are coming and showing me MCQs from online ICA portal. Sentences are so big. Yes or no? If you read from shortcut material, no, how will you understand? Are you clear? Now you see here, no. Somewhere in IPO and FPO. So sometimes no, we do record class 1.5 hour full energetic. Recording is not on. The kind of the kind of disappointment I get no that time. From then no, I made a habit. Whenever I record, once or twice I'll check the recording. Is it on or not? And then only I'll proceed further. 2 times it happened with me. And again, that level of interest will not come, right? Once we are recording, that mood and all will not come. So now tell me, first class fundamentals and all, I told something. In spite I'm not healthy. But now if I have to take that 1 hour, it's a big challenge for me. It's a very big challenge. Now you see here, IPO, FPO, right? Here you observe, this question, no, if at all they test it as an MCQ. Options, how they'll give, no, how they'll give you this MCQ. I don't know, I don't think this much advanced. Already they're testing this style also. They're testing this style. Whether funds, whether money raised by IPO, FPO were utilized for the same purpose. If not, option A. If not, the details of default to be reported. Option A. Option B. If not, the details of delay default has to be reported. Option C. If not, the subsequent rectification has to be reported. Like they'll give you 3 options. Sometimes, getting the point. 4th option is they'll give something else. So you need to figure out which is correct. If you never observed these words, when you're reading, if you didn't observe this, how will you identify which is the correct answer? Now tell me, in order to observe that, you cannot read from short notes. Short notes is what they'll write, whether company raised IPO, FPO funds raised. If yes, sir, if any default, report it. This you also study, yes, happy, yes or no? You'll feel like a very simple short notes. You share it to all the friends. They will also read the same. All of you together fail. Correct? Huh? This is what happening, right? The easiest route to success is the hard work. Hard work doesn't mean you have to sweat out. Right process. So usually following right process is easiest way to succeed. I'm telling you. We are unnecessarily complicating things by choosing shortcuts. Because we are choosing shortcuts, we are complicating ourselves. Getting it? Definitely there will be some 10-15 students in this who have attended more than 5-6 times crash courses in audit. Definitely. I've seen a student, he messaged me 17th attempt. There is a YouTube video also I made. In YouTube also you will find, getting it, my interview with the 17th attempt student. He qualified in 18 attempts. 17 attempts failed. I told him only one thing. Sir, what should I do? Will you do whatever I say? I just asked him. So I don't tell you something very, to go stand on one leg and then do prayer. No. Okay. I'll just tell one thing. Start from scratch. Okay. Ignore all your old books. Ignore all your old learning. Assume that you're a fresher. Start from scratch, and he did that and he qualified. So the success, easiest route is doing the right process correctly from the beginning once again. Where I am now? Cash losses. Cash losses. So what is a cash loss? See, I told this example already. Suppose I sold goods for credit. 200 crore worth of goods I sold for credit. And my purchases, my expenses, depreciation, all that I debited, and I have a profit of 5 crore. Now, when you see the P&L account like this, a company has a profit, 5 crore. But it's actually, so let us assume the company has a loss of 10 crore. Let us assume, in spite of sales minus purchases, the company is having a loss of 10 crore. But actually, to this extent of loss, there is no outflow of cash for me. The P&L, no, I debited some non-cash expenditure. I debited some provisions where there is no outflow. For that loss, no, you add back those expenses. Suppose if it's turning into profit. If the loss is turning into profit, by adding back non-cash expenditure, by adding back future expenses, provisions and all, if at all the loss is turning into positive, there is no cash loss. There is no cash loss. Suppose my P&L losses, let us assume 10 crore minus. I added back depreciation 1 crore. I added back provision 2 crore. That's it. Still there is a loss of 7 crore. This is considered as cash loss. This is considered as cash loss. Cash loss means the loss exactly incurred by the company by other than non-cash expenditure, by other than future provisions. Understand? So if there is a cash loss, that is something considerable. Getting it? In spite of adding cash losses and all, in spite of adding non-cash expenditure and all, if still company is having some cash loss, that is something we have to consider. In income tax, the same thing. This is actually called as business loss. Getting the point? Whereas this one which we added back is called as unabsorbed depreciation loss. This is something similar to income tax calculation only. Unabsorbed depreciation loss, how we calculate. From business loss, how we calculate. Similar logic only. Getting it? Of course, in income tax provisions and all not allowed as deduction. So there is no question of adding back. Okay. I don't want to confuse again. So simple. Understood cash loss. That's it. So whether the company has incurred any cash loss during the financial year, if not in the current financial year, or have they incurred in the immediately preceding year also, check out. So this year cash loss is 0. Last year cash loss something is there, reported. In both the years cash loss is there, reported. Last year it was not there, but this year it is there, reported. Are you getting the point? So by reporting cash loss, we are indirectly telling the people that, see, why cash loss will come? If there are bad debts. If there are bad debts, mainly you will get cash loss. Or if the company expenditure is more than the income, then there will be a cash loss. I think it. Next, another point. Resignation of auditors. Getting it? Resignation of auditors. Whether there has been any resignation of auditor during the year. So in this year, did auditor resign? Now you will get it out. Sir, if auditor resign, why will you report? Another auditor, man. So the auditor resigned. No, I was appointed in his place. Now I am finalizing the audit. I am giving the audit report. I need to report if at all during this year any auditor resigned. If so, whether the auditor has taken into consideration what are the issues raised by resigned auditor, what are the objections raised by resigned auditor, what are the concerns raised by outgoing auditor. Whoever have resigned and left the company, what issues, concerns, objections he raised. Getting it? You please report it here. Generally, when we are accepting any appointment in a company, who is the previous auditor? We should communicate with him. We should get NOC from him. No objection from him. Only then we can accept the audit. Very recently, there was an amendment also. Of course, this amendment was there long ago, but recently it was highlighted again. If at all previous auditor did not get fees, you should not accept audit. You accept tomorrow, you will also not get the fees. Logically, yes or no? Then material uncertainty. This is something related to going concern. This point, I think, while explaining going concern, I actually introduced it, but I forgot to teach. See, in going concern, if any events or condition identified, we do additional procedure. We do investigate. And we finally decide whether material uncertainty there or not. So, no. Now, many auditors, they are escaping. Saying we did not find any event. We did not find any condition. because we have something called reasonable assurance clause, because we have something called inherent limitation. We are showing all those reasons and escaping from these reporting of going concern issues. In many cases, this is what happening. Regulatory has woken up now, like they woke up. So the MCA suggested government to include this point. Now you need to check this. You see how powerful this point is. On the basis of financial ratios, on the basis of aging, and on the basis of expected date of realizing financial assets, and on the basis of payment of liabilities and other information in the financials, and on the basis of auditors' knowledge of directors and their management plans, whether the auditor is in the opinion, whether the auditor is of the opinion that no material uncertainty exists on the date of audit report, whether no material uncertainty exists on the date of audit report, that the company is capable of meeting its liabilities existing on the date of balance sheet when they fall due within a period of 1 year from the date of balance sheet. What is this point? So see, as on 31st March, no, the company has a liability of 100 crore. Getting it? At the same time, company has current assets, company has investment, company has given loans and advances, so many amounts. And we do cash flow forecast, right? We do check cash flow forecast, company future cash flow statement and all, future cash budget we will check. In working capital, you would have learned cash budgets. Yes or no? So cash budgets and all we will check, right? We have the data. Now, I am finalizing my audit report on 10th June. On 10th June, I should check one point before I sign my report. As on 10th June, whatever liabilities they showed on 31st March, and whatever receivables they shown on 31st March, will the company still can pay? Because as on 31st March, as on the day, company can pay. But within this 31st March and 10th June, some incidents might have happened where company may turn into a default. So when you are signing the audit report, that date you check. You have seen what are the assets available in the company. As on 10th June, you know what is the bank balance of the company. As on 10th June, you know what are the commitments company is having already. Still, do you feel whatever liabilities that are shown in the balance sheet, do you still feel that company can honor? They're asking you. Once again, think on 10th June and then report it in the CARO. Able to understand? So you should have a proper documentation for this. As on 10th June, when you're signing the audit report date, you should have a proper documentation that yes, company still has surplus funds. The company has some balance in the banks and all. They can repay whatever amount comes due. They have to. Suppose no, if you do not document like this properly, if you do not verify like this, tomorrow company went for default, you cannot claim under reasonable assurance clause. You cannot claim inherent. Look, in CARO there is a requirement. In fact, you reported in CARO that nothing has come to your attention that company can default. You gave a positive statement in CARO. You see, Tata Motors auditor, no, they said a positive statement. According to the information and explanation given to us, nothing has come to our attention which causes us to believe that any material uncertainty exists where the company is not capable of meeting. They are giving actually limited assurance. They're actually giving what? Limited assurance. In limited assurance only, nothing has come to our attention. That wording we will use. In a review engagement, we use that wording. Here also, you just have to basically review and then check. That's enough. As on 10th June, when you're signing the report, do you still believe company can honor all the payments? Because you have seen company FIRs, company bank statements, you know, company bank balances, you know, company funds, you know. So whether all the liabilities can they repay or not, will you still believe? Tata Motors said, yes, I believe that company can repay. Nothing has come to my attention that company can default. Based on the information given to me, I still feel that company can honor the payment. Suppose if tomorrow Tata Motor default, the default is because company do not have surplus funds. That too, the surplus funds are not there right from 31st March itself. Auditor comment, whatever you given is a wrong statement. So regulator can check the auditor, investigate the auditor, why you have given like this. Where is the documentation that you have came to this conclusion? If auditor could not prove, it is treated as guilty of professional misconduct. Getting it? Schedule 2, punishable offense. Able to understand? In CA Act, it's a punishable offense. Your name will be presented on the every notice board. You will become very popular. Finally, CSR, corporate social responsibility. Very simple. Every company has to spend some percentage of net profit on the CSR activity. Any unspent amount is there in that year. Either it has to be transferred to Schedule 7 fund, or if at all you have kept it for a particular project, you have to transfer that money to a separate bank account. If at all the money has been kept for some project purpose, whether that project purpose money kept in separate bank account, whether unspent money if at all there, where there is no project, have you transferred it to Schedule 7 fund? Is it done or not? You have to check. That's it. That is what you have to report here. Then this is 21st clause is applicable for consolidated financials. This 21st clause is mainly applicable for what? Consolidated financial statements audit report mainly. Getting it? Even in standalone financial statements also we will talk. Getting it? So when I'm giving audit report on standalone financials, if this company has any subsidiary company, associate company, joint venture, those companies will be included in this subsidiary company, right? Those companies will be included in this subsidiary. I mean, suppose Tata Motors is having some subsidiaries or joint ventures like that. Now, for all the subsidiaries, joint ventures, associates, no, they have their own auditors, and they have given their own audit reports. And in their audit reports also, CAROs were there. In those CARO reports also, they have given some qualifications under various clauses. Getting it? You see here, whether there have been any qualification or adverse remark by respective auditor in CARO of the companies, in CARO report of companies included in consolidated financials. If yes, indicate details of the companies, paragraph numbers of the CARO report containing qualification or adverse remark. Here indirectly, what are we saying is, you are giving audit report on the consolidated financials. Inside that audit report, 10 to 15 subsidiary companies, 10 to 15 associate companies, their information is also there. And those companies were audited by different auditors. They gave different audit reports and different CARO reports on them. In the CARO reports under different clauses for each company, some qualifications were there. Now shareholder, no, he can't open each and every company, subsidiary company CARO report and check, right? So what CARO is saying for us, you are the auditor of holding company, right? This company is preparing consolidated financials, right? Now in that consolidation, whatever companies were included, their audit reports, in that CARO reports, in what are all the clauses, qualifications were there, you give in the CARO report in your particular holding company related audit report. So look at this Tata Motors, what they did. Very simple. If you see this, you will understand. In our opinion, and according to the information explanation given to us, following joint operation companies, getting it, which are included in standalone financials, have unfavorable remark. It is regarding in the standalone financials when joint operation is included, that's why there. If you see Tata Motors consolidated financial statements, on the audit report, if you see, only 21st clause will be there. Entire CARO report will not be there. Only 21st clause will be there. Once I will just open that directly. Many don't understand this point. So this is consolidated financials, and inside that audit report. Yeah, this is Annexure A to audit report on consolidation. Actually, on consolidated financial statements, do CARO applicable? No. Look at this report on legal and regulatory requirement also. I think they might have mentioned. As required by CARO order issued by government, we have given Annexure A, getting it, on the matter specified to the extent applicable. Whatever in the CARO is applicable for consolidated financial statements related audit report, that is given. Only 21st clause. You see here. So here they have given Annexure A to independent. Now in consolidated financials of Tata Motors, which companies are included? Tata Motors is included. Tata Motors Finance, all these companies. In fact, not more than this might be included. But in these companies, under these clauses, auditors have given qualification. Under these clauses, auditors have given qualification. If you want, I have given corporate identification number. Go to MCA, enter that number, download their financials, download their audit report, go to respective clause, you will find what qualification they give. I am just giving you here list of qualifications on audit report on consolidated financials of Tata Motors. In Tata Motors consolidation, various other companies are also included, and those companies are audited by another auditor, and they have given audit report. Inside that audit report, CARO report was given. Inside that CARO, so and so clauses contains qualified opinion. That entire list I am giving it in this audit report. Easy or not? Making the job of the shareholders easier or not? This audit report chapter is completed. Okay, actually 143 subsection 3 is there. 143 subsection 3, in that no diversion of funds concept and all were there. That I will discuss when I'm explaining items of financial. Getting it? And okay, that's it. I'll conclude this. So the next topic is audit documentation. where we are actually discussing SA 230 standard. So until now, if you observe, nature, objective and scope of audit, we have covered 200. As actually mainly the content is taken from 200. Terms of engagement, we have discussed 210. And ethics, no, that is also covered as part of 200 and ICA code of ethics. Then we have seen in audit report some standards 700, 701, 705, 706 and 570, 299. 600 basics we have covered. Yes or no? Branch audit. So we have covered somewhere approximately some 10 to 12 standards. 10 standards maybe. So this is another standard which we are covering, that is 230, audit documentation. Now what is documentation? You see, in reality, the audit documentation is completely electronic. Once upon a time, we have both electronic form and physical. Nowadays, in big four entities, entire documentation is only electronic, no physical documentation. There is no physical paper. But today, even in medium-sized firms and small firms, getting a small and medium practitioners, there they have physical documentation is also there and electronic is also. Both the documentations were there. So I'll show you how electronic documentation looks like. The layout in software may be slightly different. Getting it? But how the folders will be arranged. So in a computer, the documentation will be like this. Suppose no, if you open any auditor office server, any auditor's office server, no, if you open. So generally when we are doing articles or when we are working in an audit firm, so we will be having one system separately. Through that system, we can connect it to server of the firm. Okay. So as per the server, if you open, no, they'll have some files. Like there is something called clients data, okay, and something called others data. Now you open the clients. Inside the clients, a firm might be having different categories of clients, like company clients, sort of firms. The company might have a firm clients, sort of partnership firms and all. The companies may have sole proprietors. The companies may have cooperative societies like that. Now you open company clients. The company is having so many clients like Tata Motors Limited, Reliance Industries Limited, like Adani Ports Limited, like that, with different companies for them. You open Tata Motors. This company is audited from financial year 1920, financial year 2021, financial year 21-22, financial year 22-23. Getting it? You open 22-23 folder. I'm showing you how documentation will be there in an auditor's office. Getting it? That is what we are discussing actually. The 22-23 folder you see. Inside this, if you open, so first one, risk assessment and preliminary engagement activities, one folder is there. Risk assessment and preliminary engagement activities, some folder is there. Then there is another folder called further audit procedures. There is another folder called further audit procedures. Then there is a folder called review and conclusion. Then final folder called reporting. There are 4 folders which were there. One is risk assessment and preliminary engagement activity. Another further audit procedures, review and conclusions, and finally reporting. Now you open further audit procedures. Inside this P&L items, balance sheet items, another folder is there. 2 folders for there. You open P&L items. Inside this again, revenue from operations, purchases, inventory, employee benefit expenses, operating expenses, other expenses. Like this, multiple folders for there. You opened purchases. You open purchases folder. Inside this purchases folder, what are there? Purchase register. Nothing but this is the raw data generated from the software. Purchases raw data that is generated from the software. On this, we applied sampling techniques. We applied sampling. Nothing but purchases data will be there. So many transactions, some 10,000 purchase transactions were there. Each purchase transaction value is ranging from 10,000 rupees to 10 crore rupee. Each transaction is either from 10,000 or 10 crore. Getting it? So we selected 200 samples. We selected 200 transactions. These 200 transactions, no, we selected in such a way that large value items were there, medium value items were there, small value items are also there. All categories we covered. So our sampling is a stratified sampling. What we applied? Stratified sampling, which is also called as monetary unit sampling. We applied which technique? Monetary unit or stratified sampling technique we applied. So we divided the entire 10,000 transactions into 3 parts. All purchase transactions whose value is more than 50 lakh. Whose value is more than 50 lakh. Only 30 invoices were there. Only 30. Entire 30 we selected. Getting it? All transactions between 10 lakh to 50 lakh. Some 100 invoices were there. We selected some 70 in that. And remaining transactions, some 9,000 approximate were there. From that, we selected some 100. Totally, we selected as a whole 200 invoices. Getting the point? Now you see, we selected all high value items. We selected predominant medium value items. We selected sample very less low value items. Able to understand? We selected very less low value items. Remember this example. Getting it? We will discuss this in sampling topic also. When we are discussing sampling topic, there I will once again connect with this example. Getting it? So 200 samples we selected. Total 10,000 transactions purchases. No, only 30 bills were having more than 50 lakh and above value. Okay. Another 100 bills were having 10 to 50 lakh bill value. Remaining 9,850 or 9,870 bills were there, right? They're all less than 10 lakh rupee value. Each and every bill value is less than. Now, these 30 bills, whose each bill value is more than or equal to 50 lakh, we selected entire 30 in our sample. Getting it? And whose bill value is 10 lakh to 50 lakh, 100 bills were there. We selected 70 bills of them. Getting the point? And remaining bills are 9,870. Out of them, we just selected 100. Getting the point? So, this is the sample composition. Getting it? Now, now this is a sample composition. Okay. So, we selected this sample and we verified purchase process. How purchases is happening in this entity. How purchases are being processed in this entity, we verified. So, there is some vendor mechanism. Vendor master is there. Company has a vendors list. Only from these list, company can place an order whenever they want to purchase goods. So if the company want to purchase goods, suddenly there is a stock out. Company, person or management, they cannot just like that go to somebody and then purchase. They can only purchase electronically. Only from company server, order should be placed. In order to place the order from the company server, you should select only predefined vendor. Only with that vendor you should place the order. Like that, in the computers, there are restrictions. We call them as IT controls. What do we call them as? IT controls we call them. So such a kind of robust IT controls and all were implemented so that persons cannot do frauds. They can't do frauds. So they can place an order. So once purchase order is placed, it will not be directly going to the third party supplier. First the order has to be approved. Now, depending upon the order value, if the purchase order value is more than 10 lakh, approval mechanism is different. If the purchase value, order value is less than 10 lakh, the approval mechanism is different. The purchase order value is more than 10 lakh, CEO shall approve, CFO shall approve, finance director shall approve, purchase manager shall approve. 4 people has to approve it. Only then that order can be placed. Getting the point? Once order is placed, the other person will deliver the goods, right? Yes or no? After a certain period of time, they deliver the goods. We will not directly take acceptance. How many we ordered? 10,000 units we ordered. Now, other person delivered 10,500 units. Our system will not accept that. Now, at the warehouse, no, whenever they get goods, no, from the outsider, warehouse, staff keeper is there, warehouse keeper will be there. They don't know that we ordered this. You know, when goods coming, no. So, the seller will be sending invoice. In that invoice, our order number will be given. So, this warehouse keeper, no, he will enter the order number. Immediately, he'll get the order data. What we ordered, 10,000 units of so-and-so material A, 5,000 units of so-and-so material B, like this. Now, when they are unloading, no, unload report will be given. Unloading report will be given. Shipment report will be given. In that shipment, no, unit A, we ordered 10,000, they sent 10,500. We will reject 500. Even if at all he want to accept 10,500, na, system will not accept. Suppose tell me, if we order 10,000 goods and the supplier sent 10,500 goods, do you think supplier build 10,000 units or do you think supplier build 10,500? He will build 10,500 only. He sent invoice also for 10,500. For extra items he sent and billing me extra. Now, if at all he built 10,500, we should pay how much payment? 10,500 only we should pay. But our system is not accepting more than 10,000. So our system will accept only for 10,000 units the predetermined rate. Now, in our system, we can only record purchase transaction for 10,000 units. Automatically, over acceptance of goods is restricted. Such a kind of control they will implement. Getting it? Technically, they can't do. They can't accept more than what? So only 10,000 he will accept. Remaining 500 he will remove. He will reject it. So 10,000 goods accepted. whether they are in good condition or not, inspection department will come and check. So if they are in good condition, they will give approval. Okay, that approval also given in online. Once approval is happened, then the goods will be taken into the godown. Getting it? Now GRN, e-way bill, purchase invoice, purchase order, everything is included, right? This entire set will be forwarded to accountant of the company. Accountant, no, he will verify all these documents, whether authorization, approval, everything is there proper or not. Once ensuring everything, he will prepare a voucher. He will prepare a voucher called purchase voucher. Purchase voucher is internal document for the company. So it is in the name of the company. So our company name will be there on the 10 crore or 10 lakhs. Some value will be there. Purchase from so and so. Accountant prepared the voucher. He will sign it. This voucher has to be approved by finance manager. Voucher has to be approved by once again CFO if the voucher value is more than 10 lakh. See how many controls. Now CFO, it will go to the voucher. Are 10 lakhs. This order who placed? Somebody placed. My signature is not there in the order. Immediately he'll find out. His signature should be there in order, right? First of all, without that, order will not be going. So, but dual authentication is there. Once again, you see CFO is checking 2 times. So while ordering, his approval should be there. While accounting in the records also, his approval should be there. So he approved it. Then we recorded in the accounts. Then only the transaction will reflect for finance team. Finance team will have reflection of that transaction. Suppose, in the meantime, supplier called finance team. Sir, we delivered goods, sir, release the payment. Sir, in our system, it is not visible, sir. In my system, it is not visible. What visible, sir? I delivered. Sir, wait. It will take 2 to 3 days time. First, accountant has to pass the entry. Then only it will be visible in my system for payment. If it is only visible only, I can generate check, sir. Electronic check I can generate. If there is no amount visible, how can I generate electronic check? There is no manual check we are drafting. We are not writing any manual check and all. Ours is completely electronic clearing system. Getting it? Only when I approve, it will go to again CEO for approval. Then CFO will approve it. Then the bank will process the payment electronically. Getting it? First it should reflect in my system. Such a kind of IT control they kept. This understanding of internal control I should document. So that and all is there in the purchase related control. P2P we call it as procurement to payment. Entire that risk analysis we should document. Okay, I studied the system. Now whether the system, whatever they explained me, are they really following on it? How should I check? I selected 200 samples. Getting the point? For samples, for bills whose value is less than 10 lakh, whose value is more than 10 lakhs, controls are different, authorizations are different. So I want to check whether small items, small transactions are the following controls. Larger transactions, anyhow they follow. Small transactions are the following or not. That's why what I did, randomly I selected 100 invoices from small transactions, 70% of invoices from medium transaction, 100% invoices from large transaction, high value transactions. Now I will check in each and every transaction, whatever the predetermined system, are they following or not, I will check. So this is what I do in test of transaction. Are you getting it? I don't know how many of you did vouching. In vouching, you should check all this. Generally, what our students think vouching, tick, amount ticking, date ticking, party name ticking, all this. This is what they think. So vouching is not just ticking. Getting the point? You do audit tick like this, yes or no? So this is what audit tick actually. So in vouching, before you vouch the transaction, first you should understand how the transaction can be executed in this company. Able to understand? That's it. So sampling. Now the purchase related conclusions, whatever mistakes we are finding in purchases, so and so voucher, authorization is missing. System processed the transaction without authorization. IT deficiency. What is it called as? Deficiency in internal control. Is this deficiency significant? It's a purchase transaction related high value transaction. It's a significant deficiency. I will communicate to those charged with governance as per SA 265. Are you getting it? What is SA 265 standard heading? Communicating significant deficiencies in internal control to those charged with governance. So I will record all that conclusions in this. Like this. In expenses audit, I will design like this audit. In employee benefit expenses, I will have documentation like this. In other expenses, I will have documentation like this. In electricity expense, I'll have documentation like this. You're getting it? Entire records. You see, I'm saving it. Getting it? I'm saving on my system, everything like this. Not only this, we verified some manual copies. I will have a folder. Audit folder will be there. Getting it? There will be audit folder. Work hard like a box file kind of thing will be there. So in that folder also, I have documented so many proofs and all. Now this entire process is called as what? Audit documentation. Audit documentation is Audit documentation refers to record of audit procedures performed, relevant evidence obtained, and conclusions auditor reached. I showed you or not? Able to understand? So whatever procedure I am doing, I will document. Whatever evidence I have collected, I will document. Whatever conclusions I got based on my audit procedure, verification procedure, I will document. These documentation is also called as working papers or work papers. Getting it? Now, parallelly, we have another definition called audit file. Audit file. What is audit file? Audit file is nothing but one or more folders. Right now, I showed right folders. Yes or no? Or other storage media that is in physical or electronic form that contains records that comprise audit documentation for a specific engagement. Tell me, we have to maintain audit folders each client wise, right? I showed you right now. Open our company clients, Tata Motors. Like for each client, there is a separate folder, right? Yes or no? So for a specific engagement, that too for each financial year. Remember, Tata Motors 1920 is one engagement, 2021 is another engagement, 21-22. All these are different engagements, right? Able to understand? For a specific engagement, whatever documentation that you are gathering, right, you are keeping it in folders, right? That folders are called as audit file. Documentation is nothing but the concept name. How are you documenting? Through folders. That's called audit file. Don't confuse between these two definitions. In true or false, they will test. They will give you this definition and say name it as audit documentation. False. This is audit file definition. Audit file is nothing but one or more folders in physical or electronic manner that contains documentation for a specific engagement. For a specific engagement, whatever documentation is there now, that we will keep it in electronic storage, either in folders or physical storage. That's called audit file. Able to understand? What is documentation? Documentation is nothing but a process of recording the procedures performed, evidences we gathered, conclusions we reached. The recording process is right. That's documentation. Documentation talks about process. File is nothing but the end result of documentation. Understood? Next, what is the objective? Why documentation? How will you defend yourself tomorrow that you did audit properly? Getting it? If any regulatory authority came for investigation, how will you defend yourself? So the objective of auditor is that it's a sufficient record, appropriate record for the auditor's report. Whatever the report you give, that's a record for it. It's an evidence that audit was performed as per standards and legal requirements. Of course, you do audit as per standards, you did audit as per law. But if you don't document, how will you defend yourself that you did audit as per standards, you did audit as per law and regulation? That's it. So this itself can be asked as a question. Concept and objective of documentation. Understood? So what is the nature of documentation? Nature is very simple. It is an evidence for auditor's basis. It's an evidence that, if it's an evidence for the auditor's conclusion about overall objective of the auditor. Overall objective is to give opinion. Whatever I give opinion, for that evidence is documentation. Evidence that audit was planned and performed as per standards and law and authority, law and regulation. So you definitely do audit as per standards. You definitely do audit as per law and regulation. How will you prove people that you did as per law? Documentation. Why documentation? It will help a team to properly plan and perform the audit. So through, if I give documentation, if I tell everybody, if you don't have documentation, I will assume that you didn't work. So to my all article assistants, who are trying to escape from their work, I will tell them whatever work you complete on the day, related documentation you give me. So documentation helps me to plan and perform the audit, and it will help team members to direct and supervise the work. Getting it? So whether my article, whether they performed work properly or not, how will I check? By documentation. So it will help me to supervise how they are working, to review how they worked. So it will make the team accountable for the work. So on every documentation, so whatever paper my article has documented, he will write in his name. Getting the point? So indirectly, he will be very alert because he's writing his name and all. He'll become very alert, and retaining a record of matters of continuing significance for future audit. So current documentation will help in next year audit also. Yes or no? Especially purchase process. The process is same in the next year also. That will help in next year. Documentation helps us to conduct quality control review as per SQC1. What is engagement quality control review? What is it called as? Engagement quality control review, EQCR, which is performed by engagement quality control reviewer. Getting it? What is this engagement quality control review? Quality control reviewer we will discuss in SQC 220 later. Able to understand? So audit documentation helps in quality control review. Nothing but once audit is completed, report is given. Our firms know they will be little free in February month, March month, April month. Generally, that time it is not that much audit. Again, April onwards, pressures will start, work will start. During Jan, Feb month, no, whatever audits they completed last year, right? They will open and check whether we did audit as per standards or not, whether we complied with all the law and regulation or not, whether do we have enough documentation. We gave unqualified opinion. With our documentation, can we prove people that our unqualified opinion is proper? So like that, they will evaluate themselves. That's called review, quality control review. How far we are doing audit qualitatively. That's it. And not only that, not only for your internal quality control, even if some external inspection happened from NFRA, external inspection happens from quality review board, this will help. Able to understand purpose. So they'll ask you in exam, write about what is audit documentation, meaning and purpose of documentation. So when they write, like when they ask you like that question, any 4 points, here any 4 points. Remember, whenever the points are more than 4, any 4 is enough. If you write any 4, that's enough for a 4 marks question. Next. Now, what is the form, content and extent? So what are all I should document? In which format I should document? How much I should document? So how will I decide? By the way, manner of document, how should I document? You should document in such a way, an unknown person, no sorry, an experienced auditor. Who? An experienced auditor who is not having connection with your audit. He didn't audit along with you the client. Tata Motors 20 to 23 financial, you and your team audited. And you called me, sir, how is our documentation? I did not involve in the audit, but by looking at your documentation, I should understand what nature of audit procedures you did, physical verification, observation, inquiry, when you did the audit, how many samples you did the audit, extent of audit procedure. I should understand. By looking at your documentation, I should understand nature, timing, extent. I should understand the result of the procedures, what you got the result, significant matters arising during the audit and conclusions reached thereon. What are the big issues that happened in the audit and what conclusions you have taken, significant professional judgments made in those conclusions. When you are deciding something, what assumptions you have taken, what conclusions, what judgments you have used, significant professional judgments. So your documentation shall be in such a way that an experienced auditor having no previous connection with the client or the audit. With that audit, I don't have any connection. But by looking at your files, by looking at your software, by looking at your physical folder, I should understand how you performed the audit, how you took the decision, what important issues there is and what decision you have taken, what important judgments you have taken. I should understand all that, which means your documentation must be self-explanatory. Able to understand in such a way, your documentation, if you understand that is not sufficient, your documentation should be understood by others. Others means not everybody. Experienced auditor. Who is experienced auditor? He is having a knowledge of applicable framework. He has the knowledge of standards. He has the knowledge of auditing standards. He can understand the client business. So he is not normal, not belonging to finance or commerce. He is our CA background only. Getting it? But for him, if at all he himself is not understanding your documentation, how do you think external authority can inspect it, understand? So documentation shall be in that way. Form. A documentation of NTA. Just a minute before that. What are the factors that affect form, content and extent of documentation? So in which format I should document? Electronic or physical, depending upon the client. What and all I should document depending upon the client. Getting it? The form, content and extent, the format of documentation, what content you should document, how much you should document. Getting it? It depends upon size and complexity of the entity. Suppose in a small concerns, no, purchase register fully I will take. In a medium sized entities also purchase register I will take. But DMAT I am doing audit. Sales register itself is so big. 1 crore invoices, 2 crore invoices for there. Why should I document sales register? Anyhow, company maintains that record for 8 years. Tomorrow, if any inspection comes, I will go to the company and ask the information. Why should I take register? I will only document samples there. What sample I verify? No, only that I will document. So, which one you will document is a matter of professional judgment. You have to think which one to be documented. Simple. You need to document that. I mean, according to you, it is enough for you to prove. It is enough for you to defend yourself. So, whatever is enough for you, according to you, to defend, before somebody. That you did proper audit, you document all that. Now, Which one? So what factors I should consider in order to do this? Size and complexity, nature of procedures performed. Generally, if you go for physical verification, we cannot document. Physical verification, how will you document? Maybe do one thing, do video capturing. That is one. Two, risk of MOS. Generally, high risk areas will document. If there is no risk at all, employee benefit expenses, proper controls, everything is superb. I just verified randomly some samples, over. No need to document. Significance of the evidence obtained. Significance. Whatever evidence you got, no, what is its significance? Suppose external confirmation is more significant. External confirmation is more significant than the voucher. So document external confirmation. Exceptions identified. Suppose when you are verifying, you found some mistakes. Exceptions means what? Exceptions means, see, remember, exception is different from misstatement. Both are not same. Misstatement means they did wrongly. Exception means what? Suppose purchase invoice, it is showing 10,000 rupees, but GRN, it is showing 9,000 rupees value. This is an exception. This is called as what? Exception. Actually, both should match. They are not matching, which is unusual, which is exceptional. Generally, they both should match. So exceptionally, they don't match. Why they did not match? Getting it? So you investigated further, you documented. Getting it? Now, what is the need to document a conclusion or a basis for conclusion not readily determinable from the documentation of the work? Sometimes you might have taken some decision. Getting it? So what is the need for taking such a decision in a particular scenario? Suppose you have seen GRN 9,000 is there, but there is another goods received not for 1,000 units. 2 GRNs were there because inventory is received in 2 installments. Inventory is received in 2 installments. So against the same invoice, 2 times goods were received. So when you found one exception initially, you know very well that there is another GRN. You know very well. So document that a kind of wherever you took conclusions without any valid basis, document that. And why you have documented like that also you have to document. And audit methodology used, audit tools that you have used, audit methodology, inquiry, inspection, recalculation, or audit methodology, electronically you did verification, or some softwares and tools you have used, CAD tools and all you have used, document. Able to understand? Any 4 points? Any 4 points? Next, nature, documentation of nature and timing and extent. This is nothing but audit plan. This is nothing but audit plan. You document here audit plan. You document what? Audit plan. Plan means what? In audit plan, we clearly mention what area we did audit, opening balances. Who did this audit? Senior partner. Okay, how many days he did audit? 1 day he took. How much is the extent of coverage? 100% he covered. Like that, there will be a audit plan will be there. We will plan an audit. Getting it? In the plan though, plan and all when we will develop? At the beginning of the audit we will develop. Audit plan we develop when? At the beginning of the audit. Like how the plan looks like. So name of the client, some Tata Motors Limited. Name of the client, some Tata Motors Limited. Opening balance verification, Mr. A, so or else CAA. Getting it? 100% verification. Trial balance opening comparison with last year audited closing financial statements. So we just compare these two and then verify whether trial opening balances are correct or not. This is a procedure required under SA 510. Then purchases who audited, article assistant, B is a senior article. Sales who audited, article assistant C. Okay, how much you have audited on a sample basis? So 10% of the value we have covered. Total sample size is how much? Out of total sales value, 10% value we audited. Purchases, 5% of total value we audited. Employee benefit expenses, getting it? So Mr. D has audited and he has covered 20% of total employee cost. So total employee cost, 20% he covered in sampling. Getting it? So we just cover all, we just write who did the work, what they did, who reviewed his work. So article assistant's work, somebody should review, right? Whose responsibility if something went wrong in audit? Engagement partner. 220 standards clearly says engagement partner is responsible for everything in the audit. Tomorrow you cannot say my article I trusted him so he cheated me. You can't. What you are doing? Client gave you the audit. You have taken their help. Getting the point? They are not responsible unless they involve in fraud. That again comes under separate criminal code procedure and all. That and all comes under Indian penal code. That's again different issue. Okay, suppose if client put a case against you that you didn't do audit properly, you can file a case against the article that he didn't do audit properly. That's a different issue. But for the client primarily, who is answerable? Engagement partner. Next. So we have to document what are the tests that we performed. So characteristics of items tested. We should document who performed the work, date on which it was performed. We should document who verified the work and date and extent of when they reviewed, and any significant matters came. Nature of the significant matter in one of the major invoice whose value is 15 crore. There goods received note value is not matching with. That's a significant matter. The company, we are doing GST reconciliation, but company has not prepared GST issues and all. They have not prepared. We have to prepare the GST reconciliation all together. So that's a significant difficulty, which is a significant matter. And with whom the discussion took place, when the significant issues are there, with whom you took the discussion, and their representations also you document. Generally we discuss with management. Next, suppose if auditor identified information that is inconsistent with the final conclusion regarding a significant matter, document how you solved that inconsistency. Best example right now, in purchases, one value, invoice value is not matching with GRN. That too, it's a very big value, significant matter. Have you resolved it later on? You will document there. Another GRN was there, sir. Upon inquiry, we found another GRN was there where the inventory was received at the year end. Getting it? In January month, we received inventory one installment. Another installment is received in year end. That inventory document, no, that was accounted separately. So that's why initially there was an inconsistency, but later after getting explanation, discussion with the management, it was resolved. You should document entire process of audit. Whatever you did, no, you should document. You understand. Tomorrow you will leave this firm and then go to another firm. How do this particular issue has been resolved? How do they know subsequently? If you document this, they will understand. Getting it? What are the examples of documents? We will document audit plan. We will document analysis. We will document issue memorandum. Issue memorandum is like we will have some issues, right? When we are doing audit, we'll have some queries, right? That queries and all we will send it to management for their replies. Through mail we will send. Just to take a printout of that and document it. Summary of significant matters, letters of external confirmations, letters of management representations, checklist, correspondence, mail, WhatsApp, screenshots, all that. These are all examples of documentations. Understand? They'll give you this question. What is meaning of documentation? Give any 4 examples. 4 marks question. Getting it? Next. Can auditor take accounting records also as part of documentation? Yeah, he can. That is his choice. The auditor may include copies of client records, entity records. Getting it? But remember, audit documentation is not a substitute for entity records. Now, since you documented accounting records, now company said, sir, now we will remove accounting, we'll delete, sir. 8 years and all we don't maintain. Audit documentation is not a substitute for entity records. Entity has to maintain their own records as usual. What audit documentation does not include? What audit documentation? What auditor need not include as a part of documentation? Suppose you are writing some letter manually. Something mistake happened, you typed off everything. Should you document that? Don't it? You finally wrote some revised letter. Nah, that you documented. So that is called superseded draft. Superseded drafts of working papers. Incomplete or preliminary thinking. Something you was thinking, you are communicating all that. Yes or no? Then previous copies of documents corrected for typographical error. So first I took one audit report draft printout. In that so many mistakes is there. My partner scolded me. Okay, I remove that and then drafted a new audit report with the new terms, a new proper, without any typo mistakes and all. So this you have to document. The old one, ignore. Duplicate documents. Why multiple documents? One enough. Xerox copies and all not required. So the question, they may ask you this also. What are the examples of documentation and what auditor need not document? This also they can ask. Common sense or not? When you think with an example, it looks very common sense, basics. Next. Now audit file we understood. Tell me, when we are doing audit, is it better for us to document everything at the end of the audit or while doing the things itself? We should document timely basis. Getting it? Because 50 days, 60 days we are doing audit. Day 2, day 3, whatever we did, we don't know. In day 60. So it is always better to document then and there. So you see here, the auditor shall prepare documentation on a timely basis. Preparing documentation on a timely basis helps to enhance quality of evidence. And it also facilitates review and evaluation of audit evidence obtained, conclusions reached before the report is finalized. So it will give you effective review also should be done immediately. Once, sir, I completed purchases. Junior article came and told me, sir, I completed purchase audit. Okay, fine. Show me the workings, I'll verify immediately. Getting it? Whether he did work properly or not. I should not wait until audit report date. Okay. Documentation prepared after the audit is performed is less accurate than documentation prepared at the time when the work is performed. Technical, right? When you are listening to the class itself, if you want to write writing notes, you have to write immediately, not after the class. By the way, I never recommend writing notes. Okay, just examples like I'm telling you. Next, they'll give you write about timely documentation. They'll give you a question, write about timely preparation of audit documentation. Straight question might come. What is an audit file? Write about timely preparation of documentation. Now, not only that, assembly of audit file. Assembly means nothing but, remember, assembly is talking about retrieval. Assembly is talking about how easy you can retrieve. Suppose now client is giving some papers and all every day. You're doing 60 days audit, he's giving some papers. You're just opening the file, keeping the paper there. You're not arranging it properly. Suppose, no, tell me, if you have to take a note in any class, will you directly randomly close your eyes and pick any book and start reading, or will you pick that book related to this subject? Exactly right. See, you need to assemble the documentation clearly. Like you see this folder, the folder arrangement I showed, right? You see how technically this is the structured folder arrangement or not? Even the person who created this folder, tomorrow he is not there. He went to another, he left and joined another firm. I am there for review. I can simply open companies, Tata Motors. Suppose somebody asked me, like, can you just purchase a sample printout of Tata Motors relating to 22-23 financial year? He asked me this. Okay, I'll just open Tata Motors, open 22-23. I'll open this further audit procedures folders. I'll open purchase folder. Inside sample name is there. Purchase sample. I'll open that. Take a printout. Simple or not? If the documentation is assembled like this neatly, retrieval becomes easy. Are you getting the point? The process is called as assembly process. What is it called as? Assembly process. Even physical folder will be there, right? We will assemble it in a particular order. First, opening balance workings will be there, bottom. Then purchase workings will be there. Then sales working will be there. Then employee benefit expenses working will be there. Then expense workings will be there. Then asset workings will be there. On every workings, in between color sheets and all I will add. Getting it? So that I can easily pick whatever I want. I will do indexing. I will do referencing. Be able to understand. So that process is called as what? Assembly. So now you see, the auditor shall assemble the documentation on a timely basis. Getting it? And complete administrative process of assembling after the date of audit report. It is always better to assemble before. Getting the point? But standard permits you can assemble the file later. See, you already completed audit report is also given. Now you have to save this working paper for how many years? 7 years. You see here, retention. The retention period for audit engagements ordinarily no shorter than 7 years from the date of audit report or date of group audit report, whichever is later. If later, date of group audit report. Group audit report is nothing but, suppose I am the auditor of Tata Motors. Tata Motors is a subsidiary company of Tata Sons. Tata Sons auditor gave audit report on 20 June. Tata Motors auditor gave audit report on 10th May. Now, I should retain Tata Motors audit documentation for 7 years from 10th May or 20 June, whichever is later. Why holding company also important? Because this subsidiary company data is included in consolidation. But if consolidation tomorrow issue comes, they will ask subsidiary auditors also questions. That reason. Suppose I am a branch auditor, not subsidiary company auditor. I gave branch audit report on 10th April for Tata Motors. But main auditor of Tata Motors gave audit report on 10th May. Now as a branch auditor, I should also retain documentation right for 7 years. From which date? Whichever is later. Branch audit report date or company audit report date, whichever is later. Group auditor means in case of consolidated financials, holding company audit report. In case of standalone financials, the standalone financials head office, nothing but. Getting the point? Main company audit report date. Understood or not? Retention period is no less than 7 years. Remember, only for audit engagement, standard gave retention period. For review engagement, for assurance engagement, for related services, there is no time limit discussed in the quality control standard. Quality control standard is the one which is talking about the retention period. Are you all connected? Paadi connect le irukka, paadi appadiye irukku, thungite irukka. Fine. Next. So retention of documentation. After the assembly of final audit file, once you assemble the file neatly, The auditor shall not delete, shall not discard. Don't delete or don't throw anything away. Okay, don't delete the Excel files, all that. Getting it? Before the end of its retention period. SQs even requires the firms to have a policy for documentation. You know, many firms know before and all, once audit is freezed, once files and all everything is, you know, settled, they will put locks for that files. Nobody can delete the file, nobody can alter it. They'll put locks inside, IT control locks. Getting it? Now you see. So assembly file is there, right? Assembly is there, right? The assembly shall be completed within 60 days after the date of audit report. Suddenly if somebody comes for inspection, yes or no, they ask you, sir, you recently signed one audit report as per UDIN portal, you have signed audit report so and so as per UDIN, show me audit documentation. Institute has a power to conduct sudden inspection. NFRA has a right to conduct sudden inspection. Sir, sorry sir, it's not yet arranged, it's a papers and all in zigzag manner, they're not properly arranged. You have to finish within 60 days after the date of audit report. Fine, I understand. During the audit you couldn't do, but this you should have done after the date of audit report, right? That too within how many days you have to assemble? 60 days. Remember, assembly of audit file. Assembly means papers, zigzag. I mean, whatever the papers are in zigzag, we are arranging in an order. We are neatly naming the files. We are neatly codifying the names and all. Is this an audit procedure or is it an administrative process? Exactly. So the completion of assembly of audit file after the date of audit report is an administrative process, does not involve new audit procedures or drawing new conclusions. Correct? We are just arranging the papers. That is not audit procedure. Audit procedure means what? Evaluating evidence, inquiring client, interacting with client, physical verification, observations. These are all audit procedures. Where we do audit procedure, we do verification procedures to get evidence. Whereas assembly of documentation is just a administrative process. So what we do in this administrative, we will delete useless files, we will discuss our superseded documents, we will sort it, collate it, cross-referencing working papers to audit plan, signing off on completion checklist. All my articles, they'll come and sign on these papers. Whatever they collected and documented, they will sign. Documenting evidence that auditor has obtained, discussed, agreed with the members of engagement team before the date of audit report. So very simple, documentation, nothing but. Getting it? Like whatever evidences that we are gathering, we are arranging it. That is an administrative process. So they'll give you true or false statement. They gave in fact for 2 marks. Assembly of audit file involves new audit procedures. It's an incorrect statement. Assembly of audit file is an administrative process which is done after completion of audit within 60 days. It does not involve any new procedures and all. Clear? All of you. Next. By the way, who owns the audit documentation? Company saying, sir, you have used our printer, our ink, our paper, and you have taken printout. That's our property. Paper if you want, I'll buy. Ink if you want, I'll buy. The content is mine. Yes or no? Audit documentation is ownership of the auditor. Whatever work I perform, no, that is my own property. Getting it? Client, no, sir, you did really GST reconciliation very good, sir. You have used a very good format and all. Can you give us so that in the next year audit, no, we will do ourselves in the same format. If you want, you can give. If you don't want to give, you need not give. There is no compulsion for you to share your working papers to client. Client also you need not share. Third party you should never share. Yes or no? Without the permission of client, you should never share to third party. SQC provides that unless required by law, audit documentation is property of the auditor. He may, at his discretion, make portions of extract from documentation available to client, provided the disclosure does not undermine the validity. So the disclosure, no, it is not affecting your work quality, then you can disclose. Provided independence of the audit is also not affected. Next. Now write about documentation of significant matters. Write about documentation of significant. Documentation of significant matters is one, and documentation related to professional judgment. Both are two different things which are important questions. Which are also important questions. Just 2 minutes. Continue. So documentation of significant matters and documentation of professional judgment. Right, these two I'll come back little while later. First, let me finish summary memorandum question. What is audit summary memorandum? In big company audits, no, there will be some 20-30 team members who is involving in doing the audit, and each member is doing some 5 to 6 varieties of work. Each of them will be having in each category of work some issues. Getting it? Now tell me, is it better that all 20 team members sit with the client and each of them is raising their own issues, or let us sit and prepare first a summary of all the issues and then discuss with the client? Summary of all the issues let us put and then discuss with the client. Getting it? So the summary memorandum is nothing but that. See, auditor may consider to prepare and retain as a part of documentation a summary which describes significant issues identified, significant matters, and how they were addressed. Getting it? So audit summary memorandum mainly documents what are the significant matters that are arisen and how it was resolved. So for large and complex audit, for large and big audits, the summary will facilitate effective and efficient review and inspection of documentation. So whether we did proper review of the important matters or not, through summary we can simply identify. So preparation of such a summary will assist the auditor's consideration of significant matters. So by preparing summary of all significant matters, we will have a clarity that yes, whether we concluded all the summary matters, whether we concluded all significant matters properly or not. It also helps the auditor to consider whether any individual standard cannot be achieved that would prevent the auditor from achieving overall objective. By documenting significant matters, whether any standard we have not complied. Is there any standard requirement that we have not completed? Suppose in our audit we found out some pending litigation. We found some big pending litigation with the client. So there is a litigation which is pending where the amount involved is 100 crores, which client did not disclose. I found out through my inquiry. I saw professional fees account, legal fees account. In that one amount is a huge amount paid to lawyer. When I investigate further, this is paid for some pending litigation in particular forum. When I investigate further, sir, sorry sir, we missed this to inform you. Getting it? We were also not aware of this, but it is there, but we forgot to document this. Now it's a significant matter, right? I addressed this, right? Now, regarding this pending litigation, I have to get an external confirmation as per SA 501. Getting it? But external lawyer is not responding. So as per 501, I should document whenever I could not get as per 501, whenever I could not communicate with external lawyer. Why you could not communicate, you should document. Getting the point? So anyhow, when I'm discussing 501, you will understand better this example. Okay. So it will help the auditor to consider whether any individual SA objective is not achieved. Means as per SA 501, you have to communicate with external counsel if there is a pending litigation which is newly discovered by you. Getting the point? You should discuss. But external lawyers are not responding. Now, do you have an alternative procedure so that overall objective of audit is not disturbed? So that is what you should talk. Getting it? Next, significant matters. By the way, whether a matter significant or not, it's an objective analysis. Yes or no? Depending upon facts and circumstances. So in the circumstance, given facts, whether it's a significant or not, auditor has to do an independent, unbiased analysis. Objective analysis means what? Unbiased analysis. Examples: any matters that give rise to significant risk. Company recently incorporated a new software for collections from debtors. So new software for collections. Now, whatever company total trade receivables are there, right, which the company is recording in another software, they need to transfer entire that software, that entire content to new software. So they transferred. While transfer is happening, some mistakes happen. While the data is transferring from old software to new software, some points and all were missing. Some company, in the old software, they just kept some flags and all. Getting it? Some important points and all they noted down. That and all were missing. Now auditor also, old software is company deleted already. Now new software is only there. So any matters that give rise to significant risk, some important observations which the company recorded were missing now. Which company is not disclosing me. So what is it? It's a significant risk or not? Generally, when this kind of issue is there, what we will do? We will investigate further. It's a significant matter. The financial statements could be materially misstated. Some areas, we found misstatements. We found some accounting related misstatements. Accounting estimates related misstatements we found. Or based on my understanding, I felt a need to revise auditor's previous assessment of risk and auditor's response to those risks. Actually, there is a standard called 330 and there is a standard called 315. There are two standards. 315 talks about risk assessment procedure. 330 talks about further audit procedure. Your further audit procedures depends on risk assessment procedure. If risk assessment has been changed, response to your audit, response to the audit overall, that also changes. Further audit process also changes. SA 330 heading is response to the risk assessed, response to the assessed risk. What is the standard name? Response to assessed risk. Assessed risk is discussed under what? 315. So if any change in risk assessment procedure happened, responses to audit, assessed risk also changes, means your audit plan also changes. That also you should document. Getting it? Generally, once we do risk assessment, generally we don't change that whatever risk. We will conclude so and so risk. Some risk is there, high or medium or low. Suppose later, no, you felt originally you concluded that it is low risk, employee benefit expenses low risk. But later you discovered that there are large number of employees were added in the March month suddenly. Huge employee recruitment happened. Now the risk is very high. Out of them, there may be dummy employees. Getting the point? Or circumstances that cause auditors significant difficulty in applying necessary procedure. So when you're applying some necessary procedure, you felt significant difficulty. Just a reconciliation company did not do. Significant difficulty. Document that because that's a significant matter. Findings that could result in modification of the opinion or inclusion of an emphasis of matter paragraph. You found something in the financial statements or you found some mistakes because of which you are ending up giving modified opinion, or either you are highlighting it in emphasis of matter paragraph or other matter because of the importance. That is also significant. You should document all the significant matter. They'll give you a straight 4 marks question. Write about documentation of significant matter. Write about documentation of significant matters. Documentation is a very small chapter, but damn sure 5 marks question will. Okay. Now, what will you document relating to professional judgment? You see here, this third point itself directly will be asked. In the following cases, the auditor shall document his use of professional judgment if the judgment is related to matters or decisions related to significant matters. Significant matter related decisions what you have taken. For example, what is the rationale for auditor's conclusion when a requirement provides that the auditor shall consider certain information or factors and that consideration is significant in the context of particular engagement? Don't worry, I have given an example here. Suppose Reliance company during the financial year 18-19, 3.5 lakh crore worth of plant and machinery useful life has been revised. No doubt that's a significant matter. Yes or no? Relating to that, what is the judgment? Now they revised it from 30 years to 50 years, right? I also verified the workings and I felt 50 years is correct. This is what my judgment there. Now, how do you felt 50 years useful life correct? What information you considered so that the revised judgment is correct? What information for significant judgment you reached? Getting the point? In respect of significant, that information you should document. So generally, so what is the rationale? How do you consider? What is the logic behind 50 years correct? Expert report is there. Getting the point? In industry, most of the industries have revised it. Telecom industries and all, they revised useful life of cell phone towers, all that. Originally, they planned for 10 years or 20 years useful life, but now it can be increased to 40 years. Next. What is the basis for auditor's conclusion and reasonableness of areas of subjective judgments? I know these missionaries, it may come either 35 years or 40 years or 50 years. Yes, this is subjective decision ultimately. So, on what basis you concluded? Some expert report, all that you will document. The basis for auditor's conclusion about authenticity of the document. Suppose originally they showed some expert report. I felt it is not authentic. Getting it? But later on, after further investigation, I got to know that this is authentic. What further investigation you did, that you should document. Able to understand. So professional judgment means you took some conclusion, right? You took some conclusion. On what basis you took a decision? Suppose on what basis you buy some faculty class? Based on some points. Yes or no? Based on your, so whatever the due diligence you did, right? You document it. Document means what? Your friends' conversations, WhatsApp conversations, Telegram group replies and all that you document. That is what they're saying here. So when you take a decision, behind the decision, what and all you did, document that. With respect to which decisions? Significant professional judgment, significant decisions taken by you. In which matters? Significant matters. Significant matter means what? Very big. Getting it? That affects my opinion, that affects my decision about emphasis of matter para, other matter paragraph, or there is a significant risk involved in that. Able to understand. That's it. Documentation is also over. Documentation is also over. Confident until now? Hey, you need to read first. Okay. So I don't know how many of you are doing this. After going home, just read slowly, thoroughly. In class, I can't read slowly and explain. Nah? Getting it? So you have to read slowly, thoroughly. This is how the standard is going to be. Don't think audit will be easy. That too, new scheme institute is very, very dynamic to test in very advanced level. Okay, so you please work. People know, they compare CA course and all with other courses and say that we are working 5 years. Where you are working 5 years? Honestly check yourself. 3 months before exam you start preparation. Correct? CA foundation 3 months before exam you started preparation. CA inter 3 months before exam you start preparation. CA final also 4-5 months before exam you start preparation. Technically, how much time you dedicate yourself for preparation, coaching and all, if you see, it is not more than 1.5 to 2 years. Yes or no? 5 years of hard work, 25 statutes, 500 sections. He is saying what are all he don't know. Getting it? When I see those kinds of posts, okay, he's highlighting what are all he don't know. Getting it? These are all only fancy. Instagram post and all looks very fancy, but that's not reality. Medical students you see. Getting it? They work 7 years, 8 years, regular college, that too. Regular college goers, so much of pressure. IITs and all, in the past recent 6 months, more than 20 students committed suicide. Getting the point? Able to understand? Because that's a kind of pressure in IIT. That's a kind of pressure in NIT. IIMs. They regularly go to college. They will be given assignments. They have to work on their own throughout the night. Hardly they sleep 4-5 hours. How many days you slept 4-5 hours? Honestly tell me. Yes or no? So 3 months before exam we are doing hard work, technically speaking. So don't compare with other courses. Relatively we are working very less compared to an MBBS student, compared to engineers. Don't compare with normal engineering colleges where they don't study engineering. So you compare with normal engineering college where they don't. You should compare. See, the problem is we compare with BCom and then comment ourselves. In BCom, you need not study 80% syllabus, 20% syllabus, or past 3 exam papers you study, you will qualify. Same questions only comes now. So because we are asking you to study 70% syllabus, you are calling it as tough. Otherwise, you will not call it as tough, right? So this is the level at which paper is coming. And you will write at what level you know. So if you start just 2 to 3 months before exam preparation, this is how it is going to be. You need to at least have 6 months for both the groups. Full-fledged coaching and full-fledged preparation for both the group requires 8 months. Getting it? Very simple. If you want to get an all India rank, 6 to 8 months you have to only focus on revision studies. If you just want to qualify, 3 months enough. 3 months enough for both the groups. Getting it? Just a revision point of view. If you want to qualify single group, 1.5 months is enough just for revision. For coaching, to put together 3 to 3.5 months for a single group. You have to understand. So it's all about number of efforts. How many hours you are putting efforts, how many days you are spending, how many months you are spending. That decides your result. Okay, so I think we have completed documentation chapter completely done. In the next session, I will start audit evidence chapter where we are discussing various other standards. In the next session, I will complete audit evidence and completion and review. And that next session, I will cover bank audit and items of financials. With that, our objective will be finished, fulfilled. Getting it?